So, greetings everyone. Welcome to the marathon session for a CA Inter Law. So, we are going to get started with our chapter number 1. But before we step in, few glances with how we are going to proceed forward. So, as you see, the material that is displayed here is following the same flow that you have in your institute material, in our institute material, all right. So you can also very well have and open your institute material with you and sit with me for this marathon session. So do not worry if you don't have the material that is displayed. Our institute material is also sufficient for the same purpose. The flow would be such that we are going to go and discuss all the provisions in detail. It is titled as marathon, which means we'll cover the entire thing together without skipping anything up. So with that objective and with a promise from your side, so what promise are you going to give me? That you will not just be watching the lectures like this. Because as I always used to tell, law being a theory subject, you will need some more practice so that you are going to find this session engaging with me, which means you will make beautiful, amazing notes along with me as we run through the sections. All right, watching this like this, watching this when sleeping, watching this when eating, watching this when commuting could decrease the efficiency which you have and the potential you have. So it's a request from my side that you sit and scribble in your note along with me the notes that we are going to see. With that assurance that we'll have a holistic coverage and a promise from your side that you are going to do the running notes with me, let's get started. So now it's time for us to begin with chapter number 1. We are going to see certain key definitions in here. We'll be covering the most repeated definitions in this segment and we will also run through the provisions. Let's get started. Now, applicability of the Companies Act 2013. So we know that earlier we had another act which was a Companies Act 1956, and in the year 2013 is when this new Companies Act came into effect. As we can see, the definition it uses, the Companies Act 2013, it applies to all the companies incorporated under this act or any other previous law. So previously we had the 1956 Act. So companies incorporated in that also is being covered under the ambit of this definition. And this act applies to the following classes of companies and body corporate, except in so far as a said provision are inconsistent. What does it mean? Which means it is going to apply to the other companies also. Which other company? Insurance company, banking company, electricity company, or any other company governed by a special act. So for this also it is going to be applicable, provided they will have a separate act for them, right? And if our Companies Act is inconsistent with those provisions, they are going to remove it and the other provisions are going to apply for it. Example. So if you see, these three companies, they have a different format of presenting their balance sheet. Our Companies Act has a different format. So our Companies Act is inconsistent with that in that regard. So those are going to be removed and whatever is applicable for them is how they will be presented. So this is one such example for it. So this is the meaning for except in so far. So only those things which are inconsistent with that, we are going to remove that, and whatever is presented in that particular act is going to be applicable for them. Now, moving on to the definition segment. So in every act, if you see, section 2 is a definition section. So similarly, let us see what are the definitions that we will have to go through this. Before that, we are saying what is an accounting standard. So accounting standard means a standard which is given by which is recommended by the Institute of Chartered Accountants of India, and it is given after consultation with the the National Financial Reporting Authority. So that is what we have as a accounting standard. Now we will move forward with the next thing that is in line in our discussion. Accounting standards is defined under section 2, subsection 2. So which means any accounting standard or any other addendum that to as is referred to in section 133 of the Act. Now, who uses accounting standard and who authorizes it, who creates it? So the central government is prescribing the accounting standard. It is being recommended by our mother body ICAI, and in consultation with NAFRA, it is being brought out for us. So more about the functions of NAFRA we are going to see in the later discussion. So I'm reserving it for the later discussion. Let's keep moving forward. So let us look at some of the key definitions that is relevant for our section. So first one is an associate company. What is an associate company? It means a company in which that the other company has a significant influence. So X is there, Y is there. So one company exerting 20% of influence on this. So how did we get 20%? We tell significant influence. So 20% is significant influence. So once this is said, it means that the other company is an associate company for us. So we having 20% significant in other company, we can tell that it is an associate. And we also know if it is going to cross more than 50%, the control we have on another company is more than 50%, we are going to call it as a subsidiary company. So anything between 20 to 50% is when we will call it as an associate company. So if you look at the definition of significant influence, control of it at least, so the word is at least, so 20% and more on what? On the total voting power or the control in the participation in the business decision under any agreement. So all these are covered under the ambit of being categorized under a significant influence. Now, mainly shares held by a company in another company in a fiduciary capacity. So fiduciary capacity means they are just holding it that for the other person. So I'm just having it for you, right? But I'm not going to do anything on that. I'm not going to vote. I'm not going to be entitled to any dividend on that. So I'm just being a holder. Okay. So in that case, it shall not be included. Fine. It shall not be included for the purpose of being called included in the word significant influence. So when you tell it's a fiduciary capacity, they're just holding it. So they're responsible for prudently managing the money. So they'll do the management activity wise, but otherwise they'll not be having the ownership right to that. All right. So that is what we call as a fiduciary relationship. Moving on. Next, auditing standard. So our favorite subject. So audit and audit standards goes hand in hand. So it means any standard which is issued by whom? It is prescribed by the central government. It is recommended by the ICAI, and again in consultation with NAFRA, it is being brought out for us. So this is auditing standards for us. All right, people. Now let us go to the next thing that we have, books of accounts. So all the questions, all the relevant sections that we are dealing now are mostly based on the repetition status of the previously asked question. So these questions, they have their place in the often asked areas. Okay, these are quite often tested areas. So now what and all is considered as a books of account. So the books of accounts, we include record. Okay, we are including a record of all money received and expended. Okay, then with regard to purchases and sales, then assets and liability. So anything which has a record of all these things. So where and all we are going to see profit and loss, then balance sheet. So this is what we are telling. So this is all financial statement, but anything which includes record of it is considered as a books of accounts. And some type of company, they are also required to maintain, which is called as a cost record. So for those companies, this cost records are also included in the definition of records. Clear? Now moving forward, what are we going to see in next? Majorly about control. So, when can we tell that one company is controlling another, or an individual is exercising control over another individual? So, when we talk about individual, this is also related to another definition which we talk about the promoter. But before that, let us discuss about control alone. When can one company be controlling the other? There are two ways in which they can do it. One is through the shareholding agreement. So, may be having more than 50% or more than the number of shares. Through that also they can control. Next way how they can do is they can directly influence how the decision is going to happen, which means board of directors, they are going to appoint a maximum number of board of directors. So in this way also they can exercise control over the other company. Let us read to that. So how it can be done? It through their shareholding, through the management right, or through the shareholders agreement, through voting right, or in any other manner. If you see it, they are telling in any other manner, so which means it is an inclusive definition. So all this, and if they find any other new way to control the other company, so that is also going to be included in the definition of control. Yet another important aspect is our financial statement. So what is a financial statement? So what and all we have been preparing from class 11, right? Balance sheet, we have profit and loss account. Yes, and in case of a company which is doing business for other than profit, we have our income and expenditure account. Then we have the cash flow statement. There is one peculiar aspect with regard to this cash flow statement. We will see it later. Then we have statement of changes in equity and any other explanatory statement which is annexed. So all these are included in the definition of financial statement. Very important definition from the perspective of view of two related concepts. One is with regard to OPC, dormant, and small company. So in any of these concepts, they might club it as a question and give it for us. Reason being that in case of a OPC, small company and a dormant company, they will have to prepare all these except for our cash flow statement. So OPC, dormant, and a small company, they need not prepare the cash flow statement. Clear? Also a startup company, all right, a private company which is a startup company. So only a private company can be a startup company, right? So the startup company is also not required to file this cash flow statement for a financial year. So what is a startup company? The definition is given, which is just easy for us. So running through the next one, financial year, section 2, subsection 41. One main aspect of the section is that we know when a financial year begins. It begins on 1st April of a said year and runs to 31st March of the subsequent year. Now, so we told that 1/4/2025 to 31/3/2026 is when the financial year would be. Now tell me of a situation if at all a person is going to incorporate a company only on 23/3/2026 or maybe 14/2/2026. Some people like this date very much. I don't know why. So what about the company which is incorporated like this? So the condition is that if there is any incorporated, if there is any company which is incorporated on or after 1st day of January of a year, then for the said company, the financial year will end on 31st day of the following year. So in this case, in both these cases, our financial year will not end on 31/3/2026. Rather, it is only going to end on 31/3/2027. So this would be the end date for this particular company. Also, in case of a company which is a holding subsidiary or an associate company of any company which is incorporated outside India, and in that they are going to follow a particular type of financial year, then Suppose that it is very different, that they are following the calendar year, might happen. So here also they can follow a different time period for the financial year, provided they are getting a approval from the central government in this regard. So this is one key aspect for it. So we are talking mainly about the company which is incorporated outside India. Clear? Now, next section 2 subsection 43. How will I remember? 3 free, they do rhyme, right? So 243 free reserve. Okay, now what and all is calculated as a free reserve? So very relevant for when we do the discussion with regard to bonus issue and all. So only can be made out of these free reserve. Free means it is free for the purpose of available for distribution as a dividend. Okay, so that is called as a free reserve, and it is not a earmarked reserve. Earmark means marked for a particular purpose. So that is called as a free reserve. What are the other earmarked reserves we have? You know, the debenture redemption reserve, deposit reserve. So all these can be utilized only for that particular benefit, whereas this free reserve, it can be used for anything else. So what and all is not treated as a free reserve? So they are given any amount representing unrealized gain, notional gain, revaluation on asset, whether shown as free reserve or otherwise. So anything which is seen only in paper and which is not realized in the pocket is called as a notional gain, unrealized gain, right? So for us, the dream to score exemption is law. In law is something which we have in our mind. When you start to write the notes along with me, it will also be reflected in your answer sheet and your mark statement soon. So let us not have it notionally only, right? Agree with me. Let us also write running notes along with me, so that the dream of getting 60 and exemption in law is becoming something which is realizable, all right, not so notional in our dream. Let's get going, people. Now, so anything which is not realized. So whenever there is a revaluation of assets, so I'm sure you have studied the same thing in your accounts as well. Suppose the value is 20,000 becoming 30,000. So we'll increase the value in the books of accounts. But these gains will be realized only when the asset is actually going outside of the books of the company would the profit actually be coming. So till the time it is not realized, and it's only in our notion, right? So similarly, whenever there's a change in the carrying value of the asset or a liability, meaning the liability value is decreasing, good thing, right? So what do? Do we actually put it in our profit and loss account? No, we are going to have it separately as an increase in the fair value. Okay, so we're not going to put it actually in the, if the liability is decreasing, it's a good thing, right? So it will increase the fair value of the assets in total of the company. So this is the point about it. So all these are not going to be treated as a free reserve, which is section 43, 2 subsection 43 free. All right. Now moving on to yet another important aspect, government company. So what is a government company? In which not less than 51% of the paid up capital is held by central government, state government, or partly by the central government and partly by the state government, or in combination of one or more of the state governments. Okay, and it also includes the subsidiary of a government company is also treated as a government company only. And in case this company is not having paid up share capital, it will be 51% of the total voting power. So this is how the definition for government company is given. Moving on. Next, holding company. All right. Yes, people, have water with you always when you sit to study, so that you don't have to move away. All right. Now, what is a holding company? In relation to one or more companies in which such companies are subsidiary companies. So this company is going to have subsidiary companies. So this is called as a holding company, is what they are telling. Next, we'll move on to the definition where we talk about listed company. So what is a listed company? A listed company means a company which has any of its security listed on any recognized stock exchange. They are telling if you have any of the securities listed in the recognized stock exchange, and then you are going to be called as a listed company. All right. But for section 2 subsection 52, we have certain exception, right? So that is given in rule 2A. Okay, for subsection 52, rule 2A is the exception. So what are the exceptions that we are going to deal in there? So it is saying that even though you are going to be listing these 3 types of shares, not just shares, these 3 types of securities, not shares, securities, even though these 3 types of securities are listed, I am not going to be considering you as a listed company. So what are those? First, in case of a public company, they are not having their equity shares listed, but these people are having their non-convertible debt security, and that is issued on a private placement basis. Okay, non-convertible debt security which is issued on a private placement basis, they are going to list that, or a non-convertible redeemable preference share, and that is also issued on a, yes, on a private placement basis, or both of the above. Fine. Then public company which have listed their non-convertible debt security on a private placement basis, and public company which have not listed their equity shares in India, but they are listed in a foreign country. Okay, so even though you have these things listed, you are still not going to be considered as a listed company in India, listed in foreign. Okay, fine, great. Now moving on to the next definition of net worth, quite often tested, could be tested in MCQs also, most relevant for our CSR provisions and all. So what is a net worth? Net worth means the worth of the company. So worth like that, what will you know? So what is your worth? Are you really worth it? So let's see what the company is worth it. So it means it's paid up capital, it's paid up capital, and its reserves which is created out of profit, then security premium, debit or credit balance of the profit or loss account, and in that we will deduct our accumulated losses, deferred expenses, and miscellaneous expenses not return off. All those things will be deducted, and it does not include revaluation of assets, writing back of depreciation, and any reserve that you create during amalgamation. Why revaluation of asset is not realized, writing back of depreciation is also the same. When the value was decreased, maybe you will write back whatever excess depreciation you have provided, and in case of amalgamation, whatever it is, because only you are merging with the other company. Of course the net worth is increasing, but it's not just for the company's own net worth alone. All right, so for that purpose, whatever reserves created out of amalgamation is also not included in this purpose. So that is about our definition of net worth. Moving on, most important, private company and a public company. So private company is defined under section 2 subsection 68. So what it means a company having paid up capital as may be prescribed, and it prohibits the right on transfer to share. Prohibits? No, they do not prohibit, they are only putting some restriction. You can transfer share, but there are certain restrictions. Okay, so that is about the private company. And the maximum number of members is 200. 200 is the maximum number of members in case of a private limited company. Now we told 200, right? I told there can be only 200 people, right? Now fine, who are and all included in this number of 200, and who are all excluded from this number of 200? Let us see and understand. In case of joint holders, so you and your friend holding it together, you and your friend are one soul. Okay, so you are treated as a single member. Also, the following shall not be included. Okay, person in employment of the company. So an employee is holding shares of a company. How did the employee get the share? Could be because of ESOP or any sweat equity. So that is how they could have got the shares of the company. So an employee holding shares of the company, and a person who have been formerly in employment were members while such in employment and continued as members after the employment cease. So that is this person. He was in the company. He got the shares. Okay. He is not counted as a member. That is told in this point. Now, this person, he left the company. Okay. Still he is holding the shares. Will he be counted in the count of this number of 200? He will not be included provided these shares he got it while he was in employment in the company. So in that case, he is not going to be included in the definition of, is not going to be included in the count for the number of members of 200. All right. Now, another scenario. He was an employee. When he was in employment, he did not get any shares. But after he went, he got the shares. A normal person getting shares. So this is like a normal person getting shares. So if he left the employment and he got shares later only, did not hold shares before when he was in employment, he is going to be counted in the limit of number of members of 200. There's not going to be any change with regard to that. Clear? So that is one point about that. Questions are tested in this area, people. Questions are asked in here. Now, we will go to the point where we discuss about small company. Okay, so here, so what is a small company? They have given certain prescribed limit, and there is an amendment in this segment, but it is not relevant for us, so we will stop in here. So small company is a company which has a paid up capital of less than 4 crore and turnover of not exceeding 40 crore, just less than 40 crore. Okay, so paid up capital is 4, turnover is 40. Ma'am, what about if I'm confused if it is paid up capital is 40 and turnover is 4? Okay, like that, will it be possible? See, with little resource, you must be able to give big outcome. All right, paid up capital 40, turnover is only 4 crore. Anywhere possible? So we are providing you all the books and resources. If even after that you do not get exemption, is it valid one? Right? Similar way, do not be confused. Same provisions will apply for CSR and other deposits also. So turnover should actually be the highest of it. All right. So no way we will accept net worth is higher, turnover only so much. There is no logic with that. So okay. So do not be confused. Paid up capital is how much? Paid up capital is 4 crore and the turnover is going to be 40 crore. So this is the point about it. Now, what is a subsidiary company? So in relation to any other company means a company in which the holding company is going to control the composition of the board of directors. A holding company is going to control the composition of the board of directors or exercises or control 1/2 of the voting power. So either voting power they are going to have or they are going to control the board of directors. So in this two manner, we can tell a company is going to be a subsidiary of another company. All right. Now, we will move on, we will move forward. So yeah, so this brings us to the important definition that is relevant for our discussion for this particular chapter number 1. See you in the next chapter. Alright people, now we are going to start with our chapter number 2, which we are going to begin with the incorporation of a company. So how are we going to start with it? So we know what the benefits and all we have when we form a company. We dealt it in our foundation itself. So not much going into it. So let us say you have decided, you have formed an idea that you want to do something, right? And then you're going to gather the people, accumulate the capital and start the company. So you who are getting the idea and also giving the input and also organizing the people, you are the promoter. What is Companies Act say? Let's see in detail. So, Section 269 of the Companies Act says that a promoter means someone who is named in the prospectus or is identified in the annual return, or he has a control over the affairs of the company, or in accordance with whose advice he is the directors or the board of directors are going to act. So any of these four things is going to happen, then you are the promoter. And it does not include a person who is acting merely in the professional capacity. So there is question in this place, but they tell that this person is a CA and an MBA, okay, and what he is doing, he is giving the guidance, he is giving the advice, he is being instrumental in the formation, registration of a company. Not just that, even after that he is doing some risk management analysis and risk analysis and all he is doing. Will he be considered as a promoter of a company? Answer is no, because he is doing all these things only in the professional capacity. He is not doing it for his own personal motive. All right. So, next key point with this, we told he has to be named in the prospectus. We also told he has to be identified in the annual return. Tell me of a person who is not there from the initial day. Okay, he later joined. Then after that he is giving the capital. After that he is giving the knowledge and resource required. Will he be still considered as a promoter? Yes, because it tells that one need not be associated with the initial formation of the company. Later also he can join it. All right. So even then he would be called as a promoter only. Okay. So how and all a company can be incorporated? Previously we had something called as a chartered company under the British Royal Charter, like that it was formed. And next we had a statutory company which had a particular act, right? We as chartered accountants, we have a separate act, right? Chartered Accountants Act 1949. So that is why we are called as we are coming under a particular act, right? Then it is a registered company, so which is registered under this act or any other earlier law. All right. So we know that in case of a public company, we are going to have a minimum of 7 and a maximum of any number of count. And in case of private company, it is going to be 2 and it is going to be 200. In case of one person company, there is going to be 1 person, but there is going to be another 1 person also. You will see who it is. And what are the other types of company? Can be company limited by shares, company limited by guarantee, or unlimited company. What is the company limited by share? The amount which the shareholders require to contribute in the time of winding up is equal to the amount which is unpaid on the call. We had not paid 4 rupees call money later. 4 into number of shares you have, we will get it from you when we are going to wind up if we do not have the sufficient assets to pay out for the company. So this is with regard to company limited by share. In case of company limited by guarantee, it means that if you are agreed to contribute a certain sum of money, that sum we will ask from you when we are going to wind up the company. So this is with regard to company limited by shares and company limited by guarantee. Then 1 person company. So 1 person means there is going to be only 1 person in the company, right? When I tell that, I also mean that there is going to be another 1 person in the company. Mainly, there is a restriction that a 1 person company cannot be incorporated or converted into a Section 8 company. So what is a Section 8 company? It's going to do mostly the charitable work. So 1 person alone cannot do the charitable work, right? So that is not the thing behind it. Means that it is going to get some money from the public and do some promotional activity, right? So we cannot put it under the control of 1 person also for that purpose, right? So 1 person company cannot be incorporated or converted into a Section 8 company. Then 1 person company cannot carry out the non-banking financial services activities. Then who is eligible to be that 1 person? Only a natural person other than a minor. A minor cannot be there. Why? Indian Contract Act, it stops there. It's do not enter into any contract with a minor except for that where he is at the benefit of it, right? So only a natural person can be a minor who is a citizen, right? And whether resident in India or otherwise. So it tells that you'll have to also be a resident in India. So when I tell resident in India, we are talking about the time limit criteria of 120 days or more in the immediately preceding a financial year. Okay, so he should have been in India for at least 120 days or more in the immediately preceding financial year. So do not talk about the other time limit which we have in income tax. Here it is 120 days for us. Now, in a one-person company, we will have two-person who is a member, and we have a nominee. Okay, so we'll have a member also, we'll have a nominee also. Now, who can be a member? We saw only a one person who is an Indian citizen, who is a natural person, who is other than a minor, and who has been in India for a period of 120 days or more in the previous financial year, immediately preceding financial year. Only they can be a member. Similar thing for a nominee also. And when you want to become a nominee, you will have to give your prior written consent agreeing that you are all right, and you are, all right as in you are okay with being the nominee of a company. All right, and in the case of death or incapacity of the member, the nominee will become the member of the company. All right, now how do we bring this person as a nominee? We have something called as INC 32. So here is where we will nominate the person to be the nominee, and for this the consent form is given in INC 4, and along with this it should be submitted to our ROC at the time of incorporation, because in memorandum for a one-person company we will have an additional clause which is called as a nominee clause. Okay, so there we will be mentioning the name of the person as nominee. Okay, what and all we should file in that. So where and all this nominee form should be filed is along with the memorandum, it should have to be filed. Now, crucial point. One person company, how many people are there? There is a member, there is a nominee. Okay, can this person be a member in here in OPC 1 and also be a member in OPC 2? Not possible. Okay, next scenario. Can he be a nominee here and a nominee here? Not possible. Can he be a member in here? Okay, can he be a member in here and a nominee in here, or a nominee in here or a member in here? Both these are possible. Okay, one role is possible in each. And let us say something happened. So actually he was being a member in here and nominee in here, possible. So what happens here? The OPC, that member passed away and he is becoming a member, right? Now in two places he is a member. What to do in this particular case is that within a period of 180 days from which he becomes a member in here, he will have to choose in which he is going to continue as a member. People, the time limit is within a period of 180 days. So we are not talking about 6 months. I'm sure you're aware of this. 180 days is different, 6 months is different. Okay, fine. So within a period of 180 days, he will have to decide in which OPC he is going to continue as a member. All right, so that is what he should tell. And can a person who has agreed to be a nominee withdraw his consent later, telling that I don't want to be a nominee? Yes, he can very well do that, telling that I don't want to be a nominee. He can do it the same in form INC 4. And so now the position of nominee is vacant. We don't have a nominee here. So what we should do, within a period of 15 days from the date he which withdrew, telling that he don't want to be a nominee, we'll have to bring in another nominee. Okay, the sole member must file INC4 with the company, enclosing the written consent of the new nominee within a period of 15 days of receiving the withdrawal notice from that other old nominee. So once this new nominee has given, he will be included in the MOA. So I told you MOA will have a new clause called as a nominee clause. So will the alteration of the name of the nominee because of the withdrawal, will it be considered as an alteration as an MOA? No. Okay, the answer is no. Just because the nominee name is withdrawn, it doesn't mean that the MOA stands altered. It doesn't mean, alright. That is a point in this. Fine. Alright, so when nominee becomes a member, whenever in the case of a death or incapacity of any person, he is going to be considered as a nominee. Now, notice of change to register. So whenever this change is happening within a period of 30 days, we'll have to intimate to the register. So people, this register is like a friend. You will go and tell, no, whatever happens in your life day to day. Only when you go and take your phone and update to your friend, you will be like, now I feel like emptied. Okay, so just like that, or maybe some people used to write in your journaling and all you used to do, right? So when you put it all out, you will feel good. I would tell, do the journaling method. All right, so that is safe. All right, it doesn't judge you or anything. I know your friends also don't judge, but still it becomes a healthier habit when you revisit again. All right. So now, so this ROC is also like this person, whatever happens, you will go and tell it to him within a period of 30 days. Mostly this is what we see as a time limit. Mostly, not everywhere, okay? Subject to terms and conditions. Okay? Now, what are the benefits of registering as an OPC company? So, as we have already seen, we do not have to file the cash flow statement. There are also certain other provisions which are given relaxation here with regard to the board meeting, annual return, financial statement, AGM, and the filing of the financial statement. It is given relaxation for the OPC company. All right, so you can go through it once. So this is about it. Now this is all about section 3, right? Now moving on to section 3A. What section 3A is? So we have seen that we need to have a minimum number of members in every type of company. It is 2 in case of private company and 7 in case of public company. If at all the minimum number falls below this particular limit, could be for various reasons, could be due to death, incapacity, or just share transfer, could be due to any reason. If at all it's falling below this particular limit and the business is carried on for more than 6 months, the people who are aware that the number has fallen down and still if they are continuing the business, then whatever debt they have incurred after the period, they will be personally liable for all the debts which the company has which the company has incurred. So this is the point about it. All right. Now moving on to the next aspect for it. So far we have seen about the provisions for 1-person company and what is the minimum number of members required, and if it falls below the minimum number, what is the liability that we have to deal with, which is the personal liability. Right, will be severally liable, which means even from a personal property they can collect the amount for the debt which we have incurred. Now about the incorporation of a company. So we told the promoter will get the idea for the formation of the company. All right, so after that he will prepare the list of the people he will want to, how much fund he will be needing, then all those things he will prepare and he will go to the ROC and tell reserve the name for the company. So I call it as putting your kerchief and reserve. Okay, tunda puttu, okay, you're reserving the name for a company. So there are time limit within which you can do that. So 20 plus 20 plus 20 or 20 plus 40 like that we have. We will see it in a little while. Then you will also draft the MOE and the AOE. You will get the consent from the directors or the subscribers of the memorandum. Then you will pay the fees and then all the formality will be compared with, and then the ROC will give you the certificate of incorporation form INC 11. Okay, so this is about it. So how do we do about that? Firstly, an application for registration shall be filed in the jurisdiction of the registered office bearer. So you should see in your jurisdiction who is that. For example, in Chennai circle, we have an ROC. Coimbatore circle, there's going to be another person. So just like that, it's going to be different. So in your side, you should see who is the ROC. You should file Form INC 32. Along with that, you should file the prescribed fee. So 32 is application. 33 is where you will find the form for memorandum, and 34 is the articles of association. So 33, 30, 32, 33 and 34 you will be filing it, and it will also be duly subscribed by all the memorandum. So if you see this point, May 2025 it was a question. Okay, so who can be the subscribers and what and all is to be complied with in regard to the same. For example, what should be included in case of a subscriber? Their name, their naam, kam, all those things should be mentioned. Which means naam means your name, kam means your occupation, what work you do, and the description of it. All those things must be done. Not just that, it also be signed by a person who is called as a witness. Should also be signed there. So witness, naam, kam, all those things also. You should mention the name, address, occupation, the description of the witness should also be mentioned. Now, illiterate subscriber, for them, thumb impression is enough. And against that, they will write the name and the number of share that they are holding. No? So that person's, not thumb impression, that person's signature, whose naam, kam, all those things should also be there. Fine. In case it's a body corporate, anyone who's authorized by it will be signing it. In case of an LLP, it will be signed by a partner. In case of a foreign national residing outside India, then it will be authorized by a notary public. It will be notarized by a notary public, and along with that, his name, where he is, all those things should be mentioned. In case of a foreign national visiting India, he can do so only if he is having a relevant business visa. Okay, you should be having a business visa. So this is with regard to the subscriber. So it was a rather unexpected area which was tested in our question. So I'll tell you there is nothing called as important point. Everything is important. Okay, all right. Now, along with that, we have to give a declaration by the complaints by professionals and directors and managers. So who will submit it? You, me, we. So we, the chartered accountants, will give a certification that they have complied with everything. And declaration by the subscribers to the memorandum of that is the first directors, they will also give a declaration that everything is true and fair. We are very good people. We have not done any fraud like that. They will give it INC 9. INC 8 will be given by CA, CMA, CS, telling that they are engaged in the formulation and everything they have considered, all the matters incidental and precedent to this, they have considered in the formation of a company. So this is INC 8 and INC 9. And in case of first directors, what are the details that is required to be given? They should have the name, identity, DAR2, their nationality, and if they have interest in any other firm, that should also be mentioned. Then their residential address and the DIN, mainly that should be mentioned in this regard. Then in case of subscribers to the memorandum, so just now we saw their name, okay, and their com, okay, and everything in between, their residential proof, date of birth, parent details, any other promoter details, all those things you should be mentioning in case of a subscriber. So those points we saw. Now, once all this is done, the registrar will issue a certificate in Form INC 11. When this company is incorporated as a Nidhi company, then we will also get a declaration by the central government that they are okay with this, and then we will start commencing the business. So only after we get the okay from our central government, we can start commencing the business. Okay, now what is a corporate identity number? So we'll have a separate number for the company. Not going to much showing that and all, but it's a 21-digit alphanumeric number, and all these records and details whichever you have with the company should be maintained at a place which we call as a registered office. So now we have incorporated, we have got INC 11, we gave INC 1, 32, 33, 34, INC 8, INC 9, then we got INC 11, we got. Now, within 30 days of incorporation, what you should do, you should actually have a place which is called as a registered office of the company. Right? You're going to see it shortly, but just giving you a heads up about that. And if at all you are giving any incorrect information or you're suppressing any information and you're getting an INC 11, right, you will be charged with the most harshest penalty you will ever see in Companies Act, section 447. I often tell the students to make a note of it in the front of their page, in front of your book, so that you know what the section gives as a penalty in this regard. So that is section 447. And if at all the NCLT is also aware that you are doing some hanky-panky thing and you formed the company, then they can also give some order. So what order? In order of their increasing severity. So firstly, what they will tell is that you can go and regulate your management, change it. So I used to tell the students, imagine you are not coming to the class, okay? And we will ring up your parents also that you're not coming. You come here for power prep batch. We will take good care of you. We have mentors and everyone. And if you're skipping also, we are taking accountability for that and we are trying to correct it. All right. So what we do is we'll call the parent. Let us say we are calling the parent. Okay. So what they will do once, Kanna, go and study the Kanna. And your parents will tell the first instance. Correct? So that is called as regulating, trying to regulate. Please come up, go and do that like that. Next step, become unlimited liability. If you still do not follow or becomes a very severe kind of fraud they have done, they will do unlimited liability. Just like your parents will start to cut your pocket money, right? Unlimited supply will be cut. Next step, name removal. They will tell you don't have to study, right? Then they will tell winding up. Enough, katam. Go get married. All right. So like that, no one should tell us. We should be good up to that point, right? Like such things should not be enforced on us, right? So this is the maximum thing that they can do, which is order for the wind up. So increasing order of their severity. So they will tell that regulate the management. Then they will tell unlimited liability. Then they will tell the name itself removed, or they do the winding up or such other power as they can do. So this is section 7. Subsection 7, tested area, which was tested twice in the previous year question and also quite often tested in the MTPs. All right, so please give due respect for it also. And whenever such harsh penalty is imposed on you, you will always be given ROPH, which is like called as a reasonable opportunity of being heard will be given to you. All right. Yes, people. So moving on to the next concept that we are going to see with regard to our favorite Section 8 company. Why it is our favorite? We are doing it for the public. So, all right. Now, when we talk about a Section 8 company, we know that it is for the purpose of not for earning profit and only for the purpose of promoting charitable, social, not for profit, and it could be for promotion of commerce, arts, science, education, sports, or for social welfare. So for any of these objectives, they could be working for it. When I say they are not for profit objective, it doesn't mean that they should not get any profit. They might be getting profit, but that profit should not be distributed and it should be reinvested or it should be brought back again only for the purpose of furthering the objective of all these charitable activities. So this is about our Section 8 company. Now let us see who is going to authorize the formation of it, how it is going to come and everything. Who is the authority to give it? The central government. Why? Because you're doing for the public, so they are going to come and going to give you a grant with regard to it. So who is going to do it? The central government is going to give a license for it, but they may be acting through the ROC also. And as we already seen, the objective includes promotion of commerce, arts, science, sports, education, social welfare, charity, protection of environment, all those things. Now, can they get a profit? Yes, they can get a profit, and it will be reinvested only for the purpose of furthering the objective of this. Can they declare a dividend from the profit that they have got? No, they should not declare a dividend from the profit they have got. Interestingly, one student in my class, he asked, ma'am, they can declare dividend, not pay dividend, okay? So there is nothing like you declare and not pay dividend. It makes no point about it. So you never even talk about something called as dividend in a Section 8 company. All right. Now moving on. So what is the procedure? You will file it in SPICE plus an INC 32, inform INC 32 in, and we will file it to the ROC along with the prescribed fee. Then if they are satisfied, they will issue the certificate for being registered as a Section 8 company. Along with that, what and all you will file? You will file the memorandum and the articles. You will also file a declaration by each application that they are aware of everything, that they are going to do only this activity. Along with that, it is not enough if the applicant alone is declaring. We also need to have a declaration by the professionals. Professionals, you and me. Okay, so we also need to have a declaration by a CA, CMA, or a company secretary in practice telling that they have complied with all these things. We are going to attach something which is called as an estimate of future annual income and expenditure for the future 3 years, specifying the income source and the expenditure objective. Okay, for the future 3 years, this is what we are going to do. This is the income we are going to generate. So it is like they should have a projection or a plan for what they are doing, at least for the period of 3 years only. Then they can do the objective for charitable activities. All right. So for the 3 years, they should have a future projection of their income and how they are going to expend for the objective of the business. So this is about what are the supporting documents which are required along with it for the purpose of application. Now, how do we alter the articles? So, alteration of memorandum and articles requires the prior permission of the government. Right? So, because you are going to, we got a permission also from the central government, and to alter that also we need the prior permission of the central government. Okay. In case of memorandum, central government, but through the regional directors, they are going to assist us for that. And in case of articles, the central government through the ROC, they are going to do it for it. So in case of memorandum, it is the regional director, and in case of articles, it is the ROC who are going to assist us, and that they are from whom we should get the permission for the purpose of conversion, for the purpose of change, the alteration in the memorandum and the articles. Now we are going to talk about the conversion of Section 8 company to any other type of company. So we don't want to do for a non-charitable work. You want to start getting profit. You are getting profit. You want to declare your profit. You want to do some commercial activity along with it. So you are no longer going to fit into a Section 8 company. Now moving on to the other type of company, what we are going to do? How we will start with it, right? We need to pass a special resolution at the general meeting, right? Because it's something very concerning, right? It has to get, you have to get the permission from the 3/4 majority, right? We are going to shift the nature for this purpose. We are going to get the permission from the 3/4 majority of the people, and in that also we should include an explanatory statement. So whenever we do a special resolution, we'll also have an explanatory statement as to why we are doing it, what is the motive, any logical point with regard to why we are doing it, how it is going to benefit for us. All these things will be included in our explanatory statement. And along with this, in Form INC 18, it should be filed with the regional director. Okay, how will we remember INC 18? So conversion of Section 8 company to other company. INC 18, you're going to convert 8, then put 18 and give it to our regional director, along with it, with the prescribed fee and the notice of this resolution and our explanatory statement. All these things you're going to give it to our regional director. Okay, then we are going to apply, and along with this we are going to give it to him. Then not just that, see, when you are a Section 8 company, imagine you would have got some special situation as ATC direction and all, like you might have applied for it, right? So who and all is involved in here? Charity commissioner involved in here. Then, of course, the Income Tax Act is changed as of when we are recording today, but for the syllabus it is still relevant, so let me quote the old Income Tax Act, right? So the charity commissioner would have been there. The income tax authorities are also watching us. So to them also we should say Tata bye bye and go to another type of company, all right? Then, so to them also the notice is sent, and also to our chief secretary, fine. Then intimation in this is filed with the registrar in form INC 19. Then not just that, we should also tell everyone. So we told the regional director 8 we are going to convert, so in 18 we are going to tell, then we are going to tell to the departmental authority people, then we are also telling our ROC in INC 19, then you should also inform the same to the general public. How we are going to do that? By putting it one regional newspaper and one English newspaper, so one vernacular newspaper and in one English newspaper, and also by placing it in the company website we are going to do that. Not just that, so not enough, so we'll also have to ensure that all the financial statements you have filed are true, okay? Then sorry, then the RD will check if everything is proper. If he is fine with that, he will say okay. If he is not fine with that, then he is going to impose some restrictions on us, and he is going to tell you make a changes with regard to all these things. Then you can go for the conversion. All right. Now, if there is any rejection also, then we are going to have ROBH. Okay, we will be given ROBH, which is a reasonable opportunity of being heard. We will give an opportunity for us to be heard, for us to tell our facts. And then once it is all done, she will agree to it and we will get a new registration upon conversion. I hope this is crystal clear. If it is required, kindly pause it now, take a minute, read, and then move ahead. Moving on. Now, people. One thing that you can do is conversion. The other thing is that if you are not converting, you are still doing some other non-commercial activity, hanky-panky thing in our Section 8 company, then the central government will look at you and tell that, no, you have to leave this. How will we leave Section 8? So either we will be wound up or we will be amalgamated with another Section 8 company having a similar objective. This is what they can tell. Let us read and understand it. So who is going to do that? Central government is going to do that. Through whom? I mean, directly they're not going to do that. Through our regional director, they can do that. The power delegated to the regional director, they can do that. How and why they are going to do that? When you don't want to continue and you are doing some fraudulent activity, or you are violating the public interest, or you are violating the objective, okay? In that case, you will be given an opportunity of being heard, and if they still feel that no, this is not going right, then they can revoke the license. And if the central government is also satisfied in the public interest, they may decide to revoke the license that is granted for us. But they're not going to do that, okay? Just doesn't mean we are going outside of the list of it. They can still have us, but amalgamated with another Section 8 company having a similar objective, okay? Or what they can tell, we might be wound up, right? If we are wound up, excess assets are transferred to another Section 8 company with a similar objective, or the assets will be sold and the proceeds will be credited to the insolvency and the bankruptcy fund. So IBC fund, that it will be gone, right? So this is with regard to the revocation of license for a Section 8 company. Quite often tested area also. Now moving on. What are the penalty provisions that is applicable for a company? Now, in case you are not complying with any of the requirements laid out in this section, then the penalty would be 10 lakh to 1 crore. So 10 lakh to 1 crore. And for every officer or default, it is 25,000 to 25 lakh. And for fraudulently conduct of the affair, it is a famous section, section 444. Welcome to free stay, like that they will tell, and it's very harshest penalty that you'll ever see in the Companies Act. Now, what are the relaxations that we have for a Section 8 company? Alright, so what are the relaxations that we have for a Section 8 company? We know that we will also see it later. Whenever a company is convening a general meeting, it should have a 21 days clear meeting. But for a Section 8 company, it's enough if you have 14 days clear meeting instead of the 21 days clear meeting. Also, there is no requirement of minimum directors, there is no requirement of independent directors that is required for our Section 8 company. And we don't have to communicate certain committees like nomination committee, remuneration committee, shareholders relationship committee. So, but anyway, all these things we are all going to study in detail in inter. So, mostly you will be studying it in your SPOM in final level. Alright, so this is certain relaxation that we have for the Section 8 company. Alright, now what happens once a company is registered? So it will have a separate identity, right? So it will have a separate identity of its own. It can sue others or it can be sued also. Okay, you can also throw a stone at someone. Someone will also throw a stone at you. Okay, because you are having a separate existence, and it will have all the functions of an incorporated company. You have a perpetual succession. Men may come, men may go, but you will go on forever, right? Then with regard to property, you can hold, acquire and dispose any property in your own name if you are registered as a company. So that is also possible. Then moving on. So you are there. You will have my vision, like that. You will have certain things in your life. You don't have, go and write that first. What is your vision? What is your mission? Right? What is try to find why you are living, purpose of your life, right? So just like that, the company will also have something called as a memorandum of association. So this memorandum of association is nothing but the charter of a company. Okay, it tells what the company is, how it is, all those things we can see in the memorandum. You can see it is the fundamental document of a company and it's regarded as a charter or a constitution of the company. Now this is divided into so many segments, people. So we also studied it earlier. Name, situation, objective, liability, capital, association, or the nominee clause. So these are the clauses in a Section 8 company. Let us see it one by one. Okay. Now, in case of a public company, the name of the company will end with the word limited. In case of a private limited, the name of the company will end with the word private limited. In case of an IFSC, it will end with the word IFSC. Like that, it will end. So this is about it. Now, we will also talk about something which is called as reservation of name of the proposed company. So I think yesterday also we saw provisions with regard to that. Fine. So we can reserve the name for a company for an initial period of 20 days. And after that, the slab is just increasing. Just revisit back. Now, all right. Now, who's the authority to whom we'll have to reserve the name of the company? We will have to reserve it to the registrar of companies. And what is the fee for it? As will be prescribed. Then, resubmission or rectification of defects can be done within a period of 15 days for this purpose. How will we reserve? We'll reserve it from, you'll run using the reserve unique name web service. We'll file it with the ROC along with the prescribed fee. And if you want to rectify anything, a time period of 15 days is allowed. And one main thing, it cannot resemble any existing company, and usage of any offense which is prohibited under law also you cannot use. Alright, so you cannot use a name, anything like which will give people the impression that you are a government aided, government run, all those things, name like that at all. The name should not be there, right? So we have a list, right, of what names and all should not be there. Okay, we cannot include it like the Royal Crown Prince, a private limited, like that and all. You should not have the name also. Fine. So maybe your mom will call you Raja. Okay, doesn't mean that you can have the name as something like that. No, fine, right. Now moving on, the name allotment. All right. So how we can go and reserve the name for the company, right? While approving and allotting the name itself, the ROC will also check if it is resembling any existing name or not. That he will also check. If it is resembling, then he will not give you. For how many days I can reserve? So initially, 20 days you can hold it, right? Afterwards, if you are still not satisfied with the name, right, what will you do? You will ask for further extension. So for the initial period of 20 days, there is no fee that will have to be paid. For the further extension of 20 days, you will have to pay a fee of 1000. Still, I am not able to decide. Then, okay, no problem. You take some more 20 days, but this time fee is 2000. Okay, like this you can take step by step, or you can think like 20 days they will give you. No, anyway within the next 20 or 20 days I'm not going to take it. You give me 40 more days. So they will tell you overall you will have to pay a fee of 3000 rupees addition for the purpose of reservation of your name. People, if you know one thing, you're going to come across a lot of rules. Okay, so that is why we say the Company Act is rule based. Sections are that, and everything else related to that we are going to see it in rules. Okay, so this is how the act is structured up, people. Now moving on, cancellation of the reserve name. So if I'm telling myself, then my word sometimes I also will not listen to. This is like that. So you have reserved the name, right? It is found to be wrong or based on some incorrect information. You are not happy with it. You are not going to take up the name. So also they will do some action with regard to it. For wasting the time of the ROC, what he can do, he can cancel whatever name is reserved by you. Okay, he will give to someone else. And he will be liable for a penalty of 1 lakh for wasting his time and others' energy. Well, also what he can do, this is if the company is not incorporated. If at all they are finding you have violated anything or based on some incorrect and wrong information, you have incorporated the company, then they will tell you change the name within a period of 3 months by passing an ordinary resolution in a company, which you should do. Chup chop, as a good person, you should go and change the name of your company in a period of 3 months by following an ordinary resolution. Then, or what he can do, he can strike off the name from the register, or he can also remove it entirely by ordering or finding up. So these things can be done if the reservation of name is found to be wrong or on incorrect information, right? So these are the things that he can do. Now, moving on to the situation clause. So what is the situation clause? When we talk about the situation, we are only talking about the place where the registered office of the company is situated. Okay. So why do we need a registered office? So why we all have no permanent address for communication like that we were speaking of. No, why to have letters sent from there or letters sent to there? So for that purpose, we have our address for communication and permanent address like that we have. No, same thing. A company also will need to make a lot of communication, right? So for that purpose, they will also need a place. Not just that, this is the place where they will have their books of accounts, certain other registers. Not just that, in the place, in the city where the registered office is there only they will also conduct their annual general meeting. All right, so this is so for that purpose, this registered office is essential, right? One more thing, this is the place where the jurisdiction of the court will also be considered. So Coimbatore means the Coimbatore court jurisdiction. That is where you can file case on them or they can file case on you. So this is also one main thing. So it establishes a domicile for ROC, for the regional director, not just that, for the NCLT, High Court, and other for the financial aspects as well. And this is a place where you will have the statutory book. This is your communication hub. So for all these purposes, you are required to have a registered office. And every company within a period of 30 days from the date of incorporation will establish a registered office, telling that capable of receiving and acknowledging all the communication and notes, okay? And such registered office shall also be maintained at all times thereafter. So continuously it should be there, not like 30 days I'm opening like this. So every company within a period of 30 days from the date of incorporation, we are required to have a registered office. Next, what is the next clause? We are going to deal about the objective clause. What is objective means? For the purpose for which the company is incorporated, right? Now, why we are studying about this? Mainly for the purpose of talking about ultra vires actions which a company might do. Ultra vires means, so we have seen about two things, MOA, AOA. Okay, MOA is like the charter of a company. Yes, AOA is dealing about the internal management. Okay, fine. MOA is the charter and AOA is dealing about the internal management. Let us say in AOA we have a clause like this director should not borrow money for the company. Okay, there is something like that. And the MOA is telling this company should not do any other business apart from cotton trading. Okay, so that is mentioned in MOA. Now tell me, if this director who is being told that he should not borrow money borrows, can I correct it? Yes, it is beyond AOA. MOA is not telling anything with regard to it. It is within MOA. So I can ratify it. Alright. So which is beyond AOA and within MOA, I am able to ratify it. Anything beyond MOA, even God cannot ratify it. Okay. So why we are talking about is that we also have an interlinking with the Indian Contract Act, voidable, like that we have, no? So beyond AOA, within MOA, you can be ratified, it may be enforced, but beyond MOA, it is void ab initio, you cannot ratify it. Clear? So this is the point about it. All right. Now, so why it is being brought? It is being brought to protect the interest of the shareholders and the creditors. The company is doing anything beyond the what they are authorized to do. Beyond, we talk, no, these days we talk something about boundaries. Don't cross my boundaries. We used to tell, no. So that is their boundary. Okay, they are not supposed to cross that, and you should be, when you are dealing with the company, you should ensure that they are not crossing their boundary. Okay, which is their ultra vires act. So it is done as a way to protect. Now, what happens if at all, let us say, they are crossing their boundary? So, what a member can do, they can obtain injunction. Injunction means for a specific performance. They can tell you should do with this, or they can also sue for enforcement. They can ask them to do that, or they can also claim any compensation. So, this is possible for the people who are affected. Now, moving on to the liability clause. Alright, next we are going to talk about is the liability clause of a company. So what is the liability clause? It tells that the members will have to contribute so much amount in the case the company is going to wind up and there are not sufficient profit for the company to, sufficient assets for the company to pay it from that. And this is the key benefit of a company itself, right? That the liability of the members is limited. Limited means limited to the amount which is unpaid on those shares. Okay, and in case of a company limited by guarantee, it is limited to the amount which they undertake to contribute in the event of winding up. So which means for what and all they will contribute to the assets of the company in the event of being wound up. while he is a member. So when he is a member, itself the company is being bound out. Or he ceases to be a member and within 1 year, this is happening. Okay. For what he will contribute for the debt and liability contracted before ceasing to be a member. So there's a cutoff date. Okay. So from this date, he is no longer a member. So on the day before this cutoff date, that is the date when he ceased to a member, for all that liability, he would be liable for it. Also, liable for the cutoff date, we told, no? So it is only 1 year of ceasing to be a member. So, all right. So for only in that case, he is going to be liable. All right. And for what and all he will have to contribute? He'll have to contribute for the cost, charges, any expenses of winding up. And this rights will also be adjusted amongst the contributories. So this is based on how they agree to share notes. So that is about the liability clause. Next, we are going to see about the capital clause of a company. So what it tells is that it tells this is the authorized share capital. This is the nominal share capital, like this they will tell. So this is about the capital clause of the company, and it is divided into how many share capital. So that also we will be seeing. So this is about the capital clause of a company. And then one more thing, we have the subscribers to the memorandum, right? That is the people who agree to undertake certain number of shares. Their name will also be mentioned in here. It should not be less than 1 share, which means at least 1 share they should agree to take. Alright, so this is about a capital clause, and subscriber's name is also mentioned in the subscriber clause. Then with regard to the OPC, we have a special clause which is called as a nomination clause. So that they will tell who is a member and who is a nominee. We already seen. And these are the forms for our memorandum. So which type of company, if you are not having a particular format, you can take this format and you can use it. Okay. So if you are going to be a company limited by share, it is A. So like that certain thing they have given. Pass, take a read, keep going. So this is about it. Now, all these documents like the AOA and the MOA, we are going to see AOA in a little while. All these documents are called as a public document, which means any person who is entering into contract with the company is presumed to have knowledge of the contents which is mentioned in this public document. All right. So they are told that we are presuming that they will be knowing what is in that, right? Now, fine. Let us do a quick recap of what we have seen now. All right. So far we have been talking about 1-person company, Section 8 company, and with regard to all the clauses in our memorandum. Okay. So this is all the crux we have been seeing. Now, moving on, we are going to talk about the articles of association. So as I already told you, it deals with the internal rules and regulations for the management of a company. It is complementary, and together they form the charter of a company, which is how the company is going to perform, how the company is going to function, and also it lays down the rights, responsibilities and obligation for the company with the members and with the members amongst themselves. So this is all laid down in our articles of association. So they'll have the regulation for the management, and they will have matters with certain things. So if you see a lot of things, many procedural formalities that we are going to see, it will tell if it is authorized in the article. So you will tell, no, whatever I tell, when your friends plan something, I will ask my mother and let you know, or you're married, I'll ask my spouse and let you know. So like that, whatever the AOA tells, if it is authorizing us, we are eligible to do that. So like that, right? Then sometimes it may include certain additional matters also with regard to the management of the company. Most important tested area, provision for enrichment. Let us see what it is. So before that, I will tell you what an enrichment provision is. Alright, so what is an enrichment provision? Say, there is certain thing which an article is telling, okay, and you do not want anyone to change it, you want to have it so intact. As per the Companies Act, what is the maximum level of permission that is required? We need only 3/4 majority of permission. Okay, 3/4 majority you can change it, but sometime you will tell, like, for this purpose we need a board resolution, not just a board resolution, where there is a unanimous consent from everyone. Okay, so maybe you want to pass something, you will want unanimous consent only, and even if there is one black sheep, you will not able to be passing that particular resolution at all. Okay, so that is called as enrichment, which means something which you want to keep very rigid and intact. You are not able to change it with 75% or 80% or 90%. You will need a unanimous resolution. So this is making it difficult for the company to change certain thing with regard to the company. That is, you're making it very rigid. Okay, right? So that is about the enrichment. So when you can include those enrichments at the time of formation of a company, so we can include an enrichment provision, or by amendment to the articles also you can include an enrichment provision. So how it can be done? It can be done by a consent of all the members in case of a private company, and by way of special resolution in case of a public company. People quite often a tested region. Okay, and once this is passed at the time of incorporation, then in SPICE plus form, that is in INC 32 itself, you will have to be filing it with our ROC. And in case of existing company, in MGT 14, within a period of 30 days of passing it, you will file it with our ROC. And these are the forms of the content of how the AOA can be drafted. Now, moving on to yet another important aspect, essence of doctrine of constructive notice and doctrine of indoor management. So, listen to the story. So, what is the doctrine of constructive notice? So, we just saw that these MOA and AOA, they are called as a public documents, right? They are registered with the registrar, so anyone can see it. All right. What do you do when you go and follow someone in Instagram? Right? You will see the followers, you will see the following. See, when you're able to follow someone itself, you're going to do that. No, we will not touch Instagram also. I'm very sorry. So we will not touch Instagram also, but some other people will check like that. They will do. I heard, I don't do also. All right. So for that simple thing itself, they are checking following follower. When you go and invest in a company, why are you not checking the public documents called as MOA and the AOA? You should also check it, right? So that is what they have given. Doctrine of constructive notice. You are deemed to be noted that you have knowledge about what the company can do or the company cannot do. So this is called as the doctrine of constructive notice. And you can also inspect, you can go to the registered office, you can pay, if you're not a member, you can pay a prescribed fee and inspect and take copy. If you're a member, you can just walk in, inspect and understand about the provisions. Now, whenever a member is requesting, the copy should be sent within a period of 7 days of the request. Otherwise, the company and the officer are liable for a fine of 1,000 per day, which can extend to 1 lakh rupees also. So this is about the doctrine of constructive notice. Okay, fine. So you are deemed to noted that you know everything. All right. Now, whenever we put some provision in law, you will have the opposite thing also. So the opposite thing for doctrine of constructive notice is the doctrine of indoor management. See, for example, the AOA is telling, so this company should have an unanimous approval from all of the directors. In that meeting, there should be this independent director definitely present there. Okay, all the directors present. Also, the independent director must also be present. They put a provision like that. Will I, as an outsider, know if that day that independent director came to the meeting or not? So if it is passed, I will presume that all the people were present and they gave their consent to pass it. Will I know if he was present or not? No, I do not know, and I'm not obliged to go and check all those individual aspects also. All right, so this is called as the doctrine of indoor management. So as an outsider, I will feel that the internal affairs of a company are perfect and proper, and I need not go and check the each and every steps by them. But there are certain exceptions from it. So whenever they give this protection to the doctrine of indoor management, it is not giving a full protection, it is giving only a certain limit of protection. So for what and all they are not giving? When there is a knowledge of irregularity. So you know that this board meeting, that independent director was not present because he was with you having tea. Okay, so you're knowing that, or you could have found it with some small effort. No, you could have seen the board minutes, or you could have seen any other minutes of it, and you could have known if the documents are signed by all. With just one step, with just that small due diligence and effort from your side, if you have found it, then we are not going to offer you protection from this. In case of forgery also, it is not there. And if it's questioning the existence of agency, if there is no agency there, then in this case also, this doctrine of indoor management is not going to protect the members who are dealing with the company. All right. Now, we have the resolution passed. Then above that comes the agreement, whatever the company is entering into. All right. All these two things will function within the ambit of the AOA, and the AOA will be functioning within the ambit of the MOA. Okay. Right. Now, whenever there is anything inconsistent with the Companies Act, who will only override is our Companies Act will override everything. Okay, because we cannot override the Companies Act, then there is no basis for why we have rules and everything, right? So for that purpose, the act override the provisions of AOA and MOA. All right, now we are taking steps further. So I told there is AOA, there is MOA, and the AOA cannot override the MOA. Can we alter the MOA itself? Yes, it is possible. You can alter the MOA. Let us see the steps in detail one by one. Can we change the name of a company? Yes, you can change, but for that you need to get the approval of the central government. But directly we are not going to go to the central government. The central government has delegated the powers for this to our ROC, right? And you are going to use form INC 24. How will I remember INC 24? Name has 4 characters. So you're going to change it. So you're going to change it to some other name. So to name, okay, NAME, okay. So for that, you're going to use form number INC 24. Along with the prescribed fee, you will file it with them. And in this way, you will be granted a new name and a fresh certificate of incorporation being issued in form INC 25 bearing the new name, and that new name is effective from the date they have given you the fresh certificate of incorporation. All right. Now, rectification of name. Name was proper only, but later it became improper. How it became improper? It might have, okay, let us start from the beginning. How it can be rectified? Central government or a regional director, if they have an idea that the company's name is identical or to resembles an existing name. So there are questions of ours in this area. You can put a star mark, quite often tested area. So if it feels that it is identical or resembles an existing company name, then or order an application by the proprietor of a registered trademark holder. So there's a trademark holder with that same name also. So he is also requesting you, fine, it's violating my trademarked name, please change. Then the regional director might ask us to change that name, and within 3 months, chupchap karke go and change your name within a period of 3 months by passing an ordinary resolution is enough. That also, application by the trademark proprietor must be made within 3 years of incorporation. So once we are done the incorporation within a period of 3 years, once they are done with the incorporation, the period of 3 years, they should tell that, see, it is resembling our name, you will have to change it. After changing, it should be filed with the ROC within a period of 15 days, and a new registration certificate and with the updated memorandum, that is a name clause, it will be issued to us. And if that is a company is defaulting in it, the central government will allot a new name, they will keep the name, and the ROC will issue a certificate for the same. I hope this point is crystal clear. Pass a minute, take a pass, then move ahead, read and move ahead with the next one. Now, so name we saw. Next we are going to see about the situation clause. Can you also change the registered office from one place to another, one state to another, or from one city to another city in the same jurisdiction? Yes, you can do. So I call it something like this. We are going to change from one city to another city within the same jurisdiction of the same ROC. It is just like changing from your right hand to your left hand, right? The same person only. And only when you change from one person to another, or when you go outside of the state, huge procedures are involved. Now let us see with the procedure for shifting of registered office from one state to another state, person also changing. Now this is an alteration of memorandum, like the situation clause, and it requires a central government approval, which means the regional director is going to approve the same. And this is form INC 26. There what and all, you will have the altered memorandum, the altered AOA, the special resolution copy, the board resolution, and the list of creditors acknowledging that, and the service to the ROC that you have shared to the ROC and the chief secretary. Okay, we will make a note of it. So firstly, what you need is, you will do an alteration of MOA, because this relates to the MOA, no? Along with that, AOA is also going to be altered, so that should be filed. You need a special resolution, board resolution, then creditors. All right, so you're changing from one place to another. What and all problem can come? People who will want to sue you should run to that place. So for this purpose, you should also get that concurrence from the creditor if they are okay with you moving to the other place. And then you should also have the acknowledgement of serving this to the ROC and the chief secretary. Okay, so creditors, ROC, chief secretary, all these people. Then the advertisement for this should be in one vernacular language paper and in one English paper, and it should be done within a period of 30 days of filing. All right, then the regional director will dispose the application within a period of 60 days. Fine. So within 60 days of you going and giving to him, he will see, okay, can I admit it or not admit it? And that you should take it to a ROC within a period of 30 days from getting it from the regional director. And once he is satisfied, a fresh certificate will be issued mentioning the new place where the registered office is situated. So pass, take a read and move ahead. All right, now can I change the object clause of a company itself? Yes, you can change the object clause of a company, but in case you are a company which have raised money from the public for that particular objective only, now you want to change your objective only, so you are enrolled for CA course only, now you are telling I want to do ACCA course with the same book, how you can do? Okay, so don't change your course. So okay, so you have raised money from the public telling that I want to do this. Okay, you got money from your parents telling I want to go to CA class. Then you are using it for some other activity. Then will they allow? All right. So if you have any other unutilized amount from that fund, then what you should do? You should get a special resolution. You should pass it through a special resolution through postal ballot. Okay. For object class change, you should pass a special resolution to postal ballot. Okay, fine. Then it should disclose to the members what and all the notice of the meeting should disclose, right? What is the new objective? How much amount is required for that objective? Why you are doing that? Then more details about that. How much money you got from them? How much money you utilized that? How much unutilized money you had? So A minus B. Then because you're going to the new objective, so members might be affected. Now, if it is a risky project and all, the members might be affected because of you doing some risky business, right? How will it impact the earnings, and how will it impact our cash flow? All other details, any other necessary details as relevant for the purpose of discussion, you will have to share it with the members. All right, and this should also be placed as an ad in one English newspaper and in one vernacular newspaper, and also you should host it in the company's website. If any of the shareholders are not happy with that, you can tell them, okay, you have so much money back, tata, bye bye, see you next time. So these people are called as a dissenting shareholder. If you have any money raised from the public and if you're going to change it and people are not agreeing with such a change, then you can give them money and tell tata, bye bye. Okay, so the special resolution should also be filed with the register, and he will examine and register the alteration, and once it is done within a period of 30 days of filing, he will issue a certification once it thinks it is valid upon following all the procedures that we have. Okay, once the effect is entered and the certificate is done, only after it is being effective, only after it is being registered by the registrar, it becomes a conclusive proof that now your objective has changed and you can go into the new business which you want to do. All right, then okay, people. Now, in case of a company limited by guarantee and they do not have share capital, okay, so they don't have share capital and they are only limited by guarantee, you are changing an memorandum and you are giving the right of any person to participate in the divisible profit otherwise than as a member. So a non-member, any other person, you're entitling him to participate in the profit. So all those alterations are void. You cannot increase the benefit for anyone to participate in the profit otherwise than as a member in case of a company which is limited by guarantee. So there is a point about it. And alteration of article. So any alteration of article, what we are going to require is we are going to require a special resolution. So how also you can alter a private company to a public company to a private company. When you go to private to public, you're going for more restrictions. When you go from public to private, you're going to loosen or you're going to bring down the strict provisions that you have. That is from public to private is we are going to strict down. Clear? Now, every copy of the minutes should be all right. Now, in that minutes, so you are required to maintain a minutes in which this change is happening, and whenever the special resolution passed, you should also maintain a minute. So, or normally you will have a minutes of every meeting, and in this minutes also, what you should maintain is that what resolution was passed, how many votes was cast for it and against it, who are those dissenting members. Okay, fine, they are telling, let us see who those dissenting members are, and a copy of the board resolution mentioning the power of attorney should also be there, and also a declaration by the key managerial person telling that we have complied with all other formalities which is required is to be maintained along with the copy of the minutes. Now, in case of a private company, right, so what they are going to do, they want to convert into a public company, right? So what they are going to do, any restrictions or limitations they are going to relax, and then they are going to convert into a public company, and if applicable, central government can order approving alteration. So central government will also approve whatever alterations you are going to make, and that alteration will be filed to the ROC within a period of 15 days in form INC 27. Along with that prescribed altered article, you can submit it to our ROC and get the new registration effective. Now, whenever such a change is made in alteration, so we have no new amendments coming up, right? In every other material that we give, we will have to incorporate the said amendment and only give you. Similarly, the company also, if they do not, they are supposed to make a note of all the amendments that is happening in their regard. And if they do not make a note of all the amendments, and if they are going to issue, then for every copy which they issued in physical form or in the electronic form. So I send a mail with an old AOA or MOA, then also the company and every officer in default is liable for a penalty of 1,000. 1,000 for every copy which was issued without such an alteration. All right. So, all right, alteration should have been incorporated. So this applies to both the documents which are issued in the physical and in the electronic form also. So 1,000 per copy. Then about the registered office, we saw it should be a physical location, and it could be either the corporate office or a head office, not necessarily that is where the functioning of the business should happen. So this is just a place where they have the communication. So that can be just a classroom also, just of a size of that. All right. Then, and once it is established, they will also verify the office. Okay. So the company will provide the proof to the ROC that this place we have. So in your GST proceedings, I don't know, you'll have to take a picture of the office or like that and all you have, no? So that like that they should also submit it. So this verification should also be submitted within a period of 30 days of incorporation. Okay. And in every company, you should have a name board. What name board you should have? We should have a board telling the name and the registered office details of the company. Okay. Name and the address of the registered office details should also be mentioned. Where it should be mentioned? Outside, but should be visible and seen nicely. Just near that, like that, and all should not keep. It should be visible and seen nicely. The language is not in the local language, it must be displayed in the local language in that area. So we are having some Korean name and all. Alright, nobody else knows. You also don't know the meaning of the entire song. Okay, it is like that, no? So nobody else knows the name. So in the local language, you should also have. In Tamil also, you write it. And whatever language you are, it is yours, right? Then it should be displayed. Then, all right. Now, not just that, in the common seal also it should be there, and in the document should also be there. What document? Your business letter, bill, letter of paper, notice, and all the official communication. There also the name, naam mention karna hi padega. It has to be mentioned, and in the negotiable instruments also it should be mentioned. Now, you are changing your name, no? Right? So, suddenly you are not fan of Korean series and you are fan of a Japanese series now. Right? So, now we are changing to Japanese name. Right? Then, fine, Korean name also you disclose, Japanese name also you disclose. Disclose both the names for a period of 2 years. So, both the names, both the old name and the new name should be disclosed for a period of 2 years of change. Okay. Also, on the bill, letterhead, billboard, paper notices, and official publication, there also it will have to be mentioned. And every one-person company is required to have words, one-person company below brackets in the name of a company. Have you seen such that? I have seen actually, right? Then moving on. So once you are changing the registered officer company, you should also notify to our ROC within a period of 30 days of the change in form INC 22. You have changed your registered office from one place to another place. So in INC 22, you should mention it to our ROC. All right, moving on. And we told, no, from one RO to another jurisdiction within the same state. So inside Tamil Nadu only, Chennai circle to Coimbatore circle, you are moving on. So what you should do, you should get a confirmation from the regional director and inform INC 23 you should do. Then once he is satisfied with that, he will grant an approval, and once it is registered by the ROC, it will become effective. So this is about it. Now, if there is any default with regard to maintenance of the registered office, verification or display of the name or change the registered office, then 1000 per day and subject to a maximum of 1 lakh is a penalty in here. Now we are going to section number 10A, my very favorite section. So what this section is telling is that this is applicable to every company, okay? And you should not commence any business until you do all those things. Which is, you should not start your mission, or you should not do any buying, selling, incurring expense for your company unless the verification of the registered office is done. Also, you are filing a you are filing a declaration in form INC 20A. What is the section number? Section number is 10A. The form is INC 20A you are going to file. Alright, right. So before even you start the business, before you turn on the machine, what you should do? You should verify the registered office, and that should be filed with the ROC in INC 22. Okay, and also declaration by the director within 180 days of incorporation, telling that you have complied with all the things, right? All the subscribers have paid the value of the share, right? All other procedures are also been done with that. So who should give it? The director should give it. Okay, file a declaration by the director, and it should be verified by a CA, CMA or a CS in practice. Okay, by these people it should be verified. So before you turn on the machine, see that under 12 subsection 2 INC 22 you have filed and you have verified your registered office, and 10A, so 20A, INC 20A you should have filed telling that all the subscribers have paid the value on the shares which is agreed to be taken. Fine. And the penalty for this section, if you're not filing for the company, it is a separate penalty, which is there also will have to pay, and for every officer also will have to pay. So for the company is liable to pay a fine of 50,000, and every officer is required to pay a fine of 1,000 per day, subject to a maximum of 1 lakh rupees. In case there is a non-filing of declaration, then what they can do, they can very well remove the name of the company from the register and by itself. Now, can a company change from one form to another? Yes, they can change. So that is what we saw. So we'll have to comply with all the provisions, and if the registrar is satisfied, then he will issue a fresh registration. So just the crux of what is given in here. Now people, holding and subsidiary company provisions. So if you do not have this particular material that I am giving it to you, I think it will be available as a PDF in the link below the description, maybe, right? Else, what you can do is take your institute material. The flow is as such how was given in our institute material. So you can have that. The presentation would be slightly in tables and charts and in bullet points, so that it is easy for you. But we have made an effort to keep it aligned with our institute material. So this is for your kind information. Now, we know a holding company, we know about the subsidiary company, right? Now, holding company holds shares in a subsidiary company. Can a subsidiary company hold share in a holding company? Yes, they can hold. No, they cannot hold. All right. So, generally, they cannot hold. But we have relaxation with regard to 3 specific scenarios, right? So, first one is if they are holding the shares before it became a subsidiary, before the relationship of holding and subsidiary came into effect, then no problem, you can continue to hold the shares in the holding company, or you're holding it as a trustee or as a legal representative of any deceased members. Only these 3 cases you can, that is a subsidiary can hold the shares in the holding company. Okay, so quite often tested area people. Now, service of document. So when I want to issue any letter to the company, how should they issue it? By any registered post or speed post or any courier service, or by leaving at the company's registered office, or by electronic mean, or by any other mode also. When the company wants to send it to us, then same thing, post, registered post, speed post, courier, at the office address, or by electronic means, or by any other means. And if at all you are telling me, I don't open my mail, so if you want to send, you should only send it by way of courier. All right. Yeah, the company will tell, okay, we will do it, but for that you should deposit the equivalent amount which is determined by them if you want the particular communication in that particular format, right? Now, with regard to the service of notice, so usually when it will be deemed to be delivered, in case of normal cases, at the usual time of delivery, it will be seen as it is deemed to be delivered. Means sent means now it is sent, okay, sent, now it's delivered. In case of certificate of posting, it is counted after 42 hours of posting. So very, very crucial when we go to the chapters with regard to meeting and all. We will see when the notice has been sent within that particular time period. Okay, so for that you should take this extra 48 hours, which is 2 days you should add, and then from that only you should count the time limit for when it is posted. And in case of a Nidhi company, what is a Nidhi company? Where they have a habit of, where they develop that habit of saving. Okay, for that purpose the Nidhi company is formed. How the notice is to be given? So usually they'll put it in the notice board. Okay, you see the meeting is going to be happening, but they will be serving it individually. Only if you are a member whose who's holding shares with a face value of exceeding 1,000 or 1% of the total paid up capital, whichever is less. For example, let us say the paid up capital is 1 lakh. 1% of 1 lakh is 1,000. Okay, so we'll change 2 lakh. So 2,000 or 1,000, whichever is lower. Okay, so 1,000. Anyone holding more than 1,000 face value share, for them we will give a separate notice. Okay, so the limit is lower than them, so that more people can get the personal information. So if at all a function is happening, will you go if they send by mail? If they come to your home, use it in plate with the fruits, they'll use it plate like that. If they tell, will you go? You like it in the way they come and invite you in person, right? Similarly, they are also keeping the limit lower so that they can send it personally to more members, so they all come and participate in the meeting of a Nidhi company. All right, now. So that brings us to the end of chapter number 2. Now we are moving to chapter number 3. Okay, people, then let us go to the next chapter, which is chapter number 3, prospectus, my personal favorite. Okay, so we are going to see what is to be included, what are the different types of prospectus we have. So all those things we are going to see in this chapter. Let's get started. Now, how can a company get the money? So now you have got that idea of how to form a company. Registered office done, declaration is done, you are ready. Before you started the mission, you were given verified your RO, given in form INC 20A under rule 10A, section 10A also, you are given all the things you have done. Now you want money. Okay, so how are you going to get the money? So you can get it either from public, or you can source it by your own, or you can get loan. Now this is where we are going to talk about how you can get the money from the public. Just like that, they not come now. You will have to give something called as a prospectus. It's nothing but telling that I am so and so. If you have seen in matrimonial ad and all, you will be saying, so I am like this, I am a good person like this. Only after a few years you will know the real face. Then they will tell you everything. Okay, fine. Coming back to us now. The company will also issue a prospectus telling that we are so and so, we have so and so record, we will do so and so things if you come join us. So like that and all, not more flabbergated, but they will have something like that. Okay, and so this is called as a prospectus. Now, when you want to issue any security and get the money from the public, you will issue a prospectus. What is security? Companies Act is a very lazy act, so we do not have the definition of security in here, but we are getting the security from what is mentioned in the Securities Contract Regulation Act. From there we are taking it as telling that security includes shares, scrips, stocks, bonds, debenture, stocks, any derivative. Derivative means it is not deriving its value directly, but it's deriving its value from any underlying contract that they have. So that is a derivative. More you will be studying in CA final say. Okay, then any other units or other investment, then security assets, units or other investment under any mutual fund scheme, then special purpose SPDE instrument, government securities, anything which they declare as a security also, and frightened interest on security, which means your dividend and interest, all those things are also included in the definition of security. Now, moving on to what is called as a prospectus. Prospectus means any document described and issued as a prospectus. So, if I tell this is a prospectus and if I'm issuing it as a prospectus, then that is a prospectus. It also includes shelf prospectus, red herring prospectus, any notice, circular or advertisement which is inviting offer from the public. Why they are having this as an inclusive definition is that they are telling it as it includes this also and anything which is like that also, because they want to bring so many things under the ambit of the definition of prospectus. Why? So that they can have certain format for how it is supposed to be. All right, because we are dealing with the money of the public, they will impose certain conditions. We will have someone who is an expert, so the expert should certify. Okay, all those things we have for a prospectus, because they are playing with the money of the public. So to protect us, they have enlarged the ambit within which the prospectus definition is going to cover. Clear? Now, what is the deemed prospectus? So, deemed prospectus section is 2.5. Okay. So, deemed prospectus is not a prospectus, but any document which is containing any offer for sale to the public. So you are selling any security to the public. So those are also considered as a deemed prospectus. So that deemed prospectus should, even if you are not mentioned in the title as prospectus, if it is an offer for sale of security also, it is considered as a deemed prospectus. And whatever features the prospectus should have, this deemed prospectus should also qualify with regard to it. All right. Now, here is where an MCQ was asked. Okay, as per section 25 subsection 2, an allotment of security shall be presumed to have been made in view of offering to the public if either of the two conditions are followed. So they are telling if either this condition or this condition is followed, then it will be deemed prospectus. Okay, so either this or this condition is followed, it will be treated as a deemed prospectus. People, there are actually 2 MCQs in our portal and also in your T book back questions from this. Okay, what is that? If securities are offered to the public within 6 months of their allotment. Okay, so allotment is done here, one allotment is done here. Okay, again within a period of 6 months, so 6 months is ending here, within a period of 6 months you are going to offer to the public. Okay, then or okay, or if full consideration has not been received, full consideration not received, then in that case it is treated as a deemed prospectus. Then in both the cases, if any one of the cases is satisfied, it is treated to be a deemed prospectus. Now the question was asked like this: when is it not treated as a deemed prospectus? When both the conditions are not satisfied, it is not treated as a deemed prospectus. Either of the two conditions satisfied, it's a deemed prospectus. When both the conditions together they are not satisfied, the conditions and both are not satisfied, it is not considered as a deemed prospectus. Go back a few seconds, revisit it, and then you will be crystal clear. All right, so this is a point about it. And here also one MCQ was tested. So what they asked is that, so in case of a deemed prospectus, in addition to whatever is mentioned, we should mention three things: the net amount, the time and place where the underlying contract you can inspect, and the offerer's names. So all these things should be mentioned in addition. Okay, the question was formed like this. So this should be mentioned in substitution, addition. In substitution means replacing some other content in the prospectus you should mention, or along with whatever is there, these three things should be mentioned. And one more thing was that here they twisted it and asked, the statement that the person making the offer were named in the prospectus as directors of the company. There in the question they gave, that treated as a promoter of the company. So it is not the promoter, it is a director only we are seeing about. So this place also they slightly skewed it and asked for it. So in case of deemed prospectus also, it shall be signed by two directors. Clear? Fine. And the provision with regard to this does not apply if it is offered to the existing shareholders, and is only for that uniform type of share which we always are already issued and quoted in the recognized stock exchange. So in these two cases, these provisions are not applicable. Then yet another important area where questions are also often tested: conditions with regard to an expert statement. So an expert is a person who is engaged in the promotion, formation, and the management of a company. Okay, there is also one more question which I can ask you in this. Okay, so there's this person who's a CA and a MBA. All right, so they are instrumental in forming the company, they are doing everything, but only in the professional capacity if they are doing, they are not called as a promoter. This we know. So who they are only an expert. So expert concerned is like the blood of the prospectus. Okay, so always the prospectus should contain the expert concerned. Okay, and if at all the expert is thinking, no, there is something wrong, or they cheated me and they got me concerned, telling that everything is fine, but actually everything is not fine. Ayyo, how I want to remove my name from that prospectus, you can do so, please do it at the earliest, right? Then should an expert withdraw the consent before it is delivered to the ROC. Okay, so before the signed copy of it is delivered to the ROC, you have an opportunity to withdraw your consent. Okay, all right. Now, so who are all? Okay, now who are all included in the definition of an expert? Engineer, valuer, CA, CS, CMA, or any other person, they are called as an expert for this purpose. Now, once a prospectus is delivered to the registrar, from that date for a period of 90 days only, that prospectus has a validity. Afterwards, the prospectus loses its validity. You will have to go for a fresh prospectus. Okay. Now, going for the next one. Okay, here this is also yet another important MCQ, also theory based question tested area. Sometimes it is not the company, not just the company wanting to give new shares. People who are already members of the company, they will want to give the shares to someone else. They want to sell the shares to someone else. Okay, now what can happen? See, not many people know me outside of South India. Let us say in South India also not many know. Fine, anyway, let's say outside of South India, nobody knows me. If I want to sell shares to someone, if I sell it through my company Reliance, then they will know, right? Reliance is selling some shares, they will know. If me selling, they will not know, no, right? So that what I can do as a member, if I want to sell my shares, I can do it through the company also. That is called as offer of sale by members, all right, which is done in section 28. So what the rule tells is that yes, you can do that through the company also, you can do that. And whenever such an offer for sale is made to the public, that is also called as a deemed prospectus, people. And all the contents, disclosure, liability for misstatement, whatever is applying for the prospectus is also going to apply for this. And what I should do if the company is going to make sale on my behalf and the company is going to incur some expenses on my behalf, I will have to reimburse the company for the same. So this has to be done. Then certain relaxations I have, people. So that is like, I don't have to get minimum subscription, I don't have to get the minimum application fee, and board of directors utilizing the money for the particular purpose not required, because the sale proceeds are going to go to my own handbag. It is not going to go to the director's pocket, it is going to go to my handbag, right? So for that purpose also they should tell that why the person is bearing the cost. Suppose if I'm telling the company has to bear the cost for the sale and I am not going to bear the cost, then in the prospectus they should also mention why you are bearing for her, what is the reason for justification for doing that. All those things they should also mention in the prospectus. All right. Now, moving on to the concept of shelf prospectus. So, what is a shelf prospectus? I take the prospectus, keep inside the shelf, then again I take from the shelf, I give it to you, and again I keep in the shelf. Literally, this is only called a shelf prospectus, which means for one or more issue over a certain period of time without issuing a fresh prospectus, I am going to use the same prospectus. Okay, so I cannot only use that prospectus, there might be some changes because change is changing, right? All right, if you want to change, you should only bring that change, like that bus conductor will tell in bus, no, right? Just like that, whenever there is a change, you should also attach it with it something which is called as a information memorandum. Okay, and now this shelf, how many times I can take and keep in that shelf? You can do it for a period of 1 year from the date of first opening of the first allotment. So that is a validity for a shelf prospectus, and you should also file something called as a information memorandum. Okay, so it is valid for a period not exceeding, means up to a period of 1 year from the first offer is made, from the date of opening of the first offer. And the information memorandum, so there's going to be some changes happening, no? From yesterday and today there's a lot of changes, right? Just like that, certain things you'll have to include in the document called as information memorandum. So mainly, what are the 3 things that is to be included in the information memorandum? Any new charges which is created. Charge is nothing but something old which is created on the assets of the company. So they're telling the members, okay, so some new charge and all they are created. Okay, then any other changes or changes in the financial position too. So to change one charge, you'll have to mention in the information memorandum, and that should be filed within a period of 1 month before the subsequent offer. Clear? It should be done, it should be filed with the ROC within 1 month prior to the next offer. Okay, when you take and give it from the shelf. So this is about the requirement of an information memorandum. Okay, now people, moving on to the next type of prospectus that we are going to see is about the red herring prospectus. So red herring prospectus, it is going to leave out certain information with regard to what? With regard to the P's and the Q's. So what is P's and the Q's? With regard to the price and the quantum of the number of shares that is offered, there will not be any detail with regard to that, which means later they will fill out the details and share the final prospectus. So let us read from it once. So it is not complete with regard to the particulars of the quantum and the price. So this is about our red herring prospectus. Why? Because they can fix the price later. So we call it as a book building. So previously, many years ago in CA final, we had this syllabus where we'll also have to work out how we are going to calculate the value of share that has to be offered. So we call this as a book building. So that it allows us time for us to work on that, and price per share and the number of shares will be finalized after the closure, and we'll know how many people are going to get the shares from us. So that way they can go that way. After that, we will be able to finalize the same. So this is with regard to the red herring prospectus, and any company proposing to issue red herring prospectus will also have to file it with the register within a period of 3 days prior to the opening of subscription list or the offer. So this is how it has to be filed. Once the offer is closed, we should also file with them the final prospectus containing the details of the total capital raise, what is the closing price, and any other details will have to be filed. Moving on, the next one is about the abridged prospectus. So what is an abridged prospectus? It is the prospectus. It contains a memorandum with the salient features of the prospectus, and it is nothing but like our summary material that we will have everything in a crisp and a short manner. It is just nothing but a summarized version. Why it is given? To reduce the cost. Okay, and it is always given along with the application form for by getting the shares. Okay, so this is what our abridged prospectus is, right? And every application for the shares or debentures will always have an abridged prospectus, a summary of the prospectus. It is given in a crisp and a short form for the shareholders, and this is available only when we are going to give to the existing shareholders, and it is a bona fide manner, and it is not offered to the public. So this is the point about it. And every person has a right to receive full prospectus before closing the subscription list and the offer. Moving on, looking at the default in regard to the issue of prospectus, a penalty is going to be 5,000 for, sorry, it is 50,000 for every such default. Then let us look at the Latin word uberrima fides, right? Whenever you are buying any share, you will have utmost faith and that everything which they give is true, fair, and it's properly substantiated by the facts. So this is called as uberrima fides. So just like that, when you get a prospectus, because if it is an already existing company, you would have known about the history of the company with the promoters and everyone. But if it's a new company, you will be getting it in utmost good faith. Like whenever you trust someone before getting that big hit, you will think, I'm trusting so much. So with that most good faith, you will be trusting the people. So just like that, you will also think every prospect is going to contain a true, complete, and accurate disclosure of all the material facts, so that they will be relying on the prospectus before me make an application to the shares also. But that is not the case. What happens? There could be some statement, like there could be some concealment of material fact, or there can be inclusion of any false fact which gives an impression that everything is very good. So these are all called as a misstatement in the prospectus. And do not worry, anyone who makes this misstatement is going to be liable for both the criminal and the civil liability. Alright, now when I tell misstatement, what and all is constituting a misstatement? You are including a false information, you are omitting a material information, or you are doing both such that it is very baseless and nothing is true with regard to that. And a statement is included in the prospectus is deemed untrue if it is misleading, and inclusion is also going to be misleading. So if it is misleading and making them invest in your company by giving wrong information, wrong notion, and it's misleading, so that is going to tantamount to an misstatement, and it's an untrue statement. Okay, it is deemed to be untrue. All right, now what can be done as a remedy for any person who has bought the shares against the company? See, this buying shares by the member and you offering the shares to the future members is nothing but a contract. What we are talking about, we are going to talking about the Indian Contract Act, because this is a offer and acceptance. It becomes a promise. There is a consideration which is involved for that, so it becomes a contract. So we are going to slightly touch upon what our Contract Act also gives as a as a remedy. Okay, so what you can do, you can cancel the contract, which is you can rescind the contract, and whatever money you have paid for the application, you can get it back, and any damages you had because of you had relied on that. Okay, it is very subject to what damages they are not straight away mentioned, but had you incurred any damages because you had relied on these prospectus, that also you can get. Then the company will also face civil liability, that is, they will have to compensate the other person for the monetary losses. Also, criminal liability will also crop in. So, which is 447 penalty will also apply. There is a lot of a prosecution which is free stay that is available. So, that also anyone who wants to do misstatement in the prospectus can get the free stay. All right. Now, so who can get this benefit of rescinding the contract and getting back the amount? So whoever has relied on it, they can get and rescind the contract, but you should have truly relied upon it. Only then you can rescind and get the amount which you have paid. And what they will do, they will refund the amount with interest, with any cost, and they will also remove your name from the register of members. Okay, because you have also got the money back. Additionally, what they are telling is that when this rescission is not available, okay, when this cancelling the contract and giving the back money is not available, when you have bought from a secondary market, it is not available, and when a subscriber to a memorandum cannot seek rescission. Why? If you can think, subscriber to the memorandum will be closely associated with the promoter. Actually, you would have seen him, so you would have been involved in the process or the objective and everything. You would be very transparent with about. So, right? So only when you sign the prospectus itself is the memorandum itself is coming to a life. Okay, it is getting a shape and form. On seeing the memorandum, only people are buying that. And now you itself tell you have been wrongful. Come on, what about the other people? Where will they go? So for that purpose, if you are a subscriber to the memorandum, you cannot get it. And they have given at the time the company itself was not in existence, and you could not have relied on the prospectus, so you cannot tell that prospectus you had relied upon. Okay, that is yet another thing, but you would have been closely associated with the promoters and everything, so you must be knowing that also, right? Then moving on, what action for claim you can get? You can get about the again you can get about the compensation for the same with regard to the amount back, along with the interest and any damages. So all these things we can get. Also we saw that the company or the director or the promoter or the authorized expert, they will also be jointly and severally liable for the same, which means their personal assets can also taken up for paying out the liabilities back to the members. Now, when I told about an expert, so an expert is a person who's outside of the company and he is rendering professional services for the incorporation of a company. He will also be required to certify that they have complied with all the regularities, and he will give a statement certifying everything. Now, the expert is feeling, oh no, I have wrongly given the declaration for this. It should actually not have been given, right? So, I have certified it. Now, I want to remove my authority. I want to remove my consent that this is correct. So, I gave it as correct. Now, I feel it is not correct. I want to remove that. Can the expert do? Yes, he can do. So, the expert will not be held liable when a misstatement is found, and if he had withdrew his consent, he will not be liable. Okay, right? and he has given a public notice telling that now I got to know about this, I want to withdraw my concern. He should have given a public notice with regard to the same. Then if we had reasonable ground to believe that, still I believe that that is only true, then in that case he will not be held liable. Okay, and it's a true extract from the official document which everyone will reasonably think it is correct only. So it's an official document, from that they are extracting, because an official document would have already been certified by someone. So when they are extracting from an official document, we cannot hold an expert liable and all. Fine. Okay, then this is about the liability of an expert. It was asked once in the past MTB also, people. And when there is a particular intent to default, there is going to be a personal liability. So when it intent to default, we are talking about mens rea, which is they have an intent to defraud the other people. Intention is there. They want to do some wrongful activity another against another person. So this is called as mens rea. All right, now. So we told 447 penalty is also there. You can rescind the contract and you can get back. So these are the provisions that is done, included in here. Fine. All right, this is a penalty that we have in 447. Before that, we are going to look at punishment for personification for acquisition. Okay. All right. Punishment for personification of securities. Why they are personifying? See, we have something called as minimum subscription, which means 90% should be subscribed. If at all there is no person outside who is getting it, if they are telling someone to get it for us, if there is a ghost person, which means no physical existence, some naam ke vaste there is something. If at all they are going to do like that, then also it is treated as an offense. So fictitious name they are getting, Uddusami, Kuppusami, Ramasamy, like that. Multiple fake applications they are putting, okay, and they are doing fictitious allotment and transfers the name into that fictitious name, then also it is punishable. Now looking at to the famous sections 447 with regard to fraud. So what and all is covered in here? In case it involves an amount less than 10 lakh, it is fraud is for an amount which is less than 10 lakh, or 1% of the turnover, whichever is lower, and no public interest is involved, which means it is not a very publicly important entity, maybe some small chota mota entity. Okay, then there is not maximum investors, or it is not publicly, like electricity company, something like that. That is most important, right? Then fine is 50 lakh, imprisonment is 5 years, or there can be both 50 lakh, 5 years, this one, that one, or both. Okay, next, fraud involving at least 10 lakh, that is, or 1% of the turnover, whichever is lower, and public interest not involved. All right, so less than 10 lakh or 1% of the turnover, it is 50 lakh. If it is more than 10 lakh, it is 10 lakh or more than 10 lakh, or 1% of the turnover. We will compare 1% of the turnover and 10 lakh. If it is crossing, the fraud amount is crossing that, then the fine is amount equivalent to the fraud, or it is up to 3 times the amount. Okay, and if it is involving public amount, the same thing, amount involving the fraud to 3 times the amount, but here it is 3 months to 10 years, and here it is 3 years to 10 years. Okay, kindly pause for a minute, go through it one more time, absorb it, and then keep moving forward. All right, so again, what is meant by fraud? It is an act of omission or commission to abuse the position by any person with his convenience, done with an intent. So again, we are talking about intent, which is mens rea, that is when they have an intention to defraud the other person is there. Now we are talking about allotment of security. So you have issued the prospectus, people have come and applied for it. Now how are you going to do the allotment? So this is defined in section 39. So allotment means you are offering the shares, and finally you are going to include the name of the person in your register of members. But before you can even think about including the name, when you offer the share, at least 90% of the people should have come and applied for your shares. So there should be at least 90% of minimum subscription for your share. Okay, say when I say conducts exam, at least all of us should score, at least we should score a 60 in law. Okay, because law is such a lovable subject, okay, for us. So minimum subscription 90%, minimum score in law 60%, right? Like this we are fixing. I say is not fixing, we are fixing target for us, right? So just like that, minimum subscription is 90%, and you should also have received the application money. It can be either through check or any other instrument. You could have received the application money, clear? And that should be at least 25% of the amount of the nominal value of share you should have got as the application money, clear? Fine. And this minimum subscription should be received within a period of 30 days. If it is not received, you will refund the amount received as application within a period of 15 days from the expiry of this 30 days, clear? And if you are not repaying within the period of 15 days, you will have to pay an interest equivalent to 15% per annum, clear? And from whichever amount, from whichever bank you got the amount, to that bank you will have to repay the amount. Now once the allotment is done, you will have to file a return in form PAS3 within 30 days of allotment to our friend, our ROC, right? We all have a friend, no, who we will tell, so hey Machi, so all these things happened today, you know what she told, you know what she did. So we will tell, no, I also tell my friends. So such is our ROC. We will put every communication, everything which happens to in his ears. Okay, fine. Only then we can sleep peacefully, right? So this is about the communication that has to be sent to ROC. Now let us see what and all you should attach along with it. So in it you should attach some certain documents, which is, firstly you will include the name, then the address, occupation, and the number of securities which is taken by a particular person. Naam, kam, address and number. Okay, then if it is for consideration other than cash, then the copy of that contract should also be included in that regard. And if it is not in writing, you should include it, and it should be stamped and duly made in writing. Then if it is for consideration other than cash, then it should also accompany with a report from the registered valuer. All right, then moving on. In any case, you're not complying with the provisions regarding to return of application money when you have not got a minimum subscription of 90%, you will be liable for a penalty of 1000 per day, during which the default continues. So after 75 days also you're not refunding the money, then from that date you will be liable for a penalty of 1000 per day. And if you're not filing PAS3, then also it is 1000 per day, during which the default continues. So interest is also there. Apart from that, you are also liable to pay a penalty. So that is also that. This is also there for the people who contravene to pay, not for us. Fine. And whenever you want to offer shares to the public, you will also have to apply to one or more of the stock exchanges for permission to get it listed. And if it is declined, then that should also you will have to mention. Fine. Moving on to the next important thing. So we do have some person who we call as the underwriter. So who is an underwriter? It is a person to whom you will be giving your shares, and in turn he is going to allot it to the public. So that person is called as a underwriter. And if he is not able to find anyone to take up your shares, then he himself is going to happily take up your shares. Not just that, he is not just doing for that, he is also going to get a commission for the same. Okay, before that, that commission can be paid only if it is authorized by the articles of association. So from where and all you can pay the commission, either from the proceeds of the issue or from the profit of the company you can pay, or from both, from party both you can pay. And what is the maximum amount that you can pay as a commission is, see, the word is, this is the maximum amount that you can pay, which is 5% of the issue price in case of share and 2.5% of the issue price in case of debentures. So the maximum rate, right? The articles may fix a rate, like for shares they can fix as 4%, 2.5%, 3.5%, 5.5%. So 5.5% they cannot fix because they can quote only anything below 5%, and in case of debentures it can be only something below 2.5%. Now, in the prospectus, we will also disclose the name of the underwriter, what commission is payable to them, at what rate, and at what amount is payable to them, and the number of securities which he is going to take it up in, in case it is not going to be taken by the public. So this is about underwriting. Okay, people, now moving on to the next most interesting concept, which is a global depository receipt. So what is a global depository receipt? So we have global there, we have depository there, we have receipt there. So how it works, closely follow, then we can go through whatever is given in the content. Now, there is an Indian company, okay? So this Indian company, what they want? They want foreign fund, clear? So the Indian company wants foreign fund. So what they want to do, directly we cannot go and ask someone, give me money for your shares. So it's not going to work that way. So what they're going to do, these Indian company, they will deposit their shares with someone who is called as a depository. Okay, their shares, they will give it to the depository. Now the depository, what they will do, these shares, no, they will convert into depository receipts. Okay, it is not going to be like shares, it is going to be like a depository receipt. Okay, and the shares will be underlying those depository receipts. So one depository receipt could have 3 shares, like that it can be. Okay, so underlying that could be 5 shares, 3 shares, however it you want to fix them, it can be. Then this depository receipts only will be sold to the foreign investors. So what they will only see is the depository receipt. Underlying that you will have the shares. So this is how we can mobilize the foreign fund by issuing the deposit receipts and giving it globally to the other people. Now, when it comes to the voting, so how the voting is done, let us see it now. Now, who's having the depository receipts? So the depository receipt holders are having it. Who knows how much shares are there? The depository only will know. So when an EGM or an AGM is going to happen, the company will send the notice, okay, and the depository bank will be receiving it. That is, the depository will be receiving, and then they will be informing the depository receipt holders, like, see, like this, the voting has opened up, and they will tell how they want to vote, right? So till the time they are converting and getting the shares, who will only going to be voting? The depository bank is only going to be voting on behalf of the depository receipt holders. Okay, fine. And then as they give the instruction for voting, then after that the depository bank in by itself will vote on behalf of the depository receipt holders. I hope the point is crystal clear. So this is about the global depository receipt. Moving on to the next one, private placement. So what's a private placement? Offering the shares or securities to a selected group of people. Okay, so this is what a private placement is. So I told it is a selected group of people. Who selects these people? The board of directors will select these people, and it is given to not more than 200 people in the financial year, and it also should be approved by the special resolution. So special resolution plus a board selection, all right, which should not be more than 200. So only to 200 people it is given. All right, now they have given 200 people, clear, fine. And in this limit of 200 people, who are all excluded? Qualified institutional buyers and employees who are getting under the employee stock option plan. So they are excluded from this limit of 200. Clear? Fine. Let us keep moving forward. And in that resolution where you are getting a permission from the shareholders to go for a private placement, you will have to mention that following things in the explanatory statement. All right, you will mention what are the particulars of offer, what kind of securities you are going to give, and how the price is suitable for the kind of issue you are going to give, name and address of the valuer you should give, amount, how much you are going to get from this private placement you will have to give, and any other material terms that which is involved in pricing the security. All these things should be mentioned. Now there is also certain other conditions and restrictions with regard to the same. You can do more than one private placement. Okay, you can do more than one private placement by just passing one special resolution in a year. But the previous private placement, either the allotment should have been completed. Okay, already I told I am going to do a private placement. That allotment should be completed, or it should be withdrawn, or it should have been abandoned. So any of these things should have happened. So which is, so one thing you close, the next thing you move. Okay, in case of allotment, sorry, in case of private placement. So previous allotment you go close, only then you go to the next allotment. So I'm talking about private placement. Okay, people. Now, this will be given in form PAS4, and it should address specifically to the person to whom you are making it, and it should be either in writing or in an electronic mode, and it should be sent within a 30 days of mentioning, okay, I'm going to send it to this person. So within 30 days of you finalizing the name, you will have to send this PAS4. Okay, now fine. So this also we saw. So with regard to normal allotment, I told that within a period of 15 days, we will have to refund if we have not got the minimum subscription. So here also you will have to refund the money within a period of 15 days if they are not going to take up the allotment. If not, the interest is going to be paid at a rate of 12% from the expiry of the 60th day. The interest is going to be paid. Okay, now there is one more thing. I am getting the application money. Clear? Okay, so what I can do with it? If you are going to go for allotment, you have got the minimum subscription, and in case of private placement, they are also giving an undertaking to take up the particular number of shares. Then in that case, what you will do? You will do the allotment. Otherwise, what you will return is, you will refund it, right? So this is what you can do. Now, if I don't return it, and I'm having with me, then it will be called as a deposit. Later we are going to see in a deposit chapter also, but just I'm telling it for you now. So it will be treated as a deposit. Now what you can do? you might think that sometimes there could be an oversubscription on the share. Oversubscription means you are offering only 1 lakh share. 5 lakh people came to get your share. It's an oversubscription. What you can do in case of oversubscription, either you can return those amount which you got, or you can allot it against the amount that is required to be paid on the shares, maybe as a call money or something. You can adjust it. So this is available only in case of over subscription alone. Only this provision is there for us. Right? Whenever you do a private placement, you are no more allowed or permitted to do an advertisement for the same. Clear? Now, moving on. So we'll see certain provisions with regard to the penalties for the same. If a company fails to file the return of allotment in PAS3, then every promoter, director, they shall be held liable. And if you are not filing it, then the penalty is 1,000 per day, during which the default continues, subject to a maximum of 25 lakh. Okay, and for contravention of section 42, which is for the private placement directly, promoter and director, any amount which is raised to a private placement, or 2 crore, whichever is lower, and for the company must refund all the monies along with the interest, which we saw as 12%. So that was chapter number 3. Let's meet at chapter number 4. Now let us go to the next chapter, share capital and debenture. So the initial segment that we are going to see is very lighter weight. So I will quickly run through it. Let's get going. Now, what is meant by share? Companies Act is a very lazy act, okay, with regard to certain definitions, and they are telling that share means a share in the share capital of a company, okay. And we know we have 2 types, which one is our preference and another one is equity. So I'll just drop this off. Yeah, one is preference and the other one is equity. So when we tell preference, it means that the preferential right to dividend and the preferential right of repayment of capital at the time of winding up, right? And sometimes we also have a type which is called as a participating preferential, which means in beyond whatever is paid to the equity shareholders, even if anything is left out, then they can come and participate in that, remaining what is after payment to the equity shareholders. And if anything is not given, they are treated as not participating only. Next is about the cumulative nature. So it could be, if the dividend is not paid for any year, it might be accumulated and you'll have to pay together with it in the next year also. So that is called as cumulative preference shares. Now, for equity shareholders itself, we have something called as a differential voting rate, which means what we know is 1 share means 1 vote. So before many years back, we had this concept, then they abolished and again they brought back in the year 2010. So it tells that there can be 1 share, 2 vote, 2 share, 1 vote, like that. It can be anything. All right. So how it can be brought back? The article should authorize this, and there should be an ordinary resolution, but it should be for a listed company. It will have to be passed only by way of a postal ballot. Now, to issue these differential voting rate share, you should satisfy the good boy condition. Okay. So what good boy condition with regard to D, D, D and D? So all these things, the good boy condition should have been satisfied by the company. What are the good boy conditions? There should be no default in payment of dividend and repayment of deposits, redemption of preference dividend, and payment of interest or dividend thereon. So all these things you should have not made any default. This is internally. Okay, one step further, you should not have defaulted in preference dividend or payment of statutory dues to the employees, or if there is any liability for you to credit the IEPF fund, which is Investor Education and Protection Fund, there also there should not be any default. Then one step further, then there should not have been levied any penalty by any court or the tribunal for the last 3 years under any of the mentioned act or any other sectoral act, there should not be any penalty. If so, then you can issue differential voting right share. But there is also a cap on it. The voting power of differential voting right share will be capped at 74% of the total voting power. Clear? Say 1 share 5 vote, 5 share 1 vote, like this, anything they can fix. So when you calculate the total voting power, it should be capped at a maximum of 74%. So let's say the company is having 1 lakh equity shares, okay? Okay. So it is not just normal shares. There are 20,000 equity shares of 1:1. So 1 share, 1 vote. So how much voting power is that? 20,000 vote you have. Then there is another 20,000. Okay. So it can be 1 share, 2 vote. So what is the voting power now? 40,000. Then there is another 20,000. Okay. They are having it like 2 share 1 vote, so it is 10,000. Okay. Then next 40,000 is there. They are like 4 share 1 vote, so it becomes 10,000. Now how much vote is here? So here you have 60,000 and normal vote is 20,000. So 60,000 out of 80,000, so 6 divided by 8, it comes to 75%. So you have breached the limit of 74%. So you should reduce it further. So maybe you will buy back some shares in here, so I'll make it 30,000. So some adjustments will have to be done. Okay, so 30,000 divided by 4 shares 1 vote, I don't know, so it can be 7,500, and this also you will reduce. So some adjustment it has to be done. It should be below 74%. In our example, we are breaching the limit and we cannot issue it like this. Or what you can do is you can issue some more normal voting shares with a higher number of shares. Furthermore, you can issue. So like this, it can be adjusted, but at all times the number of shareholders holding differential voting power shall not exceed 74% of the total voting power. Clear? This is how it will be done. There is no question which is working in such a way, but could be tested. High chances for testing, right? Whenever you are going to issue shares with differential voting, right, you will have to give an explanatory statement telling how you are going to issue, how much shares you are going to issue, right? So this we'll have to tell. And 1:1 ratio share, can I convert into 1:2? 1 share 2 vote, you cannot convert. 1 share 2 vote, can I convert to 1:1? You cannot convert. So both these conversion and all you cannot do. Issue new type of share, that is only is possible. Clear? Right. And they also enjoy whatever benefit they have, just like the other shareholders. Only you get bonus, you get rights, everything you can do, and their name will also be mentioned in our register of members, and they'll tell that they have differential voting right. This is what will be mentioned. Now with our share certificate, so have you seen the membership certificate of our institute? Okay, so very proud to hold that, right? So that's what we are all working towards, correct? Now, the members, similarly, of the members of the company will also be given something called as a share certificate, and it will be valid only if it is given under common seal, or it is signed by 2 directors, or it is signed by 1 director and the company secretary. So these signatures should be there. Only then we can tell it as a valid share certificate. And now moving on. Now, a company may also replace any old share certificate that they have issued, on which condition? When they have done a consolidation of share, or they have done any merger or demerger, then they can issue a new share certificate. So they will tell issue of this share certificate is issued in lieu of that share certificate, so which was subdivided or replaced, or we consolidated the number of shares. For that purpose they will do, and they can even charge a fee. They may even charge a fee which shall not exceed 50% of the certificate. So this is about it, and time limit is within 3 months in case of unlisted company, in case of 45 days in case of a listed company. And now duplicate share certificate can also be issued. The form number is SH2. So duplicate, no, second, so SH2. and in that also the particulars of every, it should also have the particulars. So there also we should mention the details of when it was renewed and everything, and where it will be kept. It will be kept at the registered office of the company. And whenever we talk about the register of members or the register of foreign members, all those ought to be preserved permanently. Okay, right? So this ought to be preserved permanently. We will see it in future when we see in the management chapter, but now giving you a small heads up with regard to that. And it will be kept in the custody of the company secretary in for that manner. And now, what and all will be there in the share certificate? So the name, how many shares, the amount. So all these things will be included in the share certificate, right? And if there are going to be any cancellation, then they will write it as cancelled, and it will be restored within a period of 3 years. And if there is any dispute, it will be preserved for at least 30 years or permanently in case of disputed cases. So like this, you'll have to preserve it. If you are not issuing duplicate share, then the minimum fine is 5 times the face value or 10 times the face value or 10 crore, whichever is higher. Then every officer in default will have a penalty under section 447. So this is about it. Now moving on to the voting, right? So we know that every person who is having a share capital can vote. Okay, and it is in proportion to how much ever share you are holding. In a Nidhi company, no member shall exercise voting right on poll exceeding 5% of the total voting right of all the equity shareholders. So your voting right will be capped at 5% of the total share that is available. And preference shares, can you vote? No, you cannot vote. But when I tell no, it also means you can vote only for resolution which is affecting your right, or when there is a winding up of the company, or in the case of repayment or reduction of the equity or the preference share capital, you can vote. Also, if your dividend is paid unpaid for 2 years or more, then also the preference shareholders can vote in a particular resolution. Now, can I vary the rights of the shareholders? So, I'm telling 1 share 2 vote people, you will have 1 share 1 vote. I'm varying their right. Can I do that? Not like entirely, but maybe for this particular term. So can I do that? Yes, I can do that, but the memorandum must and the articles must allow the company to do that, and the consent of the shareholder should be obtained in writing, which is at least 75% of the shareholders of that class only who are affected will tell. Okay, fine, no problem. You can go ahead with varying our rights for this term alone. So like that they can tell. If they tell, then we can do. And if 10% or more of the class of people are not happy with that, then they will go and apply to the tribunal, and the tribunal will get our application, and they will see what they can do to the shareholders. Then they will give an order. So whatever order they are telling, it is going to be final and binding on the shareholders also, and that copy should be filed with the register within 30 days of the order date. Okay, so if the resolution is passed and if you're not happy within 21 days of that, you can go and apply to the tribunal. All right, now moving on to the segment where we talk about the call money. So what is a call money? So beyond whatever spending after the payment of application money, they might get in certain at different points of time. So that is called as a call money. So call must be made on a uniform basis for all shares of the same class. Okay, and then if sometimes if permitted by, if authorized by the articles, a company can also accept calls in advance also, and dividend can be paid only on the amount that is actually paid up on the share. Now clever people, they are paying calls in advance, and they are telling, now that I have paid calls in advance, can I get dividend? No, it is not like that. So now they have paid the calls in advance, can I put one more vote? Okay, so it is also not like that. You are also treated as a normal person only. So even though you have paid an advance, if the articles fixes a rate, then you may be paid an interest for the advance amount that you had given. So this is about the calls in advance. Now, Sometimes the company may issue shares at a premium. So what is premium? The face value is 10. They may issue shares for 15 rupees or something like that. So this is premium. So this premium may be in cash or in kind, and it shall be transferred to a separate account, which is our favorite account, securities premium account. All right, and it will be also treated as a part of the share capital only, and can be used only for certain earmarked purpose, and it will not be used for any other purposes, right? And we will go and we will move forward. And the securities premium account is not a free reserve, it will be treated as a capital reserve only. And for what purpose and all you can use it? If you are a company which is following Indian accounting standards, then you can use it for payment of your bonus shares, you can use it for writing of your expenses, you can use it for buyback of shares, and also you can use it for payment of redemption premium. So when you redeem, if you're going to redeem at a higher price and the face value, then that premium account also you can use it from the securities premium. But if you are a company who is following the accounting standards, then you can utilize it only for issue of bonus shares, you can use it for write-off of expenses, use the preliminary expenses and buyback. Okay, then this premium where it will pay from? This premium on redemption in case of a company which is following the accounting standards will be paid out of the profits before you are declaring any dividend. So that it will be paid out of the profits. Okay, now can I issue shares at a discount? Can I as a company issue shares at a discount? No, you should not, but you can. Okay, so normally you should not, but you can issue when you are giving it as a sweat equity share or under the employee stock option plan, you can issue the shares at a discount. All right, now also when you are converting a debt to an equity, then you can give it at a discount, provided this is under a statutory plan, which is an approved plan, or under any debt restructuring scheme. Then in that case you can issue shares at a discount, but at all times you must comply with the RBI guidance with regard to the same. Fine. Moving on, if you are contravening this, the penalty is 5 lakh rupee or the amount which is raised through the discount of share, whichever is less. And the company will also have to refund all the money which you have got at the discount. Along with that, you will be paying an interest at the rate of 12% per annum from the date of issue of those shares. Now moving on to our favorite section, which is our sweat equity shares, section 54. Okay, 54 is sweat equity shares. Fine. To whom it is issued? It is given to the directors and employees, and it is given at a discount or for a consideration other than cash. It is given. Why? For giving know-how, intellectual property right, or any value addition which is made to the company. So for this purpose, we are going to issue the sweat equity shares. Okay, why you are giving? To motivate them, to give them reward. They feel like I am a owner of so much shares, 5 shares, 0.01% of the company, like this they might feel. So employees stock option plan is not same as sweat equity plan. There is difference in the point that once you have got the sweat equity shares, there is a separate lock-in period of 3 years. Okay, mandatory lock-in period of 3 years. But whereas an employee stock option plan, if you are an employee for a certain number of years, then you can exercise the option of vesting of these shares. That is called as an employee stock option plan. Right. So those who have got the shares under the sweat equity option, they will also be treated as like a normal shareholder only. So they will rank pari passu, which means equal as to that. Right, everyone are equal in the eyes of law, like that. Every shareholders, even though you are a sweat equity shareholder, you are also ranked along with the equity shareholder only. So you should not be sleeping, no. If you hear my voice up and down, this voice modulation is important to keep you all awake, right? Pardon me if you are listening it through headphones and all, right? But anyway, I hope your brain cells are all active. Let your brain cells consume all the energy. I hope after some time smoke also comes from your ear due to it will not come. Okay. Fine. certain more pointers with regard to employees. So when I told you shares can be issued to the directors or employee, I'm meaning those permanent employee who are working in India and also who are working outside India. When I told directors, I'm also telling about the directors who are whole-time director or not. And when I told about employee, they might be an employee of my company or either a holding company or a subsidiary company in or outside India. So I'm giving a holistic ambit with which I'm going to cover a lot of people in this particular definition. And the main point is that just like that, they will not give. You will have to do something. Okay. So if you are scoring a very good marks, we will honor you in our Brainery felicitation ceremony also, right? So, but you should know your equity you can get later, which is also your membership certificate. So you have to do some value addition, no? So every people are preparing monthly. What about those people who get rank? How are they different from us? And what about the people who get the exemption? How are they different from us? So there's all a point of difference with regard to the same, no? Right. They should be having contributing some economic benefit because of their professional expertise, and they should have made available some know-how or intellectual property, right? And only for them the sweat equity issue will be paid. For this, a consideration is not paid or is included in the normal remuneration. So apart from that, it might be given. Okay, fine. So how much of sweat equity shares can be given? So in a year, one time it can be about 15% of the existing paid up capital. Okay, one shot 15% you can give over the years. Okay, if you look back, the sweat equity share should not exceed 25% of the paid up capital, or it is here 15% or 5 crore. That is a issue value. It should not be more than that for one time, and for over the years it should not have been more than 25% of the paid up capital. So your paid up capital would be increasing, no? So maybe you would have given further more issue of shares, so that time would have increased. Your buyback would have decreased. So cumulatively it should not have crossed 25% of the paid up value of those shares, right? And in case of startup, it is 50% because they are only shedding their blood, sweat, tears, okay, day and night, 24/7, 365 days, all those things. So like our CA students, so 50% is the maximum cap which you can give in case of a startup company. And there's a lock-in period which is 3 years from the date of allotment, not 3 years from passing special resolution or anything. 3 years from the date it is allotted to use when there's a lock-in period for our sweat equity shares. Done. We will go to the place where we talk about preference shares, right? All right, people. Now discussing into the next concept of preference shares, especially the redeemable preference shares. Can a company issue irredeemable preference shares? Okay, a company cannot issue irredeemable preference shares. If you as a shareholder are wanting to buy irredeemable preference shares, then go and get equity. Okay, so when the company is winding up only you will get, and there will not be a redemption as such. Okay, so this is why we do not have an irredeemable preference share. Also, when I talk about a redeemable preference share, what is the maximum tenure for which they can be given is 20 years. Okay, but it is 30 years in case of an infrastructure company. All right, so we will see that now. So it is 20 years, but it is 30 years in case of company which is involved in infrastructure project. And from the expiry of the 21st year, 10%, 10%, 10%, over a period of 10 years, they should start redeeming it. It is not like they'll have to wait till the end of the 30th year. Every year after the expiry of the 21st year, they'll have to start redeeming the preference shareholders. Okay. Now, whenever you are going for redemption, you will have to maintain something called as a capital redemption reserve. So from the capital redemption reserve, you can take up the amount for the purpose of redemption. Clear? Now, Okay, so once it is redeemed, you will be transferring that particular amount there, and it can be used only for the reduction of the paid up share capital. So this is with regard to the capital redemption. So just a small point about it. And issue of further redeemable preference share. So already you have not been able to redeem your preference shares. In that scenario, that is, if a company is unable to redeem its existing preference shareholders, or you have not been able to pay dividend thereon, you can never issue further preference shares. So first to go and complete your work. Okay, first to go and try to redeem them. Then you can issue further redeemable preference shares. Those is the point about it. All right, now we will go to the place where we discuss about the transfer and the transmission of the security. So what is a transfer? Me wanting to sell share to the other person, that is called as a transfer. What is transmission? Right, when a share devolves on another person on the death of the other person, like it comes to the legal representative on the death of any person, that is called as a transmission of the shares. Okay, and transfer of shares, fully paid up share or freely transferable. In case of partly paid up share, the transferee, that is the person who buys the share. Okay, how will you remember who is a transferor? One who gives. Who's a transferee? Who gets it with a smiley. Okay, so this is a transferee. In payee also same. Who's getting? You get with the smiley. You can tell like that. Okay, fine. So I heard this from my teacher when I was doing CPT. Thank you, Chitra ma'am, for that. All right. Now, so partly paid shares can be transferred, but the no objection from the transferee should have been got within a period of 2 weeks from the date of receipt of notice with regard to the transfer. So once you have sent the transfer notice to the company, within 2 weeks you should also send your no objection certificate to the company. This with regard to that. And in case of a government company which has not committed any default within the filing of the financial statement or the annual return, this is not applicable. So these provisions are not applicable for them. All right, then moving on. So transmission happens due to the death, insolvency or renuncy. Okay, it could be to the legal representative or to the official receiver, or in the case of an administrator who is appointed for the purpose of managing the affairs. Now, within which time the certificate should be transferred? So once it was asked in MCQ people, they asked this particular point. In case of subscribers to the memorandum, you should give the share certificate within a period of 2 months from the date of incorporation. In case of allotment, 2 months from the date of incorporation. In case of transfer, it is 1 month from the date of receipt of the instrument of transfer. Transmission also same thing, 1 month from the date of the receipt of the instrument of transmission. Then in case of allotment of debenture, it is 6 months. In case of IFSC company, it is 60 days after incorporation, allotment or transfer or transmission. In IFSC company, it is always 60 days, people. Here it is 2 months. In case of subscriber and allotment, transfer, transmission, it is 1 month. Clear? Yes. Now, moving forward. All right. Now, in case of transfer and transmission also, we are executing the transfer and we are sharing the same with the company. If the company is refusing to make a note of it, they'll have to tell within a period of 30 days that they are going to, that the reason why they are refusing. Let us see what is going to happen there. Now, usually in a public company, it is freely transferable. The shares are freely transferable. In a private company, there are certain restrictions. It is not prohibiting. There are certain restrictions with regard to transfer. Okay. Now, in case of a private company, when there is a refusal to register the transfer or transmission, so what they should do, within 30 days from the day you sent the notice, they should tell within 60 days. Why 60 days they should sell? If no notice is sent, okay, if no notice is sent, if that it is registered, then it is treated as refusal. Okay, and in case of a public company, if they are refusing within sufficient cause, then you can appeal. Okay, here it is, if within 30 days, if within 30 days of you sending and 60 days they have refused, they have sent a notice of refusal, or they are refusing to do that, within 60 days from the date of delivery of the instrument and no notice is sent by the company, you can go and appeal to the tribunal people. Now, if same thing in case of a public company, here it is 60 days from the date of such refusal, you can go to the tribunal within a period of 90 days. All right, now, okay, and from the date of delivery, and no, if no intimation for the refusal is received, you can go and apply to the tribunal for the same. The tribunal will hear and they will tell what is to be done, and whatever order the tribunal tells is binding, and whatever order they are giving, it has to be complied within a period of 10 days from the date of receipt of order, people. Okay, all right, so let me summarize that previous time limit that is given for you. The time limit is that if a company, in case of a public company, sorry, in case of a private company, let us see first, if they have sent to you a notice of refusal, okay, in case of a private company, if they have sent you a notice of refusal, you can go to the tribunal within a period of 30 days. If they are not sending, you can go to the tribunal within a period of 60 days from the date you delivered the instrument of transmission to them. Okay, and in case of public company, you can go to the tribunal within a period of 60 days from the date they refused registration, and within a period of 90 days from the date of original submission to them, if there is no communication for the same which is received from them. Clear? This is about the same. And now, within a period of 10 days, the whatever order the tribunal has given to the company, that should have been complied with. Now let us move to the alteration of share capital. So alteration of share capital means we are talking about the alteration of the capital clause in the memorandum of its articles. So can it be altered? Yes, it can be altered. How we are going to alter? Either you can increase the amount, you can consolidate the share, or you can convert it into stock, or you can subdivide them. So this way you can alter the share. But how are we going to alter? Firstly, we'll have to pass an ordinary resolution. Okay, and if there's going to be any change in the voting right, because of that, you will have to go and apply to the tribunal. Only if they accept that, you can go ahead and do the same, right? And once it is done, you will have to mention it to the register within a period of 30 days. Only when he maintains it, when he does the registration of it in his from his side, it will be a conclusive proof that everything is coming into existence. So once the registration is done by him, only it serves as a conclusive proof that it is done by them. Clear? Now let us keep moving forward. So next we are going to see is the offer of shares to the existing shareholders. So how are we going to give them? Already the people are there. To them you are going to give a specified number of shares. So you can send a letter to them telling that, see, you are entitled to get so much number of shares within so much time, that is within a period of 15 to 30 days. You should tell us if you are going to take these particular shares, yes or no. They may tell a lesser time period also, it is up to them. And if not accepted, it has deemed to be declined. Okay, Maunam Sammadam they are telling, here Maunam is not Sammadam. Okay, so they are not agreeing to that. And if you want to, if you're not taking up it, we will dispose it in any advantageous manner. And you can also renounce in favor of any other person. You can also give it in favor of any other person, provided the articles, unless the article provide otherwise. So if the article is telling no, then you cannot renounce. If the article is silent, maybe you can go and renounce the shares in favor of any other persons. Clear? Now moving on to employee stock option plan. So similarly, giving the shares at a lesser rate to the employees provided those who are exercising, they will be given, and those who are satisfying that vesting condition, which is being in employment for a continuous period of certain number of years, they are eligible to get the ESOP. But for this, you need a special resolution, and also other conditions should have been complied with. All right. Can they do that? No, it cannot be done. So you cannot give bonus shares in lieu of dividend at all. So that is not really possible for you to do the same. Now, whenever you are altering the share capital of a company, you will also intimate the registrar within a period of 30 days of alteration, and he will make a note of it, and he will, in his register also, he will make a note of it. Now, talking about the reduction of capital. What is a reduction of capital? How are we going to do it? You may extinguish any liability on the unpaid share capital, which is face value 10. You have paid 6 rupee. Now the company wants to go for reduction of the share capital. So what they are telling, 4 rupee have not paid, no problem, go. Or what they can do, cancel any paid up share capital. So this you have paid, they will cancel it. And they may pay off any amount which they think it is excessive than what they require. So in this case, they can reduce the share capital of a company, and whenever this is to be done, they will pass a special resolution, and the memorandum will be altered, and there should not be any arrears in repayment of deposits and interest. So if you are not able to repay the deposits, why are you going to give the money back to the shareholders? Why are you telling to the shareholders, I don't want any amount which is unpaid on the shares? Logic. Now, upon issuing the application for this, the tribunal will also examine the same. So it should be authorized by them, right? They will also examine the same, and they will also share it with their stakeholders. They will share it with the central government, with the power delegated to the regional director. They will give it to the register of company. They will give it to SEBI, and they will give it to other creditors also. Why? You are going to reduce the share capital. No, if they are aggrieved due to that, then they will issue a notice to any of the said people. All right, and within a period of 3 months, they should tell if they are not happy with anything at all. Why? See, share creditors of the company are there, okay, who will be wanting you to give money which is due to them. Now, if you are going to reduce the share capital payout, the amount they are going to be agreed. So you will also have to consult them, and you will also give them 3 months time for them to tell if they are not okay with that. And whatever the tribunal tells, we will follow it. And sometimes what they can do, the creditor will tell, okay, you can go ahead with reducing the share capital, provided you have discharged them. Discharged them means you have paid them, or you have determined how much amount is to be paid to them, and you are having it separately, or you are securing them. Okay, see, I'm paying shares, but for you, so much of assets, you can have a security on those assets, so don't worry. Or you have obtained a consent, and they're telling, okay, no problem, go ahead with paying the share holders. So go ahead with reduction. That, like that, they can tell. Once it is obtained, then you will file the order with the registrar, and the registrar, to him, what and all you will tell, tribunal's order, minutes approved by the tribunal showing, so what and all the tribunal will approve it, amount, how much share capital, then the number of shares which you are going to buy back, the amount of each share, and what is the deemed paid up value after you are making all the effects. So all these things should be made a note and to be transferred and given to the registrar for his purpose of recording. Clear? Right. So this is about the reduction and the permission that you need from the creditors. Now, the company, Fishy Private Limited, what they are doing, they are telling, let me not tell to that creditor fishy fish, okay, fish, he's a big fish, okay. So creditor big fish, let us not tell him the notice that we are going to reduce, let us not tell him this, bring it to his notice, like that. If anything you are doing, then you will be liable, okay, and the creditor can claim that amount from him, okay. So this is about the creditor, what he can do. And Action to make claim to creditor good. Remedy available for such an unpaid creditor. If he is going to remain unpaid, then person who was a member of the company on the date of registration, okay, he will be liable to contribute to any amount which is going to be unpaid on them, and that liability cannot exceed how much ever amount he has told he will contribute. So whoever is a contributor, that is whoever is a member on the date the creditor is unpaid, he will be liable to contribute for the losses which is going to be incurred by him also. So this is the point about it. Then, so anyone who conceals and keeps a creditor in dark, not telling him about this, will be liable. So anyone who conceals the name or misrepresents the nature and the amount of the creditor's debt. So when we try to send the notice to the government and all, we should tell how much creditors are there. If you are reducing the amount, then you will be treated as someone who's abetting or is in privy to such concealment. Okay, so that is a point about it. Now let us go to the place where we talk about giving loan to a person to buy our shares. So can a company give loan to a person to buy the shares? No. Okay, but there are certain relaxations and restrictions for this. Now if you see the restrictions, a company, not a company, a public company. So there is a restriction for a public company. Okay, it shall not provide any financial assistance. So a public company shall not provide any financial assistance. How? Directly or indirectly. Okay, directly also you cannot provide, indirectly also you should not provide any financial assistance. By how? By giving any LGS, loan, guarantee and security. Three things also anyway you should not give, like LGS. Okay, LGs you should not give. Fine. For the purpose of purchase or subscription to made into any on the company itself or the holding company. So in this cases it is putting a restriction. No restrictions given for associate or joint venture. Okay, this is one thing that we will note. Now, but whenever I tell something, I will also tell there is a other side of it. Okay, a company can give financial assistance in the following manner. Which manner they can give it? Through the way where they are giving it for the purchase of fully paid up shares they can give, or for a trustee who is going to hold it on behalf of the employees under any employee share scheme. For that purpose they can give. All right, now, and the limit on this is 5% of the aggregate amount of paid up capital and free reserve. And whenever you are going to do about this, you should also disclose. See, what will happen is that the company is giving the shares to the employees. Okay, now who should vote? The employee should vote. And in case if it is given to the trustee, then who will be holding it for them? The trustee will be holding it for them. But if it is given to the employee, any shares, any assistance for them to buy the share of a company, and even after that they are not exercising the right to vote, then it means indirectly they want to adjust some voting right for their purpose. So this could be the reason why it is happening. All right, so all right, now when the director should disclose certain details. So the employees are getting the assistance to buy the shares. Who should vote? Employees should vote. And if the employees are not voting directly, you should tell why they are not voting directly. Why another person is exercising the vote. How much shares are held by them. What is the date of the meeting. And resolution in which they cast the vote, right? And what is the percentage of the voting power and how much vote they cast in favor. So all these things with regard to the voting right of the shares which are held by the employee and which is not exercised by them, you will have to mention it. All right, now fine. much amount of loan I can give? I told loan. How much amount of loan you can give? It shall not exceed 6 months salary. Okay, it shall not exceed 6 months salary. And if you are committing a default in this, it is 1 lakh to 25 lakh or an imprisonment of 3 years, which will not be less than 1 lakh, but which may extend to up to 25 lakh rupees. This is the penalty for the company. All right. Now let us dwell further and look at how a company can actually do the buyback of its shares. So here we will see from where they can do the buyback and what is the limit up to which they can do the buyback and the time limit between two buyback. All those things we are going to discuss. Let's get started. So what is a buyback? Buyback means the process of reacquisition by a company of its own shares. So they are going to reacquire the shares from the public which they had previously issued. So it serves as a method of returning surplus fund to the shareholders. So why they will be doing the buyback? When they think they have enough capital with them, when they think they have enough fund with them and they don't want any more fund from outside, they can go ahead with reducing and giving it back to the people. So this is how we are going to do the buyback. So what are the source of buyback? If you see, first is one is the pre-reserve. Next is our securities premium. Third is our proceeds of the issue of any share or other specified security. So we can also issue shares, get the money, and with that amount also I can do the buyback. So that is also one thing which is possible to do. What is the procedure for that? We should be authorized by the articles and there should also be a special resolution for the same. One main thing is that you cannot buy back an amount exceeding 10% of the total paid up capital and free reserve. Okay, so paid up capital and free reserve, and your amount of buyback is going to be less than 10% of it. It cannot exceed that. All right, then buyback should be authorized by the board resolution passed at the meeting. So when I told it cannot exceed that, it can be 10%, but it should not exceed the 10% limit. And it should also be authorized by the board. So we need AOA, we need board, and we need a special resolution for the same. And aggregate on a whole, it cannot exceed 25% of a paid up capital and free reserve. All right. So this is one more limit that we see. And equity buyback should not exceed 25% of the paid up capital of the equity capital in any financial year. So 10%, 25%, 25%. Okay. So 10% is one time limit and 25% is the aggregate limit. And equity buyback also the limit is 25% people. All right. Now, what are the conditions for buyback? One is about the post debt equity ratio. It should be less than 2:1. So that is one main thing. It cannot exceed 2:1. Okay. Fine. When we tell about equity, it means the paid up capital and the free reserve put together is what we are referring to as equity in here. Now, some points with regard to it. No offer of buyback shall be made within 1 year from the date of closure of the preceding offer of buyback. So on one day I'm offering the buyback and it is closed on here. So from this period, for a period of 1 year, I should never do the buyback again. So if I'm opening it on 1/3/2026 and I'm closing it on 23/3/2026, till the next buyback can only we can do from 24/3/2027. Okay, for a period of 1 year, you should never think of buying back. Okay, and how and all you can buy the equity shares back? One is from the existing shareholders or from the open market or from the employee stock option plan or the sweat equity share. So from all these places you can do the buyback, and whenever you are going to do, you should have these facts stated in the explanatory statement about material facts. Why is there a need to do the buyback? So they tell there are sufficient funds available and we are not wanting it anymore, like that. So for which class of share are you going to do the buyback, and what is the amount and what is the time limit within which you are going to complete the buyback? So all these things are given for us people. Now, One main thing, only fully paid up shares can be brought back, and partly paid up securities cannot be brought back by the company. If you want to do a buyback of the partly paid up securities, then you can, if you intend to do something like that, go on to the reduction of the share capital. Okay, you cannot buy back partly paid up shares. Now, one main pointer about is that whenever a company want to do a buyback, the board of directors will have to give an assurance. All right. So now we are doing a buyback. Now I'm giving my money. Okay. What happens to the company within a period of 1 year? They are going to become an insolvent. Makes sense? No. So what they should tell is that the board of directors should tell that the company will be solvent, even though we are going to pay the cash now. Later also we'll have enough cash to pay out the liabilities, and we will not become an insolvent within 12 months from the date of declaration. So from 12 months from the date of declaration, they'll have to give an assurance that we will not become an insolvent, and it should be signed by 2 directors, and at least one of them should be a managing director. Clear? Now, moving to the next one, time limit for completion of buyback. So every buyback should be completed within a period of 12 months from the date of passing of the special resolution, and it will be, the company will file SH8 to the ROC. Okay, then that will be sent to the shareholders within a period of 20 days, and they will keep the offer for a period of 15 to 30 days open. So they will give a window period, so you can decide and you can tell if you are okay with that. And if they are telling they're okay with that, then the company completes a verification. Once it is done, then the communication will be sent within 21 days of closure. So if they're not happy with that, they will send their decision communication within a period of 21 days, and the payment would be made within a period of 7 days. So this is the time limit with regard to buy back. Now, once it is brought back within 7 days from the last date of completion, they will physically extinguish or destroy the share certificates or shares that they have. So this is one thing about that. One more pointer here is that, right? So now I'm buying back a particular class of share. Okay. Now, within a period of 6 months from the date of completion of the buyback, I cannot make a further issue of the same class of share. Why? Because just now I brought back. Okay, so I am not permitted to make a issuance of the same class of share again within a period of 6 months. So this is about it. And the register of buyback is SH10, and in that you will have the number of shares that are brought back, what is the consideration that is paid for them, what is the date of cancellation of it, date of extinguishment of the shares at any other particular. So far with that it should be maintained, and this return should be filed in form SH11 to our registrar and also SEBI if it is a listed company, and it should be completed within a period of 30 days. So whenever, mostly when we try to do a communication with the ROC, the time period that we have is 30 days. All right. Now we will look at the penalty. So it is for the company in default, it is 1 lakh, and also for the officer it is 1 lakh, and a maximum fine of 3 lakh in both the cases. Moving on. Whenever we make a buyback of the free reserve and the securities premium, an amount equivalent to the nominal value of the buyback is also to be transferred to capital redemption reserve, and it will be used to pay for paying up unissued shares when it is given up as bonus shares. Okay, so this is one thing. And when can you not do a buyback? In what mode you cannot do a buyback? Through a subsidiary company, including its own subsidiary. So through them you cannot do the buyback. Through any investment company or group of investment company. And if we have committed any default, I call it as a good boy conditions. Okay, if it is not a good boy condition with regard to D, repayment of deposits, redemption of debentures, redemption of preference shares, payment of dividend, and repayment of any term loan or interest thereon. So any default you have done, okay, you have done some default, which means you're not in a position to pay them, then why are you getting your shares back? Okay, logical question, right? Further prohibition also, if you have not in proper in complying with the filing of the annual return, payment of dividend and distribution of dividend and the presentation of the financial statement, then again there is going to be a declaration on the company for doing the buyback. So this brings us to the end of the segment with regard to shares. Now we'll move on to the debentures. People, let's get started with this segment where we see about debentures. So when we talk about debentures, so they have nothing but an liability type of element in that, and we will have to pay interest in that. So basic, we know mainly that they have no voting right and they are freely transferable. It could be secured or unsecured, and there is a redemption option also. There is a conversion option for the debenture holders. Now, now now, what is the maximum period for which a debenture can be issued? So, general rule is that the secured debenture shall not be issued for a period exceeding 10 years. A secured debenture means 10 years, but it can be 30 when it is for an RBA, when it's permitted by the central government, RBA, National Housing Board, or any other statutory authority. It is going to be 30 years, and on the basis of RBA directions, rules 2011, then it is also going to be 30 years. But the company is engaged in setting up an infrastructure project, it is going to be 30 years. And on RBA directions 2007, so it is as per the directions of the RBA or the NHB or any other statutory authority of infrastructure, then it is going to be 30 years. Now, so whenever you are going to issue a debenture, and for that also you might be issuing a prospectus, and in that prospectus itself you will have to mention the name of the debenture trustee, which means you should appoint a person called the debenture trustee before issuing the prospectus or letter of offer for the subscription. Okay, and just like how I told you, it can be both secured or unsecured. When I tell it is going to be secured, it means that you are going to create a charge. Okay, so we are going to see in detail about charge in some time, but with this understanding we will move further. So it can be a specific charge on any movable property of the company, the subsidiary, the holding or the associate company, or it can be also on the specific immovable property or any interest thereon. Clear? Now, debenture trust deed and debenture redemption reserve. So, debenture trust deed, so we already told, no, the debenture trustee should be there for us before we issue the prospectus itself. We'll have to appoint someone who's called as a debenture trustee. So, the debenture trust deed will be executed in form SH12. And why we are doing that? So, we are having a person who is going to speak for the debenture holders to protect their interest. Interest means, so he will analyze if the assets of the company are sufficient to pay to the debenture holders, and if the company is regular in depositing, if he feels that in a shorter period of time there is going to be some deficit, and if he predicts it is going to happen that the company will default, then he will quickly intimate the debenture holder. So just like an informer between the company and the debenture holders, right? And this trust deed should be executed within a period of 3 months from the closure of the issue of offer, right? Now, every year we are going to transfer certain amount to an account called as DRR, which is a debenture redemption reserve. Why? To give a cushion for the company to actually make a provision for them to enable to use it at the time of redemption. All right. And what is the amount? It is given that for any financial institution which is regulated by RBA, there is nothing as such. And banking company, they do not have to. And in case of unlisted companies, it is 10% of the outstanding debentures. Okay, fine. Both in case of publicly placed and also in case of privately placed debentures. Clear? And one more pointer with regard to this is that we will have to make certain investment or deposits for debentures maturing during the financial year. So similarly, just to provide a cushion for the company, and then we used to create a provision, no? So similarly, what they are doing is that in case of a listed company, okay, so that is other than all Indian financial institutional banking company, so that exemption we have already seen in here. So in case of a listed company, they will have to deposit a sum equal to, so which they can invest or deposit an amount equal to 15% of the debentures maturing during the next financial year. It is not that financial year, it is a next financial year. So let us say, so this is 25-26, let us say, and in 26-27, the debentures which are going to mature are 1 lakh. Okay, so it is a next financial year, and I will have mature means I will have to repay that amount. So 1 lakh into 0.15. So I will have to deposit an amount of 15,000 today, as in within 30th April of every year. So if the financial year is starting, so within a month, I should see next year how much is the debenture that I will have to, sorry, with next year how much the debenture it will be maturing for redemption, does not deposit, I had mentioned. So next year how much the debenture I will have to redeem. So of that I will calculate 15%, and this financial year before 30th of April, I am supposed to invest or deposit in the prescribed mode. Prescribed mode we are going to see shortly. In case of unlisted company, and in case of publicly placed debentures, then it is same, right? So where and all we will deposit with a scheduled bank, okay, or in certain unencumbered securities or unencumbered securities of the central or the state government or under the Indian Trust Act. So whatever is prescribed here, in any of the mode you can put a deposit. Now when I told about the debenture trustee, a company which is offering invitation to the public or to its member more than 500 people, okay, then they must appoint one or more debenture trustee. So before you are going to appoint someone as a debenture trustee, you will have to get a consent from them in writing that you are okay, happy and all right to be included as a debenture trustee, and your name should be mentioned, disclosed in all the letters, notices, documents, and the offer also, which is going to be made to the public for the purpose of offering the debentures to them. Now, our favorite segment means this is where we are going to have some slippery points. Okay, that is how I call them. Who cannot be appointed as a debenture trustee? Disqualifications with regard to a debenture trustee. Who cannot? Shareholder. Okay, because he will have an owner interest. Then a company insider, promoter, director, KMP. Okay, promoter, director, KMP, employee of the company, holding, subsidiary, and associate. No one. Then relative of director, KMP, and promoter. Missing employee is not here. The relative of the employee, it is not given. Also, it is given only that the relative of the promoter, director, KMP of the company. Nothing is mentioned about the holding, subsidiary, or the associate. Okay, nothing is mentioned about them, which means they are eligible. Okay, now who is only not eligible? The relative of the promoter, director, KMP of that company alone only. Clear? Then anyone who is getting any beneficial payment other than remuneration as a trustee. So if a trustee is getting just only the remuneration, then he is eligible. So other than that, if he is getting any remuneration or any beneficial entitlement, then he is not eligible for being appointed as a debenture trustee. And there is already a person who is indebted to a company. Okay, he already has to give to the company. So Yeah, so he is already liable to the company, not just the company, the holding subsidiary and the associate company. Then any guarantor is also not eligible for the same. And if you are having any pecuniary relationship, what I call as a pecuniary relationship is that if you are dealing with the company and it is 2% or more than its gross turnover or the total income or 50 lakh, whichever is lower. Let us say I am a person who's dealing with the company, which means I am the supplier of the raw materials for the company and I am supplying every year 60 lakh, okay, already crossed 50 lakh. So that limit you will be satisfying, or you will have to check 2% of turnover. So you will check 2% of turnover, you will get an amount, or you will get 50 lakh, you will get an amount. Whichever amount is lower, you take that amount you compare with what I am dealing with them. Then you will see if I am having any pecuniary means more than a particular limit. Okay, it is a bit more, right? Right. Then which year during the two preceding financial year or the current financial year. So if the company has been in existence for less than that years, then also it could be considered. Okay, the last year also they are saying. So during the two preceding financial year or in the current year, if you are having a pecuniary relationship, then you are also not eligible to be a debenture trustee. Happy people, yes. Now, can someone remove a debenture trustee? Yes, they can be removed before the expiry of the term, provided not less than 3/4 of the value of the outstanding debenture holders must approve that. It is not 3/4 in number, it is 3/4 in value. 3/4 in value will have to tell, okay, we can remove them. And this is done only at the meeting of the debenture holders. Okay. Alright. So when there's a casual vacancy, the board will fill the casual vacancy, and the vacancy due to resignation will be filled within the written consent of the majority of the debenture holders. So if one debenture trustee is resigning, then with the consent of the majority of the other debenture holders, you can appoint a debenture trustee. Right? Whenever there is a vacancy exists, if there is any other trustee, they can continue to act. Okay, that is possible. Now, I told you already. Why do we have a debenture trustee? He was acting only as a liaison between the company and the debenture holders. Okay, so which means he would also be regular in convening the meeting. So when and all he can conduct the meeting for the debenture holders, either on two conditions. So some event is happening, some trigger event is happening. Then he can go ahead with calling for a meeting for the debenture holders, or just like how we will see in shares. So for the meeting of the shareholders, if at least 1/10 value of the debenture holders call for it. So 1/10 value of the debenture holders call for it, then also he is required to conduct the debenture holders meeting. So what do they have as a debenture holder? So he should exercise care and due diligence, right? Protect the debenture holders, see that it is going to be paid on time. So like that, he should be a bit more vigilant, right? He is exempted and indemnified as a debenture trustee if the debenture trust deed tells that they are securing the issue of the debentures, or there is any contract with the debenture holders secured by such debenture trust deed is void, right? So what are they telling is that any provision which is telling that they are exempted or indemnified by, which exempts or indemnifies a debenture trustee from any liability. Usually because no, they are standing in that position where they are representing the debenture holders. Okay, so can they tell that let us execute a deed? Okay, I will be there. Okay, but anything which happens, no, In that case, I will not be liable. So you cannot include any clause like that in there. So anything if you have included like that, then it is actually going to be void. So it is not going to take effect at all. It is not even valid. It is void. Okay, fine. So if there is going to be anything which exempts them, it is going to be void. Now, exemption from liability. Any exemption granted to the debenture trustee from liability will be valid only if it is approved by the debenture holders. Okay, so we are telling it is void, but if it is approved by the debenture holders by holding at least 75% of the value of the debentures, then maybe you can go ahead with giving them that exemption from liability. So this is possible. So we will also see it is a very subjective matter, people. So they will see if they have acted in a prudent manner, if they could have reasonably exercised their actions to find that okay, something is going to happen. The company will not be able to pay. They're able to tell it like that, then they might be relieved of it. Okay, so it is again a subjective matter. Okay. Okay. Now, coming to the main powers of the debenture trustee, this is the scenario that we have, that he has been trying to protect the people from. Now, if the trustee believes that the assets are insufficient or it is likely to be insufficient in the future, so what he has to do? Firstly, he will file a petition before NCLT, the National Company Law Tribunal. Then, for what? Then what the tribunal will do is that they will stay any resolution where the company would want to incur further liability, okay, or they would stop any company or intended party from taking any direction, which means now if the debenture trustee is putting a petition to the NCLT, then the NCLT will tell stop it company, do not incur any further liability. Okay, right? Then they'll also stop the company and the interested party from taking any direction. Means you will tell do not demand from them, or the company should not pay to them, stop them from passing any resolution authorizing the payment, like that, right? What I will tell is that see, it will be month end. You would already be thinking how and all you can cut your expenses, but suddenly no, we don't know how our mobile phone knows. They will come with a pop-up Caprese bags. So like that, some ad will come. So bags, right? So we don't even know how the people know about us and how only they're wanting to tempt us. But it will pop up like this. So what I would feel, no, stop seeing the ads, or you stop ad, stop suggesting the ad. So just like that, the tribunal will also tell the company stop paying to the other people. You're not in a position to pay to your shareholders and buy itself, to the debenture holders and buy itself. Now, then, if the company fails to redeem, the tribunal will redress their grievances and make sure the company pays principal and interest somehow. Okay, they will order the company, and they'll do specific performance, means just like how we saw in the contractor sued for specific performance. So they will order the paid company to pay for the amount of the debentures by enforcing specific degree. Degree means in order for specific performance. All right. Now, the central government may from time to time, because this is a normal thing where we'll see it in so many places, the central government may from time to time give rules for what? For securing the issue of debentures, for how the debenture holders can inspect the copy, how the form for the trustees is going to be, what is the amount you should transfer to the DRR, any other thing also they can tell. Now, approval of a high debt equity ratio. So sometimes debt equity ratio of 1:1 could be allowed. In case of a company other than a private company, how they are going to allow it? The board of directors must obtain the shareholders' approval before issuing the debentures, telling that, so this is how it is going to be higher than that. Are you okay with that? Like that they should get the approval from the shareholders. And once it is done, the allotment, return on allotment should be done in a PAS3. So we already know it now, PAS3 within 30 days of allotment to our ROC who is having the jurisdiction over us. So this brings us to the end of the chapter, share capital and debentures. Now let us get started with the next chapter, deposits. Okay. Now here we will primarily see what is meant by the term deposit. We have a huge coverage of terms which is excluded from what is deposit. Okay. So that is how it is telling us. So let us get started with it. So deposits means any receipt of money by the company. Okay. So it is nothing but the money that you get as a company. How can it be? By way of deposit or loan or in any other form. Okay, and it does not include any amount as may be prescribed. Okay, so they have given certain exclusions we are going to see in a while. Now, who's a depositor? Means a person who is making a deposit in a company is called as a depositor. Companies act as a very simple act, people. Okay, what are the features of deposit? Firstly, it includes in the definition any money received in the form of loan or other. Okay, it could be secured or unsecured. It could be in the joint name of 3 people. So often tested joint name of up to maximum of 3 people only. MCQs also does that. Then premature repayment questions are there from this area, people. So company can do a premature repayment also. So if at all initially I'm getting it for a period of 24 months, I may pay it by 20th month or I may pay it by the 12th month also. So anything is possible. So repayment terms is time bound and interest is also levied. Exclusion, we have certain categories that we are going to see, and nomination for the same can be done at any time, and it can be got by a private limited or a public company, and there are some more pointers with regard to it. Now, it could be either secured or unsecured is what we saw. When I'm telling about unsecured, I also mean whichever is partly secured also. Now, what is not considered as deposit? Very much relevant for our discussion. Come listen this story with me. So, any amount which you are getting from government authority, central government, state government by way of any guarantee, so that is not included. Amount that you are getting from the foreign sources, that is not included. Then amount which you are going to get from any banking, cooperative or SBI or any notified bank, that is not included in the deposit. Logically think, when a bank is giving as a money to you, loan to you, they will have a lot of formalities which they are going to comply with. Now, why they are giving this deposit provisions is that any other person, when they are going to lend it to you, they are not protected by any other thing. Our company is going to give certain restrictions to the company and provisions for them to comply with, so that the interest of the deposit holders is protected. But when a bank is letting, already CIBIL score is there, they will check everything, all those things, only then they are going to give. So it is not a problem. Now, any amount which is received by way of foreign collaborators and foreign government owned DFI. So this is also not covered in this ambit of deposit. Any amount which is received from any regional institution, insurance company, PFI, scheduled bank, or any amount which is received from the form of commercial paper, intercompany deposit, it is not covered. Any amount which you have received as a securities, application money, so you will get at the time of issue of securities as anything as application money, so that is also not included. Fine, all right, but there are certain exceptions to that we will see as we progress by. And any amount which you have received in the ordinary course of business, so normal business transactions and credit period you might allow, so that is not included. Then amount received from directors and relative, provided the director is giving a declaration that it is from his own pocket. So what the company may do, they might have reached their loan limit, then they may tell director, take it from me, from your account and give it to me. Like that some company may tell, okay. So what the director has to do, they'll have to give a declaration that it is from their own pocket and it is not a borrowed amount that they are giving to the company. Okay, it sounds like doing a dance, but this is what it is. All right, now fine. In case of listed non-convertible debenture, it is not treated as a deposit provided they comply with the SEBI regulation, and any employee security deposit which is not exceeding the annual salary, that is also not treated as a deposit. Trust money is also not treated as a deposit. Okay. Now, certain things with regard to, sometimes there might be an advance that they get from you, right? AMC, okay, they're getting the amount in advance. So if that is also not actually included in the term of deposit, provided it is for a maximum of 5 years or such other period as is the normal how it is. Okay, normal terms, normally it is like that, means that period or 5 years, whichever is lesser will be considered. Furthermore, main point is asked in this place, people. Whenever there is a startup company, if anyone is contributing an amount which is 25 lakh or more, it is not considered as a deposit, provided they are convertible into debt repayable, or it is converted to equity at a later point of time. So if it is 25 lakh or more, it is not treated as a deposit. It is going to be 25, it is going to be less than 25 lakh, then it is treated as a deposit, people. All right, now in case of Nidhi company or in anything under collective investment scheme or any amount from SEBI registered entities or any civil fund, right? So these are all not considered as a deposit. One more thing. So in case of a newly incorporated company, there might be a situation like this. It's a new company. When you go and apply to loan to the bank, they will put an enforcement like, if the promoters are going to contribute an equal amount, then the bank will also give an equal amount. Okay, so if the bank wants to give some certain amount, then the promoter should also contribute to that equal amount. Like this matching, it should be there. Now, till the time the repayment of the institutional loan is there, then it is not treated as a deposit. Till the time the repayment is there, it is not treated as a deposit. Clear? This is a point about that. Now, which companies are eligible to accept deposit from the members or from the public? All right, now we are going to see with regard to the public company only. Okay, who can get the deposits in case of a public company? What is the threshold that is applicable for them? Let us see and understand. Firstly, they should have the financial threshold, which is net worth of 100 crore or more, or the turnover of 500 crore or more. Okay, so 100, 500, 100, 500 in case of a public company, which is 100, which is 500. So always the turnover should be more than the net worth, people. So with the small net worth, you should do big turnover. So with the big net worth, you do small turnover, no one will agree. So with all the beautiful lectures you have, you should score more marks. More resources, less mark, slightly not unacceptable, people. So it is just wait. So 100, 500. Okay. Now, shareholders' approval is also required to be obtained in the general meeting by way of a special resolution. It is to be obtained, and you should also file this resolution with the ROC before you go about inviting the public to deposit itself. You should share this resolution with our friend, our ROC. Now, you cannot do any of these acceptance of deposits unless you are following with all the provisions. Okay, in case you want to accept deposit from the members, you must pass a resolution in the general meeting. Okay, and that resolution should be accompanied by something which we call as a circular. Should be accompanied by a circular, and in that circular what and all is to be there, let us see. Okay, it should tell about the financial position of the company. So it is just that it will contain more details about the position of the company and how much you are going to get. So that is what you will find in the circular inviting deposits from the public. Financial position means what is a credit rating, okay, and what is the terms rate of deposit, okay, how much is the total number of depositors, what is the amount already due towards them, and an auditor certificate telling that there is no default, it is a good company. So now you can give further more deposit to them, like that the auditor should also tell, and it should be issued under the authority of the board of directors. The board of directors should sign it. It is to be renewed every year because the financial position is going to change every year. So the circular is also to be renewed every year. Okay, and what is the validity of the circular? It is valid for the earlier of 6 months from the closure of the financial year or the date of financial statements at the AGM. The latest date on the AGM would have been held. Latest date is the date the AGM would have been held. So we'll compare these two dates, and the validity is the earlier of these two dates. Okay, fine. Had informed DPT1, and it must be filed with the ROC. When at least 30 days before you are giving it to the members, you will have to give it to our ROC. Now, just like what we had as a debenture redemption reserve, here also we have something called as a deposit repayment reserve. Okay, same thing. So on same date, 30th April of each year, you will have to deposit at least 20% of the amount of deposit which is maturing in the next financial year, where in the scheduled bank you will have to deposit, and you'll have to maintain it in a separate account called as a deposit repayment reserve account. Fine. At no point of time it shall fall below 20. So imagine it like a pot. So 20% you will put every year, you will put, and when there is a repayment also you will use at no, and at no point it shall go below 20%. So at all times you should be in a position where you can maintain 20% of the amount which is maturing the next financial year as a deposit repayment reserve. Clear? One more condition, that there is a good boy status being maintained, which is there is no default in the repayment or payment of interest. So already issued a deposit, you are not able to repay, then why do you want to go for new deposit issuance? That question will come. Clear? Also, if there is any past default, let us say in the year 2021 to 22, there is a default, they did not pay the interest, and they made good person. So he made it good in the year 2020, 2025, let us say 2025 to 2026, he made it good. But from which date you can issue the deposit? A period of 5 years has lapsed since the date of making good the default. So from here, 5 years should have gone by, and only then you can issue the deposit in this regard. Clear? So here what date should have expired? 2026 plus 5 years. So after 2030, 31, after this financial year only, you can issue the next deposit. Here in one place it is like 5 years from the end of the financial year in which it was made good. Here it is 5 years from the end of the financial year. All right. I hope this point is crystal clear. Now, in case of some more exceptions in case of a private company. So for private company, they are giving certain exceptions. So what are the exceptions? If the amount of deposit is less than 100% of the total paid up capital, free reserve and the security premium. So put together, if it is less than 100%, or if it is a startup company, or it is a private company which is satisfying all of the following, which is it is not a subsidiary or associate company. Okay. So for my company, it is not a subsidiary company also, it is not an associate company also. And if the borrowing including share capital is 50 crore or lower, already having lower borrowing only, then there is no default in the repayment of borrowing at the time of accepting deposit. So if all these conditions are satisfied in case of a private company, I am giving them some exception. What are the exception? You don't have to issue the circular. You don't have to file the circular with the register. Okay. Deposit and deposit repayment reserve not required, right? And the certification that there is no default also, you don't have to give from the auditor, that will give along the circular, no. So that certification also is not required to be given. Then you can go ahead without doing any of these and go ahead with accepting deposit in case of a private company or any of the other category of companies. Now and if the company is not paying back the deposit within any particular time, the aggrieved party can approach the NCLT for loss of that amount. They can claim that amount along with any damage that they want to claim. They want to damage you, they can do anything, not as damage you, they can get that amount. Okay. Now, fine. For what period of time can I accept the deposit? So, for how much period can I take this sum as a deposit? What should be the maximum repayment time? The Act gives that it is maximum of 36 months. Okay, maximum is 36 months. It cannot be less than 6 months. So it should be 6 to 36 months. Okay, this is how it has to be. But they are giving certain more exception. It can be 3 to 6 months also. So which means it can be 3 to 36 months. But no way it can be less than 3 months. Okay. When it can be less than 6 months, that is, when can it be like a short-term deposit, is when there is the limit, it is within the limit of 10% of the paid up capital, free reserve and the security premium. So just small tukuda amount you are going to get for 3 months. Yeah. So which is less than 10% of the paid up capital, free reserves and the securities premium account. Then maybe they will allow less than 6 months is also okay. But no way it can be less than 3 months. So then you can get some OD like that you can do. No? Then what is the maximum amount I can get as deposit from my members? It is 35% of the aggregate of paid up capital, free reserve and the securities premium. Clear? But in case of a private company, it is 100%. In case of IFSC public company also, it is 100% that you can get it from your members. Now the same thing we have seen there. Deposit trustee. So just like how we saw for the debenture trustee, so we are going to have a deposit trustee. So what is the role? He will call for a meeting. Okay, when there is a particular situation which is arising, or when more than 1/10 of the value of the depositors outstanding, they are requesting for it. Clear? And the maximum interest can be, it is fixed as per what the RBI has fixed for NBFC company. So much only it can pay as interest. You shall not pay brokerage to any unauthorized person. So that is will be treated as a violation of the act. Then can be in the joint name of the people, and it can be only in the joint name of 3 people. Ramu, Somu, come. I don't know. Ramu, Somu, Ramu. So I don't know, something like that. Okay. Then it can be either jointly, either or survivor or first name or survivor or anyone or survivor. So like this also it can be. That is an MCQ tested in this area. So like this, in this manner, it can be got from the in the form of joint name. And every depositor, he should also nominate in any person. So at any time he can nominate a person. Okay, right? And once you have got the deposit, once you have given the deposit, a deposit receipt will be given to you within a period of 21 days from when the company got the money, or when they realized the check, or when they renewed the deposit. Within a 21 days of time, you will get it. Clear? Now, the company is also required to maintain a register of deposit, and in case of premature repayment of deposit also, you are required to pay an interest which is 1% less than what is the interest that is running currently. For the duration of the term which has expired, you will pay premature termination. But before that, they are talking about the return on deposit. So you should file DPT 3, which is duly audited. So every company, only it is for every company which is having a deposit, which date on or before 30th June every year. As on the particulars which you have on 31st March, all those particulars you will file on 30th June. Okay, and it shall also be accompanied by the auditor's declaration. You cannot alter the terms of the deposit or the trust deed, which is disadvantageous. So you cannot tell, let me reduce the interest rate. So it is disadvantageous to them. No, so without asking them, you cannot do anything. All right. And every public company is required to describe a way of note in the financial statements itself. They should tell so much amount we have got from the director. Is a public company. In case of private company, so much amount we have got from the director and our relative, like that they will have to describe in the financial statement. Okay, it is for every company. And if you are not failing to repay the deposit, then you will require to pay an interest at the rate of 18% of the amount. So this is also called as a legal interest. No, 18% is called as a legal interest. If there's any contravention, then you will have to pay a fine of 5,000 and further pay a fine of 500 per day of default. Fine. Moving on to the next segment, acceptance of deposit from public. Okay, so you can also get from public. Which company? I'm talking about the public company. Same thing, 100, 500. Okay, now you are also required to file what? File your credit rating. Similar point which we saw in that. People, the flow of the book, that material I'm having is very much similar to our ICA study material. Do not worry if you don't have this material. You can also open your book and go ahead with highlighting, marking, or doing the running notes along with me. Clear? And main point. So we're also going to see this in the segment of charge. A charge should be created within 30 days of accepting any secured deposit. It should be more than the amount which is accepted as a deposit. So the charge is 1 lakh. It should be more than 1 lakh, which means it will also cover the interest component. Okay. Fine. On the amount and the interest payable, there shall be no charge on the intangible assets. Clear? Then, so here also, who is not eligible to be appointed as a deposit trustee? So if this person is a director, KMP, or an officer, or an employee, or a depositor of a company or of its group company. So a depositor of my company or of its group company, new additional point in here, they are not eligible to be a deposit trustee, or they have given any interest, they are indebted, or they are related to these people, then also they are not eligible. And if they have any pecuniary interest, as we have seen that 2% and 50 lakh, then also they are not, whichever is lower, then also they are not eligible. Okay. Similarly, meeting of the deposit trustee. When that, so he will convene a meeting on the happening of a certain event, or when it is requested by 1/10 of the depositors in value outstanding. So 1/10 in value, then he can call for the meeting. Okay. Maximum amount of deposits from members, 10%. Maximum amount of deposit from non-members, 25% of paid up capital free reserve securities premium. Okay, so members it can be only maximum of 25%. Non-members it's up to a maximum of 20. Members it is 10%. Non-members it is subject to a maximum of 25%. Okay. All right, people, let's keep moving forward. All right, people, now let us keep moving forward. So what we told was that the maximum amount of deposits that they can get from members is about 10 percentage, and the total that they can get from non-members is about 25 percentage. So here is what we did the discussion about. Now, issue of circular. So one more thing, when they want to get the deposit, they will have to give an advertisement. Okay, so normally it is going to be in a certain form, which is DPT1. Okay, and it is also to be published in, wait a minute. So this advertisement of inviting the deposits from the public has to be in a certain form, which is DPT1, and it should be published in the newspaper both in English and the vernacular language. And whenever we tell, so these are like the couple points. Whenever we tell it is to be published in the newspaper in the English and in the vernacular language, I am also meaning that it has to be hosted in the website of the company. Okay. Now, all these things is also to be filed with the registrar at least 30 days before the issue of it to the public, right? The advertisement, it shall be valid for a period of 6 months from the closure of the financial year in which it was issued, or the date on which the financial statements are laid before the AGM, or the latest date on which the AGM should have been held. Otherwise, sometimes they may not hold the AGM. So it is the date on which the AGM is held, that is when it was laid before the AGM, and if the AGM is not held, the date on which the last AGM should have been held. So this is the point about it. Now moving on. So after that, it will have to be given another one circular has to be issued, because the financial position might have changed. So for that, we want to have it in an updated form and manner. So for that purpose only, we are having this. Then maintenance and use of deposit repayment reserve account. So we know that by 30th April of every year, we will have to deposit an amount equivalent to 20% of the deposit which is maturing in the following financial year. Clear? And where we'll have to maintain, we'll have to keep it in a separate scheduled bank. It has to be kept. And what rate we can give? Whatever rate is prescribed by RBI. So that is what you can give. It also can be in the name of the joint holders of not exceeding 3 people, and it should be either like jointly, either or survivor, first name or survivor, anyone or survivor. So like this, in the with the following clauses it can be made. So this was once tested in the MCQ. So they asked in which type of clause it can be made. So it can be accepted jointly, or either them or the survivor, or the first known person or the survivor, or anyone or the survivor. Like this we can accept the deposit, and nomination is to be done at any time, and the deposit receipt is to be issued within 21 days of date of receipt of money or realization check, or the date of renewal. So with earliest of this, then 21 days within that time. If you have got the money today, then within 21 days you will have to issue the deposit receipt. Clear? What and all it should contain? Date, name, address, amount, rate of interest, and when it is maturing. This register of deposit holder should also be maintained at the registered office. Clear? Clear. And the entry in it should be made within 7 days from the date of issue of receipt. So we will issue the deposit receipt within 21 days from the date of accepting, and we should make a entry in the register within a period of 7 days from the date of issue of receipt. Okay, and it should also be authenticated by the director, company secretary, or the authorized officer. So it is being done in this manner. Clear? Now, I already covered this point for you, but anyway, let us get in detail with it. Let us say I got a deposit for a period of 30 months. Okay, so I can get it for a maximum period of 36 months is what we know. So I'm getting it for a period of 30 months. And what I'm doing, I'm going to repay it after 26 months. So in this, so just like how we have an penalty when we do a prepayment of loan or anything. So similarly, here also we are having something called as a interest to be paid in case of premature repayment of deposit. So whenever you're going to prepay it, pay it in advance before the due date, the person who gave it to you, he is going to have a loss of interest. For the remaining period, he is going to have a loss of interest. To compensate for that, you will have to pay an interest at 1% less than the rate which is applicable for the period the deposit had actually run. Meaning, if I got the deposit for a period of 30 months and the rate of interest is 9% and it has so far gone for 26 months, before the period of 6 months I'm going to prepay it, I will have to pay interest at 8% for the period which has actually expired. Okay, so this is what the point is telling about. Now you will have to file a return of deposit with the registrars. That is, so what deposit you are having, what is the amount outstanding, what is matured during that, how much interest you paid, all those things, just like a return, you will have to file it to the registrar within 30th June. The particulars will be on whatever was on 31st of March, so that you will file it on 30th June of that year, and it is in form DPT3, right? What transaction are considered as deposit, what is a deposit, and what is the amount that is outstanding, all we will mention. And if there is a failure to pay the deposit interest on maturity, then you will have to pay an interest at the rate of 18% for the overdue period. So 18% is also called as a legal interest, right? So you have to pay an amount of 18%. Clear? Clear? Fine. Now let us see some of the penalty provision with regard to this. If a company accepts contravening the issuance of circular, or contravening the provisions with regard to the limit criteria and everything, or they fail to repay right within the time period which we have, then the fine for the company is 1 crore or twice the amount of deposit accepted, whichever is lower. Okay, so 1%, if the amount of deposit is just 20 lakh, then 1 crore or 40 lakh. So you'll have to pay a penalty of 40 lakh, and the maximum amount of penalty that you have to pay is 10 crore. And for the officer, there is a free stay for 7 years, and minimum penalty is 25 lakh, which can extend to about 2 crore. So 1 crore or twice the amount of deposit to a maximum of 10 crore. For the officer, it is 7 years, and 25 lakh to 2 crore is the penalty that is available for an officer. Additionally, pyar se, prem se, what they are telling, 447 also we will levy for them. Okay, if they do it with an intent to deceive. So when there is a mens rea, when there is an intent to deceive, then additionally they will send us in a cover, they will send 447 penalty also, right? Now we are going to see certain provisions with regard to the deposit accepted before 1/4/2014. So these are what I called as a grandfathered provision. So but because just it is that, we will see it. Okay, now if at all we had accepted any deposit before 1/4/2014 and it is outstanding, or the amount of deposit is unpaid even after that date, what you will have to do is you will have to file with the registrar within 3 months from this date. So within So within June 2014, you will have to file a statement what and all you have accepted as a deposit. How much is unpaid as interest? Have you made arrangement for paying? What is the outstanding loan amount? So all those things you will have to say. See, and also you should repay the deposit within a period of 3 months from the commencement or before expiry of the deposit period you will have to pay. So all these provisions are grandfathered, which means time limit is all over, but just because it is given, let us also go through it once. Fine. Now, so that was the end of chapter deposits. Let us get started with the chapter charges now. So whenever there is a deposit, I told you it could be either a secured or it could be either unsecured. And whenever we tell it is going to be secured, it means that there is a hold on some asset that they have. So it can be a fixed charge or it can be what is called as a floating charge. So the name itself tells that the fixed charge is going to be on a specific identifiable asset, and when I call it as a floating charge, it is on the class of asset which is fluctuating or changing in nature. So the value of it is not fixed. Okay, example, land and building. Okay, and here raw material stock in trade. So these are fluctuating. Now mostly come to this point, when can this charge is deemed to be vacated or it is fully paid? So here once, when will they actually find the value of it? So when the loan is going to be repaid, they will ascertain the value and they will pay it. When you talk about the floating charge, we do not know the value, so we will crystallize it only on the specific only when a specific event takes place, like in case of default or winding up, we will freeze it and we will ascertain the value and it is going to be paid. So this is with regard to a floating charge. Now so just like everything else we happen in our life, we tell to our friend, so we take a phone, if we take in the evening, then it will go on for some time till exam. Don't do that. Okay, now just like that, in case of charge also, the company will register it to the ROC. So time limit for registering is within a period of 30 days of registration. Okay, now the company will have to register. If the company does not register, who will have to register? The charge holder or the lender will have to register. See what will happen. So charge creation is like a duty for the company. Okay, they will have to tell that I am having so much of liability, like that. So will they be very much interested to create a charge, or will they be very much uninterested to put that? So there is a point with regard to that. No. So if the company is not doing that part and going and registering, then the charge holder should go ahead and register, right? So this is given as a way to protect the people from of their interest. So that will be done in form CST1 or CST9. We'll see it in a while. So it has to be done within a period of 30 days of the creation of charge, along with the fee. It will have to be done. Clear? Clear. Now this deed will have to be in the seal of the company, and if there is no seal, then one director and the company secretary should sign it. It's also be authorized by the company's banker or any other person who's interested. So this is in case where the property is situated outside India, then this person is extra under the hand of any person other than the company who's interested. So that person should also certify and sign the same. So this is when it is situated outside India. When it is situated inside India, we have only 3 people: the authorized officer of the charge holder, the company secretary, and the director. So it is enough if it is certified from their hand alone. All right. Now, and yet another grandfathered provision. So yeah, we will also see this quickly. Now, whenever there's a charge is created before 2/11/2018, And if it is not registered within a period of 30 days, which is the normal time limit, then the Companies Act allows that it can be registered within a period of 300 days from the date of creation. It should be registered within 300 days from the date of creation only. And if it is not registered, it may be registered within a period of 6 months. Okay, from 2/11/2018. Now, for charges created after 2/11/2018, we know the time limit allowed is 30 days. Okay. Otherwise, the register will allow a period of 60 days, which is 30 plus 30. Okay. Now, even if that they are not going to do it, they will allow a period of furthermore period of 60. So here that is allowed after the payment of ad valorem fees. Ad valorem means additional fees. Okay. Fine. All right. Now, this is how they are giving us the time limit, extra time limit to permit us to do the registration of charges. Now, once a charge is issued, once a charge is created, you will have to file a form CHG2 with the register, CHG2 to the register once it is created. Then there is a modification. So, it should be filed in form CHG3. Clear? Now, and whenever you do any charge with regard to certain category, like in consultation with RBI or in favor of RBI or loan which has been made in accordance with the RBI Act, then the Companies Act provisions are not going to apply to that. So we already seen this, right? So whenever there is so the banking company also it is going to this act is going to apply, but when there is a separate provision with regard to them, our company law will keep quiet. Now, what will happen if there is going to be a non-registration? So, I have taken a deposit from someone, the company. Okay, the company has taken a deposit from someone. Now, it is not even registered in favor. So, this charge holder has not even registered. Okay, in the event of winding up, can he get his loan back? Okay, will he be able to have a claim on me in the event of winding up or anything? Let us see what the Companies Act is telling. All right. Now, if not registered, the charge becomes void against the liquidator and other creditors. So they're telling they are not able to have that preference over it. It doesn't mean that the loan itself is void and you cannot collect. This Companies Act is not going to give you any protection, but maybe if you want to get any protection from any other act, you can get it. Okay. So as such, you are losing the priority of getting, but you will get the money somehow later. Clear? So that is a point about it. So you are going to lose a priority. Okay. Fine. This is a point about effect of non-registration. All right. Now, what will happen if the company is not registering? So we already told that if the company is not going to register within a period of 30 days, then who is going to register? The charge holder is going to register it. Now let us draw with this. So the company is not registering to the ROC. Then who will only going to be registering it? The charge holder will approach the ROC to register. Then the ROC will go and ask the company, is it right? Can I go ahead with doing the registration? And the company should tell yes or no. They should do the objection or acceptance within a period of 14 days. Okay. If the company is accepting, yeah, the registrar will ask for the payment of fee and they will go ahead with registering. And if the company is not accepting and if they've shown the show cause notice, then the registrar will not go ahead with registering the charges. Clear? So is the point about it. The main here is that the company will have 14 days of time period to show their acceptance or show their show cause notice as to why the registration is not to be done. Clear? Now, one more place where the questions are tested. The company is purchasing a property and the property is already having a charge on it, right? And the purchasing company is supposed to register this charge. Also, the earlier charge will be vacated and it will be assumed that the new charge is registered in the acquiring company's name. Okay, so there is already a charge on this property. So the company which is already having it has sold it out to other person. Now it will be assumed, now once this person is registering it, the earlier charge will be vacated and now he is the person who is liable. He is a charge holder of it. Clear? Clear. And now whenever there is a modification also, we told it had to be registered. Now when a modification can be done, so like variation of the extent of charge or any other terms, rate of interest is modifying, so like this modification can happen. Or the repayment schedule is modified, partial release, so partly we are relieving of it, or ceding a pari passu charge. So ceding means giving up the right, so you have the priority or giving up the priority. So all these ways the modification can be done. So we already saw modifications to be filed with the ROC in CHG 3. Now, so this is an universal provision. So any person can inspect the register. Members, creditors, free. Then others, they'll have to pay a prescribed fee. Similarly, with regard to getting a copy also. So you pay a prescribed fee, you can get a copy, photocopy of it also. Now, every company is required to keep a register of charges at the registered office in the prescribed manner. You should have a register of charges also, right? What at all you'll maintain in that? What charges be registered? On what property it is done? If there is any modification or satisfaction means on this property a charge is created, okay? And either you pay the amount or you sell off give the asset instead of the amount. So either way the satisfaction can be done. Clear? Clear? Clear. So for this also you will have to give a notice to the ROC, same within a period of 30 days from the date of payment or rectification. Okay. So similarly here also, who is required to give? The company is required to give. And if the company is not giving within a period of 30 days, then the member can give. And again, they will be giving a 14 days a notice to the member telling have they really paid the charge, or are they having it pending? Can we remove this charge? Is the satisfaction done? So the company will send it to the ROC and the ROC will get a confirmation from them. And once the confirmation is got and he is satisfied with it, he will tell that yes, the satisfaction is done and now the asset will be relieved of all the. And CHG 5 is registered when the register is satisfied in that the charge is done. Okay, so this is about it. Now, yet another important point. So, for how many years it's going to be preserved? It's going to be preserved for a period of 8 years. Okay. Now, come to this situation here. Property is subject to charge sold to a third party with no intimation from the company or the charge holder. Okay. So, when they are sending to another person without telling that there is no intimation of charge, what is the situation of that? So we will also be seeing it in okay. And now, when a property is sold to a third party with no intimation from the company or the charge holder, when no intimation is received from the company or the charge holder, and the registrar is satisfied that okay, it has been certified, that he himself can go ahead with the register will enter the charges in the memorandum of satisfaction. So we are not going to inform the ROC, then if we satisfy that it is okay, the property is relieved of it, the charge is being satisfied, then he can go ahead with with entering the same. Clear, that is a point about it. And in case where an appoint a receiver or manager is appointed, so maybe in case IPC is going on, the insolvency process going on, so that is what we are talking about. And if a person is appointed as a manager or receiver of a company, he will have to give a notice to the ROC. Okay, right? He will have to notify both the company and the ROC. See, from give a he'll have to give a notice of the appointment to the other person. So now from now on they'll have to take his communication also for whenever is being done. Now rectification of register of charge. So if there is any omission of inclusion or omission or misstatement, then the rectification can be done by in form CHG 8. How? Accidentally or inadvertently, or there's some sufficient cause, or not having harm, voluntarily they are not hiding, unknowingly they have missed, then they can rectify in form CHG 9. So this is the point about it. So within which time they can rectify? Now let us see that. Powers of central government or registrar regarding rectification. There is a direct rectification. So they themselves can rectify when there is a modification in case of memorandum of satisfaction, or by satisfaction of charge, or by release entry. Okay, and direct extension. So when it is satisfied and the wheat has not been released, then it can be made within a period of 300 days from the date of payment or satisfaction. This is with the central government. So the federal government can extend the time limit. So this is a point about in here. This brings us to the end of the chapter charges. Next, we'll move to management and administration. Now let us move on to the chapter management and administration. So here firstly we are going to see about the register of registers. So what and all registers a company is required to have? The register of members. We already seen in various chapters also. Register of debenture holders and the register of other security holders are required to be maintained. So it is to be maintained in form MGT1. So management chapter. So MGT1 is the register of members, and this is applicable for both the companies which are existing now and also the older act company 1956. They are also required to register in this form. What and all is required to be maintained in form MGT1? Name, address, email address, PAN, nationality. This is to be maintained. In case the member is a shareholder, then name of the guardian, the date of birth, name of the nominee and address of the nominee is to be mentioned. And since when they become a member, and in case of date of cessation, that is when they are no more a member, and if any amount is was given as a guarantee. So we have the company limited by shares and company limited by guarantee, right? So in case of guarantee, what is the amount of guarantee, or any other interest that they have, or any other instruction for notice, which is if they want to receive the AGM notice in a specified form, so that is also to be mentioned in here, right? And the register of debenture holders is maintained in MGT2, and entries will be made within a period of 7 days of the date of approval by the board for allotment or after the transmission of the shares or debentures. So once a board approves, then within a period of 7 days from the date of approval, you will make a entry in the register, right? In case of sweat equity shares, in case of ease of and everything also, it is the same. It shall be made within a period of 7 days, where we will maintain the register, right? Registers to be maintained at the registered office. Okay, now you can also maintain it in any other place in India where there are more than 1/10 of the total members reside. So I am having registered office here, but my company is having 1000 members. Okay, and if there are, so the registered office in Chennai. Okay, but I am having 300 members in Sivakasi, okay, let us say like that. So I have 300 members in Sivakasi, so which means I can keep my registers in there also, right? Right. Now, and in case of a listed company, with regard to pledge charge and everything, it should be entered within a period of 15 days of the event they have given. Now, register an index of the beneficial. Okay, so there was a noise around. Okay, register an index of the beneficial owners. So beneficial owners we have already seen. So that register is also to be maintained. Now, talking about the foreign company. So not a foreign company, foreign register. Foreign register means register which is in the foreign company. How you have got the shareholders from abroad. So you are maintaining the details of them there also. So it means that now let us go through it one by one. Within 30 days from the date of opening of any foreign register, you will file with the Register of Companies a notice of where it is kept in form MGT3. So you're opening it there. Within 30 days of opening there, you should also tell our registrar, right? Now, in case there is a change or you're not doing the foreign register anymore, then also it is to be intimated within a period of 30 days from the change or discontinuance. Clear? Now, always this foreign register is always treated as a part of the register which is in India. So that is a principal register. So here also it is a part of it. It shall be the same format as what the here we have, and that is also open to inspection everything. And if you want to close it for any manner before payment of bonus on everything, you should intimate in an advertisement at least two newspapers circulating there. Okay, vernacular English like that we don't have, in two newspapers circulating there, right? That is to be done. And that company shall transmit to the registered office in India a copy of every entry made. So I'm going to make an entry today, then within 15 days I will have to send it here also. And a duplicate register also can be kept time to time, and they will update here and there whenever the entry is made, and when they are transmitting that information within a period of 15 days from the date of making an entry in that. So all these things are to be done. If you are not maintaining the register in MGT3 with respect to a foreign company, then you will pay a liability of 3 lakh. Clear? Right? So it is not just foreign company. So all the three members, debenture holder, security. So all the three registers, if you are not maintaining, then it is 3 lakhs. Of course, for foreign register also it is 3 lakh. And for every officer in default, it is 50,000 rupees. Now, so MGT1 and MGT2, it also include the details of the nomination. So that is one more point. Moving on. Moving on, declaration by the registered holder of the share. So who is the registered holder? So my name will be there in the register. Okay, but I would have given the instruction to the company, do not pay interest to me, you pay interest to my daughter. Okay, so that could be my instruction. So I am the registered holder. In that case, my daughter is the beneficial owner. Okay, so and it is to be maintained in form MGT4. Okay, now that is also to be filed. So it is to be filed with the details of the beneficial owner within a period of 30 days of entering in the register. You will have to file in form MGT4. Now, the beneficial owner is also required to give a declaration. Okay. Beneficial owner is also required to give a declaration in form MGT5 within 30 days of acquiring the interest. So here who will give? The company is required to, the declaration is to be given by the registered holder to the company, and here who is supposed to give? It is to be given by the beneficial owner, right? With same within a period of 30 days of acquiring the interest. So she also should give, I also should give, both should give within a period of 30 days. And once they are happy, they will go ahead with entering the same, right? And if there is any change in the beneficial interest already declared, then that is also to be made within a period of 30 days of such change. Clear? Right? And so MGT4 they are getting, MGT5 they are getting. So this is a registered holder is giving, the beneficial owner is giving. So we will give to the company, and then the company will give MGT6 within 30 days of receipt of declaration. Then they will give it in the prescribed form to our ROC. So this is the point about it. Now, moving on to the penalty provision. If there is a default by the registered holder or the beneficial owner in giving a declaration, then the penalty is 50,000. And if they are crossing beyond 30 days, then we have one more penalty, which is 200 per day after the first day, and a maximum penalty is going to be 5 lakh. And for the company, it is 1,000 subject to the maximum of 5 lakh, and penalty for every officer is 1,000 per day to a maximum of 2 lakh. So here also 5 lakh, company also 5 lakh, and for the officer, the maximum penalty is going to be 2 lakh. Now, here is where we have a past exam question. So, who is a significant beneficial owner? Right? So, who is a significant beneficial owner? So, individual who acting alone or together through one or more person or trust. So, they are having indirectly how much percentage? Indirectly along with their direct holding. So directly and indirectly together, if they are holding not less than 10% of the share, okay, or not less than 10% of the voting rate. So share or voting rate. Then 10%, not less than 10% of the total distributable dividend. So share, voting rate, then we are talking about dividend, okay, as a right to exercise or exercises control or significant influence or control. So they can exercise or they are actually exercising the significant influence or control. So through this, so there's a past examination question in here, people. Clear? Clear. Now so direct holding means in your own name, okay, or through the beneficial interest. Or indirect holding means you have a firm, through that firm you are controlling. So that is a way, that is an example of indirect holding. So through any body corporate or a HUF or a partnership or a trust or a pooled vehicle investment. So our siblings used to control us, no? They will tell to our parents and then they will directly try to influence them. So that is also and how it is done at home, people. Clear? Now, who has the liability to identify these SBO? Okay, it is the duty of the reporting company to identify the SBO. Why? They are going to have a major influence on us. Okay, so we should see who is influencing us. Clear? Then once it is done, we should intimate to the ROC. Okay, and reporting company that has notice and the failure to any person, whether or not a member who they believe knows or has a reasonable cause to believe. So if the company is thinking that they think this person could be having a significant beneficial owner, they can ask them also to turn in. So how and all they can have, they are not a significant beneficial owner, but if they had been a significant beneficial owner in the previous year also, then to have the knowledge of the identity or likely to have a knowledge. So they feel that this person could be an SPO, then also you will have to tell. Now, you will also have to maintain a register of the significant beneficial owner in form BEN3. And this same inspection and the copies format is standard. So we can just move on for now. Now, moving on to the next segment. So what we told, if we feel that someone is a beneficial owner, we are requesting them to. So who should identify them? The company should identify them. So we might feel that this person is a beneficial owner, so we are sending a notice to them. If they are failing to provide information within a period of 30 days, they are not providing the information, then from that day you can apply to the tribunal within a period of 15 days. Okay. Now, why we are talking about this is that sometimes these people will try to influence our company, so we'll have to identify who they are. Okay, and if they're not identifying themselves, we'll go to the tribunal and tell, see, this person has actually tried to influence me, but he is not identifying himself as a beneficial owner. Then if the tribunal feels that, imagine if there's someone from the competitor holding so much share, not identifying. So in Harry Potter, we had to reveal yourself. So he is not revealing himself. Then we can go to the tribunal and they will tell, they will attach the restrictions for the share. So they'll tell no voting, no dividend, like that. They may put some restrictions. It may be lax within a period of 1 year or after that, and if they are still not done, then it will be transferred to the IEPF fund. Okay. Now, declaration. So how they should give initial declaration. If they became an SBO before 8/2/2019, before this date, so we are talking about a grandfathered provision. So they'll have to report it within a period of 90 days, and the company should report it within a period of 30 days from the rate of that receipt from that SBO. And if it became after that, within 30 days of acquisition of a significant beneficial interest, they will have to give it a declaration to the company in BEN1. Clear? And for certain people, this SBO rules are not applicable. So this also we can quote when I told about that SBO provisions 10%. So this also you can quote along with the question. So in case of an IEPF authority, the significant beneficial owner provision is not applicable. Holding company, not applicable. Government entity and government controlled entity, not applicable. Where there's a SEBI regulated investment vehicle, because they're already regulated by SEBI, no? And RBI, IRDA regulated vehicle, they are also not required to comply with this SBOA provisions. Now, if any significant beneficial owner is not making any declaration, then the penalty is 50,000. Failure for the after the expiry of the 30 days is 1,000 per day, maximum of 2 lakh. For the reporting company, if they do not maintain the register BN1, 2, like that, then BN1 is actually the form. They do not maintain the register, then this 1 lakh and 500 per day, subject to a maximum of 5 lakh. Then for officer default also, it is 25,200 per day, subject to a maximum of 1 lakh. If you are making any false impression, then again, so pyar se prem se, they will tell 444, sorry, not 447, they will tell with so much of love. Create, yeah. Now, so here we are having a MCQs also, people quite often tested. Now, the company can also close the register for a certain period of time. Why they are closing the register? Maybe they want to finalize the list of the members or list of the debenture holders, like that. They'll want to finalize. For this purpose, they can close the register. So they will have to give a minimum notice of 7 days before the intended closure, informing that they are going to close. Why? Only then if there is a transfer or transmission procedures in progress, they can complete it within that given period of time. Okay, so that they'll be entitled to get the notice of the AGM or the bonus or the rights or the dividend, whatever the case may be. So for this purpose, they'll have to give a minimum notice of a period of 7 days. Now, one time closure, 30 days you can close. Maximum closure period in a year, it is 45 days. So in the case scenario, in so many places they have asked this question. So this is the point about that. How they can inform the notice of the closure? By advertisement in the vernacular and the English. So whenever I told this point comes up, we'll also tell that this will be pasted in the website of the company or in the website as notified by the central government. Okay, a private company need not put this in the newspaper provided they gave 7 days notice to the members, and if there is any failure in this regard, the penalty is 5,000 per day, subject to a maximum penalty of 1 lakh. Now, talking about the annual return. So, annual return means every year, whatever happened. So, in our school and all, we used to have, no, they'll tell what and all we did in the year, what and all contests we conducted, so who and all won. So like that, we'll have some nostalgic moments, no? So, that is our annual return. So, for the companies, it is in form 7, which means for OPC and for small company, it is 7A. All right. What and all you did in a year, you are going to do a summary of it, people. So, firstly, starting with where is the registered office, promoters and directors. All right. If there is any changes in them, remuneration, what you paid for the directors, key managerial person, what complaints and all you did, certification you got. Okay, then information about the members, debenture holders, what changes happened since last year, and what meeting and all happened, class meeting, board meeting, committee meeting, who and all came, all those things. You paid any penalty, or was there any punishment imposed, anyone had free stay, then was there any compounding happen? Compounding means you will pay some money and they'll just okay, go, so like that. And if there is any foreign institutional investors, so which is held by them, shares that is held by them. So all these things is to be mentioned in our annual return. So nostalgic moments. So it will be signed by the board of directors. So it will be signed by the director and the company secretary in practice. If there is no company secretary for the company, then any company secretary in practice. In case of a one-person company also, it is to be signed by the company secretary. And if there is no company secretary, then the director will sign it. In case of listed company, it is in form MGT8, and unlisted company with a paid up share capital of more than 10 crore or turnover of more than 50 crore, then also it is in form MGT8. So, unlisted company with having more paid up capital of 10 crore or turnover of 50 crore. Clear? Fine. So, financial statements ought to be filed within a period of 30 days from the date of AGM. And if I'm not holding the AGM, from the date on which the 30 days should have been held. So, how will I remember, ma'am? 30 days, 60 days. See, financial statement, if now you take in a tally, now you put some statement, it's very easy to make. If you are going to make some adjustments, that's a different problem. We don't talk about it. But it is actually 30 days from the date of the AGM. But annual return, you have to give all the details. You'll have to compile and do everything. So, some more time it will take. So, 60 days from the date of AGM. Right? So, that is the point about it. And now, failure to file the annual return, and the penalty is 10,000 subject to a maximum of 100 per day, with a maximum of for every continuing default there is 100 per day subject to a maximum of 2 lakh. Okay, if the company secretary in practice, so I think first time we are seeing a penalty for the company secretary, people. The penalty is 2 lakh if it is wrong, otherwise which is not in accordance with section 92. So where we will keep it, we already saw the provision with regard to this. If you pass a special resolution, then you can keep it in any place other than the registered office, provided there are more than 1/10 of the total members reside at that place. Clear? Clear? Now moving on to the point about the preservation. So for how many years it can be preserved? Register of members render foreign register. All these are to be preserved permanently. Okay, foreign register of members and the register of members, it is to be preserved permanently. Permanent member. Okay, debenture holders and other things as debenture holders or foreign registers of the debenture holders, it ought to be preserved for a period of 8 years, people. And every time it is to be in the it can be in the custody of the company secretary, or in the case of members alone, members and debenture holders alone, or any person authorized by the board. Otherwise, it is just any person who is authorized in this behalf. Right? And if anyone is not allowing you to take copy or permit you to inspect, then the penalty is 1,000 per day, subject to a maximum of 1 lakh for the company and the officer. Now, moving on to the types of meeting. So we know what and all type of meeting we have. So we have AGM, we have the board meeting, we had a class meeting. So we know the types of meeting. So now we will do the point with regard to the notice of the general meeting. So normally within how many days the notice should be sent? We know something called as a 21 clear day. 21 clear day means, okay, so the date of sending of the notice, cut that. Okay, the date of the meeting, cut that. In the middle you should actually have 21 full days. Okay, so that is called as 21 clear days. Cut both, like in a bread loaf, what you do, first part also you will not take, last part also you will not take. So middle whatever is there that you will eat, so those two are for the mummies. Okay, so like that they will eat that and they will be happy and contented, right? So that is how it is. So 21, cut this, cut that. So in the middle you will have 21 clear days. Now, can it be less than or 21? Yeah, if you are going to give shorter notice, okay, but at least 95% of the members should have agreed with that. All right, so this is a point about that. And in case of Section 8 company, this is not 21, it is 14 days. Okay, so cut this, cut that. Now, in middle you must have 14 days. What are the contents of the notice? In the invitation, what you will see? Okay, you will see the place, date, day. So all these things you will see, so just like that it should have everything. And also a statement of the business to be transacted at the meeting. Okay, so what and all are you going to pass? Are you going to have any special resolution? Then the explanatory statement with regard to that, those things also you should mention. And it should be sent to every member, auditor, director, to everyone. It has to be sent. Now you can also send in the electronic mode. So that is a point about it. Now, if at all a member is not receiving a notice, okay, point happens, no? So there is this big trouble which happened also. So in there was a story, it's a mythological story. So one god did not send invitation to other god, or he came late for the wedding. So there was a huge problem which started. So like that we have a Hindu mythology. But keeping that aside, now what also could happen? So they will not send a notice to any member. So in a family function also, I am in fight with him, I will not send a notice to that person. So like that something and all would have happened at home, no? So I'll not send an invitation to that person. So just like that, if they did not come, does it mean that your marriage is invalidated? How can you do that? So the marriage is not invalidated, just that we are not sent. But we should tell when you meet them what you do. I sent, you didn't get, like that our parents will do. So just like that. So non-result does not invalidate the wedding, I mean the meeting. Okay, and the onus to prove that it was accidental and not deliberate is on the company. Okay, the company should tell, you we did not send like that, they should tell. Clear? Fine. So shorter notice is possible, but should be consented by 95% of the members. Members means members who are entitled to vote, not just any other member, or member who are having 95% of the voting power in case it's a company with not having share capital or with differential shares. However, we can't take it. Then in case of other than general meeting, it is 95% of the total paid up share capital carrying the voting right. So that it is like that. Now, you should also give an explanatory statement as to why you are transacting a particular business as a special business. So you should also give an explanatory statement. It should specify, like, if at all there is any related party transaction, if they are having any interest in that, is the director having any interest, the KMP having any interest, or if the relative is having any interest, it has to be checked. So what is an ordinary business? Normal thing what you do. Normal thing what you do? Consideration of the financial statements. Declaration of dividend. Normal thing. Appointment of director in the place of the retiring director. Normal thing. Then special business means other than this. So our company law will give the explanation like this or no, it is other than this. Okay, and in case of other company, if there is any business transaction which is contributing to related to any person who's having more than 2% of the shareholding also, it will have to be disclosed. Penalty with regard to this, 50,000 or 5 times the benefit accruing to the person. So interestingly, I was a part of another business meeting of another fraternity. There we call as a district director. So the district director purchased certain products for the particular fraternity from a related party. So we had to ratify that. So all those things were there. So whenever a related party transaction is happening, so this will also be brought to discussion like that, right? And the penalty is 50,000 or 5 times the benefit accruing. Talking about the quorum. Quorum. Quorum means the minimum number of members personally present to constitute a valid meeting. So in case of private company, it is 2 members. In case of public company, if the total number of members is less than 1,000, then it is 5. The total of members is between 1,000 to 5,000, it is 15. How? Chop, chop. Okay. And if it is more than 5,000, then it is 30, double. Okay. Now we have questions with regard to this aspect, people. Very interesting questions, past examination question. Now, within which time the quorum is to be present? The quorum is to be present within a time of 30 minutes from the start of the meeting. Okay. And they should be present when till the meeting ends. And if the quorum is not present in any meeting, then the meeting will stand adjourned. Adjourned means in Tamil we tell otti vekkapattathu. It will stand happening on a separate date, okay, like that. And the notice of the adjourned meeting must be given 3 days before the meeting. So next week it will usually happen, same time, same place next week. So 3 days before that time you should give the notice. And that time also they will not there. So whoever is present there will validly constitute a quorum and we can go ahead with the meeting. So this is the point with regard to quorum. Now here they are asking a question, right? So there was a meeting which was properly convened. Properly convened means properly gave the notice and everything. Now some trouble people will have everywhere. No, they created some trouble. 2 shareholders fighting. Okay, and so the meeting stand adjourned. So the chairman of the meeting who will conduct the meeting, he told, let us not have the meeting today, we will adjourn the meeting. Okay, in that first meeting where the fight happened, there were 16 members. This is a past examination question, people, pin your ears. Okay, so this is a company which had 3,500 members. So how many members are required to be there? They are required to have at least 15 members. But okay, the first meeting where the fight happened, there were 16 members. Okay, so 2 people fight. In the second meeting, they had 3 members. Okay, now tell me, is this quorum of 3 okay or not okay? So from my point, and this is a suggested answer, not just from my point, okay. So this quorum is not sufficient and the meeting will stand adjourned. Why? I know that this meeting was adjourned. Okay, but the point is, was this meeting adjourned for the want of quorum? No, it was adjourned for some other purpose. Okay, only if it is adjourned for the want of quorum, we are going to tell that next meeting whoever is present is okay. But now tell me, this meeting is adjourned for the want of quorum. The next meeting whoever is present will validly constitute a quorum. So, right? So this is the solution for that question. Now, we also know that we may sometimes have the body corporate as the members of the company. Okay, body corporate could also be the members of the company. So they cannot come, no, right? So they can have any representative. So that representative, he may represent 2 or more body corporate also. So for that purpose also, he is going to be treated as counted equivalent to the number of corporate he is going to represent. So if I am going to represent 3 companies, then my head count is 3. Okay, this is how we are going to do. Okay, fine. But let me tell you, I am representing 5 companies. Okay, I am representing 5 companies. So my head count will be 5. But on the day in the meeting, nobody else came. I came and I am representing 5 companies. Doesn't mean that there is proper quorum again, but at least 2 individuals must be physically present. Okay, then I would be counted as like that. Okay, let's read through this. There is a public company less than 1000 members, means how many members should be there? How many members should be there? 5 members are enough. Okay, but if I alone I am there, but I am representing 5 people, okay, right, I'll represent 10 people also, okay, I'll represent 5 people, means there should be one more person in that meeting. So there should be 2 persons, me and someone else. Okay, so there should be one more member. Clear? This is the point about it. Then members who are voting or members who are abstaining to vote for a related party transaction, they are still counted for the purpose of quorum. That's why they should not vote. Okay, yeah. All right, people, now moving on, right? Then we will see about what are the powers of the chairman and how we are going to elect the chairman of a meeting. So the chairman, he might be elected, he may be elected by the members by show of hands. So members will put their cast of election of the chairman by the show of hands, or if the article is telling for any other vote, then they can very well follow that. So that is the point about that. Then demand for poll. Alright. So the chairman, he might be elected by show of hands, and the article is providing any other manner for the election of the chairman, then he might be appointed in that manner. And demand for poll. So if the poll is demanded, then the initial chairman continues until a new one is elected. So by show of hands, then they might have like elected one person, and if they want to elect another person, till the new person is appointed, the old one is going to continue. Yeah, just that. Then, what is the duty of the chairman? So he will be the one who will conduct the entire meeting. So he'll manage the meeting, ensures that there is a fair conduct, and he will also authenticate the minute for the meeting within 30 days of the end of the AGM. Okay, and if he's not there, then who will do it? You're going to see it shortly accepted, but that is MCQs from this page, people. Okay, then casting vote. The chairman has a casting vote only if specified in the article. So what is a casting vote? 50-50 people. So 50-50 to break the time, we need someone now. So chairman will cast a second vote. So already you would have voted. Now he'll cast another vote in this regard. Then exemption for a private company. So a private company, if there is no default in filing of the financial statement, the annual return, they do not have to go through with these provisions. So that is with regard to a private company. Alright, now let's see moving forward. So this is with regard to the chairman. Now moving ahead and talking about the proxy right. So who is a proxy? So at colleges it done. No, we do not have that. So instead of us putting the attendance, and then someone would have else have put attendance for you. So we have done that during our hostel days. So there's 2 attendance at every evening. So if you're a bit late, because we will be held up at college for a project or thing, so someone will put attendance for us in the attendance hall. So we used to have gatherings over that time. Okay, so just for we used to be held up in the college for not for any other purpose. Okay, then what is a proxy? So proxy is a member. So any member. No, any member who is entitled to attend and vote, he may appoint any person. So should the proxy be only a member? Not necessarily, nothing like that. Okay. Then so any member who is entitled to attend and vote, he may appoint a person as a proxy to vote on his behalf. And this proxy cannot talk, he can only vote on vote whenever it is demanded. Right. Unless the articles of association provide otherwise, this does not apply to a company not having share capital. So it is only for the companies which are having share capital. Then section 8 company can Member cannot appoint a proxy unless the proxy is also a member of the same company. So normally he need not be a member of the company. But for a Section 8 company, there's a special provision like he has to be a member. So only then he can be appointed as a proxy. Okay. Then in the notice calling a meeting of a company with share capital, then they will also include a statement about the right to appoint a proxy. So the notice calling for the meeting itself, they have a statement where they will tell, okay, member who are entitled to vote can call for a proxy. So the proxy form shall be informed MGT level. So instead of one person, there's another one person who's going to come. So MGT level is the proxy form. And it must be signed, it must be authorized by him to deliver it to the company. Within what time will you deliver? 48 hours before the start of the meeting is valid. So the meeting is today at 9 a.m. Then 48 hours, which is 2 days, but we don't say 2 days, it is 48 hours before the start of the meeting. So yesterday morning and the day before day morning, 9 o'clock, that's the last time. Before that, you should have submitted. After that, you cannot submit and they will not accept. So that is the point about the time limit within which the proxy form is to be submitted. Now, can anyone inspect the proxy form and check if the valid proxy is that? Yes. Then how much time? Within it's the time limit for verification inspection starts 24 hours before the start of the meeting, and it can go till the meeting is concluded. And you should tell within 3 days before a prior notice you until I want to inspect the proxy form, like that you should tell. Okay, so this is one point with regard to that. Now mainly we will see this social limit of the number of proxies. So a person can be a proxy for how many persons? Yeah, a person can be a proxy for any number of persons. Okay, up to they have given one person can act as proxy on behalf of up to 50 members. So this person can act as a proxy for 50 members. But it cannot exceed the people holding more than 10% of the share capital carrying the voting right. Okay. So if there is anyone in that who's holding more than 10%, you cannot be a proxy for another person. So that's all about it. Okay. Fine. Then yeah, let us say this person Raj, he is having 1 lakh, 1 lakh, 1 lakh number of shares, and the total number of shares is 10 lakh. So very well, it is like it is equal to 10%. So no problem. But if it is going to be like 1 lakh and 10,000, it is more than 10% of the total share capital with the voting. Let's say all the share capital are carrying the voting. So in this case, this person can be only a proxy for Raj and not for any other person. And small tukda people means no problem. He can be as a proxy for 50 members. So that is all possible with regard to proxy right. Clear? I hope this point is clear. Yes. Okay. Let's keep moving forward. And in case of default in the omission to include a statement with regard to proxy, then for the company and the officer, that's going to be penalty of 5,000. So they have to include a statement that, yeah, you can appoint a proxy. And the issue of invitation to appoint a proxy or a specified person is that it is a expense of the company. And if there is a contravention of that, then it is 50,000. Okay. Officer not liable if proxy form of or list of willing people is used only at the members return request and is available equally to all the members entitled to vote. So, if the officer has made the form available, then for him there is no penalty. Could be tested people will tell the company is only having the company is not bearing the expenses like that. But the officer has made sure it is all available to everyone. Then in that case, the officer is not liable. Then the company will be liable to bear the expenses. So this is about it. Let's keep moving forward. Right. Significance of voting. So we know that every member has the right to vote can vote on every resolution. But the preference shareholders, they cannot vote. They can vote only in the case where it is affecting their right, or in case the dividend has not been paid for a continuous period of 2 years. Okay, so this is with regard to the preference right holders. All right. Now, so if there is unpaid shares or there is gain on shares, then the articles may place a restriction on the voting right. Then, yeah, here members do not use all votes or cast them uniformly. So if you're having 500 shares, each having like let us say 3 vote, then you will have 1,500 vote. So you can put 750 here, 750 here. Possible because like a monkey story when you not be able to decide this. That. Okay, so put vote for both companies, that is allowed because they know our heart. Okay, members owning dues cannot sign EGM requisition. Okay, so if you're already not paid any, if you have any unpaid shares, then you cannot sign the requisition for voting and all. Then, in case of joint holding, seniority is going to determine who can vote. Okay, so this is the point about that. Now we will go to the point where we talk about the e-voting. So there is a question here which was asked people. So it was told like a Section 8 company is having 1,000 members. So are they required to have e-voting? First, let us see what a e-voting means. So which company is required to have a e-voting, which is listed on the stock exchange. So every listed company and a company which is not less than 1,000 members. So if you're going to have 1,000 members or more, then they are mandatorily required to do e-voting. So what is e-voting? You have a designated website for that. There'll be a username and passwords and all the shares which you have will be listed in there, and then you will go inside. Then it will show till which date to which date the till which date to which date so till which date to which date the voting is going to be open, like that it will be mentioned. Okay, so then that you can go and vote. Okay, so this is how it is done, the e-voting. Now, who need not provide e-voting? And the company need not have a e-voting. Now tell me, the section company is that e-voting mandatory for having more than 1,000 to 100,000 members or so? Yes. Yes. The only relaxation that we have is with regard to a Nidhi company or any other enterprise or institutional investor referred to in chapter 10B and 10C, like that they have given. So we'll just make a mind note that Nidhi company is not required to do it. Now, then we'll go after something. All right. Now, when we talk about how the steps to e-voting is, so just like already told, that is going to be a log in detail. Then they give like will be listed how many shares you have in here, then what vote, how many votes you cast in favor, how many votes you cast against, all those things will be given. Primarily, we are concerned with this thing. They must also publish 21 days before the general meeting in one vernacular language and one English language, telling like this is being open and everything. And it should be open for at least 3 days. It should be open, right? So 3 days must the voting link must be alive, okay, right? It must be live, right? And it must close at 5 p.m. on the day preceding the meeting. So the meeting is on 23/3 at 8, not 8, at 10 a.m. Then 22/3 at 5 p.m. Ding dong, the voting closes. So this is how they will be fixing it. Clear? Now, so I have cast the vote. Can you change? You cannot change. Okay. And one more question is there in this regard. Let us say you are given a notice of the general meeting and you are a person who is eligible to do the e-voting. Then what is happening? You are exercising the e-voting, but you have not cast the vote. Can you come to the general meeting and cast your vote? Yes, it is possible because you have not cast your vote in that. You can come to the general meeting and cast your vote. So this is one thing. Now there is someone who's called as a scrutinizer. Who's a scrutinizer? Who may be a person who's a CA, CS, or a CMA in practice or an advocate or any reputed person. So what they will do, they will see if it is proper, votes are cast or not. All right. Then they prepare a consolidated report and so how many votes is cast, how many votes is cast, for what is the result, and all these things it's submitted to our chairman, and they will not disclose the results. So now so much percentage has cast. Now this is the person who was leading. So now this is possible. Like that and all, they're not creating hype. Okay, so with so much vote, so much leading, so like that and all, they're not creating hype. They will have it as a secret, and they will reveal it only when all the votes are cast. Right? Then, so scrutinizer will know all the details like the name, the folio, how many shares they have got, how many shares they have, but they will never know how they have voted. Otherwise, does not see, right? So these are some of the points which we got to say. Then no withdrawal of resolution. So once it has been put for e-voting, then that resolution cannot be withdrawn. It cannot tell, okay, we will not discuss about this now, and it has to go ahead. So this is a point about it. Now, here, okay, so we have opened the e-voting. So it has been live for more than 15 days. Okay, 15 days, I'm going to keep the e-voting. But the date on which it is passed, the date of the general meeting, okay, so that is the date of passing of the resolution. So this is with regard to that. All right, all right. So now let's go to the demand for pool. So what is a demand for pool? Maybe we would have first initially ordered a voting by the show of hands. So okay, some silly people what they do, they raise a hand like this. They will raise a hand like this. Very tough. They may even put it like this. Something they will do. Okay, right. So what you do if the chairman is not satisfied, he on his own motion, that is, he will think, okay, these people are not fit for voting by hand, let us do poll. So he himself might think, or on a demand made by specified members. So who are the specified members? People who are holding more than or equal to 1/10 of the voting power, or with aggregate shares of more than or equal to 5 lakh. So any of these category of people, if they want, they can demand for a poll. So voting by show of hands result might be announced, might not be announced. So even after announcing or before announcing, we can go for the demand for poll, and we can go for the voting by poll. And a poll demand may be withdrawn any time by the members who made the demand. Clear? So whoever has sought for it, then he himself can withdraw if it is required. So, all right. Now talking some more thing about the scrutinizer. Scrutinizer will have to ensure that there is a proper conduct of the polling. He should also maintain the records. He should also prepare the report, and he should also ensure that all the complaints with section 109 is that done. So everything which the voting by remote voting, all the procedures should have been observed. He should check that the time limit for which it is open, the date of closing is there, and all the roads that are passed are within that time only. All right, so everything they will have to make sure. Clear? These are certain points with regard to that. Clear. Now we are moving and going to talk about voting by voting by postal ballot. So which is it will arrive at our home. Clear. So this is voting by postal ballot. People like if you ask me, is this most famous? E-voting is most famous now. Okay. So we are moving ahead. So but how it is done? So the company will send a notice and a resolution to all the members telling, okay, if you want to accept, accept. If you want to reject, reject. And they will have to send it within a 30 days of dispatch. Okay, 30 days of dispatch. Dispatch means from the day the company is sending to them. From the day the company is sending to them, from that 30 days they'll have to send back telling them if they accept or not accept. So this is about it. And advertisement will also be placed in one vernacular and one English language. And if it is received after 30 days of dispatch, then it will be invalid. All right. So this is about postal ballot. Now, once the ballot is received, so again the scrutinizer will come to it, he will check if it is all fine, and within 7 days from the date of the last visit. So, right, okay, almost that is it should normally be within 30 days, but if it is all received within a period of 30 days, it's super. So, within the last date of visit, within a period of 7 days, he should maintain a report telling so much thing we have received. Like this is going to be the result and all those things like that he will maintain with regard to that. Okay, so this is how it is being done, right? And if it is going to be received after a period of 30 days, then it is going to be invalid. Clear? All right, so let us say here if all are received within a period of 24th day itself. So from that we'll calculate the 7 days. So the 7 days from the date of the last visit. So that is how you have to write. Now, certain matters are to be transacted only through postal ballot. So, which one? Alteration of objective. So, already told postal. So, alteration of objective. Okay. Then, alteration of article. Change of the registered office. Okay. Change in the objective, and if it is money raised and if it is unutilized in both the cases. In case of issue of differential shares, variation of class rates, you are telling, okay, we are going to change it like that. In case of buyback of share and election of shareholders for small shareholders and for the selection of directors. So in this cases, it can be done only by way of postal ballot. All right, let's keep moving forward. Now, we know that who is going to give the resolution and everything, the who is going to tell us like so and so this is all going to be transacted in this particular meeting is going to be told by the board of directors. But if a member want to give any resolution intended, if the member feels that anything is to be discussed, if the member feels that any resolution is to be done, he may also tell that we need a particular resolution to be passed in the meeting. So that is section 111. So how do we remember it? If at all the company is about to put some nama on them, then the members should be alert. Okay, otherwise they put a down. So now for that purpose, the members are wanting to discuss a particular issue which should be discussed in the meeting. Clear? All right. So this should be in writing and it should be signed. And two or more copies containing the signature of all the requisitions should be deposited. So that particular resolution which they want should be in writing and it be signed by the people who are wanting it, and it should be deposited at the registered office. Now, requisitioners must deposit a tender or some reasonably sufficient to meet the company's expense. Who's going to deposit here? The requisitioner is going to deposit. But if you see, for the purpose of EGM, who will be bearing the cost? The company will be bearing the cost. And now, minimum number of members is same here. So, 1/10 of the members holding the voting power or 5 lakh clear. Let us see what is our 100 to telling. So clear? So it is 1/10 of the total members holding the voting right of equal to that 1/10 percentage or more than or equal to 5 lakh number of 5 lakh value of paid-up share capital. Correct? Now, when they should deposit the same 6 weeks before the meeting or if it requires notice or 2 weeks in other cases. So if they have fixed a meeting date as 23/3, then 6 weeks before that they should have submitted. Okay, 1, 2, 3, 4, 5, 6. Okay, 6 weeks before that they should have submitted, or it is enough if it is done 2 weeks before in any other cases. Then, if the AGM is called within 6 weeks after the deposit, the time limit need not be complied with. So, they are going to conduct the AGM from the date of deposit within a period of 6 weeks. Fine. Then, see, this is being like a recommendatory segment and not a mandatory. So, it is fine if they do it within a period of, if they give a gap of 6 weeks before the date of meeting. So, date of meeting and when you want to send the notice, there should be a gap of 6 weeks or 2 weeks, but it is okay if it is going to be conducted within 6 weeks also. Fine. Clear? Provided that if it is found to be a needless publicity or defamatory, then the central government will not allow for the circulation of the same. Okay, and sometimes central government will also direct that some person has to bear the cost of requisition. Okay, requisitions bear the cost incurred by the company even if they are not a party to the application. Okay, so sometimes they will tell the requisitionist also bear the cost for the same. All right. Now we are going to talk about the representation to the president or governors in the meeting of the company. In case if the president is a member of our company, okay, so he's very busy, he cannot come. Who's going to be there in behalf of the president? So there can be any person who's going to represent. So in case of the president or the governor of the state is a member of the company, then that can be any person who is going to be appointed as the representative for him. So what and all he can do? He can vote. He can also vote by postal ballot. All right. So here they are given. He is having the same right and powers as the president and governor, including. Now, I have given situation and I'm asking you, can they also be given an opportunity to speak? So think and let me know in the comment section. Clear? Now, so it is given that they have the same powers, including. Can they talk? Okay, let me know in the comment section. Now, then there is, so we also know a company can be a member in another company. So in this case also, then there can be any person who's representing them on their behalf because they do not have it is not it is only an artificial person, right? So this representative for a body corporate, he can vote, vote by proxy or vote by postal ballot. So all these are possible for him. Yeah. Now, what is the motion? What is the resolution? So, resolution means we know resolved, pursued to, like that they will tell. No, so it will be passed. Motion is like an agenda. So, all these things we want to discuss. It is like a proposal. We want to talk about it. So, like that. Now, let us talk about it today. So, once it is discussed and planned, then that is called as a resolution. So it is nothing but a motion which is passed is called as a resolution. Okay. Before it is passed, it is only called as a motion. It is not a resolution. Now there are two types of resolution which we know. One is a ordinary resolution and a special resolution. Ordinary resolution which is going to be passed with only a simple majority. Special resolution means we need three-fourth majority. This is vote cast in favor. Okay, what is in favor is not less than three times the vote cast against. So in favor, it must be three times than the vote which is called cast against. Okay, so it should be in the ratio of 3:1, which is 3 by 4. Clear? All right, now going to the further point where we talk about and resolution which require a special notice. So it is not special resolution, it is requiring a special notice, which is they have to tell it separately that this matter is going to be passed in the meeting. So what are the things which need a special resolution? Appointment of auditor other than the retiring auditor. So we are not going to appoint the retiring auditor. We are going to appoint some other person, more like not accepting him, putting some other person in his name. And resolution not to appoint a retiring auditor. So this fellow I don't want. Blankly you're telling, okay. Removal of the director before the expiry of this term or the replacement of the director. So AD, 2 points about A, 2 points about D. So appointment rejection, okay, with regard to the auditor. With regard to the director, remove, replace, okay. With regard to the auditor, we are going to appoint another person or reject this person. With regard to the director, remove him and replace him. Okay. So in this cases, you will have to give a special notice. How are we going to give a special notice? And to whom and all you should give a special notice? You should give a special notice to that 1% and a 5 lakh people. Okay, so 1% club there, 1% club and 5 lakh club. These two people just holding not less than 1/10 of the total voting power and holding an aggregate of 5 lakh of the share capital. So to these people, you will have to give a special notice, and this notice must be sent 14 days before the meeting, but not earlier than 3 months. So the date of the meeting is here, and 14 days before you should give. So 14, we'll have 21 clear days, just like that. 14 days before you should give, but not earlier than 3 months. Okay, so 3 months to 14 days. So if it is on 23/3, then okay, all right. Oops, not jumping anymore. Then 14 days before here, but not earlier than 3 months because we'll forget. Yesterday what we studied, today we remember. Yeah, we will remember. But some other don't remember. Okay, so just like that, 3 months back you give the notice. I missed it like this sometime later. So 14 days to 3 months. This is the gap in which you can issue a special notice and the meeting date is here. And company must send a notice of resolution to all the members to at least 7 days before the meeting. So at least 7 days before that, you should send it to all the members also. This is for the other members, not 1% and 5 lakh. Others also should send at least 7 days before the meeting. Along with that, SAT you should also publish in the newspaper and the website at least 7 days before the meeting. The normal people, 7 days it is enough. For the special people, 3 months up to 14 days is required. Clear? And this should also be filed within a period of 30 days to the registrar before from the date of passing or making it. So it's for special resolution. Okay. So you also have to file it with the registrar within a period of 30 days of passing it. Now talking about special resolution. Special resolution, the votes cast in favor should be 3 times more than the vote cast against. So that is special resolution. What is an unanimous resolution? Unanimous resolution means everyone is going to agree to that. Each one of you are going to agree to that. That is called as a unanimous resolution. Managing director resolution is whichever is related to the MD. Okay, this is appointment, reappointment, renewal, variation. Okay, class resolution means only it's going to affect that particular class of shareholders. In case of voluntary winding up, that's one's voluntary winding up resolution. So we will just talk about. Keep moving forward with regard to this case. About the minutes of the meeting. So we already seen some points in this regard. So what is the minute? So you will write a journal. What and all happened in that day. Alright. So you will pen your thoughts about it also. Just like that. What and all happened in the meeting is going to be recorded in the minutes. So it should contain a fair and correct summary of proceedings. So whatever happened in a fair and in the correct manner, you will mention it. All appointment to be mentioned. For a board meeting or a committee meeting, you should tell who and all director present. Okay, who and all voted for, like in for, who and all voted against. All those things all should be mentioned. And some things you should not mention. As a general rule, you cannot include the defamatory matters. So you might include in your diary that fellow did like that, like that. But with regard to the minutes, we are not supposed to include defamatory or any irrelevant or detrimental matters should not be included. All right, this is the point with regard to that. And it should be prepared by the chairman, which is for all meeting, and it is to be prepared 30 days of the meeting and passing of the resolution also. It should be filed within of 30 days. Clear? And it should not be in a loose sheet. Okay, so I hope you are also writing the notes along with me, certain running notes. Do not just sit and watch. If you don't have this material, even then no problem, open your study material and have, because the flow of this lecture is very much similar to the flow that we have in our study material. Clear? All right. So no loose sheets allowed. So because the exam also will be tight up. Similarly for the minutes book also, loose sheets are not allowed. And whatever is there in the minutes book, it is like an evidence. Okay. Now, and in this regard, if there is any default, then the company is liable for a penalty of 25,000 and every officer in default for 5,000. If there is any tapering of the minutes book, some person are very angry with whatever is there. So they're coming and tearing it off, then for them, the free stay is 2 years and the fine is 25,000 to 1 lakh in this regard. All right, let's keep moving forward. And you will have to maintain separately for AGM, separately for meeting operator, separately for board meeting. Okay, so we used to have no different notebook for different subject. Okay, auditing one notebook, law one notebook, like that. When you are maintaining, no, from you only they are inspired. Correct. So for each type of meeting, we are going to have a separate notebook. Then if there is a resolution which is passed to postal ballot, it shall be recorded in the minute book of the general meeting as if it was passed in such meeting. So with regard to which meeting it was passed, that is going to be mentioned and everything is to be mentioned within a period of 30 days of passing of that resolution. So the 30 days we have to include. Along with that, what is the resolution? What is the result? Scrutinizer report, all these things it should be included. And most importantly, questions are tested in this regards, people. For the board or the committee meeting, the chairman of the same or the next meeting should sign within a period of 30 days. For the general meeting, here only we are asking the question. Chairman will sign it, and if he is not available, the director who's authorized by the board, so they will tell independent director sign it. They will tell managing director sign it. So not required like that. Who's authorized by the board is required to sign it in a period of 30 days. For postal ballot also the same thing. The chairman of the board meeting, and if unavailable, the director who's authorized by the board is required to sign it in a period of 30 days. Okay. And with regard to the general meeting, the minutes book is to be preserved permanently. Board meeting is to be preserved permanently back at the registered office. And with regard to board meeting at any place as is decided by the board. Who is to have it? The company secretary or any person who is authorized by the board is supposed to have the same. Clear? Now, there are certain exceptions with regard to a Section 8 company. So, a Section 8 company need not to do certain things. What they need not do, they need not maintain this minutes book, but they are supposed to maintain if it is with regard to a resolution which is required to be passed by circulation. Then, in that regard, only in that regard, within a period of 30 days of the conclusion of the meeting, they will have to enter it. Okay, and also the articles provide for the same. Clear? Now, and this is available only if they have been a good boy company, which is filing of the financial statements and the annual return within that time period, which is fixed. Now, where is this kept to be kept at the registered office? Can people inspect? Yes. Who can inspect? See, it clearly tells that it can be done by any member without charge, subject to the reasonable restriction. Suppose if they want any member to not inspect, then they can tell don't inspect. Why? They may be wanting to create some problem with regard to that. Then obtain copy. Any member may request a copy of the minutes of the general meeting within a period of 7 days on payment of the prescribed fee. So, if there is any member. Clear? Now, if they are not allowing you to inspect, then the penalty for the company is 25,000, for the officer and default is 5,000, and if they do not provide a copy within a period of 7 days, then for the company it is 25,000, and for the officer and default again it is 5,000 in this regard. Clear? So we already saw when they can be barred from furnishing in minutes book. So they tell certain members do not provide it. When the company refuses inspection or fails to furnish copy, then what they can do? The name of the director who's holding that, not providing it, we will take that and we will tell it to our Tala, who is our tribunal. Then the tribunal will tell immediately you can allow the member to inspect, and you can also deliver a copy of it. Why? Because every member is entitled to go and see what has actually happened with the company. But if there is any special circumstances, then they might restrict it. It depends on the case to case basis, people. Clear? That is with regard to that. And if a member requests copy of the general meeting, of the minutes of the general meeting, it should be provided within a period of 7 working days. And fee payable for that is 10 per page if they want a copy, and a soft copy of the minutes of the preceding 3 financial years will be given free of cost if they want. So preceding 3 financial years, okay, then members will get a copy of it. Now going to the maintenance and register documents in the electronic form. Clear? So now we are all having it in the electronic form, right? So who and all is required to have the electronic form? So listed company having more than 1,000 shareholders, debenture holders, or security holders. So they are required to have it in the electronic form. So why? Because it can be seen and accessed by everyone easily. So that is a point with regard to that. And how it is to be maintained. Should be maintained in the prescribed form and the manner. It should be easily accessible. It should not be tampered easily. So all these previously we had a syllabus called so something like that we had, and I forgot the name of the syllabus also. The intro also we had, and then final also we had ISCA and that. So all these things we used to study that. It should be in a prescribed form. It should be like we can refer in the future. It should be readable and it should be reproducible. You can make copies of that. It should be dated and signed. And it should be uneditable. So like that, and it should be able to be updated. All right, because only then it cannot be tampered. There is confidentiality. It is unwanted people cannot access it. There is no loss to it. All right, and it should be non-editable. It should be properly backed up. It should be restricted only for a certain person. So take a minute, pause, go through it. Fine, people. So now this is how the data should be there if it is stored in the electronic form. So can this also be inspected? Yes, it can be inspected. Can we also give a copy of it? Yes, provided there is a fee which is paid, which is not more than 10 per page. Then it can be given. Then with regard to now we are moving to the annual general meeting. So now these provisions are going to apply for all company except for one person company. So we also know this with regard to the time limit for AGM. So every year there should be an AGM, and the gap between two AGM should not be more than 6 months. And the notice for the meeting should tell this is what we are going to have an AGM. Okay, so and this provision is not applicable for one person company. And in case of the first AGM, it should be held within a period of 9 months from the end of the financial year. And in case of subsequent AGM, it should be held within a period of 6 months from the end of the financial year. And can the ROC extend? Yes, who is going to extend ROC? So there will be regional director, central government. Okay, so ROC, for what purpose they can extend? For any special reason. Okay, and it can be extended for a period of 3 months only. So 6 + 3 months it can be extended, and there cannot be any extension for the first AGM. There is no extension. It have to be conducted within that time period of 9 months from the end of the financial year. 1 week. Okay. So this is about our AGM people. And where it must be held? It must be held at the place where the registered office is there. Okay. In the city or in the town or the village where you have the registered office. And this is for listed company. Now, for unlisted company, it can be given at any place. Okay. So there is a question with regard to this. So there is the register office of the company is in Mumbai, and they want to conduct the meeting in Lonavala. Okay? So all the members agreed to that. Okay, but when they agreed in the meeting, they agreed. So is that all right? So it is not possible to have it like that. So all the members should give their consent in advance. Okay, in advance they have to give. So it is not like 90 percentage, 95 percentage. It is not like that. It is all the members. Okay, right? So all members should give a consent, and central government may exempt any provision for this regard. All right, and it cannot be held on a national holiday. So here also there's a question. So this particular company, they held a meeting on a day which was a local state government declared holiday. So can you hold on that day? Yeah, very much possible. Only it should not be held only on a day which is a national holiday. Okay. So that is one thing. And it should be held only during the business hours. So between 9 a.m. to 6 p.m. Okay. Maybe it is starting that time and it's extending to the further time. No problem. But it must be held, it must be started between these two times. Clear? Clear. Now, 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 here also question of tested people. If at all the company is not even calling any general meeting, so very nice, or they're not even calling the general meeting, then who can call the general meeting? So the tribunal can also intervene and call for the general meeting. Okay? The tribunal can call or direct the calling of the general meeting if any application is made by a member, or they can also give a direction that the meeting should be held in such and such manner. Okay, then let's talk about the quorum for this particular meeting. So even that one member who was called for that meeting will be treated as a deemed quorum. So it is a valid meeting. Okay. And it is be treated as a legally held meeting for this purpose. Clear? So even that one member can be treated as a quorum. This is only when we are talking our Tala has come and told that we should conduct that meeting. Okay. And we have applied to them telling that the company has not done any meeting, kindly help us. Clear. So when the tribunal can intervene, so they sumo moto can come. So they themselves might think that now is my time to go and act. So like that they can come. Or if there's any application or request by any member, then in that case also the tribunal can pass an order. Clear? If there is any failure to hold the meeting, then the company and every officer is liable for a fine of up to 1 lakh, and there is a default then up to 5,000 per day, during which the default continues. They are liable to pay a penalty also. Now, talking about the report on annual general meeting. So, we know annual report, but what are we talking about? We are talking about the report on the AGM. Okay, which type of company are required to file this? Every listed public company, so not just listed company, every listed public company is required to file it. Okay, within which date? Within 30 days of the AGM. So within 30 days of the AGM they are required to file it in form MGT 15. Clear? Now who will prepare and sign it? By the chairman. But if the chairman is not there, then it must be prepared and signed by two directors. One of them should be a managing director and the company. So similarly, it should also contain a fair summary and whatever happened at the meeting. Okay, clear? So this is about the annual general meeting report is applicable for the listed public company. There is no particular turnover limit, but it's applicable for every listed public company. Form is MGT 15 within a period of 30 days. So what and all it will contain? The details of the meeting, date, time, place, chairman appointed. Who are the member? Quorum, what was the quorum there? What was transacted the meeting? What was the result of it? What was the result of the resolution? Then hope it complied with the Companies Act, the rules, and also the secretarial standards. Then was it adjourned? Was it postponed for any purpose? So this and all will be included in the annual general meeting report, which is to be filed by every listed public company in MGT 15. Now, if it is not, then similarly there is a penalty of 1 lakh, and for the continuing offences, a penalty of 500 per day, subject to a maximum penalty of 5 lakh, and for the officer in default also there's a penalty of 25,000, one fourth of that, and 500 per day, subject to the maximum of just a moment. Yeah, subject to a maximum of 1 lakh. So let us go through the penalty one more time. So if there is any default in filing the report on AGM within a period of 30 days of the conclusion of the meeting, for the company there's a penalty of 1 lakh and the maximum of 5 lakh, and the continuing penalty is 500 per day. For the officer and default, it is 25,000. Continuing penalty is 500 per day, subject to a maximum of 1 lakh. This is the penalty in this regard. Extraordinary general meeting. So you want to transact something very important. You're not in a position where you can wait for the next general meeting. So we are going to conduct a meeting. Who can call for this particular meeting? By the board of directors can call for it. Okay. Now, board may call for it. Okay. Except for a wholly owned subsidiary of a foreign company, EGM must be held within India, which means that there is a question with regard to this also. People put a star mark. Wholly owned subsidiary of a foreign company. Okay. So the situation was that this company is a foreign company and they want to hold the meeting there outside India. Now this fellow, what was the problem is here also means the parent company meeting, that meeting also they want to hold outside India, telling that both the meetings we can have on the same date in Dubai. Okay, so foreign subsidiary also there, our parent company, which is the Indian company also there. That is not possible. So which only is possible? Wholly owned subsidiary of a foreign company can be held outside India. There's a question in that people. Okay, this is with regard to the EGM is held by the board, which is called by the board of directors. Now, talking about the members, similarly, 1%, top 1%. In case of voting power, it is 1/10 of the total voting power or 1/10 of the paid up capital. They can call for it. Now, board must, within a period of 21 days of receipt, call the meeting to be held within 45 days of receipt. So if today they are receiving it, then within 21 days they should call for the meeting. Okay. And from here within 45 days, the date of the meeting should have been held. Okay, so 21 days within that they should be calling for the meeting, and within 45 days of the result the meeting is to be held. And if the board is not calling it, then they themselves can call it, the members they themselves can call it, and they can go for the holding of a meeting, and the expenses for the same they themselves can get it from the board of directors. So they will know, no, within a period of uh, 21 days, once it is expiring, they'll have to call for it. If they're not calling for it, then they can go and hold the meeting. Okay. So within what time the requisition should hold the meeting? 3 months of the requisition, which is from this date. So they are sending the requisition on this date. From here, 3 months within that time, they should have held the meeting. So they will know that the board is not in a position to hold the meeting from the expiry of this 21st day itself. So from here till here, they are having a time to hold the meeting. So it is 45 days, it is 21 days, it is 3 months. I hope this is clear for you now. And the expense for the non-holding of the EGM, and which is borne by the members, that expense can also be taken from the director's remuneration. Clear? So if you want to pay to him, uh, deduct the expense for the meeting which is not held by them on the requisition of the member. So this is a procedure with regard to that. And the notice for it should be dispatched within a period of 3 days. Okay. And should be signed by all the requisitionists. Clear? Okay, in case of a one-person company, so what and all you want to bring about as a implementation, so that minutes book will also be signed and dated by that particular member. And so what we are going to do from the state. So he's not going to hold any meeting, but it will be that entered in a separate book called as a minutes book. Clear? So that was chapter with regard to management and administration. Now we are moving on to the next chapter, declaration and payment of dividend. So now we are going to speak the next chapter, which is declaration and the payment of dividend. So what is the dividend? Dividend means a distribution of profit to the members of the shareholder. And this dividend includes what we call as an interim dividend also. Okay. So how is the dividend usually paid? It will be recommended by the board and it will be approved by the shareholders of the AGM. So board will fix a limit and at the general meeting, the members will agree to that limit. Members can no way demand for anything which is higher than what the board has offered. They can tell less, fine, but they cannot get more than what the board has offered. Okay. Now, 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 who is going to declare? The board of directors is going to be declaring, and it can be declared at any time before the close of the financial year and holding of the AGM also. So know that there is going to be an interim dividend also. Now, in case there is a loss, okay, and in case there is a loss, then the company will have to follow certain calculation. We are going to see it shortly. Now, interim dividend, we told it is also a part of the dividend, but it shall not be declared at a rate higher than the average dividend rate declared during the immediately preceding financial 3 years. So, if at all, in 1 year I declared 11%. Next year I declared 0%. Next year I declared 9%. What is the average of the interim dividend? How we will calculate? 11 plus 0, so it's 11 plus 0 plus 9 divided by 3. Okay, this is not divided by 2. Okay, it is divided by 3. This is how we will calculate. So, the average of the dividend what was paid in the preceding 3 financial years. Clear. And once the dividend is declared, it should be deposited in a separate bank account within a period of 5 days of declaration. You should keep it in a separate bank account and it should be paid within how many days, and if not paid, what is to be done, we will see a little while. Now, yeah, we know that there are different types of shares. Like we know there's equity share, we know there's preference share. So the equity share, they'll get the profit when they'll get the dividend when that's profit. And for the preference shareholders, there are going to be a fixed rate of dividend that they are going to have. And they're also going to have the priority for the repayment in the case of winding up. So this, the preference shareholders have. There's also something called as a cumulative preference share. So in case the dividend is not paid in a particular year, will be accumulated and paid in the subsequent year. Not paid means not paid, lapsed. You cannot demand it. So this is the point about it. Now, going to the place where we discuss this. So from where we can pay the dividend? From the profit of the previous year or from the profit in the current year, you can pay the dividend. And free reserve means which is available for distribution of dividend. It is not earmarked for a particular purpose. Earmarked means we know this. No, we have the deposit redemption reserve, debenture, deposit repayment reserve, debenture redemption reserve. From that you should not touch. Okay, and now anything which is only in the imagination and which is not in paper. So I already told you, with getting 70 plus in law in imagination, but if you don't write it in your note and take hints along with me, then it is only a notional. Clear? So please keep taking notes along with me. Do not just sit and watch it like this. Clear? It is not going to help you. I like at least highlight it with me or make some running notes along with me. Either of it is to be done. Clear? And depreciation is to be provided before declaring dividend. Otherwise, no, the profit will be very much inflated and you will be paying your capital also along with it. So you have to provide depreciation and any of the, all right. Now, first you will have to set off, if at all you have the carried over loss of any previous year, that will have to be set off. Then depreciation, which that should also be deducted. So if you have the profit, then you should deduct the losses that you have and also you should deduct the depreciation. So all these are to be deducted in this regard. Now, capital profit you should not distribute as dividend. Say, for example, you have sold an asset, so you have some profit out of that. From that, you should not declare any dividend. That is not possible. So we already know, we already told the rule that depreciation should have been provided. What happens if the depreciation is not provided? The profit will be overstated, and the value of the asset will also be overstated. The book itself will be overstated. Okay, right? Previously, the Companies Act had a provision like so much of dividend you are going to pay, so much transfer should be there to a particular reserve. But these days we do not have it, and such transfer is discretionary, and if you want, you can do. Now, when there is no profit, okay, absence of profit in the case of inadequacy of profit, how can you declare it? Condition one, the rate of dividend shall not exceed the average of the dividend of the immediately three preceding years. Okay, so I already told you 11 plus 10 plus 9 divided by 3, or 11 plus 0 plus 9 divided by 3. So all these are possible. So like that you will have to calculate. Condition number one, average of the preceding three rate. Then the amount withdrawn from the accumulated profit. So from where only we are going to take, we are going to take it from the accumulated profit. So that amount, it shall not exceed 10 percentage of the paid up capital and free. So it cannot exceed that particular amount also. Then clear, paid up capital and free reserve 10% less than 10 percentage of it only you can withdraw. Then moving on to the next one, whenever you withdraw some amount out of the paid up capital, where you withdraw amount from the accumulated profit which is less than or equal to 10 percentage of the paid up capital, calculate that amount, take it from the accumulated profit. Firstly, subtract what is the current year loss. Okay, set off the current year loss. Now, what you want to set, you set off. Okay, we are also going to do the question discussion. Okay, so we will see it then and that. So you will set off that, then only remaining amount only the dividend can be declared, and whatever is the balance left out, it shall not be less than 15 percentage of the paid up capital, not free reserve 15 percentage of the paid up capital. We are going to see questions also, so stay with me throughout. Clear? Once the dividend is declared, it should be kept in a separate bank account within a scheduled bank. Within a period of 5 days, you will have to keep it. Then you will pay the dividend to that person or to the person stated who we called as the beneficial owner, if you remember. All right, and if that person is not registered or it is pending registration, then it will be paid to the person who is only appearing in the books of accounts. Clear? Then if it is not entered, then he cannot claim. Even if he has paid the full amount. So that I paid the full amount, give me dividend. No, your name was not in the list, so we cannot pay. Like that, we will tell. Okay. So such dividend will be kept in abeyance. So we'll have it that will not pay it to that person. So once the transfer is done and the register holder authorizes that, okay, now you can pay to me. Yes, gave the money. So once that authorization done, we will have it abates. Abate means and be kept aside. Clear? Now, how and all you are going to pay? Either by check or by warrant or by any other electronic mode, but you cannot pay in cash or not in kind. And 30 days within the date of declaration, the dividend has to be paid. Same thing with warrant also. It is to be posted within a period of 30 days. Clear? Now, let us see with regard to the Nidhi company. Any dividend payable in cash will be credited directly to the member's account if the dividend is not claimed within 30 days from the date of declaration. So, in this Nidhi company alone, they be like slightly special. So, if people are not coming and claiming, you deposit it in their account within a period of 30 days. Now, who and all cannot pay dividend? Section 8 company. And there is a default with section 73 and 74. Then also you cannot pay the dividend. Now, when we talk about within which timeline you should be paid, so we know that it must be paid within a period of 30 days. Okay, and even if that within 30 days you are not coming and claiming, after 7 days from the expiry of the 30th day, you will transfer it to an account called as unclaimed dividend account. Okay, UDA, unclaimed dividend account. So for a period of, it will be transferred after the expiry of the 7 days. Then, okay. All right. So let us revise the time limits quickly. So within a period of 5 days, they should transfer it to a separate bank account held for this purpose, the scheduled bank. And if unclaimed, so after 7 days, expiry of the 7 days, it will be transferred to, if it is not paid within a period of 30 days, within a period of 7 days, so within the 37th day, it should be transferred to the unclaimed dividend account. Once it is done within a period of 90 days of the transfer from here, so from the 37th day, within 90 days of the transfer, you should prepare a statement telling which people, where they are last known address, how much is the amount unpaid. So all those things you should mention, and you should also place it in the company's website, okay, or any other website. Just name it central government investor. And if it is not transferred, then you have to pay a interest at 12% for the same purpose. And if it has remained there unpaid for a period of 7 years, then it will be transferred to IEPF account for this purpose. Clear, right? And from that, can I claim? Yes, you can claim by providing all the required details, like how many shares you held, on which date you held. With all those things, you can provide and claim it. If this is not done, then the penalty for the company is going to be 1 lakh. The maximum penalty is going to be 10 lakh, and for every officer in default, it is going to be 25,000, subject to a maximum of 2,000. For the continuing pay rate is 500. For the officers, it is 100 per day of the default. Now we told no IEPF account, IEPF account. So what at all will be put into that, right? So donation from government, that also will be put in that. General reserve. So what you had in the old companies, action reserve, they are making that transfer that. Any investment out of this fund, the government is going to make some investment. That will be that. And unclaimed application money, okay. Then any other grant to the central government things, then the unpaid dividend, and earlier whatever fund balance we had, that also will be transferred here. Any disgorged amount will be transferred here, and any matured deposit unclaimed for 7 years. Matured deposit unclaimed for 7 years. That is also going to be transferred to our IEPF account. So what we will create, what we will be using it for, doing some awareness meeting, investor education, so like that, right? For promotion of investor education awareness, any meeting they will conduct, and any disgorge amount if they want to give it to any affected people, they will use the same for reimbursement of legal expenses, such other purpose as they may deem fit is what they have given. Okay. So the chairperson of this is the Secretary of the Ministry of Corporate Affairs, so MCA. So the Secretary of MCA is going to be the chairperson in here also. Then so that was with regard to the chapter third. Now we will move on to the next chapter, accounts of company. So already we have seen in chapter number one what are the accounts of the company. So it includes money received, expended, sales, purchase, assets, liabilities, all those entries. So and financial statement includes balance sheet, profit and loss, account, cash flow statement, statement of changes in equity, explanatory statement, and this is not required in case of one person company, small company, dormant company, and a startup company. What is not required? The cash flow statement is not required. Now, moving on. We also saw what a financial year is. So it starts on April to May, and in case the company is incorporated on or after 1 Jan, then it's going to be ending on 31st March of the succeeding financial year. So how should it be? It should be true and fair. Okay, it should be on an accrual basis, and there should be double entry system of bookkeeping should be followed. All these things are important. Now, whenever we already saw electronic mode, the details should be maintained. Yeah. So if at all it is kept in any other place, so so normally it should be kept where it should be kept in the registered office of the company. But if at all it is going to be kept outside India, we have to make sure it is also accessible to the directors. Should also okay. We will see this point one more time. So it must, if it is maintained electronically, then it must also be kept accessible in India at all times. And it may be kept at any other place in India as a board of directors being fit, and it should be given. We should give a notice in writing to the ROC stating that we are going to keep within 7 days the board decisions. Once the board is deciding that we want to keep within 7 days from that, we will have to intimate to the ROC. So people, this is the thing, please take clarity with regard to this. And we should also give a full address of where we are going to keep, and if there is going to be an outside we will happen. Now this is something which has come not so new, but it is with effect from 1/4/2023, we need to have something called as the audit trail. What is an audit trail? It is a chronological sequence of what happened, when happened, and who did it. Okay, right, right. What changes were made, and it also includes an edit log. So who made it, and it also includes a log feature of like it cannot be edited by anyone. It can be created, but it cannot be edited by someone. Alright. So all these books and records be kept in that electronic form. So again, we have to revisit that point. It should be retained in the form it was generated, sent, or received. The same format it has to be there, people. And information received from the branch it should not be altered. So in which manner you have been sent from the branch, in that manner it should have been maintained, and it should be legible. There should be a proper system for storage, retrieval, printout facility should be there, daily backup should be there. Then you should also have it is located, so you can also have it as a server. No? So the point I want to do this thing. So if at all you are going to have it in a server which is outside India, then you should tell the name of the person in control. So the records will also be in India physically, where it's stored electronically outside, so that their name also should be mentioned to the shared with the ROC. So this point I want to tell is that, okay, every year it should be done every year. The question they will tell like this. So initially they told, after that they did not tell like that, they will be telling, but every year it will have to be mentioned. Then books of accounts of the branch office. Books related to the branch office, it should also be sent periodically from the company Okay, so that should also be summarized. If at all it is maintained outside India, it should be sent quarterly to the ROC, quarterly to the registered office, and it is also open for inspection. So it should be sent quarterly if it is kept outside India. And to the ROC, you should tell where it is maintained and it needs to be done. It's to be mentioned. So this inspection point is same for everything, and we have already seen it. And generally, with regard to the register of members and also the foreign register, it has to be preserved permanently. In other cases, it is 8 years. If we are not doing that, and the punishment is not less than 50,000, then it's for the managing director, CFO, whole-time director, and any other person, if they have not placed it properly, if they did not comply, all the people are liable for the same. All right. Now, preparation of the financial statement. So, financial statement will be in which schedule? As per Schedule 3. Division 1 for accounting standard following companies, and Division 2 for Ind AS following companies, and insurance, banking, electricity company. They have specific format for them. So, they are going to follow that. Clear? Now, coming to the consolidated financial statement. So, what's a consolidated financial statement? A company may have subsidiary, associate, or a joint venture. So all these should be included in our financial statements also. That is called as a consolidated financial statement. Along with that, a statement containing the salient features of the financial statement of the company, its associates, its subsidiaries, and the joint venture should be mentioned in AOC1. It is nothing but the salient features of the financial statements of the financial statements. All right. Now, Now, companies which are having only associates or joint venture and no subsidiary, they are having an exception for this. And the companies with only foreign subsidiary also they are having an exception from 2014. They are having an exception. Now, some cases you do not have to do the consolidation of the subsidiary. When you have given a notice of the same to all the members are also telling that they have no objection with regard to the same. Then listing status, it is not listed or it is not in the process of listing also, then you do not have to do the consolidated financial statement. Then if there is an ultimate company which is doing that, ultimate parent is going to do that, then you may not do the consolidation. There is an exception with regard to the same. Clear? Now, whenever a particular financial statement is not complying with the accounting standard, so AS2, okay, inventory, cost or net realizable value, whichever is lower is what we know. But you are taking cost, so you are not complying with the AS, then you will have to tell how much is the deviation, okay, and then you should tell why you are deviating, and then how much profit is increasing because of that. All those things you will have to mention in the statement of explanation, meaning why you have not complied with the same. That should be mentioned, okay. And with regard to the government company, there might be some exceptions. Central government may also exempt certain regards when they think they should keep the public interest, and for any other confidential purpose they may tell you do not have to disclose. Then if there is a contravention in this regard, the imprisonment is up to 1 year, fine of 50,000 to 5 lakh. Fine. For the officers also it is the same thing. Then now, so we have something called as an interim financial reporting, so like interim financial statement. So usually this happens with listed company people. So by every quarter also they find the financial statement. So then Q1, what is the performance of it? Like that they will fix it. So that is also to be done. And once it is approved by the board and auditor, we'll have to file the same within the register within a period of 30 days. Now, moving on to the next segment, reopening of the account. So, can we reopen the account? Okay, in which situation can we reopen, and for how many years it can be reopened? So, let us see this one by one. Right now, Yeah. How we are going to reopen? So either on the notice. No. Okay. So the court or the tribunal shall, when the notice is given by the authority, okay, or their representation, they will. So the IT authority will tell to the court or the tribunal telling that we will want to reopen the books of. Then the court or the tribunal will consider this and they will tell that okay, you can go and reopen. For how many years we are going to reopen? Up to 8 financial years immediately preceding the current financial year. So only this till this time you can reopen. So whatever effect you have done, that is final. Okay. So that's all. Okay. So the older one will stand over it. So whatever you have now is what will stand. Now, this is about the revision when there is a notice given to the concerned authority. Okay. Now, and the tribunal will also consider what these people are telling. Okay, so if we'll also ask the IT authority. So now we are going to reopen them. Looks like there was some fraud, and then it is reopened. Reopened. So the IT people will also think, the income tax people. So they think, fine. So we also want to give some amount more. So both the people will decide and what they are telling it will be considered, and then the court or the tribunal will go about for reopening. Okay. Now, if at all voluntarily I want to reopen something I feel was not right, which was done previously, I want to voluntarily reopen. Can it also be done? Yes. Who is going to do apply for that? The voluntarily the company is going to do. Okay. For how many years they are going to reopen? Only for up to 3 preceding financial years, it can be reopened for the same purpose. Clear? How we are going to do that? The board will pass a resolution for the same and they will submit it to NCLT telling that they will want to be open in NCLT 1. So first time they are saying for NCLT 1 for the purpose of revision. Within 14 days, they have to send. Once the approval is done, they will also file the same ROC within a period of 30 days of receiving the approval. And then we can go ahead with voluntarily reopening the account for a period of 3 financial years within the current financial year. Clear? So for what purpose you can do if it is not in compliant with the 129 or the board report is not in compliant with section 134. So only for these purposes you can do the voluntary reopening. But 130 is when it is opened by the court or the tribunal, that is due to fraud or mismanagement. For that purpose they are going to open. Okay. And you should tell for which year you are going to reopen to the NCLT. Who are there as a CFO, MD, secretary, and the details of the auditors to be given. You will have the board approval, no? So that resolution is also to be given. And why you are going to do that? All those things you should tell. And advertisement for this should be that at least 14 days before the hearing, you have to give that advertisement. We are telling that you are going to reopen the account. So once the tribunal is telling, okay, now you can go and reopen, you should also convene a general meeting for the same purpose, doing that now you are going to reopen and let us present it and approve it one more time. Clear? Then what you will present, the revised financial statement will be presented. The statement of the director, the statement of the auditors will again be presented, and within 30 days from that, again you will have to file it with the ROC along with the revised financial statement of the auditors of the directors, the board report, then income tax authorities and their representation before granting the approval. What are they happy with that? Are they happy with us doing that reopening? Then in that case, it can be done. Clear? Fine. These are the permitted corrections. So 129, true and fair will not that. 134, board report not an audit. So only for the purpose we are going to do the same. All right. So once a revision is done, what and all we can do? So either we can replace the entire thing or we can supplement the new report along with this. That can be done. Clear? And the auditor will also give a report on the separate one. Now we are going to the most important aspect of NAFRA. Okay, so very important aspect. I'm sure your blood is going to boil when you hear the story along with me. Now let's talk about our favorite person we call as NAFRA, so NFRA, National Financial Reporting Authority. So they are a body which was incorporated, which is constituted by the central government to exist parallelly with the ICAA and compete with certain matters with that was okay. Now, why are they there for us? They are wanting to provide guidance with regard to the accounting and the auditing standards. So what and all and what let us see. Mainly for the listed companies. Okay. So and for large unlisted public company, meaning the paid up capital of 500 crore or more, turnover of 100 crore or more, and having outstanding loans, debentures, and deposits of 500 crore or more as on 31st of the immediately preceding financial year. So we'll have to check this date. And on this date, we'll have to see what is their paid up capital annual turnover and the aggregate of loans, debentures, and deposits of more than 500 crore or more. And with regard to insurance, banking companies engaged in the generation and supply of electricity. So for all these people, they are there. Okay, and any other entity who is being referred with regard to the public interest. All right, and in case of foreign subsidiary or associate, which is incorporated and registered outside India, if there is an Indian subsidiary or associate and it is having more than 20% of the consolidated income or net worth. Okay, so imagine there is a foreign subsidiary. So I'll tell an example. Okay, foreign hen, there is a foreign hen. Okay, and it is having an Indian hen here, but it should be a big fat moti hen, which is more than 20% of the net worth of that. So one then it is going to be considered as a relevant person who is going to be very much important for us to put our put the focus for NAFRA. All right, so this is about the Indian subsidiary of the foreign company. Okay, now what and all they are going to do? They are going to establish high quality standards for accounting and auditing. You may ask, ma'am, the ICA also does it same? Yeah, ICA is also doing the same, but but they are also going to look at it. Along with that, they are going to see the accounting function performed by the companies or the body corporate and the auditing function performed by the auditors. So all these things are also alongside us. They are going to see that. Now, no, not just that, they are also going to maintain a database of us and who are appointed in this type of company. So they have a list of us where and all we are there. Now, they will recommend the accounting standards and the auditing standards. Okay, they will recommend and they will also see our recommendation and they will get additional information from us. And after getting that, central government will go about giving the final results with regard to that. Okay, so this is about that. So they will recommend the accounting standards and the auditing standards for the approval by the central government, and they will also receive recommendation from ICAA. They will also get additional information from ICAA. And then consider all inputs before making the final recommendation to the central government. So you will get all the inputs from us. Finally, they will only submit it to the central government. Okay, you see that the crossing of boundary happening here. Yes, my dear friends. Now, monitor and enforce complaints. So they will also review the financial statement of the company. They will check their financial statement, review the financial statements of the company, and direct who entity or the auditor to provide information. Okay, so they'll review the financial statement and direct us to provide the information. They'll also summon the auditor. So just like how they call the ICA to provide additional information, they'll also summon the auditor for personal explanation. Why you did this, auditor? So already we are answerable to our board of discipline and the disciplinary committee in ICA. Okay. Additionally, these people are also going to give having their eyes on us, okay, and they will publish the findings of non-compliance, and if violation is suspected, they ask for investigation and enforcement of action. So all these things they are also going to do. Okay, so with regard to accounting study, what they do first, they will review the financial statement. Okay, so they are going to see that. Next, they're going to ask for information. They ask summon the auditor also, not just ask for the information, summon the auditor also, and they will publish the finding. They find the fault, they will also punish. So all these things they are going to do. With regard to accounting, if you have studied, with regard to auditing, if you have studied auditing before, you will be able to relate these points. Review the working paper. Working paper are the property of the auditor. So this is what we have seen. So these are the property of the auditor. But they can review that, see the audit plan, and also do some and also review the communication that is being sent. Okay, evaluate the quality control system. Okay, so SQC1, that quality control system also they are going to review. Perform testing of audit and the quality procedures. So how is the quality of the audit? That also they are going to see. Then check the governance and the internal quality process. Seek personal presence and additional information, then monitor and enforcement to be done by the officers or expert with the industry experience. So these people with the experience only they are going to do all this. So this is with regard to auditing. So we already know first to property, so that check. Working paper, audit plan, communication, next step, SQs1, internal control system, then test check, then governance and internal quality process, and they'll also seek presence and information and enforcement of anything is going to be done with the industry experts. All right. And again, if they want to publish something, they can publish. All right. If it is the interest of the public, then they will not do that. And if there's any violation, they will also do investigation and enforcement also they will do. Okay. So this is with regard to auditing aspect. Then oversee the quality of the aspect of quality of the audit. So they will also see what improvement they can do. And the auditor must comply with this, and they should also report back to NFRA. And NFRA will also check how much progress is there. And they may refer case back to the quality review board, and they can also engage experts. So not just this QRB, we have in the audit also should have studied. So what with the auditors they will do? They will direct us to do what we should do. Okay. Okay, then they will see if we have complied with it, and we should have to report back to them. All right, and they monitor if the progress is happening and continuously are we doing that. They will also refer us to QRP, and experts will be engaged for oversight. Okay, so measures they will give, we should comply and we should report back to them, and that also they are going to monitor. Clear? And they should also they will be promoting the awareness of the compliance with the auditing and the accounting standards. Yeah, yes. And they will be cooperating with the other national and international organizations. And if they have given any incidental functions, that also they will make use of it. And subsection 2 has overriding effect over anything inconsistent. So it means that they are being given a priority right. So it means that they are above all. Clear? Who are the members? The MCA representative of the officer not below the rank of joint secretary. So anyone above the rank of joint secretary is going to be the part of this as the MCA representative. And the CNAJ representative is going to be that one RBA, SEBI, and ICA president is the ex officio member, and the chairman of the accounting standard board, and a chairperson of the auditing assurance standard board. So accounting board, auditing board, and we along with the RBI, SEBI, CNAG, and MCA are going to be there. Plus two experts in the field of accountancy, auditing, finance, and tax is going to be there. Okay. Now, what are the powers of this NAPRA? So they have the power to investigate. Okay, who be any member or any firm of which is registered under ICA Act, which is registered under Chartered Accountants Act. How they can investigate? They themselves, they will think, okay, today I want to investigate her, then they can do. Or any reference made to it by the central government, also the investigation shall be done. So this is like a quasi judicial function, which means they can summon, they can examine on both. Okay, so whatever I tell is true. nothing else other than the truth. So like that and all they should tell out. Okay, and they will also inspect the books, registers, and other documents, and they can also issue commission for examination of witnesses or other things. So just like a quasi judicial body, which means like the court, what at all they can do, that also this NACRA people are going to do for us. They can also impose penalty. You see, it's very high. The minimum penalty for individual is 1 lakh, subject to a maximum of 5 times the fees received. So 1 lakh to 5 times the fees received. And the maximum penalty for the firm is 5 lakh to 10 times the fees received. So this is going to be imposed by NAFTA. All right. They can also debar a member as an auditor or internal auditor. So that is also possible from them. And if you want to appeal, then you can prefer the appeal to NCLAT is taking the appeal with regard to this. Okay. And NAFTA will maintain books of accounts, and in consultation with CNAG, NAFTA is going to maintain the books of accounts. An annual report on working of NAFTA is also laid before CNAG. Okay. Now, every existing body corporate other than company by these governed by these rules shall inform within 30 days of the commencement of the NAFTA rule. So once you feel if you are governed by these rules, okay. Now such intimation shall be in NFRE. Okay. They shall contain the particulars of the details of the auditor and the date of commencement of these rules. So who is the auditor? So all these things you have to intimate to NAFTA. Clear? Okay. Then one more point, if you see, if at all you are no longer going to be governed under NAFTA, but it is not like you can escape easily once it is over. So if at all you're no longer listed or if it is a large unlisted public company falling below the limit, they will not leave you like that for a period of 3 consecutive years. You are still going to be under their control only. So it is not like once you are no more under governed under the provisions, you can escape. But for a period of 3 consecutive years, you are going to be governed by their rules and you should abide by them. All right. All right. Now, so who that's all about NAFTA. Now we are moving on to normal provisions. Who will sign the financial statement? So who will sign the financial statement? The chairperson or the director. One of which should be the managing director, the CEO, the CFO, the company secretary. It shall be signed by any of these people. Okay, and what and all should have the notes forming the part of the financial statement. The auditor report should be there. The board report should also be included in that. Now, what and all is going to be included in the board report? Let us see. Firstly, they will tell, yeah, we have abided by all the legal and the regulatory requirements, including the complaints with the Sexual Harassment Act and complaint with the IBC if any. Okay, how the financial performance is that? So, firstly, with the law, then with the financial performance. Okay, now, is it good? Are there sufficient reserves and dividend being paid? Is there any changes in the financial position that we will take? With regard to the CSR initiative, so if the financial position is good, then we have to donate, right? So the CSR initiative will also be checked with this regard. Then technology absorption. So how far new technology and all they have implemented, all those things they'll be checking. Then innovation and adoption, similar to that. Energy conservation, conservation of energy, and apart from that, they will have to disclose the annual return website where it is for. So if you see A, then board return, A, annual return, B for board return, then something called C. Then D is director's responsibility statement. E is not that. F is fraud. G, H is not there. I is independent director's declaration. So you can know a few things. Okay, C is that change in the business nature. Then E is also the explanation on a qualification. So you can just remember a few points. Annual return, board meeting, change in the business nature, director's responsibility statement, fraud which is reported. Then G, do we have 3HI. Yeah, we have independent directors declaration. So all these things are to be included in the board report. And additionally, in case of yeah, we will also see this. CSR policy is also be mentioned in that we will see in the QL also. So all these are to be included in there. So when you told about the director's responsibility, what is the director's responsibility? So till that the accounting policy is applied consistently. So year after year, the same method is going to be followed. And only for reasonable judgment, they are going to change it. And there is a true and fair view. Going concern basis is followed. There is a compliance with law that is there, and the annual accounts are following the standards. And the annual record of prepared with sufficient care, safeguarding of assets, and fraud prevention is that the internal financial control is laid on and it is adequately operating. So all these are to be included in the board report. Now moving on to the favorite area, corporate social responsibility. So we know what is a corporate social responsibility, doing something which is beneficial for the society, giving back to the society is called as corporate social responsibility, right? Okay. So, what and all will not constitute as a corporate social responsibility? Anything which is a normal course of business already, I'm doing that only. Then why it is going to be treated as a corporate social responsibility? It is not. And any activity that you are doing outside India is not going to be treated as a CSR. But if you are training a sports person for a sports personnel outside India, okay, fine, no problem. Political contribution, that is not going to be treated as a CSR. Employee benefit, that is not a CSR. Sponsorship for promotion, marketing, that is all excluded from that. Any statutory obligations, we are required to fulfill that. No, so again, it will not be considered as a CSR activity. All right. So now we will go to the plane where we talk about. Okay. So, which type of company is required to constitute a CSR committee? Let us see. Net worth of 500 crore or more, turnover of 1000 crore or more, net profit of 5 crore or more. So, these people are required to constitute a CSR committee. Let us do it one more time. Net worth 500, turnover double that, and net profit of 5 crore. Okay, net worth 500, turnover 1000, net profit of 5 crore. So all these people are required to constitute a CSR company. It is any company, okay, a company which is that. Okay. Now, what is the CSR committee going to do? Okay. So what they are going to do is they are mainly involved about recommending, implementing, and monitoring. What are they are going to do? So about recommending, implementing, and monitoring the CSR activity. Okay, that is what they are going to do. Now, what is the CSR policy? So this policy is nothing but that you will have like how we can select, how we can implement, how we can formulate the action plan. So all these things you will know about in the CSR policy. And when I tell net profit, in this net profit, I will not be including certain things. Any dividend which is received from other Indian company, okay, I will not be including that. And any profit arising from overseas branches, that I will not include in the net profit amount. Moving on, so, how was the CSR committee going to be constituted? So, people, there is questions asked in here. So, the CSR committee will consist of three or more directors, out of which at least one person should be an independent director. So, the person they gave, so this person is the executive director. So, this person is a managing director. So, this person is a director, and they gave like this. It is being constituted. So, in that question, it was like that particular company itself need not have an independent director. Okay, so then where is the provision with regard to the independent director? It is for the company. So in that particular situation, the company is not even required to have an independent director, then they're not need to talk anything about the independent director in that regard. All right. Now, all right. So there should be a minimum of three or more directors, out of which there should be one independent director. This is the provision in this regard. So in case of action plan, what and all they'll have, what programs we are having, how we are going to execute it, how we are going to have the fund, what is the implementation schedule with regard to the same, how are you going to implement that, then how we will monitor and report it, and the need for impact assessment. So what is an impact assessment also we are going to do, but before that we are going to see what is an ongoing project. What is an ongoing project? It's going on. Okay, so it's a multi-year project. Initially it's a directed, it is a multi-year project. But multi-year project means a period of 3 years. But 3 years means if it is starting in this year, from the next financial year, 3 financial years. So excluding the financial year in which it commenced. So we will exclude this year and the subsequent 3 years of it is going to take. So that is called as an ongoing project. But otherwise, project initially we did not call it as an ongoing project, but it is extending beyond 1 year. That could also be treated as an ongoing project. All right. All right. Now, with respect to exception with regard to formation of a CSR committee, if the amount that is required to be spent by a company does not exceed 50 lakh, then the constitution of the CSR committee is not required. Okay, so you can put it for an MCQ point or so. Now, how much amount are we required to spend for the CSR project? Let's see once. All right. In a year, how much of amount should you spend for the CSR project? So it's about 2% of the average net profit of the immediately three preceding financial years. And suppose if the company has not completed 3 financial years, then it should be 2% of the average net profit of during whatever year they were in existence. So this is how we are going to calculate the amount of CSR spending that is required to be done. Okay, and if you have spent in a year more amount, what can be done? Okay, so that is later, but now we will see how in case of any surplus arising out of CSR project, which is if you are getting any amount as profit or if you are getting any income out of this project, what you can do. You can plow it back to the same project, use it again for the same project. Okay, transfer to the CSR account or transfer to the fund as specified in Schedule 7. So, always Schedule 7 is with regard to CSR. So, Schedule 7 is with regard to CSR. Okay, within a 6 months from the end of the financial year. So, from 31st March, within 6 months, you should be transferring into a specified fund mentioned in Schedule 7, which is a fund for CSR. Okay. Now, if at all you are spending more for the CSR, what you can do, you can set off against future CSR obligations. So you can carry forward and set off income tax we have studied. So just like that, you can also carry forward and set off for up to 3 years. You can carry forward and set off people. But this cannot include surplus. So I have got surplus. That you cannot, with that you cannot set off. Okay, surplus you have to use it again only. You have spent more. Can you reduce the profit? I spent more. I cannot reduce the profit. You got the profit, and again you can only use it for the purpose of. If you got profit, then you can again use it only for the purpose of the business again. So this is about it. Okay. Now, and the board resolution must also authorize that yes, you can set off. So it is allowed like that. It should mention. Yeah. If they are not going to spend that particular amount. If the company fails to spend the particular amount, then they should tell why the board report. Why? Because then the legal obligation you will tell, no, we have attained all those things. So just like that, you should tell with regard to this one also. Then if unspent amount relating to the ongoing project, this should be transferred to the fund which we told in Schedule 7 within a period of 6 months. That we know, right? Then all right. Now So the company is wanting to give a fund for the creation or acquisition of the capital asset. Okay. So maybe a Section 8 company or any trust. So before we used to go as a corpus of the trust. It is not given as a donation, it's given for the purpose of corpus of a trust. So one trust giving to the corpus. Earlier there were rules like that. So one trust giving to the corpus of another trust, it is exempt. It is not, it is also treated as application for the purpose of the trust. Like that we had rules. So similarly, they can also give. So for CSR spending, you can also give to these people. So Section 8 company or any trust or society, then self-help group, collectives or entity or to any public authority can give it for the purpose of creation or acquisition of any capital as a sewing machine, some machinery like that you can give. Fine. Now, you can do the CSR activity by yourself or through any specified implementing entity also it can be done. Clear? Now, let us see certain conditions with regard to it. Now, marathon, we have already seen some hospital, Kaveri Hospital marathon, like that they put. That is not a CSR. That is just an ad only. Then award, we'll do some award program, charitable contribution, advertisement, sponsorship, all these are not CSR expenses. Then statutory obligation under law, giving PF, gratuity I'm giving to my employee. So that is not a CSR activity. All right. Now, registered trust includes trust registered under the income tax act. For so when you tell trust, it is them. Okay. Now, when you contribute to the corpus of a trust, we told you it is not a regular contribution. It is like forming the capital of it. They shall qualify as CSR only if they are created exclusively for the purpose of undertaking a CSR activity or only for the purpose directly to the subject which is covered under section Schedule 7 of the Act. Alright. So, which they can give it to the corpus of a trust only if they are exclusively for the purpose of CSR activity and if they are subject to the provisions which are covered under Schedule 7. Okay, because that is what is dealing with the CSR activity. Okay. Now, can they also engage with the international organization to do it? Yes, that is also possible. Now, before we move to that, registration to undertake a CSR activity. So, whichever is the entities they want to undertake the CSR activity only, they want to register with the central government form CSR. Clear? It should be signed by the entity and should be verified by the chartered accountant, company secretary, or the caste accountant in practice. Correct? Now, can I also engage with an international organization? Yes, you can. Okay. Now, one more point with regard to the CSR expenditure incurred by the foreign holding company for a CSR activity in India shall qualify as CSR spending of its Indian subsidiary. So, there's a foreign holding company and they are doing a CSR activity in India. So, in this regard, also it is going to be treated as a CSR spending of the Indian subsidiary only. Alright. Now, provided the CSR expenditure is routed through the Indian subsidiary and the Indian subsidiary is required to undertake the CSR. So, only if we are someone who wants, who's subject to, who's required to do the CSR activity, then this is possible. Clear? Clear. So who should prove that this particular amount is the CSR spending? It is the owners of the chief financial officer to prove the same. And monitoring the ongoing project. So we already told what is an ongoing project. It's going for a period of 3 financial years beyond the financial year in which it was initially started. Or it was initially started and they did not start as an ongoing project, but it is going for more than 1 year beyond the year in which it was started. So it's an ongoing project. So how will they monitor? This will be monitored by the board of directors. They shall see the implementation and they can make any modification for the same also. Now, we are going to see something about the impact assessment. Okay. So, impact assessment means to see if it was worthwhile, really something benefit came or not. Okay. For which company a company, no, every company having an average CSR obligation of 10 crore or more in the three immediately preceding financial years. Okay, so three immediately preceding financial years, CSR obligation, which is the 2% you're putting, no, that should be 10 crore or more. Then you are required to take something called as an impact assessment through an independent agency. Okay, now such assessment shall cover the CSR project with outlay of 1 crore or more. Okay, every time when we see the CSR project, I will give this one particular example. So I'm from the place called Nagar where we have PPM wells. Okay, one of their important part, one of the important activity where they contribute for the betterment of the society, and which I am a major part, and I do it every day. Like I don't put the waste in the bin. I do it for recycling. Okay, and the major activity is to do this project called garbage bank. Okay, what is a garbage bank? So people will collect the garbage recyclables from their home. They will have it separated. They will sort it, and they will give it to them. And an amount equivalent to the weight will be credited. So far, I from my home, I have contributed more than 800 kg over the years. Okay, now this is one of their project. Okay, like this they are doing more some more activity also. If any of the project with an outlay of 1 crore or more, which have been completed at least 1 year before the impact study is carried out. So all these things, if the outlay for the project is 1 crore or more, so for them what could be the outlay? The sorting facility, the like the warehouse where they bring in, then machinery to go, I mean the vehicle to go to every place and collect the garbage, or the machinery to do that sorting automatically. Those could be the outlay. All right, any project with an outlay of 1 crore, outlay means expenditure. Okay, the thing which goes out of the out of the hands. Okay, if it is more than 1 crore, okay, or more, and has been completed at least 1 year before the study should be finished, 1 year before the date when you have to study, and that is also to be included. Okay, now, and this report shall be placed before the board, and it shall also be annexed to the annual report on CSR. Always have water with you people and hydrate it. Okay, hydrate yourself because the sun's scorching hot. All right, I can't even look at the side up. Okay, and that's why you see some blackout in my, because shadow is shining brighter even than the light I have in front of me. Anyway, now whenever you are making an impact assessment, so you will also have an expenditure book for the same, right? So the expenditure for the impact assessment is capped at a limit of 2% of the CSR expenditure in that financial year. So CSR expenditure itself you'll find at 2%. This 2% of the CSR expenditure of that financial year, or 50 lakh, whichever is higher, is for the expenditure with regard to the impact assessment. All right. If there is any failure with regard to the same, then twice the amount of fund required to be transferred, or 1 crore, whichever is less, is the penalty for the company. And every officer in default, 1/10 of the amount required to be transferred to the fund, or 2 lakh, whichever is less, is the penalty. So here we have the list of activities where you can take the CSR project. Pass, go, do a read, and then let's keep moving forward. With regard to the accounts of the company. Okay, so to whom and all you should give the accounts of the company, and what and all you should do, and when and all you should do, let us see and understand it once. Now, you should give the financial statements, the audited report, and every other document. And with regard to the subsidiary and all the subsidiaries, all these things you should give to the member whenever they request. Okay, give to the member. or the trustee for the debenture holder. So we saw no, the debenture trustee and any other person who is entitled to get the notice of the general meeting, they are also entitled to get that. And when they should get at least 21 days before the date of the meeting, you should give it to them. Clear? Provided you can have a shorter period if at least 95 percentage of them agree to it. Clear? In case it is a company which is a listed company or having a net worth of more than 1 crore and a turnover of more than 10 crore, then you can send it by the electronic mode also. Fine. Then, yeah. Statement containing the salient features. So, additionally, with regard to the listed company, the full financial statement are available for inspection at the registered office during the working hours at least 21 days before the meeting. So this one, so it should be made available to them and it will also be at the registered office. A statement containing the salient features of the document is sent to the members at least 21 days before the meeting in AOC 3 and AOC 3A in case the company is complying with Ind AS, and provided that the members may request full financial statement must then be provided. So if you want the salient features alone, then okay, they'll provide. But if you request only the full financial statement to be provided, then you will be given the full financial statements. Okay. And what are the additional disclosures required to be in a consolidated financial statement? So every listed company in the website, they should place a consolidated financial statement, separate audit account of each subsidiary. Okay, CFS also should be there. Separate financial statement of each subsidiary also should be there. Then all other documents which is required to be attached, it is also to be mentioned. And if a foreign subsidiary is required to prepare a consolidated financial statement under that law, so foreign subsidiary, they are also requiring that the parent should consolidate them, then that should also be placed on the website. If they are not required, then they may place the unaudited financial statement of the subsidiary in the website. Clear? I'll move aside a bit in here because the sun is scorching and the video slowly blacking out. All right. Okay. We'll go to the place where we discuss about yeah. So now we are talking about when you should file the financial statements to the ROC. So when you should file with 30 days from the date of AGM, it will have to be filed. In case of one person company, you are required to file within 180 days of the closure of the financial year. What and all you will file financial statement, CFS, all the document, statement duty adopted at the AGM. So whatever statement you adopted at the AGM, all those things are also required to be filed. It was just a small advice from my side. Please take good care of your health. Or like the sun is scorching hot, the weather is going havoc now. Clear. So yeah. So please do take care of your health. So just now my daughter had a bleeding nose suddenly. All it was very much unexpected just because of change in temperature. I think her nose lining got ruptured or something. So take care, most crucial time. I know you are also bit like exam is coming. I wouldn't call it stress, but it's a normal reaction that our body does. But be mindful of what you're doing. All right. Now, that's just a friendly advice for you. Don't eat outside, don't want spicy food, street food, avoid all those things. Have best home cooked food. If you're in hostel, try to eat foods along with it. Right? Do take care, people. Yeah. Now, how these financial statements ought to be filed with the ROC. Okay, for AOC 4 is for financial statement. AOC 4 CFS is for the consolidated financial statement. And in case if you're following Ind AS and if you're an NBFC, then AOC 4 NBFC Ind AS and consolidated, which is at CFRS. If you're going to do the covered under the CSR provision, then CSR 2 is to be followed. Okay. Now, normally we have format, then we have something called an extensible business reporting language format. Just that's also a type of form only. Like it will go and sit there. Okay. Now, for whom and all it is there? For the listed company, for Indian subsidiary of a listed company. Okay, Indian subsidiary of a listed company. paid capital of 5 crore or more, turnover of 100 crore or more, paid up capital 5 crore, turnover 100 crore, and any company which is required to prepare under Int AS. Alright, Int AS will study in your final people. Clear? Now, alright. Now, this is a very, very interesting segment. So, we already saw that the financial statement should be submitted to the ROC within a period of 30 days of the date of AGM. Okay. Now, if AGM not happening, then also you should file a provisional statement. Okay. Then, provisional financial statement will be filed after approval in the adjourned AGM. So, after approval, the final financial statement adopted one will be filed. Till that time, you will have something provisional, so that you will file. Clear? Then, within 30 days of that adjourned AGM, then you will file the final one. So, this is with regard to that. Now, sometimes they not hold the AGM also. Adjourn meeting, provisional they are filing, okay, that is fine. So you are adjourning, then you are providing the provisional one, that is fine. But sometimes what they will do, they not hold the AGM. Okay. Then you will have a due date on which the last AGM would have been held, where we will know that 6 months from the end of the financial year, the gap between two AGMs should not be more than 15 months. So some date will satisfy both the condition. On that date, you will fix, and from that date, a period of 30 days is to be calculated, and within the 30 days, you will have to file the financial statements with the registrar. Clear? And if there is a failure with regard to that, then the penalty is 1,000 for the company and the members. That is a officer also. Officer in this case means the MD and the CFO, and 100 per day during which the failure continues, and 100 per day for him also, subject to a maximum of 2 lakh for the company and 50,000 for the officer, which is the MD and the CFO. Now we are going to the next chapter, which is appointment of auditors. Okay. Before that, we are going to see a little about our internal auditor. So the internal auditor. Internal auditor is just being but an employee of the company people. Okay. So which companies are required to mandatorily have an internal auditor, or listed company should have? Okay. An unlisted public company and private company. What criteria? BPBP. BPBP. Okay. Deposits 20 crore or more at any point of time. Okay. So this minute, okay, 451. I'm having 26 crore. 452. I paid it off. No problem. Still, I mean, I can't pay it off. Older deposit I have repaid within that time. No problem. Even that 1 minute you are there holding at more than 25 crore, then you are covered and you are required to appoint an internal auditor. Okay. BP, paid up share capital of 50 crore or more, turnover of more than 200 crore, and outstanding loans and borrowings of financial banks and public financial institutions of more than 100 crore. So 25, 50, 100, 200, BPBP. So all these people are covered. In case of a private company, it is only about the T and the B. Okay, so 100, 200, 100, 200, this is only we are going to cover. So who can be an internal auditor? Anyone can be an internal auditor. So I am also an internal auditor of the company. Okay, right? So anyone can be, a CA can be, not a CA also fine. If at all the management feels that we need only this particular qualified people, then they may fix it like that. Okay, fine. So this is with regard to the internal audit. And if there's a company which has an audit committee, then that audit committee will determine what scope the internal auditor should do, how they should function, within which time they should report to us. Okay, so all those things they will consider and tell us. All right. We'll have a small 2-minute break and then we'll move forward. Next, we'll move on to the chapter, more into the chapter appointment of auditors. So, who are required to appoint auditors and who can be appointed as auditors? Every company. Okay, every company. When at the first annual general meeting, they will appoint. Who can be appointed? A firm, including an LLP. So even the auditors also can join and form an LLP. So you know the firm LLP also can be joined and formed by the auditors. So the individual can also be appointed as an auditor. So for how many years they will hold the office? For 5 years they will hold the office. Right? From the conclusion of the first AGM in which they were appointed till the conclusion of the sixth AGM. And if it is a firm or an LLP, then they will have a reappointment for one more tenure of 5 years. So this is about it. Now, so the audit committee will check with the size of the firm and the requirements who are qualified and who have the experience which we are required. Okay, and if they do not have, then the board of directors will see who are suiting our Krishna. So like that they will see. Okay, and so this is how they will see. Then moving on to the place where we discuss about the audit committee. So who will be there in the audit committee? The board of directors will be there in the audit committee. Who are required to have the audit committee? Listed company. Okay. Also, every unlisted public company having paid up capital of more than or equal to 10 crore or turnover of more than or equal to 100 crore or aggregate of the loans, borrowings, debentures and deposits of more than 50 crore. So these people are required to have an audit committee. So listed company and every unlisted public company having 10 150 paid up capital of more than 10 more than or equal to 10 crore, turnover of more than or equal to 100 crore, and borrowings, aggregate borrowings of debentures, deposits of more than 50 crore. So clearly here it is only more than 50 crore. More than or equal to is not in here. Okay. Right. So all these will be determined based on the last audited financial statement of the company, and that would be see. Clear? Now we go to the place where we talk about yeah. So every person who's eligible to be appointed as an auditor, so first he should give a written consent. Okay, before being the appointment, we'll also get a consent from him telling that okay, I'm acting as an auditor. Then we should also check if he is eligible and he's not disqualified. We should check. Clear. And once he is appointed, then the company must inform that the auditor has been appointed to the register of companies by filing form ADT1. Then within 15 days of the AGM in which the appointment is made. So it's an important thing. So within 15 days of the AGM, you find ADT1. ADT1 within 15 days. ADT1 within 15 days of the AGM in which the appointment is held. So for an individual, it is only 5 consecutive years, and it's a firm or an LLP, it is going to be 2 terms of 5 years. Clear? And which company are required to do this rotation? Listed company. Private company, if the paid up capital is 50 crore or more. Only if the paid up capital is 50 crore or more. Unlisted public company, the paid up capital is 10 crore or more. Private company, 50 crore or more. Unlisted public company, 10 crore or more. They're having borrowing of more than 50 crore, then also they are required to do the rotation. Clear? So firstly, I'm having this form. Okay, there is this so much of partners in there. Okay, then I'm going to take another form. Here also this auditor, black sheep, he is there in that other firm also, so automatically means that the firm is disqualified because they are having the same partner. Okay, so and the same network also they should be. Network means it's like a big collection. Okay, so you will study more about it auditing. So it's like they'll have a big chain. Okay, so same network also you cannot take different network. So network will have a name. Network should also be registered with ICA. Like that, there are certain conditions. Okay, so same network also it should not be. Cooling off period is 5 consecutive years. All right, then if a company is having joint auditor, then we should ensure that all of them are not retiring in the same year. Then everyone will be gone. There will be new people. Then to set it up, it takes time. So appointment should be in such a manner that one person is retiring, and after that, some people are continuing. Like that, it should be there. For companies other than the government company, board of director will appoint the first auditor, even before the AGM is going to be held. Then within 30 days of registration, the appointment is to be made. If the first auditor is not appointed by the board of directors within a period of 30 days, then members will do where at the AGM when within a period of 90 days. So from the date of registration, that is within 30 days of registration till the conclusion of the first stage, we will be holding. Clear? Clear. So this is about that. In case of a government company, this is done by CNAG. So who is the current CNAG of India? Sanjay. Full name you can type in the comment section now. Okay, full name of our CNAG. Okay, please do type. So in case of a government company or a company which is controlled by central government, state government, or partly by both of them, then the appointment will be done by CNAG within a period of 60 days from the date of registration. What are we talking about? The first auditor. Okay, 60 days from the date of registration. In case of other company, it is 30 days from the date of registration. Clear? And they'll hold to the conclusion of first stage. If they are also not doing, then 90 days of the incorporation, who will do the 90 days of them not appointing, then the members will have an EGM and they will appoint. In case of vacancy, it will be filled by the board of directors within 30 days. In case of vacancy in the government company, also it will be filled by the board of directors within a period of 30 days. If the CNAG is not doing, then the board of directors will fill the vacancy in case of a government company. Now, moving on. Now we will move and look into the points where we discuss the reward of the auditor. So with this regard, we already saw a point in our chapter management and administration that this is a place where we should do the special notice. Okay, because we are special people, we cannot be removed like this. So we also need the special resolution to be passed. Okay, and prior approval. The point is prior approval of the central government, but the power is delegated to the regional director, has to be applied. So the form is ADT 2 to remove the auditor. Okay, ADT 2 to remove the auditor. So we need a special notice and the board meeting should be held, and once it is passed, we'll apply to the AG. Sorry, we'll apply to the central government. If the central government is approving, then we'll give a special notice at the AGM, and he will also have something called as a ROBH. So Audi Altram Partum, which is the opportunity of being heard, should be there. Without hearing their side, no one should be condemned. You should not brand anyone. So there are always two sides of a coin. There are always two versions of it. It takes two to tango, like that at all they tell. So you can remember that takes two to tango, and ADT2 is to remove the auditor. Okay, and he will tell the story. No, the company was doing some fraud. I reported that only, so they got very angry with me, and they are wanting to remove. So all the stories he will also tell. And once the special resolution is passed, the auditor will start removed. Okay, and now the auditor can also resign, no, when he feels no use of telling them only. ADT3, I want to be free. Okay, so like that he will tell, and he will also resign. So he will file it with the company and also the ROC within 30 days from the date of resignation, telling why he want to resign. So ADT3, I want to be free, like that he will tell, and he will move away. Clear? Then in case of a failure in this regard, initial penalty is 50,000 or an amount equal to the auditor's remuneration, whichever is less. And in case of continuing default, it is 500 per day after the first date of failure, and maximum penalty of 2 lakh is to be levied. Then appointment of auditor other than the retiring auditor. So it's more like appointing another person. Okay, I'm telling that the retiring person will not be reappointed. So here also this 5 years they can be appointed in case of individual auditor. In case of firm, it will be 10 years. And a special notice is also to be given, and he will also be given the opportunity of he will also have a written representation, and he can also request it to be read at the meeting. And if it is being received late, then they can send a copy of it to every person. Okay, now if any person is aggrieved by the order of removal, then they can apply to NCLT. In form NCLT, one first time I see NCLT. These are NFRA1. Tell in the comment what NFRA1 form is for, right? So then tribunal power to order change. So if the tribunal feels that the director has to be changed, then they on their own motive or on the application by the central government or on application by any person, they shall within a period of 15 days, they shall pass an order that this person shall not be appointed as an auditor. All right, fine. And they may also be liable for 4% penalty if they have been involved in any of the fraud. All right. Now we are coming. How can a person be appointed as an auditor? So, CA final, both the groups pass. So only then you can be a chartered accountant, and not just that, you also have a valid certificate of practice. Okay, so not be in employment, you have a certificate of practice. Now, who cannot be an auditor? Okay, LLP can be, firm can be, a company of auditor. Never hear something like that. Okay, an officer or employee cannot be an auditor. Okay, a person who himself or his partner is holding an interest, okay, cannot be. Okay, so the auditor holding one share, nominal face value is 10 rupees, paid only the application money. Okay, allotment not happened, no problem. But allotment happened, only holding one share, paid 5 rupees, very nominal compared to the entire capital, no problem, you are disqualified. Clear? And my relative holding shares, okay, what I am talking about, the relative of the auditor holding shares of face value 1 lakh, then not disqualified. But if it is more than 1 lakh, disqualified. Market in a boom. Okay. Now the face value of 1 lakh became 1,30,000. Am I still qualified or disqualified? Okay. We are talking only about the face value. We are not talking the market value. You see the market value, then every day, every time the relative must see. Ayo, Mapala, now it is crossed 1 lakh, not be the auditor. So every day they'll have to take the call and intimate what is happening. So like that, they are not fixed. This only about the face value. Okay. And if they are indebted to the company in excess of 5 lakh, then you are not eligible. And if the person or late or the partners will guarantee, okay, the company do not pay, I will pay that 15 guarantee on behalf of the company to the third parties. Then in excess of 1 lakh, then you are not permitted to be the auditor. We have a business relationship with you, not if the relative. If your relative is a KMP or the director, then you cannot. If the person is in full-time employment, we don't know, it was being practiced. If you are in a full-time employment in elsewhere, you cannot be the auditor. Also, you can be an auditor only for a maximum of 20 companies, and this 20 company limit does not include one-person company, small company, paid up. Sorry, one-person company, small company, private cap companies with paid up capital of less than 100 crore. These are not included in the limit of 20. Okay, provided if these companies are not defaulted in the filing of the financial statements and the annual return, and the auditor must certify the same in this regard. Now, now, if a person who is convicted of a fraud and 10 years not elapsed, then they cannot be an auditor. Okay, convicted of fraud, offense for fraud, and 10 years elapsed. So 10 years you would have had some realization. No problem, put him as an auditor, like that they are telling. Okay, and if you are rendering any services, refer to under section 144. What is 144 section? We will see. Once you are incurring this disqualification, then it is seen that immediately your position will be immediately a position would be vacated. Immediately the office of the auditor will be vacated. So who will fix the remuneration for the auditor? Whoever is appointing them will be fixing it. So first auditor who is appoint the board of directors will appoint. So they will fix it. Subsequent people they will be appointing at the AGMs, and that will fix and or in any manner what they have decided they will fix it. Right. So this is something you can just go and read. Go on to the next important aspect. Anyway, let us not skip this to be seen. But see, people, there's more like the auditing part of it. So all these are the powers of the auditor which you've seen in 143.1. So you can have access, you should have access to all books. Sorry, you should have access to books of accounts at all times. You should have access, we should not restrict you. Okay, and all information explanation you should be getting, and even the subsidiary companies, associate companies records also you should have, because if you are the auditor of the holding company, you will be needing all these things. Additionally, you should also see about the loans book entry transaction. Only book entry it is that really nothing happened. Okay, and a security sold which is below the cost price we have sold the security. What is that you should see? Then loans and advances which are shown as deposits you should see. Any personal expenses charged to revenue account. Shares which are allotted for cash, that also you should see. And you will report to the members that you have examined the account, financial statement, and the information obtained is all sufficient. Books of accounts has been proper. Branch audit report is properly done. Balance sheet is agreed. Now, accounting standards are followed. In case of adverse effect, you should also tell what is it, if at all AS is not followed, how much the profit is varying, just like that. If any director is disqualified, you should mention that. Any qualifications, any adverse remarks or findings that you find, you should also tell that the internal control is perfect in the company. All these things you should tell. Okay. What other matters are to be included? So that you have completed the regulatory matter, IEPF transfer is done, dividend is properly paid, then if it's not paid, it is transferred. Operational integrity, accounting software, the audit trail, tally in his overbook, having audit trail, very good. Fund flow assurance, intermediary loan, no, indirectly you're not giving to anyone. Material misstatement, so much of huge amount is wrongly mentioned in there, so like that, it should not be. Then financial matters like pending litigation is that you should mention. Any laws is that so you should mention. And certain company are not required to report on internal financial control. Which companies? One person company, small company, other private company having turnover of less than 50 crore don't have to report about internal financial control. Borrowing of less than 25 crore, okay, don't have to report the internal financial control. So TB less than 5025, 5025 TB, they don't have to mention of the internal financial controls. Okay, provided if these companies have not defaulted the filing of the financial statements and the annual return, then you don't have to file the same. Fine. Now, major important part where a question was also tested on with regard to the reporting of fraud. Right? So listen to the story in case when there is a fraud. So what happens is that if the auditor finds that some fraud is happening, okay, some fraud is happening, so that also we will see. And wait a minute, okay. Okay, if the auditor feels that some fraud is happening on the company, okay, so someone is doing fraud on the company, employee, officers, or company is not doing fraud. Some fraud is happening inside the company. Then, within 2 days of knowledge of that fraud, you should report it to the board, or if there is audit committee, he should report it to the within a period of 2 days. Then wait for 45 days. Okay, within 2 days reported to them, then wait for 45 days. They will give some reply. No, that you take it to the central government and give it within a period of 15 days. Okay, so 2 days we wait and then give it to them. Then that report what they give within a period of 15 days, go give it to the central government. If they're not giving, tell the same to the central government that there is no response to them, and whatever you have found along with the original report which we sent to them, no, that you file it to the central government. To which address? Please make a note of the address. Secretary Ministry of Corporate Affairs, put it as a sealed envelope and send it to them. Okay, then you can also put it in your letter. So this is the mode. So which type of fraud and all you have to report it to the central government. If it is more than 1 crore, you should report it. If it is less than 1 crore, report it to the board and audit committee. Okay, you should tell what fraud is that, what amount is that. which culprit, black sheep and all doing that. Okay, all these things you should mention, and along with that, you will not only mention about the problem, you will also tell what solution is that. Okay, what remedial action can be taken. All these things you will mention. If we are not doing that, penalty is 5 lakh, and in case of other company it is 1 lakh. Okay. Now, with regard to the audit of a government company, so I already told you CNAG, who, if you have found who the CNAG is, type the name in the chat box now. Okay, now, for audit of a government company, it is going to be done by the CNAG. So, along with that, he will do something called as DAY. What is DAY? Directions, action, and impact also he will see. Okay, so along with the report, the normal audit report, you would include a direction, action, impact. Okay, you will include day. Okay, fine. And what the CNAG will do, he will conduct supplementary audit. Additionally, you do this also like that he will do, or he will do some test audit. He will take sample and he will do. Then he will ask. He might ask some additional explanation. So that is also possible with regard to the government company. Now, with regard to the audit of branches. So, what branches? Branches in India or outside India. If it is in India, it will be audited by the company's main auditor or any other person who is appointed. So, if it is outside India, by the company auditor or any accountant or any other qualified person under that law, ACCA, CPA, like that we have, no. So those people might be involved. So 144 third, okay, 144 means also third, no. So 144 order they have put it. No? We as auditors should not do certain things. What you should not do? You should not do accounting service. I only will do the bookkeeping. I only will file the taxes. Okay. Don't tell like that only some people are doing. Okay. Internal audit. So I'm actually the internal audit of a company and I'm not doing the external audit. It's being done. The statutory audit is being done by some other person. Financial statement, financial system designer. I should not do. Actuarial services, insurance, and other things. I should not do. Investment advisory, investment banking. Both I should not do. Outsource financial services, management, any other prescribed services, you should not do. Now I'll give you one question. Portfolio management, underwriting, broking, can a chartered accountant do for a company for which he is an auditor? So portfolio management, underwriting, and banking, can a chartered accountant do? Can you go to this place? No, you should not go to this place. So doing these three activities also not allowed, which is portfolio, underwriting, and the brokerage services. All these are not allowed. All right. Now, and the auditor should also get the notice of the general meeting, and they are supposed to appoint also. And if there's any issue, then you will be given an opportunity to speak in that. Clear? So if there is a general contravention in 139, 134, 144, and 145, then the fine is for the auditor 25,000, which can exceed to 5 lakh or 4 times the remuneration, whichever is less. Imprisonment, free stay is also there. Fully deceiving, fraud. Then 50,000, 25 lakh, 8 times the remuneration, whichever is less. Here now is going 4 times, 8 times. Nafra is doing 5 times, 10 times, like that. Go and do one quick recap. Right? If at all we are doing any fraud, we also have to refund the remuneration and pay for the damages for any person who is affected. Now, maintenance of cost record. So, which companies are required to maintain the cost record? When the turnover, overall turnover is 35 crore or more, 35 crore or more in the immediately preceding financial year, then you should maintain the cost record for every product or every services you should maintain. So, central government will also make some time to rules time to time in this regard. Okay. And the cost auditor will be one who is fixed, who is appointed by the Institute of Cost Accountants of India. And once the cost audit report is done, this should be sent to the central government within a period of 30 days. Okay. And we have the penalty for the cost auditor. Yes, the cost auditor, the penalty is like 25,000 to 5 lakh or up to 4 times the remuneration, whichever is less. Free stay, same. So just like us, 50,000, just like us to 25 lakh, 8 times the remuneration. If he is doing it with the intent to deceive mens rea, that then you should refund the remuneration and pay for the damages also. And our very favorite nafrat hum isko nafrat karte hain. Okay, pardon my broken Hindi. If there is some faulty behavior from our side, then our those nafra will also come and look at us. Clear? They will also investigate. Then they will put us in the scanner. They will continuously monitor. They will give the direction and also ask us to reply if we are confirmed with the same. All those things we saw. No, the same thing is also being written here. And every auditor of the company who is governed by NAFRA, so listed companies or then public company with certain turnover criteria. So all the companies auditor, they are governed in here. They should file a return to NAFRA NFRA to on or before 30th November of every year. You are required to file. So that's all about this chapter. Moving on to the next chapter, foreign company. Let's move ahead with our next chapter, foreign company. So what is a foreign company? A foreign company is a company or a body corporate incorporated outside India. Okay, they're from foreign land. But they are having a place of business in India and they are conducting an activity or any business in India. So either by themselves or through an agent they are doing. So both the cases they are treated as a foreign company. But doing in the electronic board also constitutes a foreign company. So no problem, the main server is installed in India or not, no problem about that. So B2B transaction, B2C transaction. So these are all included in the scope for which you can consider them as a foreign company. Security, issuing security, financial activities, so web-based marketing, online services, online education, data communication, those are through various channels, those are servers located in India or not. And what is the requirement? Within 30 days of establishment of a place in India. So here the ROC is the one who is having this jurisdiction for New Delhi. To him, you will find FC1 initial registration. FC1 initial registration. 30 days of establishment of the place in India. Not incorporation, 30 days of establishment of the place in India. So what are it? The charter, address of the register of the principal office director, name and address of the person in India who will get that communication and all. And full address of the principal place in India and when you are going to open it, when you are going to close with regard to the director and the secretary, the name, now, calm, thorn, all those things will include additional requirement. FEMA or RBI approval, if it is not, then that is to be included. You have to pay the registration fee. And for alteration, FC2. Initially, for starting FC1, for alteration is FC2. Okay, within a period of 30 days of alteration. Clear? Clear. Clear. Now, now, if a particular company is a foreign company, but Bichara, what happened? 50% of the holding in that foreign company is held by one or more Indian Hamara Bharat Mera Jaan. Okay, so they are held by our Indian citizen or two or more corporate incorporated and domiciled in India. So Indian blood somewhat more than 50% is running in that. Then they are required to comply with the provisions of chapter 22. What are the provisions we will see? But only with respect to the business carried in India. There you're doing something no problem. But here if you're doing something, then you have to comply with the chapters, provisions of chapter 22. Okay. More than 50% there Indian blood is running. Then with respect to the Indian business, you have to comply with the provisions of chapter 22. Clear? And you'll have to prepare the financial statements and accounts every foreign company each calendar year you have to make it up copy of it to the ROC, which shall be in the schedule 3 or as far as possible near to that. And you should also prepare the consolidated financial statements. The financial year normally ends on 31st March, but change it from, if you want to change it, you'll have to get a permission from the central government in this regard. Clear? Now, it should be filed within a period of 6 months of the close of the financial year and the registrar may grant the exemption. extension for a period of 3 more months also they may grant. Clear? Now, every foreign company in the entrance, they should have the name and the country in which they are. So it should be in the English and in the local language also. If it's a Japanese company, no one will understand. No? So it should be in the English and the local language also. What should be the company name of the company, the country in which it is incorporated, right? And not just that, it should also be the business letter, bills, then letterheads in every notice of communications also. It is to be there. Clear? Okay, so what are the other segments that they should comply with? Issue of debenture rules they have to comply with. Annual return, they have to file in form FC4 within a period of 60 days. So for us also it is within 60 days only. Books of accounts is to be maintained in the principal place. Registration of charges is applicable for them. Inspection and inquiry is also applicable for them. Alright, now we'll go to the page where we talk about prospectus. Okay, so if at all you are having a condition which is telling, okay, you don't have to comply with these provisions of prospectus, that is not valid. So every person who's issuing and circulating a prospectus is required to comply with the provision. So no person is exempted. So everyone are required to comply with the same. Only when there is an exemption, when it is a existing members or existing debenture holders, it is already issued a class of share. So only for them they are going to have an exception with regard to the same. Okay, so same thing which we saw already that. So for that purpose, I'm moving on. Now here this is where we have a question also. So in the prospectus, what are the details that is to be mentioned? What is to be mentioned? Consent of the expert that is to be mentioned. Copy of the contract for appointment of MD or the manager is to be mentioned. Copy of the material contracts entered in within the preceding 2 years and not in the ordinary course of business. So, in this, with regard to this question, what was the point is that there was a material contract. So, in the last 2 years, three material contract and four material contract. So, totally seven material contract. Also, there was a contract with the manager which was out of terms of the normal course. So, that also should be mentioned. So, total of eight contracts should be reported as a material contract. Then underwriting agreement should be there and power of attorney also should be there. Now talking about the Indian depository receipt. So we already spoke about global depository receipt, which means from India you want foreign investors, foreign shareholders, then through a depository you are converting your shares into depository receipts and you are issuing to them. Okay. Similarly, from there if they want to give it to us, the ulta process is called as an Indian depository receipts. Okay. So if they want Indian people to invest that, then they will issue the IDR. Okay. So similarly, they will give their shares to the depository. They will convert into a depository receipt and they will give it to us. So each depository receipt will have certain underlying shares, and that we will purchase. We will purchase what the depository receipt we will purchase. So they can issue that only if they comply with the Companies Act. SEBI is there, RBI is there, and with regard to IDR rules also they will have to comply with. All right. Now, merger or amalgamation with a foreign company. So, if you talk about chapter 15, okay, between an Indian company and foreign company, who will only look after it? Central government. So, with the RBI, they will consult and they will see what and all they can do. Merger with the Indian company, they merge into foreign company. So, all those things can be following this with regard to the central government and RBA rules. And similarly, if there is any misstatement in the prospectus, criminal and the civil punishment is also going to be there. And punishment for fraudulently inducing a person, so they'll have to pay the damages. All those things are also applicable here with regard to the same. Fine. So with regard to this company, if you're failing to if you're contravening any of these provisions, minimum penalty is 1 lakh to 5 lakh. Additional penalty of 50,000. Okay. For officers in default is 25,000 subject to the maximum of 5 lakh. Clear? So that's about the segment with regard to the point. Okay? We'll have a short 2 minute break and then we'll move on to the next chapter, which is LLP. So people, yes, we move on to the next chapter, which is limited liability partnership. Okay. So exams are very close. You must be having something which other people call as an exam. Yes. I just came across a story and I thought I will share it with you. Okay. Story time. Right now. So once there was a king. Okay. He always felt that someone is going to attack him. Yeah, so he was always of the feeling that enemy country could attack him anytime. So what he did, he always made sure that he will wear a heavy armor so no one can kill him. He will always have the weapons close by. Okay. Even when he's sleeping, he will wear the heavy armor. Even when he's eating, he will wear the heavy armor. Okay. Like that. One day he was like scorching someone just like today. Even then he was wearing the heavy armor. Okay. What happened due to the weight of that armor and due to that heaviness and due to wearing it all the time, he passed away. Not because of any enemy, but because of the simple thinking that someone is going to attack him and he is always prone to attack. Instead of developing him here, instead of becoming fit to face that attack, what he did was he was trying to protect him only without even trying to rise up to the occasion. So, like good CA students, what we will do, we will not be worried about the exam. Okay, we are given time. With that time, we will make sure we are going to rise ourselves to face that time and not just to be low, depressed. ये हो क्या तो क्या करूं ये किया तो क्या करूं like that and all you should not think. Okay, I hope this is fine. You find this useful. With that thought, let's get ahead with our chapter LLP. So straight away going to the point, no more a detailed basic expression. So how many members there should be there? Minimum there should be 2 members. Okay, and it is very easy to form and it is having a point of view of limited liability. Clear for that's the purpose why we are quoting this. All right. So who can be a partner? So only a person who has not been declared as to be an unsolvent or not an undischarged insolvent can be. So there should be at least 2 partners, and if it falls below that limit and if they are carrying on the business for more than 6 months, then the sole partner will be personally liable for the uh, liability which he has incurred during that period. And there is also something which is called as a designated partner. So every LLP must have at least how many designated partner? 2 designated partner. At least one of them should be a resident in India. Clear? If all partners of body corporate, or if the LLP includes both individual and body corporate, then at least 2 individuals who are partners or nominees of the body corporate shall be acted as a designated partner. So their representative will be treated as a designated partner in this regard. And once it is finalized, the LLP must file particulars of every designated partners with a period of 30 days of his appointment to the ROC that he is being appointed as a designated partner. And they should also have a DPIN, okay, designated partner identification number. There we had DIN, right? So here we have DPIN. And in case of casual vacancy, also we filed within a period of 30 days and we have to bring it to the ROC. And if there is any default in this case, if there are less than 2 designated partner or no condition that there should be one partner whose a resident is not followed, then there's a penalty of 1,200 per day, subject to a maximum of 1 lakh is a penalty. And if the consent is not filed within a period of 30 days, then 5,200 per day, subject to a maximum of 5 lakhs for the LLP. Here also we are having a fine if there is less than 2 designated partners, 1,100 per day, subject to a maximum of 50,000. And for the LLP, in case you're not filing the appointment within a period of 30 days, 5,200 subject to a maximum of 25,000. Right? If the new designated partner is not appointed, then 10,200 per day, subject to a maximum of 1 lakh. 10,000 to 100 per day, subject to a maximum of 50,000 in case of the penalty for the designated partner. So kindly pass, take a minute, and then we will move ahead. So to incorporate an LLP, there should be at least 2 or more people, so that we already saw. And a statement is to be filed by a professional, could be a CA or a senior or CS, that we have complied with all the formalities. With regard to the contents of the incorporation, so what and how you should have the name, the place, business, what we are going to do, and the office address of the LLP, and who are the partners, who are the designated partners, all these details should be included. If there is any false statement, then imprisonment of 2 years and fine of 10,000 to 5 lakh. Okay, this is the penalty. Now, we will go to the place where we talk about. So once it is registered, it's a conclusive proof that is coming to existence. So just like how we saw in the Companies Act, it can be sued, it can sue or be sued. Okay, have the property in its own name, then have the common seal and do all the documents. All these are possible. Now, similarly, how we saw in the company, this LLP will also use of the name. Okay, and the agreement will be executed and should be filed within a period of 30 days to the registrar. Now, we go to the place where we talk about. In case of any change, it should also be mentioned within a period of 15 days. And uh, so every partner must inform the LLP if there is any change to the name or address in the period of 15 days. And LLP will inform in the period of 30 days if there is any cessation in any member being a partner, or if there is any change in address also. Now, any person who sees, so questions are asked in this place also people. So if a partner is no more a partner in the particular LLP, he will have to file a notice to the registrar that he is no more a partner in the LLP. The LLP should file. But if no one is filing, then for all the liability that is incurred even after the date, he is not a partner. But if we are not informed, then the partner is going to be liable for that also. Right? So for that purpose, it is important that he files with the RUC, and then he will get a confirmation from the LLP. And if the LLP is not even telling anything, fine, then no problem. The registrar will make a note of this, leaving up the form by the partner. Now, where an important segment is done is that, yeah, here also it is happening. So if there is any fraud, then the punishment is imprisonment of up to 5. So fraud, 5, 5, 5. Okay. 5 years, 50,000 or 5 lakh. Okay. And there is an unlimited liability if that is done with an intent to defraud. Clear? Now, here also question are asked to people. In case the NLP is doing a fraud, and if there is some investigation and all that is going there, and if any person is turning out to be a whistleblower, okay, not talking about any other political thing, okay, if there is something called as a whistleblower which is happening, then that is they are providing some information within which we can find who is doing the fraud, okay, but all that is useful. And because of the information gave only, we are able to find who is a real culprit, then you should protect the whistleblower. Okay, what type of protection? They should not be DD, discharged, demoted, suspended, threatened, harassed, discriminated. Okay, so even recently there was a case where judicial custody death happened. No? So lady constable turned into a whistleblower and she gave the details of it, and she seeked protection. Okay, so this is how it happened, and how it happens in other places also. Now, contribution. How and all a partner can contribute to the capital of the company by way of tangible or intangible property, or they can be any other benefit, monetary value also they can. So that is the contribution. Now, this LLP should have maintained 2 types of accounts, which is the books of accounts and also statement of solvency. They should prepare and file it with the. It is to be prepared within 6 months from the end of the financial year and should be signed by the designated partners. Clear? Fine. Now, they should also follow the auditing and accounting standards as paid by our NAFTA. And annual return is to be filed with the period of 60 days of the financial year. So similar that if there's a default, then 100 per day subject to the maximum of 1 lakh for the LLP, and for the partners 100 per day subject to a maximum of 50,000. Here also, if you are not filing the account or statement of let's say 100 per day, so the same thing. Okay. Yeah, inspection can also be done. It's open for public inspection, right? Now, and the registrar can also ask for some information. So if you want information, you can ask. Declaration you also can ask. Right? So if you do not comply with that, penalty fine is 2,000 to 2,000, 25,000. Clear? Compounding of offences. So they can reduce the penalty. But with fine only, they will collect the maximum fine and not less than the minimum fine, and they will okay, fine, go. For repeated offense within 3 years, you're doing the same thing again, you cannot compound. Okay. Application for compounding is to be made within the register, and once it is accepted, the register will give intimation within a period of 7 days. If compounded before prosecution, so before they are being put into jail, then no prosecution will be initiated. Then if after they are put into jail, it is being reduced, then come on, come out of jail like that. In old movies, they come step out. They just say had so like that can come out. Okay. Then so pending return which you should file, all those things should be submitted. Additional fee should be paid within a specified time, and maximum fine that they can use it twice the prescribed amount, so that they can levy before they are going to compound. Next important area from that the question is asked. Suppose I'm a partner in a LLP. I'm transferring my interest, that is right to receive interest on dividend, whatever it is. If that time transferring to my daughter, who is 6 years old, how can she tell? I have an interest. I want to take part in the management of it. I have the veto power to vote in this regard. She cannot tell like that. So transfer does not entitle them to take part in the management or access the information. So past examination question was tested in this area, people. And because I transferred the right doesn't mean that I'm disassociating. No, it is not like that. Okay, right? So this is with regard to that. And it can be converted into firm, can be converted into LLP as per what is mentioned in the second schedule. Private company can be converted into LLP, and an unlisted company also can be converted into LLP. Procedure for that it is not for us, it is for CMA inter, right? Not for us. Now, compromise and arrangement. So whenever there is a dispute between the LLP and the creditor or the LLP and the partner, then they may approach the tribunal, right? So their tribunal will hear and they will give a sanction. If it is approved by 3/4 of the value, okay, 3/4 of the value of the creditors, then it will be enforced and it will be binding on all of them, right? And once the order is given, it should also be filed with the register within 30 days of the receipt. Only when you file the register takes note of it. There's a conclusive proof that it is coming to effect. Not then similar penalty which we saw in that country. And then there will be also binding of being against the public policy security law, will have binding up with the tribunal, or voluntarily also we can bind the LLP. No. So from time to time, the central government may also apply some provisions, and the draft of it will lay before both the houses of the parliament. For 30 days, it will be laid draft notification. If both the houses disapprove, then they will do some modification and all. All right. Then they will bring it into existence. Enhanced punishment can also be done. So imprisonment can be done. There's a fine they get twice the amount. So like that, they can enhance the penalty. So distinction between the NLP and the partnership. So very much easy. So you can take a pass, read and go ahead. Distinction between NLP here also you can take a pass, read and go ahead. All right, people. So now going to the much demanded chapter. All right. So series of chapters, the general clauses, the interpretation structure. Okay, and finally come up. So we're going to do all these things, and beyond that, stay closer with this till the end of the video, because we're also going to discuss the questions. Okay, so we're also going to do the questions. So stay connected, people. So people who have watched all along so far, kudos to you, right? So we have just a little bit more. Keep the spirit up. Keep writing along with me, because this is just not some show for you to watch. This is something you have to practice along with me, or at least highlight along with me. If you don't have this material, do not worry about that. You can also use your study material, the institute study material, for the same purpose. Let's keep the spread going up. Right now, about the general clauses act. So what is the purpose of the act? Is that, see, in PF Act, salary means something. Okay. In Gratuity Act, salary means something else. All right. Not just that. Resident means something in Income Tax Act. For purpose of LLP, there resident means something else. Clear. So that is a different way where we can bring about the meaning or the definition of something. If anything is not clear, right? Just like how we used to approach our mentor or someone. So this general clauses have been serving as a guiding light. All right. So what are the main objectives of that? It is to shorten the legislative language. So because they cannot give about the meaning for every act, for every word that is there. So then it is going to run 2 pages. So first is to shorten, and there's going to be uniform expression. So shorten and uniform expression, and they will lay down the clear rules. So the rules will be clear. So shorten, uniform expression, and there's going to be clear rules. Now, because of this, we can prevent the omission and inconsistencies will be prevented. So these are the benefits of having the general clauses act. So what is the purpose? Purpose is to consolidate the general rules of interpretation, to avoid repetition, and to provide a single reference. So consolidate, because of that it is going to avoid repetition. So because it's going to be one place. Same thing is with consolidate, so that you can avoid the repetition, and provides a single reference structure. Right? Consolidate, so there is no repetition. When we tell no repetition, it means as a single reference structure. Clear? So these are with regard to the objective and the purpose of that. Now, moving on to the important place where we also have the questions asked. Okay, meaning of immovable property. So, as such, if you see, even the Transfer of Property Act does not tell what an immovable property is, right? So, where only we are going to go, we are going to the general clauses and definition section. Okay, right? What this act tells is that, so when we tell immovable property, it is not defined in the even in the Transfer of Property Act. So when we tell immovable property, this is what it is going to mean, provided any act is not having any reference to the same. Right? So what does this act tells about the meaning of the term immovable property? It includes, all right. So here, watch some words closely with me. Immovable property includes. It includes what? It includes land, benefit which arise out of land, and things attached to the earth or permanently fastened to anything attached to the earth. So it includes land and benefits which arise out of land and things attached to the earth or permanently fastened to anything attached to the earth. So all these are included in the meaning of immovable property, but it does not include standing timber, growing crops and grass, because all these we can chop and sell it off. So it is not included, right? Often tested segment, people put a star mark and go through it. Now, the provisions of the General Clauses Act or rules of interpretation applied automatically to every central act. So there is no other particular definition given in that. So automatically we are going to see whatever is given in our General Clauses Act. Clear? Next, moving on to the place. Here, people, preamble. Right? Now, moving on to the place where questions are also quite often tested, the preamble. So, What is a preamble? We even have the preamble for the constitution. So how does it start? We the people of India. So that it starts, no? So just like that, every act will also have the preamble. So what the preamble tells that it tells why the act came. Okay, it tells about the scope, objective, purpose. Okay, so people learn it along with me. Often tested segment. Okay, the preamble expresses the scope, objective, purpose. Scope, objective, purpose, and why we are doing it. Okay, and the intention as to why we are doing it. It is a part of the enactment and can be used to construe the statute. However, it cannot override the clear and plain provisions of the act. Okay, so there is something called as whatever preamble tells India is a free country. Okay? We are sovereign, secular, independent. Okay, and the people are also sovereign, secular, and independent. Yeah, it doesn't mean that I can do whatever I want. Okay, no, if I think I'm not free enough to do certain things like organize a meeting out of nowhere without any permission because I'm just free. I cannot do that. Okay. So it lays down, but it cannot override the clear provision. So law clearly tells a peaceful um, group is allowed. So, but if you want to revolt against something, so you cannot tell I'm free, I can do anything. Okay, that is not possible. Clear? That is what our preamble tells you. Extras SOP, scope, objective, and purpose. And it tells the intention of the lawmakers, why they are doing that. And it's a part of the enactment and it's used to construe the statute. Construe means to understand what that means. A part of it, but it cannot override. So be a part and cannot override. Clear? Now, many times we have come across definitions which has the word. So share capital means, okay, like that we'll have. Security includes, so like that we'll have. So why is there difference with each of the terminology? That is, what do they actually mean? Means, when you see something with the word means, it means it is that. It is just that. And when you see a word includes, it means it is that. And anything that is associated with that is also going to be covered in that particular thing. Okay, right? So means it is just that. Includes means that and anything related to that it is covered. And whenever we see the word shall, so it means it is mandatory. Shall I go? Like that we ask no at school, ma'am, shall I go? Means ma'am, I want to go out now. So just like that. So shall is mandatory. May, the company may, okay, company may, like that we have seen, no? So may means they can do it or they may not do it. It is up to them to choose what they are wanting to do. Okay. Now going to the place where we have the next important aspect covered. You will see about what is an affiliate. So this is also discussed. So it is an inclusive definition because it tells it includes any affirmation or declaration by the person allowed to affirm instead of swear. So it is an return statement confirms. So I am now going to represent this person for this. So like that. So it's a return statement confirmed by oath or affirmation for use as evidence. So it is includes any affirmation and declaration. Clear? So that is an important place where it's tested. Now we'll go to the next segment. So immovable property is done. Yeah, here. So, if at all you see the word month, okay, so it is the calendar month. So, any month from here. So, not like what is the Tamil month or any other Telugu month. So, it's not like that. So, month means the calendar year. So, that is one thing which we know. And moving on. Okay. Application of definition. Section 4. applies to certain earlier enactments. So words like affidavit, immobile property, imprisonment, month, movable property, oath, person, section, year apply to Central Act after 3 Jan 1868 and Regulation after 14 Jan 1868. So these are going to apply for these regulations which came after that. And words like commencement, financial year, offense, registered, schedule, subsection, writing apply to the Central Act regulation made on or after 14th Jan 1886. So what they're giving is that, so these words are applicable to those acts which are made after 3 Jan, and this is going to apply to after 18 Jan 1887. So you can just know which words are going to apply from when with regard to the definition which is given under this act. Okay, fine. Now, definition of central act, central government, gazette, government security, Indian law. So these will apply to all Indian laws. So this is going to apply to every law. And if you see, here they are talking about the central act only, but here we are going to talk about the, it's going to apply to all act, which means for other, we have something called as a Tamil Nadu related to that, we have some, with that administration, we have some. So for these, it's not going to apply. Okay, and it's only going to apply to central acts, these words. But these definitions are going to apply to all Indian people. Again, I'll tell you something. We have something called as a grandfathered provision. So after 1860, only majority of the act and central act. Before that, what we have not much, right? It's only the Indian Contract Act. But there we do not find words like this. But anyway, that is also definitions given that. Clear? So some grandfathered rules as regard to this. So we'll just read and keep moving forward. Now, we go to the point where we talk about yeah. If at all there is no specific date of enforcement that is given. So mostly for all the laws we have the date from which it came into existence. If it is not given, it is construed as the day it received the assent from the Governor General in case of any act which came before 1950. And after 1950, it is about the president because from that time it became a republic, right? Now, moving on. So when we talk about a particular day, we are not talking about a fraction of the day. So when I tell it is 31st December, it means the time starts from the midnight, not from any evening or sunset, sunrise is not like that. It starts from the midnight. So that is one thing. Now going on to the next one. Presumption against responsibility. Law affecting substantive or vested right generally operate prospectively. So everywhere you would have the word prospectively only. If it is about affecting substantive or vested, substantive means going to affect a major portion of people. See, for example, with regard to the tax law, we are going to bring any particular item into the ambit of tax. It is going to affect a lot of people. You cannot tell retrospectively. Retrospectively means from an earlier date. Not possible. Now what's up? You ask them to pay tax. Hard time to get money from them. You put it retrospectively, headache for the government only. Okay, it is going to be prospective only mostly. But if it provides for retrospective, maybe the language is clear, it expressly provides and it is clear, then it is going to be retrospectively. But nothing is given, it means it's only prospectively. All right. Now, effect of repeal. When a central act or regulation repeals another enactment, okay, say for example, we have GST now and it repealed so many earlier acts, right? So everything was repealed by GST. Okay. Now, such repeal shall not revive anything not in force at the time of repeal. So, let us say GST replaced so many acts, and this act name XYZ was not even at the time. So what was at the time that we repeat? So something related to that, not at the time, not repeat. Okay, it's common sense. affect previous operations of the repeal enactment or anything duly done or suffered under it. Okay, affect any previous operation of the repeal enactment or anything duly done or suffered under. See, if at all, when GST came, before that there was some act, and a person is liable for punishment or imprisonment under the earlier act. So just because GST came, will that person be relieved of that liability and imprisonment, the fraud that has happened? So that is what we are talking about. Now, sometimes he might be entitled to some credit with regard to the same, and if at all he is duly entitled to it, they cannot dissolve him of that right to get access to that. So that is one thing. Then, affect any right, privilege, or obligation or liability already acquired or incurred. So there's an obligation for me to settle that amount, inclusive of that particular tax. Okay, they had some window for transition, right? So usually it will be that within that time you will have to change over that. Okay, so during the transition period, I cannot tell I do not have that obligation. Okay, so what was there is going to exist for the transition period also. Usually they have that particular time window, right? Affect any penalty, forfeiture, or punishment incurred under the repeat act. So, previously we had an imprisonment under that, so just because skin doesn't feel okay, come out of the jail. Clear. Affect any investigation, legal proceeding, or remedy. So maybe previously under the earlier Companies Act, some benefit was there, or maybe like some benefit, like what we can say, like for the director, yeah, maybe even in the case of export, also the same provision is carried out. If he has exercised due diligence, or if you're told that he is not aware of the what we say misstatement given in there, then he is not liable. Like it will not do certain exceptions, no. So that was there also. That is here also, no problem. But what if here the new act is withdrawn? Does it mean that that time you are not punishable? No. Now we are making punishable. So now punish it. It's not like that. Okay, so that time if it is not that, okay. And earlier there was an investigation which was started. So because this act we cannot stop that investigation, should carry on. But mostly, whenever a new act is going to come, mostly they incorporate a similar thing. Not much of major thing is going to happen. If you're going to study the new Income Act, you will be coming across all these points also. Right? So what was that is going to be that. Is what the bottom line says. So what was not there, you cannot repeat. What was there, you cannot take it back. So there's a famous dialogue, no? கொடுக்கிறத தடுக்க முடியாது தடுக்கிறத கொடுக்க முடியாது. So like what was given, you cannot stop it. What was not given, you cannot give it. So just like that. Clear. Okay. Fine. Here, repeal of act making textual amendment, where a central act or regulation repeals another act that amended a law by omission, insertion, substitution. Such repeal does not affect the continuance of the amendment already made under the contrary intention offense. So once you are amending an act, okay, so we'll read it one more time. When a central act or regulation repeals another act that amended a law, so the act is repealed and there is an amendment. Okay, so just because the amendment is done, it does not repeal just because the repeal of the act is done, it does not undo what was amended. Okay, so there was an act, the act was repealed, but there was an amendment to the act also. So act was repealed, but there was an amendment to that. So just because you have repealed that, the amendment is not, the amendment stays that. Okay, now so I'll also like to give an example. So let's say, for example, with regard to trust and all, we had this provision in the Income Tax Act. Here, so firstly they told that the corpus, if you donate, then there is no tax liability for it. So later there was an amendment with regard to that. Now the act is gotten back by the new act, but we'll have to see what is happening in that. Okay, but there was an amendment on it later. So just because we got the act back, the benefit or the liability extra what was imposed on it is not going to go. We should see what is relevant now. So that is the meaning about it. And we will go to the point, next important segment. So because these are quite often repeated segments, which means you will also do the other ones for at least one time reading, so that you will have a hold of it for the purpose of MCQs. Okay. Fine. So we'll do here. Powers and functioning. So powers confer to be exercisable from time to time. Where a central act or regulation confers a power, it may be exercised from time to time. So, which means we already have no, with regard to the uh, powers of CG also. So, from time to time, they may enforce rules as it was required. So, that they did that. We have seen in so many places. And the central government with the power dedicated to the RD, they can do this. So, like that also they will, so from time to time, whatever they want the regulation to impose, it can be done. So this power is continuous and renewable. So they may delegate to any other person, the central government to the regional director. So the central government to RC, to the ROC, that like that also we have seen. So they can change it also. And power to appoint includes a power to appoint the ex officio. Ex officio means the one who's in the position, one who's the top tier of it. So okay, so power to appoint any person in that particular board means you can also appoint anyone as the leader in that also. Fine. And whenever a power to appoint is given, it also includes a power to dismiss. Right? So if we are seeing the removal of auditor, okay, who will appoint the first auditor board of directors. But if you want to remove, you have to get the power of CG and also a bit different that. But they can also remove. They also have the power, but they'll have to get the permission from the central government additionally. Okay, like that. And who will fix the remuneration for the one who appoints them, they will fix and they will present it at the AGM. So power to appoint means power to dismiss them also, and they will only give the remuneration. They will only fix the remuneration. Okay. Then please. Okay. Construction of orders and rules. So whenever we tell any notification, order, scheme, rule, form, bylaw, then whenever we tell any of these words, then it means they have the same meaning as the act or regulation. So if at all I'm telling, so this notification, by this notification, this is going on. The act has whatever meaning the act is going to have, that meaning only we are going to apply to in here. Right? So similarly, power to issue includes power to amend, vary, or rescind. So maybe we'll have the registrar also can, the central government can also issue rules from time to time. So just a minute, so which means they can also issue, they can also amend whatever we had. So that also it is possible for them to do. Okay. Now, making rules, bylaws, and orders before commencement. When a new act is passed but not enforced, right? So new act has come. So when it came, our income tax act was passed in the last financial year, so it is not, it was not enforced. It was there till we had the new financial year started, new tax year started. Okay, the power to frame rules, bylaws, or issues may be exercised after passing, but before commencement of that. So if they want to have any bylaw or orders, that can be done after passing and before the commencement of that, they can do any bylaws with regard to that. Okay, and it will be effective only when we come. So it's a normal point, people, common sense point. And how the bylaws are made after publication. Okay, after the publication, how we are going to do. So firstly, we have a draft, right? So just like this, only our law also comes. So every act, so every bill, once it is signed by the president, becomes an act. We are aware of it. But before that, I'll tell a small story with regard to that. So before that, firstly, we have the respective department or the ministry, which we will tell it, we need some rules and regulations. So they will draft a particular thing and they will present it to the public. Okay, so the public will also give their feedback. Public means not everyone else. So who are well enough experts in that field, so they will give their reviews and opinion and what they can correct with regard to that. Okay, now so once it is done, it will come back to the ministry again. They will examine that and they will then, along with the Ministry of Law and Justice, they will draft it because this law language the Ministry of Law knows. We do not. Okay, so they will draft it. Okay. So once it is drafted, again they will give it for circulation if you want to incorporate any changes with regard to that. So once that is also done, it will go to the Lok Sabha and Rajya Sabha for passing. Correct. So Lok Sabha passes, then you go to the Rajya Sabha. If in both the cases it is not passed, you have something called a joint sitting and all. Then it will pass in both the houses, then it will go to the president's table, that he will sign and it will become an act. This is how it is done. Similarly, when you want to issue any new publication, sorry, when you want to make any rules or bylaws, which is subject to the previous publication. So what we'll do, we have a draft publication of the new publication. Okay. Then as deemed sufficient by the authority or as prescribed by the government. So, however they wanted it, we will do it. Then, notice of consideration. Then, or we will tell on a particular date, this will be brought to the table for the purpose of discussion. Then they will hear who wants to modify with according to that. Then they will hear and they will pass it. They will publish in the official gazette. And once it is passed, it's a conclusive proof, and everyone will have to follow that. Here, this is how the publication is passed. Right? Now, republication not necessary if changes are ancillary and within the subject matter of that. So it is something addition to that, not incident. It is only ancillary to that. Then republication is not enough. Can just add it as an amendment and then they can show that. Now, continuation of orders rules after repeal and reinforcement. So once an order or any regulation is repealed, okay, when a central act or regulation is repealed or reenacted, then all the appointment notification order, scheme, rule, form, bylaw under the repeal law shall continues and be deemed to be made under the new enactment unless specifically superseded. So, if at all previously we had any rules or notification, it will be that. Unless the new law is telling no, it has repealed. So previously we had so much of we had different TDS forms, we had different TDS sections, we had different TDS rates. So now the new act would have repealed everything. So it stands good. If nothing is said in that regard to anything, I'm sure they were carefully drafted and there's no pending thing which is there existent. But if at all you're an expert in direct tax, please do let me know if anything is still continuing from there in the comment section, right? And if it is not expressly repealed what was there in the earlier income tax act 1960, then it will be continuing. This repealed, no problem. And offense punishable under two or more enactments. So if two act is going to give punishment, okay, can a person be punished twice for the same? No, be punished twice. Okay, the same offense you cannot punish them twice. So that is called as actually double jeopardy. It is when we study about constitution in CMA interview, we study about this. But that is called as double jeopardy. So it cannot be just double punishment or double suffering. So a person cannot be punished twice for that particular offense is what it means. Clear? Fine. All right, people. So that was the key aspects which we are required to see about from the general clauses. So I'll share some more additional points. Enactment. So whenever we tell an enactment, we can tell about it with reference to the title or the short title or the number of the year or the sections or subsection. So just like this, you can mention it. Now, so this is the end of this chapter, people. Let us go to the next chapter, interpretation of statutes, deeds, and document. Alright, people. So now let us go to the next chapter, which is ICA's favorite and our students' favorite too, I guess. Now we'll go on to the eighth chapter, interpretation of statute, deeds, and documents. So the crux of this is that beyond what the plain word is saying, we should also check at the intention why it was written. This is the entire sum in one line. Okay, so this is what it is. But let us read and understand. So, what do we mean by the term law? We will say. So, the term law is broader than what a statute means. So, law includes any rules that comes from time to time. So, we have already seen the Companies Act is a rule-based law. So, the provisions we will have, and apart from that, we have rule for each and every. Any favorite rule that you please mention in the comment section. Anything that from the past you have experienced, please drop in the comments also. So, it includes the ordinance, any order, any bylaw, any rules or regulation and notification that we have in this department includes all of these. So that is what we call as a term law. Moving on, meaning of the document. So this is also a place which is quite often tested people. So what is the meaning of the term document? So document includes, see again we are seeing the word. So document includes any matter written, expressed, or described upon any substance by the means of letters, figures, mark. So it means it includes anything which is written, expressed, or described upon any substance. Okay, so let us go and analyze one by one. So matter means any written or described content. Anything which is written also. It could be numbers, letters, so all those also included. Record could be in the mechanical or the manual method. Substance, it could be any paper or it could be any metal, and means it could be letter, figures, marks, or symbol used to convey. So now questions are asked this way. So there was a CCTV recording of a particular thing which happened. So can that be given as an evidence? So this is the question. So is it included in the definition of document? Yes. If you remember, if you have seen this particular movie in the so what happens in that? Finally, the robo itself comes and presents itself as an evidence, right? And when it is questioned, it tells up under the evidence of it also, I'm also included and I can also be construed as an evidence. So it tells like that. So that is what means. It includes any mode also. So that CCTV camera recording can also be construed as an evidence is what the conclusion for that particular question. Okay, so next instrument. So instrument means any legal document that creates, transfers, or records any right or liability. So this is what we call as an instrument. Now we'll go to the point where we talk about types of interpretation. So how can a particular word be interpreted? Means to be understood. So we have two types of interpretation. One is the legal interpretation, why it came, the law relating to that. Is legal interpretation based on the rule of law. Here, next is the doctrinal interpretation. Legal interpretations about the rule of law. Next is about the doctrinal interpretation. It's the real and the true meaning of law. So why it came, what was the intention behind that? Okay, fine. So that is about the doctrinal interpretation. So real is like authentic. So why it came, why the law was there, when with the legislature, it will tell that for this purpose it was enacted. So to limit on the number of limit on the deposits that the company can get, okay, to limit the usage of the particular reserve, alright. So it is derived from the custom and why it came. Then doctrinal interpretation is it's based on the grammatical and it goes beyond what the word why they brought that, okay? Why they wanted to place a limit on the borrowing that they are going to get. Okay, why they are telling that ultra vires? So ultra vires means we know this beyond AOA, but they place something that if it is within MOA, it can be ratified because every time the company cannot be restricted that they should not do certain things. So the reason is okay, you're permitted to do if it is within the MOA. So that is a logical aspect of it. Okay, fine. So there are two types of interpretation, which is a legal interpretation and a doctrinal interpretation. All right. Now going to the different way interpretation construction. So similar thing. So interpretation means plain meaning, why it came. Construction means it goes beyond the literal interpretation, beyond that why it came. Then so interpretation means when the language is clear, we will know. Construction means when the language is ambiguous, you will see why it came. So it is not understood. We cannot understand why they have done that. Let us see the reason behind why it came. So that is construction. Clear? Alright. So now we'll go to the point where we talk about why we need this particular interpretation because language has inherent limitation, okay, and we cannot convey every future situation. So if at all, particularly the word document has been restricted, then today we'll have to bring about a new amendment telling that okay, this is also equal to the document. So that they have given wide meaning. Even in pen drive is a document. Even in the hard disk still is a document. But even in the photo in the mobile is a document, just like that they have. So they have widened it because language is having inherent limitation. So we don't know. I am inevitable. So one comma or one exclamatory mark could change this. So especially in a man is nothing without a woman. So if you put a man is nothing without a woman. So if you put stress here and there, the word is going to change. Man is nothing without a woman. Man is nothing without a woman. So just like that, the change, it will change. It was a particular famous joke like that, right? Now, rule of legislative intent. So we should see why it came. So again, same why it came. Reason beyond the meaning. Okay, and types of interpretation. So grammatical interpretation, what it is telling, and logical interpretation, why they are telling it. So especially we have this question. It is also a repeated question. Vehicles are not allowed in the park. When they tell vehicles are not allowed in the park, which means only humans are allowed to walk. Tell me about this where we have okay, where we have a kid riding a scooter. Okay, so the one that you pedal with the move, keep the ground there, like no, that's also called a scooter only. So that is that a vehicle, okay, and a person with an electronic automized wheelchair. So is that also include the term vehicle? So that could be different interpretation. The point why they wanted to tell this vehicle is that some auto, right? So some scooty, those are not allowed. Okay, so that is the logical interpretation of this. Clear? Clear. So next we will move on to the rules of interpretation of construction. So first the primary rule. Primary rule is a rule of literal construction. So what they are telling you will understand. Okay. Rule of literal construction. So plain meaning they will understand. The intention of the legislature must be found in the word use. What word they are telling that we will understand. So that is literal construction. So absoluta, centennia, exposito, non-indigent. Plain words need no explanation. So if they are telling the directors can get only so much of borrowing for the company. So it's understood, right? So it is just a plain word is enough. So words are clear and unambiguous, means there's no doubt with regard to that. Then we can take the meaning of what whatever it is telling. So that is a primary rule of interpretation. Then, if it is not clear, then we go to the rule of reasonable construction. So it tells that at regis magis valeat quam period. Okay, so it means interpretations should make the statute effective rather than void. So, if at all understanding it by one meaning, I am going to get a different understanding, and then it is giving absolutely no meaning. So I told no, we are free to do whatever we want. India is an independent song and secular, so like it doesn't mean anyone can do any unlawful thing. Okay, so it gives two meaning. So I can do legally whatever is possible. I can do anything, even though it is illegal. So if I take anything whichever is illegal, we avoid meaning. So if there is something like that, that should not be taken. Right? So that is the point of it. So interpretation should make the statute effective rather than void. So two meaning of effective one is that legally whatever is permitted I can do. So that is an effective rather than whatever is void. Okay. My when literal meaning leads to absurdity, so I can do anything that is absurdity, right? So we should take whatever is held by the legislative. Okay. Between two possible things, we should take which advances a remedy and suppresses mischief. Mischief means and it's in the wrong path. So advance of the remedy is the right path, path of justice, like that, without clear ambiguity. No deviation, so if there is no different meaning, stick to the grammatical. So that is what we have. The rule of literal construction is what it is. Clear? Now, rule of harmonious construction. So from the word itself, harmonious means it is same. Okay. When there are two provisions in the statute which seem to conflict, okay. So there are two things, but it is telling conflict. But we should understand it, which gives a normal meaning for both. Okay. So we will tell no subject to the provisions of like that we have. Then in another place, we have notwithstanding anything which is contained in that previous provision. So like we have two different things. So, but it depends on the case to case basis, which is applicable back. Clear? So that is whenever there is a conflict between two, so we should understand that both should cooperate effectively. So at our home also there will be a lot of conflict. But whatever is the mutual decision, we should take. So that is what we call as this. Right? Right, so we'll have subject to the provision, then we'll have notwithstanding anything, so that both of them will exist, right? Specific provision override general provision if it is related, so that's why it's case to case based. So for that particular case, it is that, then we should see only for that particular thing. Clear? Let's say anything. So subject to the with regard to this one thing. Then there are notwithstanding anything that will have an overriding effect only for that particular scenario, whichever it is given for. Clear? Clear. Now, whenever we have notwithstanding, okay, within same section or subsection, it will override. Okay. If it is within the same actor, it overrides the other section. With other enactment, it override the but see we have in here also. Companies Act also applicable for banking, insurance, and income. But the provision for preparation of accounts is given there. So that is going to override whatever we have in the schedules for the preparation of the final accounts. Okay. So that will override what we have. Okay. So it will override all other law with regard to that. So this one example for the same. Clear? There's a summary with regard to that. So that those are the primary rules of interpretation. Moving on to secondary rules of interpretation. Sometimes it have without prejudice. Without prejudice means not affecting which is contained in any other provision. When a particular provision follows a general provision, so specifically it has been given for that. So if you see in a Companies Act, specifically for listed companies, we have which tells that listed companies are also governed by the provisions of SEBI rules. So like that. So it's a particular provision. So that particular provision will override the general provisions. Okay. Then the specific clause adds to the general clause and does not override it. Okay, so if it is given without prejudice, if at all it is given without prejudice, then it is going to coexist. Okay, the example I told is not this. Okay, if at all is given without prejudice, both will coexist. Otherwise, it is going to override. So that is what we saw previously. Okay, if it is given without prejudice, means without affecting what was there. Clear? Then Hayden's law. So in Hayden's law, you will see why this particular provision actually came into existence. What was the one previously? What was the problem in that? And to solve that, we have this one. So that is what we will see in the Hayden's case or the mischief. So we'll say, what was the law before that? Before that, what was the problem there? Before GST came, we had the issue of double taxation. I thought, okay, right? The mistake that mischief in that law was that we are going to have double taxes to be paid. Now the remedy is that we are going to have something called as input tax credit. Before we had the cascading effect. Now we are going to have the input tax credit there, right? So that is the reason for the remedy. So this is what the Hayden's case will test. Clear? So put the star mark here quite often tested in the people. Right? Then we'll go to the page value. The rule of beneficial construction. Rule of beneficial construction means it will be there to protect the weaker section or advanced judicial social justice. See, if you see in our constitution itself, we are given that we should not indiscriminate against people. Okay, indiscrimination should not be there, and some biasness should not be there. But biasness can be there. Women, weaker section, and children with regard to education, employment, like that, and all it is some options. Means certain reservation we have no for certain class of people. So that is possible. Every time you cannot tell equal. For certain people, for the weaker sections and for women or for children, we can use some benefit over the other. Okay. So this is about welfare or for remedial for the weaker section or advanced social justice, it can be given. So here also they that for the labor, social welfare, and consumer protection, it can be given. Here, so this is again referring to the constitution. Now, rule of exceptional construction. When literal interpretation makes no sense or defects the statute objective, ignore or modify such word to make the law meaningful. So we already saw now. So vehicle not allowed. If we tell, then any vehicle should not come. It doesn't mean that anyone who's coming in a wheelchair also is not. So they are allowed to do that. So that is a point about it. Sometimes we also find the words and means both together we are going to see. Or means this or that. So it is either this or that. There is an alternative. Clear, may and shall will be seen. Moving on to the next one. Rule of existent genders. Existent genders means of the same kind. So when a specific word of a clause are followed by the general words are restricted to the same kind or gender. So when there are certain words after a particular word, the first word what they are telling, it will take up that same word. So the classic example for this is books, newspapers, pamphlet. Okay, books, newspapers, and pamphlet. Does this include the word hoarding? No. Does it include any other? What can we say? We have posters and that. No, it does not. It means maybe some pamphlet that we do or ad in the book or in the form of newspaper in the okay? Specific words follow distinct class or category. The class is exhausted by those words. General words follow the specific enunciation. So general, whatever it is, afterwards, whatever it is going to take like books, newspaper. So it is understood that books, newspapers, and circulars. It doesn't mean hoardings or posters. Okay, so this is called as existent genders. When it is not applicable is that general and specific both are present. So we are also telling books, newspapers, circulars, hoardings. So people will be confused on which category are they going to place this. So there is a confusion with regard to this. Both are present. This is not applicable.
particular words exhaust the class, nothing left to generate. So everything they have put, newspapers, pamphlet, handouts, printouts, everything they have included. So they have mentioned everything, so there's nothing left to generalize. Okay, specific objective diverse in nature, so there is no common category. So everything is different. I am telling books. I am telling the hard, soft copy of it. So is it books or untouchable material? So soft copy or hard copy. So there is no common category with regard to it, right? And legislative shows clear contrary intent. So they're telling. So it includes only this, does not include that. So they're clearly telling. So in that case also it is excluded and existent genders do not like. Okay, so we will do one more time because it's a part of interest. So whenever specific word follow the general word. So general word, we have then specific word. Whenever the specific word follow the general word or restricted to the same kind of general as the specific one. So there is specific word. Before that, we have the general. So general word is specific word. So the general word will form the specific word. Clear? Now, other rules. Doctrine of no sector or sophists. So we have a specific saying, no. Tell me your friend, I'll tell you who you are. Like you're the average of the 5 people you mingle with, you're the average of the 5 books you read. So just like that. If at all there is a doubt with regard to it, then it will be known by its accompanying product. If at all we don't know what kind of person you are, we will see who your friends are, and then we will tell what kind of person you are. Okay. For example, if fresh orange juice under Purchase Tax Act, using expression manufactured beverages include fresh juices and bottled water and syrup. So like this, so here what they are telling, fresh orange juice, manufactured beverages included fresh orange juice. So here fresh juice means it is manufactured beverages. So it is not freshly prepared. Okay? So that is a meaning with regard to this. Then, so this is no sector suffices. So a word is known for the company key. So here I am not telling about the fresh. Here they are telling manufactured beverages. So that word is meaning that this is something which is made in the factory or under any process. Clear? Then doctrine of contemporea exposition. So doctrine of contemporea exposition means the best and strongest in law. So which means it should be understood the same time at the enactment was made. So if at all, now I'm telling something like previously we had something called a wealth tax. Many of you would not be aware of it. But that had a purpose and a meaning, and we should know why that act came only by knowing the reason at the time of its implementation or its enactment and the commencement. So now if I tell people laugh, okay, and now if I tell, if you know, in companies that previously we had a method of voting that by voice written a nay like that and all previously person. When I told this, many of them laughed in class. Okay, but previously, we didn't have e-voting and also, and this was one of the way where it was easier to bring a vote. Okay, so we should know what was the reason and what was the position of it at the time when it was clear. So this is what we call as contemporaneous exposition. All right. Now, internal aids to interpretation. So in the app itself, we have certain ways by which we can understand the meaning. So long title. Every starter will have something called as a short title and the long title. So you can understand that, and so we can get the meaning of it. So we will put a star mark in here. So this is asked. So it helps to know why it came into existence. So it cannot, or if there is any clear provision, you cannot override that. It's only giving it like giving a heads up of what it is that you can never override what is given in the provision. In Gen Z, what is a heads up, correct? Right? So long title, it's an aid showing purpose and scope. It cannot override the clear text. Yeah, you cannot override what is given in the provision. Now, what is a preamble? Preamble state the objective, scope, and reason. So we already seen the previous chapter also scope, objective, and the purpose for which it came. Right? It resides a mischief and the civil statute intent to cure. Right? So then why it came, what was the previous one, and why he wanted to override that. Okay? So that would be mentioned in the preamble. Right? Now, similarly, you can start with headings and titles of chapters. So statutes are divided into chapters with headings and title grouping related sections. So we have the management and administration is one part, accounts is one part, auditors is one part, okay. Then dividend is one part, clear. So just like that, we have grouped it. So that will also tell why it is that. Yes, section 51 is in one segment, but it's totally related to something else. Okay? Go and read it once. Okay, fine. Then marginal notes, short notes in Companies Act. Short notes printed at the side or top of section summarizing the events. So if you have seen the Bar Act, you will see here something like that. Okay? So those are marginal notes. Why it is that? Only to summarize the content. For that purpose, it is that it is not a part of the statute and it's not a conclusive way, but only if there is some ambiguity, then we can use it as a tool. Clear? Now, again, we have exhaustive includes same thing we have seen previously also. And definition is an important thing. Ambiguous definition. So ambiguous definition. What is an ambiguous definition? Is if anything is not clear. So and we have to understand in the light of the provision. So why they gave it, that is what we have to see. Okay, if you're not able to understand anything, you have to see why it came. What is the ordinary term and meaning behind that? That we have to see. Okay. When there is a multiple possible meaning, we see why it came and the language of that and the purpose of that. All these things we will see. Clear? Okay. Proviso qualifies, restricts, or makes an exception, can do anything. Okay? So it is like that horse you have in chess, do this side, can do this side, can come back, can come like this, or the queen can go like this, can go like this, can come back, and go like this. Okay, so it can either qualify, so subject to that, or it can even put restrictions. So this is not going to apply here, or it can give an exception, except what is provided in that, like that it can do. So that is what we have. So proviso. Here it can qualify, restrict, or make an exception. So proviso can qualify, restrict, or make an exception for the provision what is given. Explanation means it gives additional details like meaning, why it was that, all those things will be given. So if there is any ambiguity, it will be cleared by giving a further explanation or include something within the section. So we need some more meaning with regard to it, or exclude certain things, and then do the provide clarity with regard to that. Fine. And mainly read the statute of support. So everything we have to read in full one. We should not read in parts because one thing we have reference to the other section. Section 51 is in one place, but it's related to another section also. It's better that go and do the. You also going to see the questions there, so you will understand. Clear? Yeah. External interpretation, the historical setting, why it came into effect. Like, so what was the previously what we had, the ancient statute, parliamentary history. So before that, the governor general was signed. So the governor general is okay. So like that. So we'll see what was the circumstance. We had wealth tax. So why that wealth tax came? Because we did not know who gave whose land when the British went. Okay. So that was a provision thing. Later on, we did not need it yet. So that is wealth tax. Then consolidating statute and previous law. So we should consolidate and when an act is states that it is enacted to consolidate prayer, no intention to change the existing law. So as an example, we have the code on wages, the code of wages. So many act it consolidated. So previously we had the payment of bonus act like that. Was studied in inter. So now we don't have it. It's being consolidated with the code of wages. Okay. So we should see like there's no intention to change the existing law. There's no need to change it, but we have to bring it under a common category. So code of wages talks about the minimum wages also. It talks about the bonus also. So all these things are also covered in that. It is their aim is not to get rid of it, but to bring it under one common umbrella. Okay, right? Intention is not to change it, it's just to bring it under a common umbrella, right? Unless the act clearly tells that we need to change it. If they tell we need to change it, then it means that we need to change it. Right? Usage. When a statutory language is doubtful, then we should see what practice, why it is there, and then we should understand the meaning. So that is about the usage. So what are the three external aids? First is about the historical setting. Historical. So external means we'll see first what was there previously. Then if it is consolidating, we will see like we'll tell it, the rule, the intention is not to change, okay? But if it's still told that clearly they are telling we want to change, then it means that we have to change it. If it is doubtful, then what is the usage and practice with regard to that? That we should see, right? Earlier and later act, not analogous act means act in pari materia, the same subject, that is being some more exposition of one act by another. Later and earlier act in pari materia are construed harmoniously. So before what we have, now what we have, they are construed with the equal meaning only. Incorporation principle. One section of an earlier act is incorporated in a later act, it carrying the same meaning. So there also we have the provision with this. If here also it is telling that the same thing is going to apply, that we will carry on. Later act explaining earlier act. Later law may serve as a legislative interpretation of the earlier ambiguous. So previously it was not clear and understood. Now it is very clear and understood. So now from this we get the meaning. Say for example, in the told like in transfer of property, there is no definition given for immovable property. But if any other later laws giving the perfect meaning to it, and this also will apply to that earlier law, like that, that is going to apply. Okay. Now here you can start. When the word is undefined in the statute, its ordinary meaning may be taken from the standard dictionary. So there is no meaning to it at all. We can take it from whatever the dictionary is given. Okay. And foreign definition also you can take, but it should not override what the Indian laws. Clear? So use of foreign decisions also you can take care. Now, what is a golden rule? So a deed must be read as a whole. So we told you the statute also is to be read as a whole, and part the provision like that you cannot read. The reasonable person trust. So if I am putting a word, what a normal person will understand about it without any prejudice or without having any judgment with regard to it. Say for example, I'm giving a word like, yeah, I'm seeing a word, head in front of me, video capture. Okay, so if I say video capture, so it means that it is going to record it. It is not like someone captured. So a normal person, what they will understand that. So I'll also give a funny incident with regard to this. So recently, very elder people, they approached us for a doubt. So he came across the word incubator somewhere. Okay, and he told us that yeah, they are going to give us incubator and all. Okay, so that was his meaning and take on it. But what is the meaning of incubator in tax and other provisions with regard to finance? It means someone who has got a knowledge and want to enhance it and bring it. So technology business incubator. No, so that is what the meaning is. Reasonable and informed person, the one who thought it is an incubator for babies or for other animals, chicks hatching, that is not. He is a reasonable and informed person. So we should see why it is given. So he should be someone who's able to understand that particular thing. Okay, the circumstances and objective is to be mentioned. The point here is they want to use a grant. They want to use a status for them, right? Like they are DPIAP will give the qualification that this is a startup. Okay, they have a new idea, new innovation. That is the objective, not any input. Okay, so that was the instant which happened. And contextual reading. So you should read it as a whole. So again, that way. So how you will prepare for the law subject? You read the entire book. Okay, not just you not reading parts. I don't like management chapter. I don't like General Clauses Act. Like that we will not leave. No. So that is a word. Okay. If there is a word, it has the same meaning throughout. That is the point about it. Fine. So that's about interpretation of statute. We have a short break and move on to the next chapter. All right, people. So moving on to the most favorite chapter, all of us. Let us see. Okay. So Prana, why it came? Because we wanted to have free flow of currency, foreign currency into India and Indian exchanges outside India, and also to encourage a foreign trade and like that. So after the effect of globalization, privatization, globalization. So globalization, privatization, globalization, there was a need to bring reforms in this regard. Here, now moving on to the segment which is most relevant for this. And you see here also we have something called the preamble of the act. So why it came into existence, why it came to facilitate external trade and payment and to provide an orderly development and maintenance of foreign exchange market in India. So for that purpose will be okay. Clear? Orderly means so it means only those who are authorized can do it. Okay. First definition, who is an authorized person? Like we have seen that will be like authorized dealer, like that you will see certain boards and all. So to them only you can give your rupee and convert into foreign currency. It is possible only through them. So means any authorized dealer, money changer or offshore banking unit or any other person who is authorized by RBI for this purpose. Okay? Okay, so this is an authorized person. So one who is having the authorization from whom for the purpose of from RBI. For what? To deal, okay, money changer, offshore banking units for this purpose. Now, what is a capital account transaction? Capital account transaction is something which enters the assets and liabilities. So, this capital, okay, so this would enter the assets and liability, including contingent liability outside India of a person in India or person in India or in India or this person outside India. So, the person may be here, property may be outside, or a person may be outside, the property may be here. So just like that, it includes contingent liability also. Okay, next, currency. Currency includes currency notes, postal instruments, checks, draft, traveler's check, letters of credit, bills of exchange, promissory note, credit card, or any other similar instrument notified by other beneath for this purpose. For currency. Now, very basic. What is a capital account transaction? Any transaction other than a current account is a capital account transaction. And it includes payment for foreign trade. So for import, export, and other business or for services or for short-term banking credit. Then interest, remittance for living expense. So there will be questions with regard to this and expense for foreign travel, education, medical care of family to current account transaction. Now, moving on to the page around. Okay. So, who is a person resident in India? Person resident in India means he has stayed for more than 182 days during the preceding financial year. That is a person. So, in the previous financial year, if they stayed for more than 182 days, then you are a person. Now, let's say for the previous year, I have stayed for 182 days. But after that, I left India for employment or for stay for an uncertain period of time, then the residential status is changing. So till that time they are going to be the resident. After that they are going to be a person resident outside. So mark this point, they are going to revisit it again. Now, when is a company or a body corporate treated as a resident in India? When it is registered or incorporated in India, it is a resident in India. And if it is controlled by a person outside India, but if it is having any office or branch in India, then still it's treated as a resident in India. Then branch outside India, controlled from here, resident in India. So both the control and place in India, obviously resident. Control here, branch there, resident. Branch here, control there, still considered as a resident. Here, now, fine. We also saw this, so it's 182 days or more in the preceding financial year, also they are considered as a resident. Provided if they're going out, okay, and they're coming in India. So they're going out of India for employment for uncertain stage, then they are not considered as a person resident in India. When they're coming to India for uncertain stage, considered as a person resident in India only. Okay. Now, I'm seeing this. So, what are the provisions with regard to foreign exchange? So, you cannot deal with foreign exchange. So, blanket provision. Provided if it is dealt in or the transfer is to foreign exchange or foreign security and the person is not an authorized person, then it's prohibited. But through an authorized person, it is prohibited. Then making payment to a non-resident. No person shall make payment to or for the credit of person resident outside India other than through the authorized channel. Okay, you cannot receive, you cannot make payment also, you cannot receive payment also other than through the authorized payment. You cannot enter into financial transactions also other than through the authorized person and for the authorized means. So this is a perfect. Moving on. Okay. Another general proposition. A person resident in India, you cannot buy assets or cannot possess or you cannot transfer assets which are outside India. But you can do that when you will see why. When you had got that when you were in person who was outside India. So that relaxation we have. Right? So what is a current account transaction? We've seen now, all the current account transactions are permitted unless there is a specific prohibition with regard to the same. And all capital account transactions are prohibited unless they are specifically prohibited. So, what and all is prohibited? Let us see. Lottery winning, purchase of ticket, dividend remittance, callback of service, hobby income, export commission, rupee credit commission. Rupee credit commission means you're going to make the payment through rupee rather than through the foreign currency. So then interest income, all these are prohibited. And for which do you need special permission? So again, quite often tested place people. For the purpose of cultural tools, you should get the permission from the Ministry of HRT. For the purpose of advertisement in print media beyond 10,000 US dollars, you should get the permission from the Ministry of Finance. For the flight of vessel, Ministry of Surface Transport. Import through ocean, so again, Ministry of Surface Transport. Multimodal, so once through air, once through ship. Director General of Shipping Registration Certificate. Then hiring charges for transponders, TV or internet. So Ministry of Information Technology. Then container detention charges, again Ministry of Surface Transport. Prize money or sponsorship for sports is more than USD of 1 lakh. Ministry of Youth Affairs and Sports, you should get that. Membership on P&I clubs, what insurance with that. More than one insurance company will come to insure a particular ship or something. So Ministry of Finance with the insurance division, the permission should be obtained. take a pass, go through it, and then move. Now, moving on to the furthermore provisions. We have something called as liberalized remittance, which is up to a limit of 2,50,000 US dollars you can do without getting any prior permission of RBI. So, what and all you can do within that, you can do for private visit abroad, okay, but except for Nepal and Bhutan, for them it is gift and donation you can do within that particular limit. For employment, you can use. For immigration, you can use. For maintenance of close relative abroad, you can use like business travel, conference, medical travel, accompanying a patient, all these things you can do. For medical treatment abroad, also you can use within the limit of 2,50,000. For medical studies abroad, also you can use. For any other current account transaction, you can use. All right. Now, what is the limit? Certain other limitations also you have. You can do subject to this limit. Okay. If you want to make a donation in foreign currency, you can do up to 1% of foreign earnings or 5 million USD, whichever is lower within this limit. You can make a commission to agent abroad also you can pay. If you're going to purchase some asset in that, you can pay. So the limit is USD 25,000 or 5% of the inward remittance, whichever is lower. Okay. Consultancy remittance also you can do. It is 10 million for infra project and 1 million for consulting for the purpose of other project. Reimbursement of pre-incorporation expenses, 5% of investment or 1 lakh, whichever is lower. Okay. Now, who can get this LRS limit of 2,50,000 USD? Resident individuals, including minor, can get it. Firms, corporates, and HUF and trust, you cannot get it. Clear? Mm. Yeah, we will see this. RBA may also classify a particular instrument as a debt instrument, and they can also put a limit on that. And RBA cannot restrict foreign exchange drawal for loan amortization. They cannot restrict people tested ones. Okay, they cannot restrict the foreign exchange withdrawal for the purpose of loan amortization or depreciation. Also, they cannot restrict. But central government may prescribe how they can do the classification of the non-debt transaction or how they can fix the foreign exchange limit or related question. We already saw central government may from time to time. Okay, so we saw in the previous also interpretation structure. So like that they can do. So central government they can issue rules for non-debt instrument, and RBA they can make rules for mode and payment of such transaction. How we are going to make the payment. So for non-debt instrument, it's always a central government, and for the debt instrument, who's going to make the RBA is going to make the provisions with regard to. So I'm repeating: non-debt, central government; debt instrument, RBA will take care of it. Clear? Now, a person resident outside India, so is that outside India, he may hold, own, transfer, or invest in India, Indian currency, security, or any more property in India, if it was acquired or inherited when he was a resident in India. Okay, so his grandfather had this property inherited. He brought this when he was a resident in India. Now he is a non-resident, but he got it when he was a resident. Now he is selling it as he's a non-resident. Okay, possible, permissible. Okay, but the RBI may impose any restrictions also if he thinks so. Here, now moving on to the same. For a person resident outside India, what is all permitted? Investment in India, you can do. We are open to that. Contribution to the capital, yes, sir. Acquisition or transfer of immovable property, provided you got it when you are a resident in India. The guarantee you can give. Import of currency note, yes, you can do. Deposits possible. Foreign currency account in India, non-resident external account like that and all we have. So from that you can make it. Remittances outside India of capital asset held in India. So asset in India, if you want to sell and remit it outside India, provided you are a resident when you acquired it. So that is possible. So when no restriction can be imposed with regard to amortization of loan and depreciation of direct investment, the government cannot put any restriction for the same. So again, we are going to revisit this point. And what a person resident outside India cannot do: chit fund business, not possible. Nidhi company, fully prohibited. Outside India, coming for agriculture plantations. This few fellow came many years back. You trade, agriculture, yeah, like that they entered. No, real estate business, not possible, but possible through township development, residential commercial project, roads, business, unit. Through that, it is possible. TDR, fully prohibited. Okay, like transfer development, right? So that also you cannot do. Then with the Kim Jong Un, you cannot enter into transaction because he is also not ready to do the same. Fine. So this is with key points with regard to FEMA people. We'll have a short break and then we'll start with the discussion of questions. All right, people. So chapter 1, we are going to start the discussion of questions. So it's going to be rapid. That will discuss the main points of the questions in here. So this company, they are finding that value of the one of the property has increased. Okay. Now what they are doing is that they want to add this to the free reserve. So what is free reserve? It is something which is available for distribution as dividend. So that is only called as a free reserve. Okay. So unrealistic thing. Okay. If you do not put effort, certain things are unrealistic. So, okay, those things will not be included in the previous. Unrealized gain, notional gain, revaluation of asset not included in the gain of free reserve, and change in carrying amount of asset or liability recognized. So that is also not included in the free reserve. Okay, because asset value changing, liability value changing, that is also not included here. Now, moving on. Second question. What is a financial statement? Financial statement includes okay, balance sheet, profit and loss, cash flow statement, statement of changes in equity, and explanatory note. Okay, but for one-person company, small company, and dormant company is not there. This cash flow statement need not be included. Question, but easily answered. So we are doing a crux revision of the questions, people. So key points when we are going to revise. Have your book, keep highlighting with me. Let's do the rapid revision. So who is a promoter? Section 2, subsection 69. So he's a person who's named as such as a promoter or has been identified. So named or identified or who's under control. So name or identified or who's under control. Okay. Then on whose directions and instruction the board is going to do. That's all. So on whose direction the board is going to do. Okay, we can tell in CD, okay, whose instructions the board is going to do, who's named as such, who's under control or the board of directors are going to function with this on whatever he tells us. It excludes a person who's acting in a professional capacity. So an auditor is who's guiding, who's there instrumental in the floating of the company. So he is not included in the definition of a promoter. So that is a point about him here. So he's an MBA and a CA. Okay. So he is not considered as a promoter because he's acting only in the professional capacity. That is question number 1. Now, what is the meaning of a related party? So you understand the question. So ABC having two subsidiary company D and D. Okay, so D and the E are there. So this company is that whether this D and the E will be treated as a related party? Yes. Okay, so this includes holding, subsidiary, and associate company. So these are the subsidiary of this parent company. So they are treated as a parent. Okay. Now, K Limited has so much of equity shares and they are fully subscribed. So the point with regard to this is that will the particular company be considered as a subsidiary? So let us read it once. K Limited is having 10,000 shares, okay, which are fully subscribed, and Kusha Limited holds 4,000 shares and P Limited holds 2,000 shares. So K is having 10,000 shares, out of which Kusha is having 4,000 shares and P is having 2,000 shares. So together they are going to have 60%. Okay. And Kapila is also holding 20% in Red Limited And Red Limited controls the composition of Usha and Prem. So Red Limited is controlling them, and in them they are having 20%. Okay, whether Kapila Limited can hold shares in Red Limited. So this is a case where we talk if the subsidiary can hold the shares in the holding company. Okay. So they can hold the shares in the holding company if it is having that relationship only after they started to hold. Okay. So first they were holding, then they become a subsidiary. So that is not a problem. So if the holding company is going to exercise control over the composition, you can tell that the holding relationship is going to be there. Or they control more than one half of the total voting power. So in both the cases, we can tell the holding subsidiary relationship is going to come to existence. And the subsidiary company cannot hold shares in the holding company, and any transfer with the holding company, subsidiary company to hold shares is void. But it can be that before it came into existence. So that is the point about here in this question people. So always people, what we will do is that when we start writing an answer, you will not start by writing the given case. So in this question, it is given that don't start like that. Okay? You write the provision, then you analyze, then you do the conclusion. So this is how you do. To write in the given case, no marks were there at that time. Okay, that we will not do. Clear? Now, so this company is having a paid up capital of 45 and a turnover of 185 lakhs. So will it be treated as a small company? What is the definition of a small company? The paid up capital does not exceed 10 crore and the turnover does not exceed 100 crore. Okay, but for this particular exam, the limit is 440. Okay, that we will take. Okay, and who cannot be a small company, and holding company cannot be called a small company. A subsidiary company cannot be a small company, and a section 8 company will not be a small company. And if they are governed under any special act, then they also will not be a small company for this purpose. Clear? Fine. So this is also seeing about the same thing. So if this company is a holding company or it is a subsidiary company or a section company, then the status of this company will not be given. Clear? And for again, we also know this that for a purpose of small company, you need not file what cash flow statement you need not file. So that is something which we also know. Then the same point is tested again. Now same thing. If it is a holding company, it cannot be treated. So here it is a subsidiary company of that company. Then it cannot be treated as a small company. Correct? Now, dormant company. What is the provision with regard to the dormant company? So a company is treated as a dormant company if it has not been actively doing the business. Okay. What is not actively doing the business? If they have been filing the returns, that is not treated as business. Then they have been paying the dues and all the company earns dues and all that is not treated as business. Okay, so that is one thing that we discussed. Okay. Now, question number 10. Now, this company was incorporated under the earlier act. So they are telling this company is also required to follow all the provisions of the Companies Act also. So very clearly the Companies Act that is that any company was incorporated in the earlier act. So the provisions are applicable in this regard. Clear? Now, XYZ is a public company, so we have to see if it is a public company. So let us read the question once and understand. So Cross Limited is a company incorporated under the erstwhile Companies Act of 1996, while XYZ Private Limited is a company registered under the Companies Act 2000. XYZ Private Limited issued 1 lakh convertible preference share carrying the right to vote of rupees 100 each and 10 lakh equity shares of rupees 10 each fully paid. Cross Limited is holding all the preference shares and 1 lakh equity shares. Examine whether it is a public company. So this company is a public company. Now we have to see if they are holding more than half of it. So a subsidiary to become a subsidiary of a public company. and a subsidiary of a public company is deemed to be a public company. So now we are comparing two different denominations. We are comparing the preference and along with the equity, and we are going to find that. So what is the total voting power here? Here they have given so it is 1 lakh preference shares. So we are going to put rupees 1 lakh carrying the right to vote. So they also having the right. So for that purpose, we are going to find the total voting right, and so we are including. And the equity share is 10 lakh of 100 people. Here it is not rupees, it is 1 lakh of 100. Okay. So 1 lakh of 100 and 10 lakh of 10. So total voting power comes to about 2 crore. 2 crore means 2.7 zeros. A foundation student was thinking for a minute. So crore means 7 zeros. Okay, right? Now, what is the total voting power? So we have to check if they are holding more than 100%. So given that they are holding almost like all the preference shares, so that's it, we can tell they are crossing half of it. So a subsidiary of a public company is also deemed to be a public company. Now, what is the government company? So with regard to the government company, we know that it is partly held, half of it is held by the central government or with regard to the state government, or partly by one central government and one state government or among the state governments. Okay. And with regard to the company with voting right, it's to be considered as 50% of the voting right. Now, the holding of 25% of the shares by AMC. So they're only holding 25%. So we want more than 50%. So in this regard, this is not considered as a government company. Instead, it's a non-government company only. And in this case, the auditors will be appointed by the board at the AGM, and CN agent is not going to come, because we know that the auditor of the company is going to appoint by the CN AG. Clear? Now, here, let's go to the question and understand first. So the company has a following count of people. So there are 20 people, then 15 employees. Ex-employees were allotted shares during employment. So when they were employees, they had the shares. Okay. Will they be included in the count? No. Members are holding joint. So 10 shares are sold by 2 people. So they will be considered as 1 people. Okay. And other members. So totally how many people we have? So we are having 20. We are having employees. Will they be included? No. Then other members, so we are having 20, then employees will not be included. Ex-employees, when they had the shares, when they were in the employment, not included. Then these people will be treated as only 10 people, all of them having two. It's not two, it is two bodies of one soul, like that, and 150 people. So totally we have 180 people, which is within the limit of 200. So they are not having any more members, they are having less members, because we know that in case of a private company, we can have maximum 200 members. And 2 or more people who are holding shares will be considered jointly. And those who are in employment will not be included. And formerly in employment, now not clear. Very, very easy, people. Now, what is not treated as a listed company? Right? If they are not having their equity listed, but they are having their non-convertible debt securities issued on a private basis. Okay, or non-convertible redeemable preference shares issued on a private basis. Then even though if you list all these things, you will not be considered as a listed company. Okay, and the same thing, no? Yeah. Fine. This is with regard to public company, and the same thing for the private company also. Fine. And public company which have not list their equity, but any other share as to be listed. So we have given that case. So we'll do a sum of this again. Public company having non-convertible debt security or non-convertible redeemable preference shares, both on a private basis. You see a private company, we are only talking about non-convertible debt security on a private placement basis. All right, people. Now the same. Okay, now this question, They are having K limited. They have listed redeemable non-convertible preference shares. This is a public company, so this is not considered as a listed entity. And I limited, it's also a private public company. Non-convertible debt security. So again, it is not considered a listed company. Then private limited, they have listed non-convertible debt security. So the section is not talking about preference, it's talking about debt. So in this case also it is not considered as a listed. Now moving on to the next one. So these people, they are holding two-thirds, they can have power to appoint two-thirds of the directors. So considered as a subsidiary. They are holding 60%, so they are considered as a subsidiary. But here they are holding 52% of the equity as a trustee. So not considered as a subsidiary. Clear? And now with regard to the nominee details. So Raja formed the OPC with his brother King as its nominee. And Mr. King withdrew his consent as a nominee. So can a person withdraw a consent? Yeah, he can withdraw a consent. Can a person be a member of two OPC? No, you cannot be a member. Can he be a nominee of two? No, you cannot be a nominee of two. But a member of one and a nominee of one, it is allowed. And if you become a member in the other, you will have to withdraw and reside within a period of 180 days. Clear? And also a minor is not eligible. Okay, only an Indian citizen can be a nominee. Clear? And the who's presently a member in another OPC can he be a nominee and he can be a nominee. If he becomes a member in both, he will have to reside within the 180 days. Okay, then OPC will not hold an annual general meeting and it will be signed with the sole director. So this is also so only a natural person can be a nominee, corporate, any other form cannot be a nominee. Here, minor cannot be. Only an Indian citizen, whether resident in India or otherwise, can incorporate one person company. Okay. So a nominee can even withdraw their consent and we can appoint another person as a nominee. So within a period of 15 days of the withdrawal, we have to appoint a new nominee. Okay, in form INC for very urgent matter. So that do within a period of 15 days in form INC 4. Okay. And because you're changing the name of the nominee, it doesn't mean that you are altering the memorandum, because memorandum only we are going to have the nominee clause. You're changing the nominee doesn't mean that you're changing the memorandum. Okay, fine. Moving on. Okay, so previously this version was given and now it is not given, so it is not required to mandatorily convert. Okay. So that provision has been removed. If you want, you can do voluntarily, you can change it to another type of voluntarily change it to private or a public company, not mandatory if your process threshold. That provision has been done away with. Okay, now again, so this is testing about who is eligible to act as a member of OPC. Only a natural person who is not any minor and who is not a nominee in other place, he can become a nominee here. Now, is not required to mandatory convert. So that provision was done away with that. With regard to one person company, the annual return must be filed in form MGP 7A. So for a one person company, annual return should be filed in form MGP 7A. Okay. And the sole director will be signed. So that's the crux solution for chapter number 1. We'll have a short break and we'll go on to chapter number 2. So let's move on to the provisions with regard to chapter number 2, the rapid revision. So now what is happening here is that some fishy thing they did, and now our Thala, the tribunal is interfering. So what they can do? So firstly they will try to correct it, right? They will try to regulate the management. Okay, so I also gave a funny incident, funny anecdote, a story wise with regard to it. Please revisit the original revision point and then we will come to this interview. they will try to regulate. Otherwise, what they do, they will cut our pocket money. No? So like that, they will do the unlimited liability. So you as a manage no pocket money. Okay, then if not, they will remove the name, or they can also do winding up or whatever they think our parents will do. They'll try to correct us or whatever they think they will do. So that is possible. Okay, so we'll have 7 on unlimited and 2 and 200 if it is following below 6 and the system is carried for more than 6 months, then whatever liability incurred for that period, so they will have an unlimited liability. Yeah, so that is more that question. So, can we change the registered office? So that is a question. So outside the local limit of one town or city to another in the same state. Okay, same state but different place. Chennai, Coimbatore, like that. Okay, so in that case, a city in the same state may take place by virtue of special resolution within the local limit of the same state. So from one hand to another hand, only sorry, valid authority of the board resolution alone is done. It is valid. Okay, when it's shifted from Thane to Dadar, so one district to another district, so you have to get the permission of what you have to do is you have to pass a special resolution, RD not required. But if you want to stay in the same state, so within that region only, from left hand to right hand you're changing. So you have to pass a new resolution. That amount is enough. Okay. Now, next question is regard to the identical name. What will happen if the company is having an identical name? So, for the opinion of the central government, it is identical. Then they will tell that with an ordinary resolution, change the name within a period of 3 months. Okay, chup chop, I think in 3 months you should change the name. And if any trademark or owner of registered trademarks telling that it is identical, and if the owner of the trademark applies to the central government within 3 years of incorporation of the company, then also they will ask us to change with an ordinary resolution for the period of 3 months. Should charge, you don't change it. Okay. And the company can do it anytime by passing a special resolution and taking the approval of the city. They can change it themselves. Okay. If the owner of the trademark is requesting and the company is accepting the same, they can do it voluntarily. Now, moving on to the next one. Same thing. If it is identical, or nearly resembles, then they can change on their own, or any application is made by the proprietor and they are approaching us. Application should be made within a period of 3 years of incorporation or registration of the name of the company, and within 3 months we should change. Okay, so that is a point here. And we know about the indoor management and the document of constructive notice. This is a question past examination. What are the exemptions of document of indoor management? So you are supposed to be aware of it. Okay, that is constructive notice. Indoor management, not everything internal we can. Okay, but if we have the knowledge of irregularity, okay, you already know it, or it is due to the negligence that you're not able to find. Simple process you could have find it. Forgery, not possible to take shelter in the indoor management. Agency, not possible to take shelter in the indoor management. And the act is done is not merely an ultra virus, but it is an ultra virus of the company itself. So beyond the director's power, within the company's power, no problem. Beyond AOE, within AOE, but beyond the company's power itself, then it is not possible. So you're entering a contract with Kim Jong Un, okay, so that itself is not possible. So just like that, okay, fine. Moving on to the next one. Now, entrenchment provision means making things difficult. Okay? So, like you cannot pass only, you can pass it only if there is 100% unanimous resolution. So that is something called entrenchment provision. So articles may have an entrenchment provision. Like it can be added only if more people are agreeing to it. Okay, right? So when you can include an entrenchment provision, can be at the formation of the company or the time of by amending the article you can do it. And whenever you make an entrenchment provision, you have to give notice to the ROC in this regard. Clear? And it can be done by passing a special resolution, taking the permission of all the members, and notice to the ROC regarding the entrenchment provision is also to be given. Clear? And with regard to the subsidiary company holding shares in the holding company, they cannot do, but they can do when they are a trustee, or if they started to hold it before the relationship came into existence, or they are holding as just a beneficial, or they are just holding it without any beneficial ownership. All right, so that is trustee, or they are holding as a legal representative. Okay, so that is the other point. Now, we should check the date on which it was acquired and date on which they became a subsidiary for this particular question period. So the same point is tested. So how many times the question was asked? Okay, now we'll see here. Okay. Now, yes Limited acquired 10% shares of the on this date. Okay. H Limited acquired 55% shares on this date. So later only they are acquiring. So earlier what they acquired is not a problem. Clear? So after that, if they're doing, then it becomes void. So before it does, before you have got the shares, it is not void. Okay. And bonus is allotted, okay, to the existing shareholders in proportion to the share. Again, bonus shares is not a fresh issue. So previously, the subsidiary company was holding in the holding company. Understand? Previously, the subsidiary company was holding in the holding company. Now they gave bonus share. Bonus share is not a fresh thing. Okay? Already because they had their, you cannot tell for you should not give so like that. You cannot deny it to them. So for that purpose, the bonus shares is allowed. Now, so how do we become a subsidiary when there is a control over the composition also, or more than 50% holding is also treated as a subsidiary? When can they revoke the license of a section 8 company? When they are contravening the provisions, or when they are doing fraudulently, or then when they are violating or prejudicial to the public interest. In that cases, we can deny the license for a section 8 company. So how and all they will do it, either they will cancel it, or they will merge with another section company, or they will wind up all these things again. But before doing that, they will be given ROBH, reasonable opportunity of being cured. They will give. Yeah. So they could be amalgamated with another section 8 company having the similar objective. Okay, so that is also possible. The firm may be a member of a company registered under section 8 company. So firm can also be a member. Okay, a firm may be a member of a company registered under section 8. Okay? And you cannot alter the MOA or EOA without the prior approval of the ROC. So that is also not possible. Okay. Now, the decision of the, so what is happening here? A group of people, they are trying to form a budding pilot private club. Okay, and they are telling that we will form for a period of 10 years only. After that, whatever is that, we will distribute among us. So this is not a proper one. This proposal is not valid. They cannot form a section company like this. Telling that they later they will distribute. So what is a section company? The question is most often tested. So the compiler is designed in such a way that the repeated questions are clubbed so that you don't see it too bulky, but the quite often tested scenarios are given in a very close manner. So what is a section company? It is formed for purpose of promotion of commerce, arts, science, sports, education, research, social welfare, religion, charity, protection of environment. Okay, and payment of dividend prohibited. Payment of dividend prohibited. Okay, and if the license is revoked, what they can do, they can amalgamate with another section company also. Fine, but it should be having a similar objective. If it is not a similar objective, then it cannot. You cannot amalgamate different and not similar. You cannot amalgamate for this purpose. Clear? And approval for the name. So once the name is allotted, it is open for the period of 20 days. Okay. And once it is finalized within period of 30 days, you have to send it to the ROC and the incorporation certificate issued in form INC 22. Then section 10A is telling that in form 20A, you should tell within a period of 180 days. Okay, you have to tell within a period of 180 days that you have complied with the, so must file a declaration of commencement of the business within 180 days of incorporation. So you should tell that we have started the business within 180 days, and you should also tell that we have complied with all the rules and regulations. Okay, right. So the reserve name will be valid for a period of 20 days, and you can also extend it that payment slab will see. So once the registration is done, that is like a conclusive proof. So the body corporate will come into existence as a separate legal entity and corporation succession also. Yeah. So what are the documents that is required to be filed? Is filed the form is INC 32 and INC 33 and INC 34, that is MOA and AOA is to file. And this plays a positive step because the subscriber is an illiterate thumb impression. Then someone would have written the name and address for this behalf. So that person should also sign. If it is a body corporate, then the director or the officer in charge. If it's an LLP, then by the partner who is designated for that. If it's a foreign national, then we should have the signature of the notary public along with his signature and address also. Here, so Robert is a foreign national outside India. So only with having a business visa, he will be allowed to enter as a first subscriber. Then, and with the notary public also should notarize that. The illiterate person, so the thumb impression should be keep, but the person who is writing for him, he will also be entitled to sign. Okay, for an LLP, whoever authorized, not designated, who's authorized will sign it up. With a private limited also, either the director or the officer who's authorized on his behalf, they can sign and take the shares. Okay, whenever we talk about the delivery of the document, it should be in the registered post, speed post, or through courier service. It can be, or can be either left at the registered office, or in such manner it may be prescribed, it can be done. So courier is possible. Okay. Whereas the MOA said that the company provide documents will be served only to the speed post. So they're telling that only to the speed post only we are accepting that. Yeah, and he's saying we will not accept it through any other thing. And can they do that? Yeah, they can do that because the act tells we can get it by such means also. So that's not like only through that if you tell we can you can send it to the company like that. But opposite, not contrary, opposite. If the person tells, I want to receive the AGM only by courier, okay, company can send. Provided the person has deposited the relevant expense for that, then the company will send it through that. Okay, company cannot tell you should send this only through this. But for the AGM, if the member wants to that particular code, then the member can request that. Clear? So how and all the document can be served on a company by way of registered post, speed post, or courier service, or by leaving it at the registered office. This means it is possible. People, I hope you are having your book along with me and are marking the key pointers. Now we are going to the next chapter, chapter number 3, prospectus. So what is a prospectus? So what is about the contents of the memorandum of prospectus? So you tell the objective and then the liability of the members, how much it is, what is the share capital, name of the subsidiaries, number of shares by the capital structure of the company, all these things you can keep. And now what is a shelf prospectus? So we keep the mission, take it up. Okay, and this will contain something called an information memorandum. So what are the information memorandum? Charges, changes. So no charges created, any changes or uh, any other changes as they have happened will be contained in the information memorandum. Okay, fine. Now, if the prospectus is misleading, so the next question, the prospectus is misleading or there's any loss or damage, then based on the misleading, the misstatement contains the expert will not be liable, which case he has given his consent, but he has withdrawn his consent in writing, okay, before delivery of it to the before delivery of the copy for registration to the ROC, he should have withdrawn it in writing before delivery of the copy. Okay, and I can tell that without his knowledge, they have issued. Then in that case, was able to show that he has tried and made effort to showcase that this statement also can be relieved of its liability. Now, Now, if at all we are not relying on that particular prospectus and we are just relying on something else, and later you cannot tell this prospectus mistake, so it should be connected with this. So that's the point. Okay. Okay. And this will be signed and dated also. So that is one main thing. So as on that date, this position was set. As on this date, with regard to the market situation, I am giving my consent. So like that and all. Okay. With regard to the shelf prospectus and named prospectus, shelf prospectus and named prospectus for a certain, for one or more issue over a certain period of time, they have to use that. For how many years, for what period it is available, date of opening of the first prospectus. So once the offer is open, from the first date of opening of the first issue, for a period of 1 year, it will be valid. Clear? Fine. So no further prospectus issue, but you should have an information. And you have to pay an application fee, which is equal to 5% of the nominal amount of the security has to be paid as an application fee. And if it is not collected, so fine is 5 lakh or 50 lakh for every officer. Okay, so 5% it has to be got, or 5 lakh or 50 lakh for the company. For every officer, it is 1 year imprisonment and 50,000 to 3 lakh. This is the penalty for the officer. Company, if you don't take 5%, 5 lakh or 50 lakh. So the members, it is 50,000, 3 lakh or both. Fine. Now, moving on to the point where we talk about so here we are going to talk about deemed prospectus. So what is a deemed prospectus? So the company is allotting or agreeing to allot. Okay. Then any share, any document which offers sale. So this is an advertisement having the offer for sale. So that is deemed prospectus for the company. When, so it's an interesting question that you ask. So people have doubt when in class. Right. When is this not considered as a deep prospectus? So let us read and understand. Right? If it is made within 6 months after allotment, okay, so offer for security is made within 6 months after the allotment, and it is signed by not less than 50% of the prospect. So wait, we'll do this question one more time so that the issue is sorted out. Yeah. Yes, Bookmark Limited is planning to raise 10 crore to fund the upcoming project. So yes has assigned two different merchants, namely ZFG and Bull Investment Limited, to act as an intermediary for 60% of the fund, and the rest is directly issued to Kuber and investment bankers. So uh, there are two merchant bankers and then there's one investment banker. Okay, so who intend to offer the shares for offer for sale through public. So this is what we're talking about. Okay, then ZFG is a partnership firm and the allotted equity shares worth rupees 4 crore and sold them to the retail investor. Bull Investment Limited, a company by incorporation, are allotted equity shares of 2 crore for the above purpose also, as well on the same date. Okay. So all these people are allotted shares. So in the offer document issued by ZFG and Bull Investment, on this date the offer document was sent. So what is the point about it? Whether the offer for sale is valid by law. Yeah. Here, what is the timeline? Let's check. So here when they are making on 1/4/2024. Here, here offer document is issued by them on 10/10 and here it is issued on 25/9/2024. All right. Reading the provision once and then going up people. So that is deemed, it's told as a deemed prospectus because when you are giving for offer for sale is also deemed prospectus. Now, when it is made within 6 months after the allotment or the earlier allotment. So we have to check the time limit and that at the date when the offer for made, the whole consideration to be received is not received and it is less than 50 percentage. So in that case, so what how much here they have got? First we will see ZFG Associate and Bull Limited, the two merchant bankers were allotted shares. Yes. On the same day, that is on this date, ZFG Associate issued the offer document. And on this date, beyond Bull issue of Bull, they gave the offer document. So here on this date they were allotted and here they are giving the offer document. Clear? So which is clearly here it is within the period of 6 months. And they have both paid the full consideration. Have they both paid the full consideration? Full consideration they have paid in this regard also. Right? Then it is signed by only one director. Okay. But in case of here it will have to be signed by two directors. Yeah. Now, but for offer for sale to ZFG is not in compliance. It is issued beyond the period of 10, beyond the period of 6 months. So here it is within the period of 6 months, but here it is beyond the period of 6 months, right? And here also it is not valid because it has to be signed by two directors. So for this purpose, whatever objection we have, right, is valid. So people, so one date, but from that two branches are going to check which is beyond 6 months and which is beyond 2 months. So past examination question, people at the class took some time to understand. Now, next question, right? If at all you see there is a misstatement in the prospectus, so can you get the damages and claims with regard to that? Yes, you can. But when it is not available in case of subsequent purchase in the market, so this is not available. So you can only cancel and get the benefits. You can get the damages if your purchase is related to that prospectus. Secondary market you buy, it's not available for the sale. Okay. Nowadays, every company making public issue shall issue only the demat format. So it's a normal provision. So what is an abridged prospectus? So which has all the essential features of a prospectus. There is an abridged prospectus, and every application form should also have an abridged prospectus. But you need not have it if it is only for underwriting and it is not issued to the public. So the underwriters only are not going to, so it is not required to have it. Clear? Clear. Okay. So if at all you have got the money from the public and you want to change the purpose for which you are going to apply for that, and the objective of the prospectus is going to change, that can be done only by way of special resolution passed through posted ballot. Okay, and you should give it ad, give an ad in the newspaper also. One in English and one in the vernacular language. You should give it. And if any of the shareholders not agree to it, he's called as a dissenting shareholder and they will be given an exit option. So where it should be passed, it should be passed through the postal ballot. Okay, it has to be passed to the postal ballot. Here they have given an EGM, okay, and newspaper also is required to be advertised. So if you want to change the terms of the contract or the object, then you have to pass a special resolution. And you cannot use the money for buying, trading, or otherwise dealing with equity shares of the listed company. So you will buy, you will get the money from them, and you will share trading. So that is not possible. So that's an investment proposal is not possible. So the prospectus must contain true and correct information only, and any material fact that is omitted, then it will be misleading by omission. So that is not possible. Right? And if the dividend is not paid and you have not disclosed that, then it is again a misstatement and there is a omission. So it is like a misstatement in the prospectus. You are So what penalty is that? 34 and 33. 34 is criminal punishment, 35 is civil punishment for both the directors. It is and the directors cannot escape that. So what you can tell that it was made without our knowledge, and as an expert before registering and to the ROC, I have withdrawn my consultant writings. Okay. So what and all disclosure you have to make in the prospectus that you have delivered to the ROC, like that you should tell. Then every statement is that is also every referred documents are also annexed with that. You should mention that. And the expert should tell prospector should not include any statement purporting to be made by expert. If he is interested, then the person cannot make it. If the expert has not given a written consent, then cannot issue it. If he has withdrawn the consent, then the consent is non-existent. Okay, so that prospectus should not contain the expert statement because it has withdrawn. It should also be dated. Here, no. So what is the red herring prospectus which doesn't have Q's and P's? The price and the quantity will not be included here. But okay, fine. But it should be filed at least 3 days prior to the opening of the subscription, and once the final prospectus will also be filed. Once you have fixed up what price you are going to do, and everything you have to file it also. Like any differences and variation between the recognized prospectus, the final prospectus should also be highlighted. What is a private placement? So other than by public offer, you are going to issue shares only to a selected group of not more than 200. Who will select these people? The board will select, and you can go for private placement only if the previously it has been completed or abandoned. So the previous process should have been completed, withdrawn, or abandoned. You can take it for the next private placement. And here also you should allow the securities within 60 days of the receipt, and if not within a period of 50 days, you have to refund. If not, you are liable to pay interest from the expiry of the 60th day. I mean 16th day. So from the after the expiry of 15th day from the 16th day. But in case of normal allotment, it is 15% after the expiry of the 15 days. Okay. Right? And allotment to QIB and employees under employee stock option plan is not included. Right? Same thing. 60 days, then 15 days, you should give it back to them, or you have to pay an interest of 12%. It will have to be kept in a separate bank account, and you cannot utilize for adjustment against allotment or repayment of money when the company is unable to allow the share. So once it is not received, then minimum subscription not received, you have to pay it back. Okay, or you have to allot, or you have to pay it, right? And application money I got can be used for payment of it. You cannot. Okay. So 20 people are getting under the employee stock option plan, so they are not included for this program. And debentures these are included. So 150 people and 10. So total we have 160 people. So we are closing 200 people, right? So this identified people will be identified by the board by passing a special resolution. It is subject to the maximum of 200 people. It can be done. So only to the selected group of people not exceeding 200. So employee stock option plan not included. People are not included. Qualified institutional buyers not included. So company is having another private placement or offer of debentures. So you will have to close that and then you only will have to go for the new private placement. Otherwise, it will be treated as a public offer. Yeah. People, this is a rapid revision for the question, which you can do a day before the exam, or once you are thoroughly done with the revision of the provisions, at least twice. Only then will you be able to keep up with the speed. Clear? So this could be very useful when you do that last minute revision. So you can just quickly run through the provisions. Clear? Right? Okay, fine. So one SR in a year for all the private placement invitation is enough. Right? So one SR is enough and 60, 15, 12% for private placement. So that is chapter number 3. Now moving on to chapter number 4. Okay, can a company get a call in advance? Yeah, only if the AOA authorizes for the same. Right? Should I pay extra dividend? So no, we cannot pay extra dividend for the same. So if it is authorized by the AOA, then they can accept calls, but for that you cannot pay dividend and all, right? Now this point, right, can accept a remaining amount not called. Okay, that has not been called. Okay, so that is calls in advance. A company, if authorized by the article, pay dividend in proportion to the amount paid up. So normally every shareholder should get it equal. So crux point people, but if it is authorized, they may pay in proportion to the amount paid up. Okay. Now interest may be paid on calls in advance. Clear? Rate of interest is as permitted by the AOA. Right now, so this is where I want to stress. This is very important point. So we can get the interest if it is authorized by the articles. So that is one. Now, with regard to the buyback. So after the buyback is over, the debt equity ratio shall not exceed 2:1, but it may exceed 2:1 if the central government is authorized for specific type of company. And now some numerical issues problem is given. Please go do it from your side. And resolution is to be board can authorize for the same. Clear? So you have to find what is the post debt equity ratio. So for that purpose, what and all you will see paid up capital plus free reserve. You will find that. Then we will compare it with our debt. What is our debt amount after 5? So it is 1275. So debt is 1275, and after buyback, what is our equity? We will find that, and we will see how the ratio is 0.0661 is the ratio. Also, we know one thing that the buyback is going to be less than 10 percentage of the paid up share capital and equity. Then we will not have any higher procedures. You can very well go ahead with the board resolution itself. Okay. So 10 percentage, yes, you can do that. So buyback can be done with only free reserve securities premium and proceeds of legal reserves. It is less than 10 percentage. Board resolution is enough. But only maximum of 26, 25 percentage we have not buyback more than that. So 15 to 25% you have to get the permission from the shareholders and you have to pass a special resolution also. Right? So 10 percentage board resolution is enough. If it is up to 25 percentage, SR is required to be passed. Clear? Once you have made a buyback, the next buyback should not be within a period of 1 year. So 2 times you should not buy back the same year. Okay, and the buyback shares within a 6 months of time, you shouldn't allot the same shares of the same class. Yeah, so that is a restriction. So offer for buyback shall not be made within 6 months from the date of receipt of offer for buyback. So 1 year, within a year, it should not be done. Okay. Now, you can give a loan to the employee and for the purpose of buying the shares, and the amount of loan shall not exceed 6 months of salary, and it must be extended for the purpose of buying fully paid up shares. Okay. So 6 months of salary is a clear. So 6 months of 40,000 is the limit. 6 into 40,000 is the limit. So less than 10% we are going to the goal resolution, up to 100% you can get. Then that we are going to do with an SR. Hmm. So not exceeding 6 months of average salary, they can give us a loan for buying back. Okay. So what type of company can grant such a loan? So a public company cannot do that directly or indirectly for the purpose of purchase or subscription of any shares in that company or a holding company. Clear? So here, let me take through the provision. So public company shall not do. Okay. So private company can do. A subsidiary of a public company is also not eligible to do that. So for that purpose, we have to see how much holding is there is already controlled. Please check these two conditions and then follow the same procedure. Mhm. So 5 months salary they are giving, but you check what type of company it is. It is given as full forward proof limited is given. Yeah, so a public company cannot do the same. And they can view it up to a value of 5% of the aggregate paid up capital. So up to 5% of the paid up capital, they can give us loan for the purpose of no to get up to 5% of the paid up capital, they can give a loan. Okay, fine. So that is a cap for the paid up capital. And the amount of loan they can give for each employee is 6 months salary, and the public company cannot do the same. Fine. Going to the next correspondent. And for what purpose you can issue the securities premium? For issue of unissued shares. Okay, writing off of preliminary expenses, writing off of expenses, providing for premium payable on redemption, purchase of own shares that you can use. So for writing up, for writing off, you can use. For advertisement expense write-off, you cannot use. Bonus, bonus, yes, you can use. Then premium on redemption, valid interim dividend, you cannot issue this amount. Okay, advertisement is not treated as a preliminary expenses, and our securities premium is also not treated as a free reserve. Okay, it's a capital reserve and it should be kept in a separate bank account for the designated purpose. Bonus shares will be of free reserve, security premium, or capital reduction, and you cannot issue bonus share by capital out of the revaluation of assets. Firstly, we have the condition 2A, B, C, D. So authorized by the articles, and there should be good boy condition should be satisfied. There's no default, redemption, repayment for the employee statutory dues, all those things we have seen. So there should be no default with regard to the same. And to see how much amount is eligible. So you have pre-reserve securities premium, you have capital redemption reserve. So totally you have 12. Revaluation reserve is not possible, right? And you want to issue 1:3, which means you want to issue, you will need 10 lakh for the same and you have 1 lakh. So no problem, you can do. Okay. So what and all is available. So how much amount of bonus you're going to do? 1:4. So how much profit you're going to capitalize, and from there you can capitalize it. You can see. So only if the article is authorized, then you can. No default is redemption, repayment, employee statutory dues, all those things you have seen. Fine. Now, if the company is unable to redeem the preference share, the redeem also not happening, payment of dividend is also not happening. And what happened with the consent of 3/4 of the uh, preference shareholders, what they are going to do? Their approval for the further redeemable preference shares. So now can a company redeem from which and all they can redeem out of the profit? Fresh issue they can give and then they can keep. So already we did the dance for the same also. From what you have in the capital redemption reserve also you can redeem, right? So you have to mandatorily create a capital redemption reserve out of the profit of the reserve, and it can be redeemed within a period of 10 years. Okay, then after the expiry of, so maximum 20 years and expiry of 10 20th year, 10%, 10%, right? Now you will see this question. To prevent excessive concentration of capital among a group of shareholders, specify what you can do. Okay? So few people having control over that. So what you should do? The Act places specific restriction on the total voting power that can be assigned to differential voting. So one share, 10 vote, like that, they should not do. So for the purpose, we have to see the financial statements and the annual return are filed for the last 3 financial years also done. Then approval of the shareholder should have got the purpose of issuing the special differential voting. Profitability shall have. Otherwise, no dividend would have been paid, and we have more right for less dividend grant. All those things could be happening. No default in payment of dividend interest. Share certificate is issued under a common seal. It should be signed by 2 directors and the 1 director and the company secretary. It should be signed by them. And fine. If it is a forged, it is a null transfer. So it is not a proper transfer. You can't get any benefit to that. Yeah. With regard to the sweat equity share, can a startup company issue sweat equity share? Yes, very much possible. And up to 50% of the paid up capital, you can issue the sweat equity shares. Clear? But there is a lock-in period for this sweat equity shares. We put this 3 years from the date of allotment. Okay? So you cannot tell we need to have more lock-in period with the lock-in period that there is. Shares cannot be issued under this code except for the specific shares and the employee stock option plan. So that is we are aware of. Right. So to issue sweat equity share, first we need to have an authorization by this SR, and there's also lock-in period of 3 years. And for a startup, it cannot exceed 10% of the paid up capital. So only for 10 years. Yes, so 10-year-old is startup. Within that, afterwards, there will be a normal. Fine. So in that resolution, what and all you will tell first share. So in that special resolution, you will tell what is the current market price, how much you are going to get from them, and what class of share you are going to issue. So all these things must be mentioned. And up to 15% of the existing paid up share capital or 5 crores. So this is the maximum. Beyond this, you cannot give me sweat equity share. And they will also rank pari passu with other equity share. They will also be treated as a normal equity shareholder only. Clear? Now, who can be appointed as a debenture trustee and who cannot be appointed as a debenture trustee? So we're already holding shares, we cannot, okay. And so if you are getting remuneration from the company other than as a debenture trustee, then also you cannot be appointed. Then so creditor, so you are I am the creditor, the company is owing me some, so then also you can be appointed. Guarantee is given, not appointed. And putting an advantageous stake in that, okay, 10%, and they're having pecuniary relationship. So these are also not, they're also not eligible. Right? Can a company reduce a share capital? How and how they can reduce it? They can extinguish or reduce a liability, they reduce the liability, or any paid up value they can tell, okay, don't pay it, or any unpaid value they can tell, don't pay that. So all these things they can do, or they can even pay off whatever was paid. So all these ways they can reduce the liability. So once it is done, within 30 days they will have to inform the RFC and we will make an alteration in the right. Thank So transfer and transmission. So once transfer, so when the transfer is done, in case of a private company limited by share that refuses to register the transfer, then they should tell why. Within a period of 30 days, they should tell why. And if there is something wrong and for what purpose they are refusing, then within the period of 30 days, within a period of 60 days of intimation, you can go and appeal to the tribunal. So within 30 days, they should register, okay. And if the company is not registering, they will send a notice of refusal, okay. And within 30 days you will have to appeal to the tribunal. Within 30 days of them telling no, you will have to appeal to the tribunal. And within 60 days, if they are not sending an intimation, within 60 days then you can go and appeal. So within 30 more days, that is 60 days on which you send the intimation. 30 plus 30. Clear? Yes. We will have short 2-minute break and then we now people. So whenever we want to vary that class right, so how they can change the right. So for that, people who are the holders of not less than 75%, more than that, they must give their consent in writing, okay, or pass an SR, sanction the variation, the separate clause. So when the separate meeting is held only for them, they'll have to pass a special resolution for that purpose. And holders of not less than 10%, if 1/10 of the member feel that they are violated, then for that purpose they can go and approach the NCLT. Clear? Now, so once they are going and approaching the NCLT, they have to wait for what the NCLT tells, and only after whatever is confirmed in the NCLT that will be binding. Clear? So it is 75% of them, at least 75% of them should agree. And if they're not happy, then there is 10% of them can go and approach the NCLT. Clear? Then so how they can reduce a share? How they can reduce? They can either cancel, okay, cancel the unsubscribed, okay. Wait. So they can either cancel the which is paid, or they can repay it back. But now, whatever was not unsubscribed, so they're only telling that not subscribed portion itself. So who cares about the not subscribed portion itself? So for that, adult tribunal is no action is not written, because the subscribed portion I'm going to give back, I should have to worry. Nobody's calling a page. Why should they cancel? Why should they? So that's a point about it. So like this, could be tested in MCQ people. and they will give the taste of ICA. Okay, so how the alteration can happen? It can be either by increase, consolidate, divide, or convert them, or subdivide them, or cancel whatever has not been taken up, and this way they can reduce the capital. Okay. Okay. So now with regard to the this is so that's a good chapter number 4, people. So now moving on to chapter number 5, which is acceptance of deposits. So first question is what and all is not treated. So any amount which is received from an employee and it is within his annual salary and for even is not interest bearing, it is not considered as a deposit. Any amount which is from a director and he's telling that this is from my money, from my own money, then it is given, it is given a declaration that it is not from the borrowed fund, then it is not treated as a deposit. And amount which is given by the promoters, okay, telling that as a if the financial institution is also lending, but equivalent to that we will also give. So till the time of repayment of the original loan, it is not treated as a deposit. Okay, for a startup which is more than 20 lakh in a single tranche, one shot, then it will not be treated as deposit. So these are not treated as a deposit. Yeah, and it should be convert. It should be like later. It should be on in a converted into equity shares. Okay, then it is not treated as a deposit. Yeah. Then amount received as a loan or facility from a banking company is not treated as a deposit because there are separate governing norms for their purpose. Now here, non-convertible debenture, not constituting a charge on the asset of a company and listed on a regulated stock exchange and regulated by SEBI. So this is not considered as a deposit. Okay. Now here, he has given so much amount and his annual salary is only this much. So it's above the annual salary. So in that case, it is treated as a deposit. Now, so if at all we are not repaying that money within a period of 15 days, then in that case also it is treated as a deposit. Alright. Here, what is happening is that 60 days is ending on this date. Right? What they're doing is that they're adjusting that amount for another amount. So cannot be treated as a refund. Okay? So they are adjusting it out against some other amount. So it cannot be considered as a refund. So the director will have to give a declaration writing that it is only from his own fund and not being a borrowing. Okay? So I can borrow and give it to the company, not like that. Yeah. It is it's only as a gift out of gift of it. It is not really as a deposit. Now, non-convertible debenture not constituting a charge and regulated by SEBI is not treated as a deposit. Now, promoter giving them to match with the bank, so they'll have something called the loan covenant. So they'll have to match with certain amount. So that is not considered as a bank. So till the loan is repaid to the bank, it is not considered as a deposit. The loan itself is not there for the bank. This is considered as a deposit. Okay, fine. Okay, maximum amount of deposit that they can get from the members is up to 10%. Maximum they can get from the non-members is 25%. Here, just a simple movement to some. Okay. Who can get the deposit. Public company, net worth of not less than 100 crore and turnover of 500. So 100, 500, which should be more, turnover should be more, 100, 500. And they should also pass a special resolution with this regard. And from the non-members, maximum is 25%. Clear? Network criteria. But there are certain numerical questions with regard to this. Good questions. Please take the compiler and participate. Yeah. Time limit for which you can issue. So for the maximum period is only 36 months. So 6 months to 36 months only you can issue. Less than 6 months is possible, but it should be only for the purpose of a temporary purpose you can do. Yeah. And not less than 3 months. So 3 to 6 months is possible. So this 10 percentage and so plan A is from where is plan A from? The 4 months they have. So 4 months means can do only for the temporary purpose, right? And that should not exceed 10 percentage of the paid up capital and users also. It can be only less than 10 percentage of the paid up capital users. These will good numerical questions on that. Again, I'm telling you have to take it up. Now, here what is happening is very special question. Now, we will have to create a chart, right? So what amount the chart should cover both the interest and the phase, the principal and the interest should be covered. So here the amount would be equal to the value of the amount of deposit, but it will not be covering the chart. So for the purpose it is shown that it is not validly created. And we'll have to transfer a portion to the reserve called the deposit repayment reserve also. So how much we have to transfer? So we'll have to transfer 15 percentage of the fund, which is maturing in the next financial year. We'll have to transfer. Right. So who and all cannot be a debenture? Who and all cannot be a deposit trustee? A director, KMP, is indebted to the company. He has a material pecuniary relationship of 2% and turnover criteria we have, and he has given a guarantee. Then in that case, he cannot be a deposit trustee. Moving on to the chapter charges. So charges, one of the special points in there. Yeah. So property is already having a charge and it is being sold off. The new owner, it will be treated that he is now the one who's required to pay it, and he will be treated as the person in liability for the same. Yeah. And whoever is acquiring, they will have to register the charge they're buying along with the charge. Clear? No, so you cannot tell it is already created. You have to again create in your name. So that is one point about it here. Now, yeah, so this is something which is a grandfather provision element, but they have asked in RTP, which means we'll also go do it once. If at all there is any charge created before 2/11/2018, then then if it is not registered within a period of 30 days of the creation, then you will be given a period of 300 days from the date of creation of the charge to register the same, and it should fine. And it should be made within 6 months from 2/11/2018. Yeah, so this is an older provision. So within a period of 30 days of creation of the charge, you have to register. Here, if it is not registered, then the company is not registering, then you can register the charge or you can register the charge. So floating charge means which is created on an asset whose value is fluctuating. Okay? Could be any raw material or stock in trade, or could be either past or future. And it's not like you will have to have that asset. It can be sold and traded also. Yeah. And who is getting the charge will get it. Who is buying the particular asset will have free of charge. So once a particular event happens, the floating charge will crystallize. So what event, if there's any breach or if there's any liquidation, or if the company wants to tell that, yeah, now I want to enforce a charge, then in that case it can be crystallized, right? So who can inspect? Any member or creditor without payment of fee, or any other person will have to pay the fee. You can also take copies of it, right? And if there is any rectifications to be done, it's being done in CHD, and within a period of 30 days, we have to file it with the ROC also. Should be registered within 30 days, then the charge holder may pay for the same. If at all the company is not doing it, the charge will do the same, and the ROC will also have a verification done with the company, and then he will go ahead with registering the same. Yeah, same thing with satisfaction. So who will register the uh, ROC? To that ROC, the company will do it. Okay, and if they're not doing it, then the charge holder can do it. Yeah, actually, the charge holder should do it. If he's not doing, then the company can do it. The ulta case of it. Yeah, here we also had a flow chart in our book. So if it is registered outside India, it should be verified, and it should be issued under form and seal of the company and of a person who is independent of both the people. So he should authorize the same. If it is in India, then by the director of the company secretary. And with the document of constructive notice. So all these charges is also treated as a public document, and only you should be aware of it. Should not tell I don't know that. Clear? And it will be maintained by the company secretary. It will be authenticated by the charges. Okay, so this is a very good question. Now moving on, let us understand what is happening here. So this person named Marina, she's holding certain number of shares, and she's thinking like, should she go and declare herself as a significant beneficiary? So who is a significant beneficiary? If they hold four things are happening, directly or indirectly, not less than 10 percentage of the shares. Okay, because you're holding shares, you're going to the voting it. After that, you will have the dividend, and maybe you can also exercise control and certificate. So shares, voting right, dividend control. 10 percentage of things, then you have to go and declare yourself as a SPO. But it is not applicable if it is an IEPF or holding company may not do inform PE in one. So provided it is a holding company may not declare themselves as the export, provided it is represented in one, or SG and state government may not do it. Alternate investment fund, real estate investment trust, then venture capital. So they need not because they're regulated by SEBI. Okay? So this is the provision with regard to this. So if you are falling under any of these category, or if it's less than 10%, then you will not register yourself as an SPO. Now, with regard to the proxy, so form is MGP1. Instead of one person, you're sending another person. And it must be submitted 48 hours before the meeting. Okay, that is one point. And with regard to the demand for vote, can be done either before or after the declaration of result by voting by show of hands. Okay, and if not less than 1/10 of the paid-up capital members, or not less than 5 lakh, if they want, then they can demand for it. Okay. Or the chairman in his own motion, he can also ask for the vote, right? Fine. Now, talking about the special business. So, whenever you have any special business to be conducted, you also annex explanatory statement telling why it is treated as so, and what are the aspects with regard to this, and if there is any director or manager or ALT who is having special interest or financial interest in that particular thing, so that the members can take informed decision, and they can inform voting with regard to that. Now, with regard to the proxy. So every shareholder who's entitled to attend and vote can appoint a proxy. So it should be done within 48 hours before the start of the meetings last time, uh, okay, so that. So people, you also stay hydrated. Please have your water with you on the hydrate yourself and that, right? So before 48 hours before the meeting, you will have to listen. Now the company is fixing a different level. They're telling 54 hours. They not fix 48 hours before this. What it is valid. Now, what is the special notice? So special notice is required to be given to the members of not holding 1/10 of the total voting power or not less than 5 lakhs. So within which date it should be given 14 days before the meeting, but not earlier than 3 months. Okay, detailedly we did it. Please do check with that. And for the other members, it is not 7 days before the date of the meeting. Yeah. So so 1.2 percentage. So what is the point with regard to here? So 1/10 it is enough of the, so is it 0.1 crossing, so it is fine. So here are the 0.12, so also it is satisfying. 1 percentage is enough, so 1.2 percentage also it is enough. Clear? So at least 14 days before the meeting and 3 months, not earlier than 3 months it should be set. For the other members, it is 7 days. Clear? Fine. And special resolution means vote cast in favor is 3 times the vote. Sorry, vote cast in favor is 3 times the vote cast against. Okay. So with regard to the minutes book, so for every general meeting we have a minutes book, right? And within 30 days of the conclusion of the meeting, it should be recorded and it should be signed by the chairman. Okay. And if the chairman is not there, then by any person who is authorized by the board for this purpose, it can be done. And whenever a person is asking for a copy of it, it should be furnished within 7 days after the date he has made the request. Yeah. So who can authorize the minutes? The member. So you cannot. Who can inspect the minutes? The member. So you cannot authorize any other person for this purpose to inspect the minutes. So that is one main thing. So can we include any defamatory matters should not be included. So what should man know like that should not or anything which is detrimental to the interest of the company also should not be done. Yeah. So within 30 days of the conclusion of the meeting, it should be entered. Okay. So, if at all a person wants a particular resolution to be moved at the AGM, then it should be done by at least 1/10 of the paid up share capital holding members. Okay, and that requisition is also submitted at least 6 weeks before the meeting, so that the company can forward the same to others and make arrangement for the same. And whatever is the expense for it, it should be deposited by the requisitionist money along with the requisition. You have to deposit the same. Okay, abridged annual written form is 7A, so you already see that. And it will be signed by the director and the company secretary. There's no company secretary by any company secretary in practice, it can be signed. And and it should be filed within a period of filed in the period of 60 days from the date of the AGM or the AGM is not held on the last date on which the AGM should have been held. Okay. Then notice to be given within 21 clear days. Okay. So take this and take this. Remember that should be 21 days. And if it is shorter, then they can get permission from the majority members, which is 95 percentage. They can okay. If they're okay with that, the shorter notice possible. Notice period is possible. It is 95% in case of total voting power. All right. So only 90% they're telling, 95% they're not telling. Then it cannot be done. It is not validly called. Okay. Yeah. Registration of charges, extension period, 30 days. So further period of 60 days is 30 plus 30. Otherwise, pay an additional fee. So 30 plus 30 plus 60 days will be given for around the form payment of annual fee. So total days will be 120 days will be given. Yeah. 38% shorter notice not possible. 95% is required. Then yeah. Difference between a motion and resolution. So motion which is passed only becomes a resolution. Clear? So who are entitled to receive the notice of general meeting? Every member and assignee of an insolvent and auditor of a company and every director, they are also entitled to do so. Now, this is with regard to the Nidhi company. So, for a Nidhi company, who and all are required to get a separate notice for the same. So, if they are holding shares of more than 1,000 of face value or more than 1% of the period capital, they are required to get that. So, here more than 1,000 is having, so he is required to get that. Here they are holding more than 1%, so all these members are required to get. So, only these two categories of the members they are required to get it. Yeah. Yeah. Yeah, yeah. I need practice on finishing it. If you bring my laptop, you can see bring first. You put the all these down, bring the big laptop, then Apple. Okay, so this is with regard to e-voting. So it should be open for at least 3 days, and the voting will close the day before at 5 p.m. It closes. The day before the meeting at 5 p.m. it closes. So that is about e-voting. And so every listed company and every company having not less than 1,000 members who are required to do that. So what on the date of the AGM would it be considered to be passed? That is one more point. And one more thing. So if you have exercised that you want to do the e-voting, but you have actually not done, then you can come to the general meeting and cast a vote. So that is also possible with regard to the same. Yeah. You will have to actually keep the registers at you have to maintain the documents and instructed records at the registered office, but you can keep it at any other place provided there are not less than 1/10 of the total members who are located in that particular state, and special resolutions passed to the general meeting in this regard also. It is open for inspection during the business hospital payment for which this will be for the members and the debenture holders and the creditors also. Right? Yeah. With regard to the foreign register, yeah. For the people who are maintaining that, if you maintain, and within a period of 30 days of opening, you should also fill the register like we are opening the foreign register. Yeah. Yeah. EGM shall not be called a national holiday, but a local holiday, city or state holiday. So that can be done. Okay. Now, suppose they are going to conduct it at a different place other than the register officer. So they should get the consent from all. Here it is not 95%. They should get the consent from all the persons before the meeting. Okay. First stage there is no extension, and for the subsequent one you can get an extension of 3 months. Okay. First stage there is no extension. So you can get an extension of 3 months from the ROC. Yeah. All right, people. Now continuing. Now, here, if you see what type of company it is, the type of company that it is an public limited company. So, the provision and flexibility is only with regard it is with regard to an unlisted company. So, that is the point we are concerned with. So, an unlisted company can do so, but an unlisted company can have it in any other place other than other registered office situated. Now, the time, date, and place will be determined by the board of directors. Section 8 company, it is 14 days, not 21 days. So that is the point of the matter. But this section 8 companies having more than 1,000 members, so they can definitely do the e-voting procedures for the same. Clear? Clear? So more than 14, at least 14 clear days should be done. 15 days agree, okay, no problem. And special thing, every listed public company, okay, listed public company, they should prepare a report on the AGM, and they should file it with an ROC within 30 days of the conclusion. Not for all listed public company. Clear? Now, shorter notice, it can be condoned, okay, and so there should be 21 clear days, and if it is done through certificate of posting, then we have to add 2 days. And now, so for an unlisted company, any other place, if it is given in writing or to all the members in advance, and they have agreed to that. Now, so President of India, the governor, so their representative will also be deemed to be a member who is personally present. For another company, if a corporate is a member, then that authorized person will be deemed to be the member. And they are also counted for the purpose of quorum. Okay, and who are entitled to vote will be counted. Now, if you see the wording for quorum, only those people who are personally present. So, personally presenting, they themselves coming and sitting in there, not through any other person. So, very clearly we can tell that proxies, whether they are member or not, are excluded for the purpose of quorum. Now, limit for quorum, if it is the 1,000 to 5,000, then it is 15. More than 5,000, it is 30 members who are personally present. And now here what is happening is that a strange thing happening. So firstly there was a meeting, and then it was adjourned because these people were creating some commotion. Okay, in the adjourned meeting there was lesser people. Is that a valid point? Clearly the point is only if it was adjourned for the purpose of quorum not being present, subsequent meeting, whoever present will be considered as a valid quorum. First meeting was adjourned for some other purpose, then it is not considered like next meeting, whoever is validly present is quorum. Okay. So this point, when you saw the pillar of provision also I mentioned, do one revision and come back. Clear? Fine. So authorized representative of a body corporate is also treated as one member present for the purpose of same as for the president and the governor. So they are given different limits and asked who's what is the number of votes. So 800 means less than 1,000, so 5 members. So more than 5,000, so 30 members is a quorum. Fine. In the adjourned meeting, if there's no quorum, whoever is present will be constituted the quorum. Clear? So quorum should be present within first half 30 minutes of the meeting, and they should be present throughout the duration of the meeting. So that is then now talking about yeah. Here this is special. Clear. Now look at this special question. So Silk Limited was incorporated in India. It has two subsidiaries, Print and Stitcher. So this is a wholly owned subsidiary. Now both the companies are incorporated outside India. Now the board of directors are telling Silk Limited parent also will hold the meeting outside India. So that subsidiaries meeting is also on the same date. Is it possible? So no, you cannot for the extraordinary general meeting outside India also. And now this company is this Print Limited is 80% only. We are holding only 80%. So that meeting also you cannot hold outside India. Okay. Holding on the subsidiary can be held outside. Yeah. Incorporated outside India, the meeting can be held outside India. Now, EGM provisions people. So 1/10 of the paid up capital holding member that requires the board of directors and it should be called. And it should be called within a period of 21 days and within 45 days from the date of requisition, the meeting should have been held. If not, within 3 months from the date of requisition, so everything the starting notice from the date of requisition, 21 days they should call for the meeting. 45 days of meeting should be held. Within 3 months or from the date of requisition, the meeting should be held. And those expenses they can get it from the directors also. Clear? So what and all the motives of the EGM should be there? Reason why they want it, and directors cannot refuse to hold it because the explanatory statement is not given. Okay? Now, main point fine. Here, um, in the EGM, the quorum was not present in half an hour and it's solved with the requisitions which shall stand cancelled. Okay, it shall stand cancelled and not adjourned. So EGM will stand cancelled. So you find it here people. And others expense can be reimbursed from the company and it can also be taken from the remuneration that is going to be paid by the directors because they have defaulted in calling for the meeting. And it's 1/10 of the total voting for and one data capital. So these people can call. Okay. Now chapter number 8, a payment declaration payment of dividend. So a lot of numerical sums are coming from here. You sum up the provisions and keep it ahead. And if the dividend is not paid within a period of 30 days of the declaration, what is the punishment? Imprisonment of up to 2 years. Imprisonment of up to 2 years and liable to pay a fine of 1,000 per day of the default. So that is also possible. Imprisonment is up to 2 years and penalty is 1,000 per day during use of default conditions. And along with that, 18% interest is to pay. Clear? Fine. And for an ED company, they are given that if it is less than 100, be sufficient if they are telling that we have declared the dividend and they have to put in the newspaper or the notice board and is our history for at least 3 months. Priority for that same, we are not seeing that. So this is with regard to the ED company. So it is enough, it is done, that version alone is complete, it is enough. Now we can also declare interim dividend out of the surplus of the profit, and if once it is recommended by the shareholders and recommended with the directors and approved with the shareholders, these shareholders cannot ask for higher percentage. They can never ask for the same. Clear? And section 8 company, they can never pay dividend to the members. So one student asked, we can declare dividend, not pay dividend. So dividend itself, we should not talk about it in the section 8 company. Clear? And even though if we have a surplus, we can use only for the furtherance of the business of that particular thing. Right? So previously in companies that we had like we want to declare dividend, we transfer certain amount to so now that is really recommended. Okay, here what is happening is that the company has limited the amount of dividend, but it was returned back. Okay, now when such a thing is happening, the company will have to communicate to the shareholders. So if it is not communicating, then they will be liable for the same. Now here what is happening? He is having 5,000 shares of 100 which did not pay the final cost, and the company has declared dividend. So what the company can do? Can the company adjust the dividend? Yes, they can adjust the dividend. It's a amount which is due from them. Mhm. Just a moment. Mhm. Yeah, if the dividend is not claimed even after the expiry of the 7th day from the 30th day, that is after the 37th day, we have to transfer it to unclaimed dividend within 7 days from the expiry of the 30th. The 37th day, we have to transfer it to unclaimed dividend. Then after the expiry of 7 years from the date of transfer, we have to transfer it to IEPF account. Yeah. Then if you provide a certain if you provide certain evidences that you are the person to whom it is written, then they will keep it. Okay. Right? So for what purpose will use it fund for awareness program, for legal reimbursement? For that purpose, they can use this amount in IEPF. The IEPF authority, okay, not. So how we can get the form from, how we can get the money from IEPF account? We find IEPF by high and the person like that. And after that, they will verify it and they forward the IEPF authority and they will accept that. Yeah. See, normally the dividend should be done like equal dividend on all. But if the AOA provides that they can be proportion to the paid up amount, normally it is equal, but if the AOA is permitting that, then you can give proportionate amount to the paid up you can be given. When the AOA is silent, then all clause of shares will be the same amount of, right? So 30 plus 7 equals interim dividend. Okay, like how we can do only of the surplus of the profit. Okay. Now, if it is having any loss, interim dividend you should not give. And it should be the average of the dividend declared by the company in the immediately 3 financial years. It should not exceed, dividend amount should not exceed whatever is recommended by the board of directors. Now, here is a point where we will talk about what will happen if there is no adequate profit for the purpose of any payment. So, firstly, the rate shall not exceed the average of the three immediately preceding years. If the company has not declared any dividend, shall not apply if it is a new company or if the company has not declared dividend in each of the three preceding financial years. Okay. Okay. Then, so tell me 10 plus 0 plus 9. How will you calculate? Tell in the comment section 10 plus 0 plus 9. Okay. How will you calculate? So it is 10 plus 0 plus 9 divided by 2, not divided by 2. Okay. And the amount drawn from the accumulated profit. So how much you can take it? It shall not exceed 10% of the paid-up capital and free reserve. And you will take the 10% of the paid-up capital and free reserve and first you will subtract the losses. Okay. And whatever you have taken, it should not fall below, the balance of it should not fall below 15% of the paid-up capital. Fine. This entire segment is covering this numerical questions, good questions about it. So I think this is what is tested again and again. Now going on to the next chapter, rules of company. So whose duty it is to maintain the books of accounts and default and practice usually maintain. Okay. Now a director can also inspect any books of accounts, so which type of credit nominee, independent promoter, or full time they can maintain, and it should be preserved for a period of 8 years. It should be preserved. Now, what is the books of accounts is that? And, whenever you are making any periodical financial results, so that can also be submitted, right? But it's mostly for listed companies. So they will do like a quarterly financial statement. So like people, it is not for the companies, for listed companies, right? But if the central government is requiring, then they may be asked to prepare on a periodical basis. If they are asked to prepare, it must be done by the board of director approval. Okay, and that should be filed with the ROC within a period of 30 days of the completion. It should be filed. And director's responsibility statement, what is to be included. So we should tell that they have filed the annual returns, filed the annual accounts on the going concern basis. Accounting policy are selected and consistently applied. Right? In case of listed company, it is laid down under internal financial control is there properly. Like all the laws have been complied. So this should be mentioned. The director responsibility statement required to often listed people. The financial statements will be approved by the board of directors, including the consolidated financial statements are to be approved by the board of directors and signed by the chairperson who is authorized on this behalf. Then, along with that, are two directors, out of which one who is a managing director, and if there's any CEO, CFO, then he can also sign this. And company secretary is also required to do the same. Yeah. If they want to follow a different financial year, then they have to approach the central government. In case of a company which is incorporated outside India, what they have to report that. So single entry system at all is not permitted. So you can follow different financial year, but you cannot seek permission to follow single entry system at all. Right? So consolidated financial statements should be prepared if there are subsidiary, associate, or joint venture. But each subsidiary is also required to have its own financial statement. Consolidated is rare. Like that, you cannot. Now talking about the CSR provision. CSR is 2% of the average net profit. And here, when we talk about average net profit, it is average net profit before tax. Okay? Right? And it is like within 5 crore. Clear? So only on this we are going to do the average, not on that. So if that average, we take 2%. So impact assessment you are required to do. For which cases CSR obligation of 10 crore or more in the immediately preceding financial years. Then for whichever project you are having an outlay of more than 1 crore rupees you are required to. So first CSR is applicable for 500,000. 500,000. Okay. Net profit of 5 crore or more is before tax and 1,000 crore or more is a turnover and net is 500 crore or more. And in the committee we'll have at least three or more directors. At least one director should be independent director, but the company is not even gone with the provisions of the independent director. Independent director. Right? So, benefit for the employee, not considered as a CSR. Political party, no. Forward funding, yes. Promotion of child and women education. So, this is considered as a CSR. Okay, when are we required to constitute a CSR company? So, who should be there? At least three directors, out of which one should be independent director. Right? If the CSR amount to be spent exceeds 50 lakh, we have to constitute the CSR company. Now, here's a net profit, average net profit. So, it is coming to 0.3, which is less than 50 lakh. So, we're not required to constitute a CSR committee. Whatever they want to do can be done by the board and by itself. Right? Now we are going to talk about the provisions with regard to the internal auditor. Internal auditor 25, 50, 100, 200. Okay. DPBT. So deposit 25 crore or more, and P paid up capital is 50 crore or more. B is 100 crore, more than 100 crore. Okay. And turnover is 200 crore. So here it is exceeding 100 or more at any point of time. At any point of time, the place where I want to insist is at any point of time. Even 1 minute you are having it, you can also dispense it. Even now, so BP 25, 50, 100, check. Okay. So if at all books of accounts are maintained in an electronic mode, it should in some server also in there, it should also be accessible in India also. So there should be like proper storage, you can take it anytime. It should be given uh, option for the same, and the backup should also be created. All right. So we have a short 2 minute break. Okay, so if at all, yes, so if at all it is being in an electronic form and it should also be accessible, so we should have a proper system for storage should be possible, the travel should be possible, you should be able to see it out and print out should also be possible. Like backup of it is also to be maintained in electronic mode, including at any place outside India, right? Fine. And it should be periodically updated also. And with regard to the financial statements, the consolidated should be signed by any person who is authorized with the board, if there is any person, or it should be signed by 2B and 1 MD. And if the CEO, CFO, and company secretary, by him also it should be signed. Then on, yeah, reopening, reopening, fine. Like it can be reopened, provided we are also getting and concern from we are also getting giving a notification and also we are getting a concern from income tax authority, SEBI and any other statutory body. And it cannot be can be opened by the tribunal only if it is prepared in any fraudulent manner or there is any mismanagement. So only in this cases the tribunal can force that we are going to open. And it can be opened for only a period of 8 immediately preceding financial years. It cannot open. Then fine. And board of directors, if they voluntarily want to revise, they can do it for any of the 3 preceding financial years only they can do. All right, and that too, there's only any default with regard to, there's only any problem with regard to companies with 129 and 1, that's true and fair view is not done. Report of the board is not proper, so only that can be done. That also we'll have to get it approval by the tribunal within 14 days of the decision. So once the decision is taken, we have to file the tribunal also. And once we have given the approval, then we can open it. So the approval should have to be submitted within 14 days of the board finalizing that. We have to do with that. Now, financial statement should be submitted within 30 days, but if it is not adopted, then within 30 days of the agent, we can submit the unadopted financial statements also. Right. So once after it is being adopted, within a period of 30 days of that adjourned AGM, from that 30 days we will submit it. Okay. So, who are all required to file it in XBR and AOC 4? Firstly, every company who is required to adopt Ind AS is required. Then listed company and 500. 500. Paid up capital is 5 and turnover is 100. So, these people are required to file in XBR, AOC 4, XBR. Okay. Right? Now, yeah. You need not prepare the consolidated financial statement when if you have given a consult. Just a minute, we have to make. Okay, so with regard to the exception for CFS, so which company need not file a CFS? First, you should got the permission from all the members in writing. Okay, telling that none of us are objecting for the same, and there should be a proof of delivery of the same to them also is to be there. Now, we are not doing, we have got the concept. Then ultimate parent should be doing it. So if there's any intermediary after that, then ultimate holding must be doing it, and they are not going to be listed, or they are not in the process of listing also. Clear that in that case you will not file the CFS. So CFS will not be filed. And now with regard to the inspection for the books of accounts, when it can be done only during the business hours, it can be done. And you can also get the copies of the same. Right, to be kept at the register hours. So once a copy for it is asked, it should be given within a yeah. So yeah, if it is kept outside India also, then they should send it. Then they should have a copy of it in India also. Summarized version of it is to be kept in India also, and you'll have to give to 7 days. You'll have to give where you are going to keep apart from the place where it is mentioned in India. So that you have to give AOC 7 intimating to the register where you are keeping it. Right? Now, with regard to the NAFTA, so what the NAFTA will do, so NAFTA will mainly about the accounting and the auditing functions we will see. Now, we will also have to maintain the particulars of the auditors who are governed by the companies who are required to covered in the ambit of NAFTA. They will also recommend, they will also monitor, okay? They will also recommend, they will also monitor, they will maintain the stocks. We do not follow that, they will come and do investigation. Okay? Like a praising penalty, 1 lakh which may extend to 5 times, or 5 lakh which may extend to 10 times the fee that is to be paid. So we can also debar, right? And in addition to what I say, the minimum period of valuation for a period of 6 months or such higher period as many as 10 years is fixed. Right? So that is about the provisions of from the base field time. Let us go to the provisions of auditors. Okay. So first director appointed by the board. Okay, and he will be holding it conclusion to the first agent, and after that, from the end of the first agent to the conclusion of the sixth agent, they will be holding it. Clear? And if there is any vacancy, it will be filed with the board of directors in a period of 30 days. And appointment ADT 1, okay, resignation ADT 3. Oh my God, I'm free. Within 30 days, we will be giving to the ROC, right? So ADT 1 is within 15 days and ADT 2 is within 30 days. Now they will have it for 5 years. So 2 terms of 5 years, and there is a cooling period of 5 years in case of firm, right? So CNAG will appoint auditors for the government property within 30 days. In case vacancy is there and CNAG is not filling it, they can fill it within a period of the next 30 days. Okay? And within the next general meeting, they'll have to get a concurrence. And that general meeting will have to be held within a period of 3 months. Right? And the vacancy is filled by the board of directors in 30 days, and the new audit is appointed within the next general meeting in a period of 3 months. They will have to it will have to be approved. Now, what and all weak services the auditor cannot purchase. Section 144, accounting and bookkeeping, internal auditor, designing and implementation of financial statements, actuarial services, investment banking, investment advisory, and rendering any outsourced financial services. They should not do. Along with that, additionally, portfolio underwriting and broking services also we should not do. If you want to remove an auditor, it is not so easy. You have to follow a special resolution and also get the previous approval of the central government is to be got. Clear? Clear? Yeah, section 447 penalty. If you not comply with any of this, then fraudulent manner is that. Then for the company, 25,000 to 5 lakh, and for officer, 10,000 to 1 lakh. Right? If it is intentional, then for the auditor, it is 25,000 to 4 times the remuneration. Sorry, if it is unintentional, 25,000 to 4 times the remuneration. If it is intentional, then 1 year imprisonment and 50,000 to 25 lakh for 8 times the remuneration that you are giving. So this for the company's officer, and intentional is 25,000. Your unintentional, intentional is 50,000 to 25 lakh. Unintentional is 25,000 to 5 lakh. Separator changes. It's 4 times and here it is 8 times. Moving on, moving on. So, who are all not qualified to be appointed as an auditor? So, if you're indebted to the company excess of 5 lakh, if you're a director or employment, or if your relative is a director, so then in that case also you are not eligible to be appointed as an auditor. Moving on now. There is a disqualification. If you are incurring disqualification, then it means that the office of the auditor is vacated. Okay? It's like a casual vacancy. Right? So if you are entering into a business relationship with the company and it's in the outset price, it's considered a normal money. With exceeding 1 lakh, you cannot be indebted and first order should be appointed within 30 days. People again, I'm repeating it once, hopefully that you have completed the revision once and also done the revision with me alongside once. Only then you will find this rapid question discussion very useful. Otherwise, it could be like Greek and Latin for you. So do that twice revision from your side and one time marathon revision. Then this will be much useful for you. Now, when there's a fraud of more than 1 crore, or more, then the auditor will have to report this and what's the process. Within 2 days, the first you have to bring it to the knowledge of the board or the audit committee, and within 45 days, you have to wait and you have to give their observation. So they're not giving, then within 15 days, they're giving, then within 15 days, you will give. They're not giving, then you will go ahead and tell that you have not got it, and along with the original report that you have sent to them, you will file it with the company. So 4 for fraud, 2 for fraud. Okay. And if it's less than 1 crore, you will tell it to the audit company. What you will tell the nature, amount, and which party you are employed. And the board report also will include nature, amount, parties. The board should also tell what is the remedial action that is required here. And fraud reporting is also applicable for the first auditor and the secondary auditor. Penalty is 5 lakh and 1 lakh for listed company and 1 lakh for other. And the remuneration for the auditor will also fixed by the general meeting. The board will fix the remuneration for the first auditor. And this remuneration will not include, so any other services will not be included for this purpose. Right? So if they are appointed at the general meeting, they are called as a statutory auditor for the first auditor. So that to be fixed by at the general meeting. Okay, what manner will be fixed by the first auditor to be fixed by the board of directors. ADT 1 is to be filed by the company with the ROC for 15 days. Okay, of appointment. So that is about the auditing chapter. Now we are going to talk about the companies which are in corporate houses. So mainly the provisions of regard to what is then company in corporate houses, and about chapter 22 also is covered in here. So every foreign company shall get its accounts pertinent to the Indian business operation to be audited by the practicing chartered accountant in India only. And if it is a company, yeah, so they are also required to file and a copy of the material contract. So in the prospectus with regard to the foreign company, they should have an expert statement. Expert statement, सब की सब होता है. Okay. Then they should also file a material contract. If you see here, they have given material contract in the last 2 financial years. So you have to file 7 contracts. Also, there is a contract with the manager. Okay? One contract, apart from the above, there was one contract was entered into with the manager. So that also should be filed. So you need to file a total of 8 material contracts. Okay, if you're not doing that, then it means you're contrary the provisions of section 238 and will be liable for the same. So that is a big tip. And along with that, we should also mention what is the underwriting agreement that you have, what is that, what is the commission that you're going to pay, which we authorized also. Clear? Now, with regard to the prospectus, it cannot be distributed, okay, because unless a copy of it is certified with the chairperson of the company or two directors and sorry, chairperson and two directors having approved the resolution. Okay. Then yeah, with regard to the financial statements of the foreign company. So for every calendar year, people mark it here for every calendar year, you should make the financial statement into balance sheet, profit and loss account, all those things, and we deliver to the ROC. Okay, and along with that, what and all days of business we have in India, that also we should be correct. So we have all the days of India mentioned along with the balance sheet profit and loss account equal to the RBC. And it shall be filed in form FC3 within 6 months from the end of the financial year. So 6 months from the end of the financial year, but for every calendar year, you're supposed to make it up. Right. So ROC is one who's having jurisdiction over New Delhi, and within 30 days of establishment, we have to convey the same to him also. Right. Uh, so incorporated outside India, but transacting in India and having a place of business in India. So both the conditions happen. It's a foreign, it is a foreign company. Okay, and employed agents only not having a place of business in India, so it's not a foreign country. Meeting around only their holding, so it's not a foreign company. And only 49% is only being held with Indian company, so that is also not a foreign company. And if you see in here, if not less than 50% is held by Bharat Vinichan. So one or more Indian citizen or one or more companies incorporated in India or one or more citizens of India or one or more companies of body corporate, then they will be treated as an at par of Indian company and we have to comply with the provisions of Chapter 22 as if it was an Indian company. So one or more citizen, okay, 50% citizen or any company or one or more citizen and the company holding together. Okay, more than 50% then have to comply with Chapter 22 and then between to be an Indian company for the very same purpose. Fine. So there's arbitration also within 30 days of such arbitration will have to complete the ROC. Without any further ado, now we are moving on to the questions of NLP, the quick rapid revision that we are going to do. The financial year means 1st April to 31st March, but in case it is incorporated after 30th September, in the case of companies that we have 1st Jan, but in case of LP after 30th September, then it is the 31st March after that succeeding the particular financial year. All right. Yeah. So yeah, once a partner is no more a partner in the company, he will have to come. He will have to communicate the same with ROC. So actually, the company should communicate the same with the ROC. And if at all the company is also not communicating, the person is also not communicating, then he will be liable. Liable. Okay, he will be liable to the person who has donated or who has contributed the fund, believing that he was still a partner. Right? Okay. So what is a small LLP? So which the contribution does not exceed 25 lakh rupees and the turnover does not exceed 40 lakh rupees. So we are a small LLP. Okay. So 25, 40, 25, 40. Now, certain interesting questions. So every LLP should have at least two designated partners, and one of them should be a resident in India. That is one thing, and they'll ask these two people or the non-resident, so they are not a valid designated partner in India. Right? Also, change it should be mentioned within 30 days of change. If there any change in the partner, name or address, anything should be mentioned within a period of 30 days. So, if not change in the partner, the name and address should be mentioned. 15 days. Change in the partner, no more a partner, or he becomes a partner, that is 30 days. So change 15 days. No more a partner, or he becomes a partner, then it is 30 days of such change we have to mention. Yes. Yeah. If the number is reduced below the minimum number, the business is continued for more than 6 months and they're not in a position to increase it, then they can ask for winding up also. Right? One more case, if the default in filing the register and solvency of the annual return for any 5 consecutive years. Okay, here statement of account and solvency or annual return, either in this or this 1 year filled this alone. Fine, no problem. 1 year filled both, no problem. 1 year do not file both, but next year file, no problem. So default should be in both for 5 consecutive financial years. So then it can be wound up. Clear, clear. Mhm. So similar to the company that LLP will not be registered if it is resembling or if it is undesirable, then it will be registered. So two partners out of it, there should be one designated partner. If it is falling below personally liable for the same. Now, with regard to whistleblowing, so I already told this, I think there was an example that wasn't turned out to be an informer. So, if anyone is providing useful information and if they feel that discharged, demoted, suspended, threatened, or harassed, we should give a protection for them. So, no way they can be discharged, demoted, suspended, threatened, or harassed. Okay, so they should be given the protection with regard to the same. Right? Mainly, if it leads to the LLP or any partner is convicted, so they are proved that they are the accused with regard to the same. Okay, if there is a false return or statement that is provided, then the imprisonment is 2 years, fine of 5 lakh, 1 lakh to 5 lakh, maximum is 5 lakh. So 1 lakh, 5 lakh can be fined. So one more thing. LIP agreement should also be filed with ROC within 3 days of incorporation. It is to be filed. Now, can I transfer my right in LIP? Yeah, I can transfer the right to receive interest or anything. But that transfer doesn't mean the person will be entitled to participate in the management. The transfer also doesn't mean that I'm discharged or removed from the LIP. So it doesn't mean both the things. Yeah. Compromise and arrangement. So if there's any dispute, we can make an application to the government and meeting of creditors will be called for. And if whatever they are proposing as a solution should be approved by 3/4 of the majority in value, 3/4 of the majority in value. Okay, and once it is filed with the ROC within a period of 30 days, it takes into effect. Okay. So that is a provision with regard to our LLP Act. Now we move forward with the questions from the general clauses. So here, what is happening is that he is finding it. He is telling that he has bought the car in good faith, and he did not test check because of business friend. So this cannot be told that it is a test. It is a good faith because we have to make proper inquiry, and without doing that, it is not proper in this regard, right? Here, it's a Ulta case for that. She's going to the jewelry shop and they're telling that later she's finding that these are smuggled goods that she bought. So every time we go to jewelry shop, we never think that these are smuggled goods, right? So this is not done negligently, it is done honestly and not done negligently. So this is termed as in good faith, okay? So if you are done a honest purchase with due care and making proper inquiry, then it is done in good faith. You don't take any due care and make then this done as if it is negligently done, then it is not in good faith. So here, who and all is included in the term person we are asking. And ideal is a juridical person. Then they have a legal entity. Okay. Then public body is also having a legal entity. Company is also treated as a person. Okay. Document. So just now we saw return expressed described any substance in that regard is also treated as a document. So CCTV recording is a document. Power of attorney, so it includes anything. No, yeah, no. Power of attorney is also legal, is also document. A check is also document. Okay. Now, yeah, measurement of distance. So normally, what is a provision? So tooth chandil, nail chandil, like that. So on a horizontal plane, what is a straight line and what is the distance between these two? So that is how we are going to measure the distance. Okay. Divide tooth chandil, like that. It's not measured. Straight line on a horizontal plane. So that is how it is being measured. Here, we need to know the registrar will make a note of it. He is satisfied. So doesn't mean that registrar is going to be a masculine person. So I mean, it's a masculine gender. Here, so it could also include feminine. So he includes she. So what that can be. But if you tell bullocks, that does not include cow. Those are some exception with regard to that, right? So if the particular, so whenever it falls on a holiday, it will be taken as the next day is what we the due date. Now, here the hearing date is on this date. So it will be the next day. Okay. The holiday means the next working day would be considered. Uh, whenever we have, now in companies are nonsense, but earlier it was a vigorous imprisonment. Vigorous imprisonment means with the hard labor. Simple imprisonment means that they will not be asked to do any work. So and universal property it includes movable property means that allowed it except immobile property. So that is straight question. Straight question. So insurance policies covering immobile property is not an immobile property. Definition does not tell you that. So what is an immobile property? Uh, Land, benefits arising out of plant, things attached to the earth or permanently fastened to anything attached to it. So all these are called as an immobile property. The timber can be chopped and sold off, so it is not considered as an immobile property. Mango is not considered as an immobile property, but mango trees they are considered as an immobile property. All right. So whenever we tell someone has a power to appoint, it includes a power to suspend or dismiss also. So suspend, appoint, and dismiss. All those can happen. Okay. So government means it will include the word both central government and state government. So whenever we tell government, so we also mean the central government or state unless expressly provided or unless. Okay. So here in general process means the calendar year, right? Unless they get financial. So right now we have something called as a tax year also. Okay. So singular also includes the plural also. Director. Directors are also liability. Deletion of the provision. So ripple of provision is distinct from the provision. So ripple means it is ripple brings about the complete abolished. So earlier wealth tax was required. So deletion means from that day it is not there. So from one tax rate is deleted, right? So like that it can happen. It is only with regard to that. It is not about the entire thing. So abolished means wealth tax is entirely abolished. Payment of dues is no more tax. Here ripple means so that is ripple. Deletion means now that provision we have that date it is not used. Okay? Repelled is having a higher impact than deletion. Okay? When we talk about it being notified in the official cases, means we have particular receipt. We do want to visit it, right? The official gazette of the state, you have the gazette of India, you have it's like a public journal. It's where you can see what and all happened. Published weekly by the Department of Publication, Ministry of Housing and Urban Affairs. So what and all new notification came, who and all did what. That. So that is about the gazette. Okay. Whenever we tell a particular quantity or weight or any value, we also mean the fraction of it. Okay. So 0.5 means that also it is meaning, it is also included for the purpose of calculation. Sometimes they will tell 0.5 means rounded off, more than 0.5 means rounded off. That is different. But even on that 0.5, we have to apply the rate or anything which is regard to that. Mhm. Yeah, with regard to the publication of bylaws or the procedure, so we will draft it, we will publish it, we will annex it, and then afterwards it will be notified in the admission basis. So just procedural aspect of it. So yes, the MC is required to publish the draft proposal, and any irregularity cannot be questioned, right? So because afterwards it can be corrected. So only for the purpose of getting getting inputs we are doing that. Before, yes, you can make the changes. Before publishing them, you can make the changes. Pre-publish the rule amended, which is ancillary, you do not do, but if it's incidental, you have to do it. Okay. Yeah. Can he be punished for two enactment? No, he cannot be punished. So which is a point we are talking about that double GOP, right? So that he cannot do. But he cannot be punished the same twice for the same offense. He can never do that. Yeah. Whenever you want to tell you want to serve a document, it can be done by properly by addressing, prepaying, or posting by the registered. So that also it can be done, right? So this person is telling he has sent it to somewhere, and now I have shifted, so it's not properly served on you. It is your duty to update. It is not their duty to chase you and say where you are, right? So, yeah, interesting question. So dividend is being declared on 27th, okay, and 30 days from the date of declaration. So 30 days from the date of declaration is from which date? From 28th 9. Okay. So that day it is declared. So from the next day it is being calculated. Right? So people have the book with them and do the questions, many direct questions only from your institution. So provisional question we saw, provisional segment we saw with regard to the interpretation structure. So what is a provisional? It gives an explanation, it gives additional pointers with regard to it. So if there's some ambiguity, it can be cleared by that. Okay. Fine. Now then, what is the effect of the provision? So something it can amplify something, or it can add to something, or it can remove something. So this is what provision can do. Ambiguous definition, so which is not very clear and it's being interpreted in light of the provision of the act. That is an ambiguous definition. Now So people, just now we finished with regard to our interpretation statute. Kindly go through it. Okay. So for that purpose, what is interpretation? Means analyzing the words. Construction means going beyond the meaning and seeing why it actually came. Okay. So is confined only to whatever is meant. But here it goes beyond and see why they have done that. Okay, right? So if you tell no vehicles are allowed in the park, means why they have to do that. Big vehicles like autos or bikes or not. So that's the meaning behind that. Why they are doing. Flying birds no require no explanation. So which means we are going to see whatever is down. So it is about the literal construction. So whatever is a meaning that is made, we are going to see. Absoluta, centennia, exposito, non integer. So whatever is given in that we are going to take it. So means it is only that it is restricted. Includes means beyond that. So it is extensively it is going to cover many more things. Means and includes it is there. So it is exhaustive. So to apply to and to it is extensive. So including that, so it's extensive. So means us that means only this and includes everything in that. So that is called as exhaustive. Okay. People, hope you have done your revision and only then you are watching this. Okay, this is like a last minute revision or the last leg revision or the last day revision, not and never a substitute for your basic study. Okay. Fine. When two words are expressed together, then it generally means the general word is following a specific one. It will take the whatever the the general word is used meaning excluding the specific sentence. Whatever general tells, next is talking about the external aids to interpretation, which means a dictionary definition. So there's no meaning dictionary that you know what the dictionary is telling. Historical settings, we will see what was the position when it came, history in general, and what is a parliamentary institution. It was a governor general, right? So you're thinking. And use of foreign nation. A foreign nation can be used, but prima facie important is to be given to the whatever is given in the Indian statutes to be considered. Their grammatical interpretation, what is the meaning that the word is conveying. And logical interpretation is beyond that, okay, right? People, so just because we saw it now, I request you to go through the lecture also because I think that we have specially marked which and all areas often asked. So for that purpose, I'm skipping to this segment because again, explaining it will be just explaining the meaning of it again. Right? Go and do that segment revision once. Okay. Now moving on to the next one. With regard to the current account, so it is actually allowed. Okay, but for hiring of transponders and all, CG approval is required. And withdrawal for requests with regard to the callback services is something which is prohibited. And USD 1,40,000. So you can do up to 2,50,000 under the liberalized remittance scheme. By commission up to 25,000 USD or 5% of the import remittance, whichever is more is allowed. So I think there I mentioned that whichever is less, if so kindly correct it. So whichever is more, okay, whichever is more, okay, fine. So there's a strange thing happening here. So it is 25,000 or 6 lakhs. So whichever is more, here they have put 6 lakhs. Okay, fine. Then for rupee state credit loan, commercial is not allowed. Okay, but for with regard to T, it is allowed up to 10% of the invoice value. It is allowed. Clear? Clear, people, corrected, kindly corrected that. Whichever is more. Okay, I'm very sorry. It is whichever is more. Fine. And for the purpose of consultancy, it is 10 lakh USD in case of an intra project and 1 lakh USD for other projects, right? And remittances also. So 5 lakh, 5 percentage or 5 percentage of the investment brought into India or USD 1 lakh, whichever is more, people see whichever is more. Okay, fine. Remittances for consultancies 10. Okay. So for what and all a person resident, so who's this person? So he wants to remit to his son who is in Singapore. So can you remit outside India while you are not from your place? So that is prohibited. Generally, it is prohibited. Now, who was Mrs. Prabha Bharatanatyam Transport? So we have to take a permission from Ministry of Human Resource and Development. For cultural tour, again, you have to get the permission from Ministry of Human Resource and Development to get that. And remittance of prize money, if it is exceeding 1 lakh USD, you have to get a permission from the Ministry of Human Resource, the Department of Youth Affairs and Sport. From them, you have to get. And this person is a foreign national who wants to buy an agricultural land. So that is not possible. And if he wants to deposit an account in India using a foreign currency account, so that is possible. The NRE external account or FCNR account you can open. So what and all is prohibited? Chip fund is prohibited, MP is prohibited, agriculture plantation activity is prohibited, real estate is prohibited, TDR, trading in TDR is also prohibited. Right? Donation can be given exceeding 1% of the foreign exchange in the 3 preceding years of 5 million, whichever is less. Here, whichever is less. Clear? And donation is 1% or 5 million, whichever is less. Fine. With outside India, he's going for a certain, so he's going for study, no? So he's going to consider as a non-resident. He's working there also. So till the time he was in India, he will be treated as resident. When he is going outside India for study, from that day he is going to be treated as a non-resident. Yeah. And there's one more question where he comes to India temporarily for a period of 10 days, he's coming for a function. Because of that and all, the residential status is not going to change. He's going to be treated as a permanent resident outside India because he originally went for the purpose of employment outside India only. Okay. And foreign currency account to open when he was a resident outside India, that he can very much do. And this person is a resident in India, but he is what he's doing is holding, owning, transferring, and investing in foreign country, and whatever he has inherited that acquired when was that. So that is allowed. So that is there is no restrictions with regard to the same. Right? And out of the amount what you got, that that amount you are purchasing. So that is also allowed. So what is the maximum amount of commission that you can pay? It is 25,000 or 5%, whichever is more. Here, whichever is more clear. So I'll also drop a comment with regard to that and we make a note of it. So what is export taking out of India? So in the commission point is tested. So here it is USD 25,000 or remittance is 5%. So commission amount is this one, import remittance is so. So on that we should see 5% of the import remittance of 25,000 USD. So obviously this is more. Okay, but up to this we may not get any approval. For process this, we need to get the approval in that regard. So from gross salary, we have to deduct a contribution to PDF, we have to deduct the previous So the balance amount is what you can do. So people, that was a rapid revision of our compiler book. So I hope you found this useful, but my point is keep doing the writing practice as well. Right? So we had a power prep batch which happened. So there we discussed a lot of questions in detail. We did a lot of writing practice and we did questions in detail, writing practice. We saw so many MCQs. We saw the case study. So all these are mandatory for you before you step into your exam. So take care. Keep the preparations going. Thank you. See you all.